cut, mind you, in the last meeting. But the news is they actually considered cutting rates by 50 basis points last month to provide greater insurance against maybe a U.S.-led trade war. But ultimately, they decided to go with something of a predictable quarter-point cut there.
So certainly that's one thing, and why maybe you're seeing a bit of a weaker Aussie dollar here this morning. We got plenty more ahead. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Brenda is a CIA-trained interrogator with specialization.
Do I make myself clear?
Pluto TV has 3 classic sitcoms all in one place.
You want to go upstairs and fool around? No.
Classic TV Families channel on Pluto TV.
Well, a big story coming out in the terminal yesterday was what we heard from Stephen Roach, right, the former Morgan Stanley Asia chairman, revising his declaration that Hong Kong is over. He now says he's seen the city being reinvigorated by U.S.-China tensions. Now, that's something that Roach says he didn't expect when he wrote that column last year in the FT entitled, "It Pains Me to Say Hong Kong is Over." The city has seen a rush of funds into the stock market this year. I'm pleased to say that Stephen Roach joins us now live. Stephen, it's always great to have you, and obviously we had you on the program a year ago when that column came out. Since then, maybe tell us kind of the timing of all this and what's really changed in your view that maybe things might not be as bad as it looked.
Well, far be it from me, and thank you. It's good to be back again, Yvonne. I figured after I wrote that piece, you guys never wanted to talk to me again. But, and far be it from me to throw cold water on a great Bloomberg story, but the case that I made in the FT had 3 legs to the stool. My concerns over domestic governance, the tight linkages to a weak Chinese economy, and the notion that Hong Kong would get caught in the crossfire of the U.S.-China conflict. Those first 2 points, I'm afraid, are still very much intact. But the third point, getting caught in the crossfire, if I had to write the piece again, I would take the word caught out and say that Hong Kong is benefiting from the crossfire as more and more Chinese and other Asian companies are interested in listing in Hong Kong, and investors around the world, but especially in Asia, are embracing a sell America mindset for a variety of Trump-related anti-globalist reasons. And so the Hang Seng has really surprised on the upside. It's up 50% from, I think, early January. But, again, keep in mind, it's still down 25% from the early 2021 highs. But this is obviously a strong bounce. And, who knows how much further it could go, especially given the negative political developments in the United States. If the U.S. Congress were to vote today, they'd vote to have all Chinese companies delisted from U.S. exchanges. And again, that probably would benefit Hong Kong.
Stephen, David here. I guess just to build on that, you mentioned three parts to the three legs to the stool. One obviously is to the point you're making now is benefiting Hong Kong. I'm curious how you're thinking about the other two right now. Do you keep an open mind that those two could change?
David, I keep an open mind that anything can change, and in my long career, I've certainly seen that. But I think the domestic governance issues are still a very disconcerting negative against Hong Kong. Since I wrote the piece 14, 15 months ago, more than half the foreign judges to Hong Kong's High Court of Appeals have resigned with some very direct critical comments about their concerns over the rule of law. And there's no shift in my view of the extremely tight linkage, the second leg of the stool, between the Hong Kong and Chinese economy. I note with interest that I just got another report, 24 hours ago, of the 14th consecutive monthly decline year over year in Hong Kong retail sales. Yeah. The growth rates to China, I still think, are worrisome, and the tight linkages between the two economies is unbelievable, and it's hard for me to imagine a spontaneous revival of the Hong Kong economy in a weak Chinese economic climate. So I'm open. Show me the evidence, or give me a new consideration to factor in. But so far, those two are still working out pretty much as I had anticipated when I originally turned negative.
Stephen, I want to get your take more on that one leg that's working, right? The share raising, the IPO activity, and the quality of listings that are coming here in Hong Kong, right? It's very tech, very innovative companies that are coming here, and what maybe Hong Kong Exchange has been wanting. Is this a sign that at least Hong Kong is successful in acting as that financial capital between the East and West? And are there risks to that?
Well, I think it's certainly a testament to Hong Kong. Historically, Yvonne, has really been a thriving market for IPO activity in Asia. But you spoke as that role being a bridge to the East and the West. I would probably be a little bit more regional in naming the role. I think it's a bridge between China and the rest of the world's capital markets, who prefer to go through Hong Kong rather than a very inhospitable U.S. Capital market environment right now. I think, as the capital market climate in the U.S. Continues to be a very treacherous place for Chinese listings, Hong Kong is a major beneficiary of that trend.
Stephen, next week we'll be speaking with Paul Chan, the Financial Secretary of Hong Kong. And this is actually a question I plan to ask him. If his team is watching, here's the heads up, I guess. I think just to build on Yvonne's question there, right? So clearly it's a good thing that Hong Kong, its proximity to China, its position right now. And I'm wondering now what the disadvantages are of perhaps just the perception that Hong Kong is China's international finance center first and global international finance center second. If you could distinguish the two things, is there a difference between the two things? And do you think Hong Kong should more actively promote its non-China portfolio?
Well, look, I think Hong Kong can be a strong platform for Asian listings outside of China. There's no question about it. But the idea that Hong Kong can serve as a capital raising platform for Western companies, especially those in jurisdictions that are aligned with the United States, I think is a real stretch. I'm sure the financial secretary will speak eloquently of, again, Hong Kong as a global platform. But, if you look at the IPO activity to date and prospects of what's in the pipeline, I think it's very much dominated by China and Asian-centric companies.
Stephen, before we go, I kind of want to switch topics here on something that also that's been very timely about what we've seen with President Trump and his calls to cut foreign student numbers at universities like Harvard. As someone that is a fellow at Yale, I'm just wondering your overall response to this.
Well, it's terrible. I mean, it's just, one of the worst things that I've ever seen a president do in my lifetime. I mean, one of the great attributes of the U.S. educational system, and I see this every day at Yale, is a thriving cross-cultural climate with students from all over the world. I've taught over the years large numbers of outstanding, intellectually curious, very smart Chinese students, and I would certainly hate to see that vanish from the scene. And I think it's a terrible thing that the Trump administration is doing in restricting that possibility in the future, and I hope it gets tossed out in the courts.
Stephen, let me take this specific issue, and then let's look at the broader sort of trade negotiation conversation. As I think businesses are trying to figure out how to react to the president and plan for the future, and I wonder how you think about what's happening right now. Do you think these things will outlast the Trump administration? Is this something that you think will continue, whether that's what's happening in the academia or this sort of untangling between U.S. and China, to varying degrees, of course, in trade, but security perhaps most extreme? What level of permanence do you see beyond the next 3.5 years?
Well, it's a great question. I mean, there are two aspects of the question that I would just focus on. One, the degree of policy uncertainty that is an outgrowth of a U.S. president who changes his mind multiple times a day. That is very Trump specific. And when he goes, I think we'll then go back to a more predictable policy climate. And uncertainty, of course, while it's going on, freezes the ability of businesses to make long-term planning decisions with respect to capital spending, hiring, and foreign sourcing. The second aspect, though, that's really probably more important is just to note that, during Trump's first term, we were shocked with the tariffs that were put in place by President Trump in 2018 and 2019. But even more shocking was the fact that his successor, Joe Biden, kept those tariffs in place. And so, post-Trump 2.0, given the very worrisome bipartisan anti-China sentiment in Washington, it's quite conceivable that U.S. policy will remain tough on China for the foreseeable future.
Stephen, we got to leave it there, but thank you so much. Stephen Roach there, senior fellow at Yale Law School, joining us there from Connecticut this evening. I just want to break these recent data that came out from Caixin China manufacturing PMI numbers here. So this was quite a miss, in fact, 48.3. That is a big miss from what the economists were expecting here, and the lowest number we've seen since September of 2022, and missing all forecasts here. So we'll continue to look there, but yes, 48.3 for that number.
I'll put this together with the ISM imports out of the U.S. overnight, lowest since 2009. So clearly, both economies are feeling the headwinds from negotiations on the trade front. Plenty more ahead on The China Show.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money. I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert. That's right, Jack. Oh! Release the mink!
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
Are you ready?
We were born ready.
Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
911 emergency. Yes, somebody killed two girls. My grandbaby and my friend. Dad? Dad! Please, please.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you.
Everybody starts out small.
Question is, what do you want to make of yourself?
I can't change what I did, but I can change what I do now.
You and I are in this together.
These are the good days that we dreamt about. Take it in.
This is your golden ticket. Make sure you're ready to seize that moment when it comes.
Live your life to the fullest like it's your last breath.
Did you hear that?
You guys seeing this?
It is our job to take you where others won't.
China Show. Here's a look at the CSI 300, a half hour into the session after returning from that holiday. And we are actually seeing a slight bit across equities there. In fact, you look offshore, things are looking a little bit better. And we are seeing a decent rebound underway for MSCI China. We're up some 1% as well. There is news, of course, that there might be some potential call between Presidents Trump and Xi. I think that's what's lifting sentiment here this morning. But again, you got to recap what we saw in that Caixin China manufacturing PMI. Pretty ugly number there, Dave.
There is an economic incentive that's come through on the data front for them to really hammer
Both
things
sides
out.
need this talk.
They need to find a solution sooner rather than later. The other point, though, that our China correspondent Min Min Lo mentioned in the last hour was she's glanced and she's surveyed Chinese media today, and there doesn't seem to be any indication that there is, I guess, a possibility, at least, or a near possibility that we might see the two leaders meet. Now, all that being said, it's also worth pointing out that on the same week that we did get those talks in Geneva, there was very little indication that that would happen, and then suddenly we had news, of course, that they would. So, just to caveat that, to Yvonne's point, PMI missing all estimates, lowest since 2022. U.S. ISM import data coming in lowest since 2009. So underscore that point that they were just making there earlier on. Right, let's look at TSMC. The reason we're looking at that, Sue, we're up about 1.8%. Number one, the tech rally overnight is carrying through as far as tailwinds go today. Apart from that, we're also hearing from the CEO talking about how profit will reach a record high this year. TSMC's technology will not leak amid the global expansion, amidst these talks and conversations around them putting, of course, more manufacturing hubs in other parts of the world. And I think they're also talking about gross margins here down 3% because of, again, the Forex impact, which, by the way, is something I think we should note going into the next earnings season of Taiwan with the strength in the Taiwan dollar.
Yeah, how is that going to be reflected into the earnings margins, the like here? Certainly it's one thing to watch. You mentioned New World, so today we are seeing a recovery in that stock quite a bit here. So yesterday the news was, of course, they deferred that bond payment of their perpetual bonds. What we're seeing now is that New World is getting, as Morningstar says, the company could avoid a default. And I think some of the analysts' notes that we've seen saying this isn't really a default, right? It might just be something that they need in terms of liquidity to buy some time as they go through this kind of refinancing and the bank commitments that they're likely, according to our sources, have solidified at least about 60%. So, yeah, maybe that's why we're seeing a little bit of relief here today in that stock, but then again, we're still watching a lot of volatility in the bond space.
Yeah, I think the last we traded on one of the four perpetuals that was caught in the crosshairs, of course, from the filing on Friday, actually closed at about 35 cents. So that obviously gives you an indication of how far we've come. By the way, since late last week, we were trading at about over 60 cents. We're still waiting for this to come online. But that said, the story's not over, I think, as far as that is concerned. Right, across the region you have two market shuts today. You don't have Korea, and you also don't have Thailand trading. Apart from that, we are looking just about good across the screens. Of course, we talked about TSMC and the Taiwan story, 1.2%. I would imagine that's really doing most of the heavy lifting. 0.4 to 1% to the upside. We were steeper on the curve. We're now, as you can see, the opposite of that. It's worth pointing out the RBA minutes which came out opened up the possibility, but they decided against it, of a larger cut the last time they moved, but they chose to go 25 instead. Gold catching a further bid, 3,400, and we are making, again, a third approach to those all-time highs as we look at the U.S. dollar weakness coming through as well. Right, very quickly, in the next hour is the next indication of this sort of one for the bears. Bid to cover on JGBs. The 10-year is being auctioned today. Last one had the lowest bid to cover going back to 2021. Further drop in that takes you all the back almost a decade here as far as demand is concerned.
Yeah, so we've seen the last two auctions in the long end created quite a bit of turbulence. We'll see if this one does there. But this could be the 10-year more of maybe broader what sentiment is looking like here today, especially when it comes to the JGB market. For more on the markets, let's bring in our MLI strategist, Mary Nicola. So, Mary, obviously trade tensions seem to be easing off a little bit. We have this JGB auction as well. I mean, what's top of mind for you today?
Yeah, I think the key focus today is just really on the JGB market and what's going to happen with the JGB auctions, considering the pressure that we've seen on Japanese bonds over the last few weeks. Obviously, there's concern about debt sustainability. There's also more pressure on the Ministry of Finance to tweak sales of bonds and to tweak issuance. And of course, pressure on the BOJ to change what they're going to do in terms of when they're unwinding their balance sheet. So there's a few steps and there's no clarity as of yet. Even we heard BOJ's Ueda speak this morning. There was nothing to that effect. So there's a lot of nerves and a lot of angst going into the JGB market and the JGB auction. And of course, that's also what we're seeing as like the clear underperformance in the yen.
Mary, just to put together also, and I guess more on the equity side of things now, the data overnight from the US ISM, and just in the last 15 minutes, the PMI numbers out of China, the numbers have really started to deteriorate on both sides and fairly quickly. How do we need to be thinking about that moving forward?
Yeah, it's clear that the trade truce really hasn't done much in terms of improving sentiment for businesses. And the fact is that it's only a temporary reprieve because we don't know what things are going. So it's hard for businesses to plan if you only have 90 days of reprieve and how things are unfolding because of trade policy being highly uncertain. So what we've seen indicative for today is that from China specifically, you will need to see more stimulus. There's going to be rising expectations that more stimulus will come through from the government side because, yes, we saw a slight improvement from the official PMIs, but the fact is that small and medium-sized businesses and the private sector is struggling. And so as a result, we are going to need to see a lot more support and expectations of a lot more support coming through from the government to really stem these declines and to offer some boost for growth.
Mary, thank you so much. Mary Nicola there in Singapore for us. The other big story and one market that is shut today is South Korea, as Koreans are headed to the polls. They're voting today for a new president after last year's short-lived declaration of martial law, still continuing to permeate as a fairly major issue going into the exercise today. And of course, it eventually led to the downfall, of course, of Yoon Suk-yeol and certainly the country's worst constitutional crisis in decades. Danny Thomas is with us out of Seoul to get us up to speed where we are, and live pictures, of course, we're seeing on the screens here, Danny, of what's taking place in your side of the world here. What are the top issues you think that South Koreans are voting for today as they make their decision here?
Yeah, so clearly for everybody right across, it's just the economy, which has really been underperforming, and for every voter that has participated in the opinion polls, they all have come out pretty strongly saying that we need a government that can stabilize the economy and put the country back on growth. And with that also comes the whole discussion with the U.S. Trump administration on tariffs. So those are the two main issues that people have been raising and trying to, raise in these elections.
What about for a foreign policy perspective? How does that shift depending on who wins, Danny?
Yeah, so that's a good question. And if you see the frontrunner Lee Jae-min, he has been slightly more opposed to rushing to a deal with the U.S. He wants a proper and a detailed analysis of what the deal should look like, and that could be a shift from the current government led by the conservatives. So if Lee Jae-min comes in, you're going to see a bit more of a pushback to Trump's kind of the threats. So that's something we will be watching out. And on the other aspect of it, Lee Jae-min has also been a bit more open to the idea of negotiating or being in touch with North Korea, which has been completely opposite to what the previous government has been doing. So those are the big shifts that you could see that comes through in this if the current winner and the leader candidate in the opinion polls gets to power.
Danny Thomas there, thank you so much for joining us live from Seoul here this morning as voting is underway in that country. And of course, we're bringing the latest once we do hear more from this election. But it really brings a lot of questions, Dave, on just the overall outlook of Korea, right? You know, you mentioned a really good question to George Maris from Principal about is there any sort of value for foreign investors beyond just the semiconductor space? And he says, look, there is, but you have to see more reforms.
Yeah, there's still some questions around how minority investors are protected, right?
Yeah.
And that goes into the broader initiative that they want to improve corporate governance, right? So beyond the usual names, there is value. The market is cheap. There is a discount there. But I think he was pointing out we need to see more reforms from the government itself to address some of those issues there. Let's split it out, guys, if we can, in fact.
You'd love to invest more within Korea, but the lack of corporate governance, the lack of protection for minority shareholders is a true concern. And so how do I allocate capital to Korea knowing that corporate governance may not protect me as a minority shareholder like it would here, for example, in Hong Kong or it would in other developed markets? These changes are significant, and I think you've also seen the power of investing behind this long term.
And he basically said Korea has to evolve in some ways, right? If you want to be able to attract international capital, if you want to be the likes of China, being the likes of China, being the likes of Japan and Taiwan out there, you have to really, evolve and find itself, differentiate yourself in some ways. But he says, what he saw in Japan is really what he thinks could happen to Korea, basically, right?
Yes, yeah, and I think that's a good way to put it, right? That's the North Star Korea, and I think the other comparison he made just now in the soundbite was, I'd rather take my money to Hong Kong for investors because there seems to be more institutionalized as far as those two North Stars are concerned. Anyway, we'll continue the coverage around the elections coming through. In fact, it's coming up here on the show.
We've been without leadership for the last 5-6 months, and it's been troubling, especially with the economic situation globally. And now with new leadership coming up, I think that will be the priority for the government.
That was Korean Air CEO commenting on the political situation in South Korea. We'll have more from his interview coming up. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you.
Welcome back. You're watching The China Show. Secretary of State, U.S. Secretary of State Marco Rubio has ordered further scrutiny of the social media policies of any foreigners seeking to visit Harvard University. And he's told actually U.S. consular officers that the lack of an online presence might be enough cost to deny a visa. Min Min Lo, our China correspondent, is here with that story. Give us a bit of background, Min Min, on this specific issue and, who might likely be affected and what's the broader sort of economic impact from this exercise?
Yeah, this latest directive from Marco Rubio is targeted at people wanting to visit Harvard. So whether it's faculty, students, or tourists, but of course there is a broader targeting of Chinese student visas as well. And to give you some context of the scale, 1.1 million, that is the number of foreign students in the US last year. India is the number one source of foreign students and China ranked second. There were close to 280,000 Chinese students in the US last year. And I want to show you another number, the services surplus that US runs with China. It has a trade deficit with China, but a services surplus, and that is $32 billion. That's the amount of services sold to China last year, and nearly a third of that is related to education, whether it's tuition fees or living expenses of students. And bear in mind, many of these students, they pay full tuition fees, and that's the money that billions of dollars going to US universities that can be used to provide financial aid to other students. And flip the board, you can see this is the reaction we're getting from China. A CCTV state TV anchor mentioned this, 烧掉吹灭别人灯，烧掉自己的胡子, and it means essentially, you can read the translation here, it means it's a lose-lose for both US and China.
Interesting. Very poetic. All right, Min Min, thank you for that update on what we're seeing here at China Correspondent. And, there are some universities out there that are opening their arms and welcoming Harvard students and the like, right? Hong Kong University of Science and Technology is one of them. They've extended an open invitation to international students from Harvard amid the current uncertainty. Joining us now is the university's Associate Provost for Institutional Data and Research, Allison Elizabeth Lloyd. Allison, it's great to have you here. Thanks for joining us. First and foremost, obviously, I think UST was one of the first to kind of raise their hand and extend that invitation to Harvard students. What sort of response and traction have you gotten so far?
Thanks, Yvonne and David, for having me. That is right. So we were the first institution to extend a welcome to Harvard students, but also students from other universities that have also been affected by this recent events. We have seen actually a lot of inquiries coming in. Students, obviously, as you can imagine, really quite grappled with anxiety and distress because they're quite uncertain about what will happen next. Can they continue their academic journeys? And so at this time, the university has really been trying to extend as much support as we can. As you've also mentioned, so we have been offering a variety of different types of support, including looking at ways that we can help with transition, academic bridging, and so on, and many options. And in fact, the university has actually seen an increase in the number of international students that have been applying for undergraduate programs, if you look at sort of year-on-year increases. So definitely, it's had huge impact.
Allison, I'm curious, you mentioned increase in applications. Could you give us a number or a rough number of how many people have actually approached the school since you guys raised your hand?
Well, the number is, of course, changing every day, as you can imagine, because with all the events that are quite dynamic. But I can share with you that in terms of applications for, say, our undergraduate programs, we've seen a sort of 40% increase at least. So quite substantial.
Interesting, 40%. Yeah, and if you look at the makeup of Hong Kong UST, Allison, it seems like it is mainly Hong Kong and mainland students that make up your student community. I'm just wondering, what does this mean for the university's broader agenda in terms of internationalization, and what challenges do you still face?
Well, the university actually has been quite steadfast to really try to create diversity within the student body. So actually, over the course of the years to date, what we've done is try to, the mainland students may make up approximately, say, half of those undergraduate sort of body. We do try to diversify the other half, and so certainly that is something that we do continue to strive to do.
And Allison, do you think the objective of getting that ratio up what do you think is the underlying issue why that ratio needs to get up in the first place? In other words, is that an issue unique to HKUST, or is that simply, I guess, a challenge that many universities in this part of the world are also trying to get over?
Well, I think one of the benefits, of course, is we do recognize the value of bringing international students in. They bring certainly a different perspective into our classrooms. They enrich the cultural diversity on campus. So there's certainly great benefits to having that very diverse student body. It is something perhaps that a lot of institutions in Hong Kong are also quite mindful of. And as you probably are aware, the government has also encouraged the lifting of certain quotas for undergraduate non-local enrollment, and very much in line with this as well.
And can you tell us, obviously Hong Kong itself, the demographics have changed, right? The departure of many foreigners and the arrival of many mainland sort of people here based on government schemes, as you mentioned, like the Top Talent Pass scheme as well. I'm just wondering, to what extent do you think Hong Kong's change in dynamics or demographics is really impacting your demographics too?
Right. I think, despite the changes, I think Hong Kong still does offer quite a strategic gateway, right? So Hong Kong is still positioned very strongly as a financial hub, gateway to Asia, and particularly very strong, I would say, still in terms of networking career opportunities, particularly when it comes to, say, business, finance, technology. Hong Kong, you still see we're home to a lot of multinational headquarters, and it really is an ideal destination, particularly for students if they are interested to target careers in Asia Pacific. I think we still have that appeal for students to come.
Elizabeth, back to I'm curious, I just remembered a question I didn't ask you about the Harvard part of the question here. So clearly HKUST, and that really made the rounds when you guys put that statement out that you guys are welcome here. So simple question, how does that work? I'm sure they need to apply, but do they need to take a test? These are Harvard students, so I would imagine there's already some minimum level of intellectual capacity involved there. But yeah, how does that work? Are they in already, or take us through how the process should look.
Right, so basically, as you can imagine, so each student's circumstances is really quite unique. So what we've been doing is, these students reach out to us, and we have dedicated sort of counselors and advisors really understanding their various situations and what it is that we can perhaps best do to help, ensure that they can continue with their academic journey. So it's really quite varied what some of the different arrangements are. There is no particular test per se, but it's really understanding sort of how we can really best help. Because I think at this point in time, the priority really is to ensure stability for them, but also try to create some kind of safety network for them, essentially.
Okay, certainly that's one thing to watch as well. So it'll be interesting. It's student to student, I guess you could say. What does it tell you about just overall this whole issue with Harvard and the president? Does it really change how people view the U.S. as a destination for higher education?
Absolutely. I'm sure the reaction that we see is, of course, one of great concern and alarm, because essentially this really is a challenge, right, on institutional autonomy. It's a challenge to even the well-being of students and faculty. And I'm sure sort of going forward, you'll see that other than students being distressed about whether or not they can start their journeys there, continue, or even graduate, you even have, I think, impact on faculty who are facing frozen research funds and possibly even job security fears. I think most certainly when going forward, you'll have students certainly weighing the decision of how stable in terms the destination is, in terms of its policies, side by side with academic reputation when they are selecting an institution to go to. And I think going forward, you'll definitely see the rise of a lot of different talent hubs, essentially.
Allison, thank you so much for the time. I suspect this won't be the last time we'll be speaking. Allison Elizabeth Lloyd there, Associate Provost at the Hong Kong University of Science and Technology. And by the way, you can get an insider's guide to the money and people shaking up the finance hub. And certainly this is really a story that will continue to give as far as the Hong Kong story goes. Catch it every Thursday, our Hong Kong edition newsletter. Sign up via Bloomberg.com/newsletters.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Are you ready?
We were born ready. Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
My mission is to protect you.
Who sent you?
You did.
Never seen one like you. Almost human.
I am human.
I'll be back.
All right, market check here right now. We're taking a look at TSMC shares in Taipei here, and we are seeing them gain about 1% here this morning. There was a talk from the CEO speaking at an annual shareholder meeting in Hsinchu and talking about, in terms of growth, sales will grow mid 20% in dollar terms this year. Also, what they've been talking about is they don't have plans for a factory in the Middle East. That was something that we had reported just a few recently here about maybe their plans to look over there. But certainly the CEO is squashing that idea, at least for now. Dave?
Yeah, I think that was the UAE was what we talked about in our reporting there. Right, just to flip the page, please, and we're looking at movie and film stocks and holiday box office data in China showing a 20% increase during the holiday weekend. Of course, we are reopening, of course, for mainland markets, and we're getting some upside going against the grain across a market that's actually not getting a lot of momentum in the first hour of trade. Plenty more ahead.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry. This is Stephen Tyrone Colbert. That's right, Jack. Oh! Release the mink!
Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
Being able to look at a screen and see myself is like no feeling in the world.
Get it!
That's how my friends hang. Get in, loser. That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
It's Jobs Day, and Bloomberg has the report under surveillance.
The risk was a downside surprise, the reality an upside surprise. The shock has affected outcomes.
There's a pretty big cliff from an economic perspective.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
American exceptionalism continues.
This is not what we're going to experience in the upcoming months.
Is it going to be Biden data or Trump data?
The May Jobs Report, Friday on Bloomberg.
All right, 11:29 a.m. in Tokyo. Japanese markets heading to that lunch break, and we are seeing at least a slight bit on equities there in Tokyo this morning. We're flat on the topics, but really what we're watching very closely is, of course, the JGB market, because that 10-year bond auction is happening today. So we've been through two of the three,
Yeah.
the 20 and the 30-year, which were quite volatile the last few weeks or so. We'll see how the 10-year and what it brings there.
That's a good point, because the last 10-year auction was clearly this time last month, and it actually took place before the series of weaker and weaker options, which I guess in many ways cemented the recent narrative of just a lack of demand there. So coming up on your screens very shortly is we've already seen bid to cover come in and trend slightly to the downside. In fact, the last one coming in at just over 2.5. Which was already very close to the 2021 low. Anything almost below that, even slightly, would take out that 2021 low and take us back several years, which goes back to the 20-year, which was the lowest in 2013. The 30-year bid to cover was, I think, lowest in about a year or so. So yes, the BOJ steps away. We'll really need to see, I guess, more yields on the table for buyers to come back in. That should be out in about an hour from now. For the folks, of course, the next show with Haslinda. Anyway, that's for them to report. Anyway, well, that's a preview for you. Asia, outside of the Japanese markets, on a sector level, we're looking at a mixed picture. In fact, you know what? I'm gonna make this very simple. There's nothing happening in market today, apart from the weaker dollar. But yes.
Yeah, it brings us time to look at what's going on with one property developer, right? New World.
Yeah.
Where we are seeing at least recovery in the stock here this morning. I think there's more analysts out there that are at least trying to provide some relief and clarity and saying, look, it doesn't look like this company is going to default anytime soon. And perhaps the deferral of these coupon payments is just a way to buy time as they deal with some of the refinancing, preserve some cash for the longer term. Let's bring in Zerlina Zeng. She joins us now from CreditSights on her take on all this. She's the head of East Asia Corporates and Asia Credit Strategy. Zerlina, thanks so much for joining us. You still have a hold recommendation on some of these bonds of New World. Can you tell us just overall what should we be watching out next after these coupon deferrals, and do you think that's a positive or negative thing for the company?
Yeah, thanks for having me here. I think it was a surprise for us because the fact this company actually has cash on its balance sheet. The operating cash flow year to date was actually pretty good. The company's contracted sales in China and Hong Kong were on target, actually exceeding the management guidance a little bit. So I think the trigger of this deferral was not a liquidity issue, but it is more for a precondition of the banks to granting the company the rollover of the loans. I think people also need to be aware the context is the parental company, Chow Tai Fook Group, hasn't really provided any assets or cash injection other than providing a letter of comfort. Well, this is not very comforting for the banks. So I think banks at this point, they probably want the company to improve their cash flow to preserve some cash. So this is the result in deferral of coupon. I think the next people should be watched out for is whether there will be a liability management on the dollar bonds, which we think is a base case. Because if I were a bank, I
I probably want to roll over the loan. I want to get the collateral from newer development. Then afterwards, I would like newer development to restructure some of its dollar bonds to reduce debt as well as to improve interest coverage. So this is probably the direction to go. But I guess everything has a price with the dollar bonds price dropping to this level. So that's why we are keeping the hold recommendation.
Right. Zerlina, David here. So is your base case that the group manages to get that loan agreement in place? And what do you think will be the loan covenants attached to that?
Yeah, I think our base case is still newer development. They will be able to get the loan down because if it goes to an immediate default, then the banks will need to recognize a lot of NPLs and provisions, and they will be treated the same as the senior dollar bond holders, which is not ideal for the banks. So they need to get the collaterals first. I think in terms of the covenants, there will be some restrictions in terms of interest coverage, the company's solid plan to deleverage, and that also means the company do need to do some haircuts on the dollar bonds, because its free operating cash flow is still going to be negative for the next 1 to 2 years. So I don't think the company has other choice other than doing a liability management on its dollar bonds.
You mentioned that obviously the bond prices have gapped lower. Do you think that we've already reached a floor in some ways? Yeah. And what would determine that floor, you think?
I think we already reached certain floor at the market open yesterday. So the seniors tanked 20 points and the dollar bonds, some of them tanked 35 points, which just didn't really make sense because even in a liability management scenario, we think the terms would be better or the recovery would be better than the current market pricing. This is because, first of all, we don't think the company is insolvent. It still has cash on the balance sheet. And second is because if the goal of a liability management is debt reduction, then the company need to maximize the consent from the bondholders, and you cannot be offering a very bad terms to get the bondholders buying.
Yeah, but Zerlina, the notion that if they are able to get the loan extension, don't these become subordinated then? And do you think that's properly priced in the market?
Yeah, I think the bonds are already priced as subordinated because the news that the newer development is going to give collaterals to the banks. So it's already priced in to some extent, the structural subordination.
Right. And what do you think the future then is for these perpetuals? And do you think the company will simply just need to, I guess in some ways, refinance at higher coupon costs?
Yeah, I think the company will need to restructure the dollar bonds at the very least. I do see the chance of senior dollar bullets also get included in the liability management because they have 2 maturities in 2027 that are ahead of the bank loan maturity. I think the company will likely do some upfront cash payments, then they will defer the coupon payment as well as the accumulative coupon in the form of payment in kind, and then maybe in 3 to 5 years' time they will start paying coupon on the dollar perps again. For the seniors, there could be a distressed exchange offer, or there could be also included in the liability management as in the extension of the maturity.
Zerlina, maybe I want to broaden a little bit more on what this means. I mean, some of these blue chip names in Hong Kong have had a pretty warm relationship with creditors for the past decade or so. I'm just wondering, does this change at all Hong Kong's reputation as a credit-worthy community?
I think for a lot of the high-quality Hong Kong property names and conglomerates, their stance in the bond capital market is still very strong. Names like Hong Kong Land, Wharf, they're A-rated, their balance sheet is rock solid, and they have very prudent financial management, and bondholders are okay with these ones. I think newer development is almost like an exception. Historically, it hasn't been very communicative with the bondholders. I think for a lot of our clients and investors, the IR and treasury team, they just disappeared and stopped communicating. So I would say this is an exception, and I think for a lot of the IG and high-grade Hong Kong property credits and conglomerate credits, the reputation is still very good and the stance is still there.
Final question for you. Can't let you go without asking a broader, just what's your investment advice question. So
we know Treasury yields have been pushing the ceiling. We know at some point the Fed is probably going to cut. What's best value right now across the fixed income space? Rates, IG, high yield. What's a mistake and what's a good idea?
Yeah, I think we hold a very contrarian view of the Fed on hold throughout the year. Everybody think we were crazy at the start of the year. I guess we're not that crazy anymore. So as of now, we are getting a bit more comfortable with duration than credit risk, given U.S. Treasury has sold off in April and in May. And in terms of the credit risk, we are cautious. If we look at the Asia and IG and high yield spread, they have already reverted to historical highs before the Liberation Day. So we think we need to be cautious of going down in credit quality. We like a barbell strategy in credit risk, so we do have some defensive names in our portfolio. We also have some selected beta. One other thing to note is we always tell clients to diversify across different markets and also across different currencies, given the broken correlation between Asian rates as well as the U.S. Treasury. So I think diversification is quite key in portfolio allocation.
There you go, Zerlina. Thank you so much, Zerlina Zhang there, head of East Asia Corporates and Asia Credit Strategy at CreditSights. We got plenty more ahead. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Slow down, honey.
Ah, a new driver. You'll need new insurance. Zebra compares over 100 insurance companies to find savings no one else can. Up to $400 a year.
Trevor!
Oh, look, it's my stop. The Zebra. We do the searching, you do the saving.
1, 2, 3.
But we're gonna go a different way. We treat them like family.
Season is here.
Earnings, the hot topic of conversation. It's going to be a lot of fireworks.
Pretty astonishing moment in time in the earnings context.
Bloomberg is first to break the numbers.
Goldman Sachs, JP Morgan, Morgan Stanley.
Booking, Airbnb.
Meta, Microsoft, Qualcomm.
There's a lot to talk about here.
With the smartest insights.
We're not seeing dramatic weakness. It has been an incredible period of time from a trading perspective.
We feel really good about the market share trajectory.
Continuing coverage on Bloomberg. Context changes everything.
Welcome back. You're watching the China Show, right? So we went into the weekend, right, on Friday, and quite a change in the tone from both sides on U.S. and China. So what's happened? What's happened, right? So what we have here on the screen is a graphic, really, which underscores, I won't get into the details because, well, for one, these are words I can't even say on the most sober of times. But that being said, it effectively shows you the global market share and the dominance China really holds over the sector. In fact, Trivium China believes that Beijing's grip, and this graphic underscores that bit, right, on rare earth materials is boosting its leverage in negotiations. And Yvonne, we were talking just before we came on air that this really has emerged as one of the sticking points to these ongoing talks.
Yeah, in fact, we heard from Scott Bessent, the U.S. Treasury Secretary, recently speaking, I think it was Meet the Press, Face the Nation, sorry. He mentioned that, there was signs that China was violating their part of the agreement in this trade truce. And when they asked and pushed him, is it because of rare earths? Is that one of those products? He said yes. So that certainly is one of the things that seems to be in a logjam right now. Let's bring in Martin Ritchie, who covers commodities for us out of Shanghai. And Martin, we talk about rare earths. That is one of the big sort of key leverage that China really has right now in these trade negotiations.
Yeah, it certainly seems to have become the major sticking point of the moment between the US and China. Obviously, we had the big agreement in Geneva last month that reeled in those tariffs, really punitive tariffs. But since then, there's been disagreements on a number of fronts, and we've seen the US introduce a number of new measures against China, including new restrictions on Huawei technology use, new chip controls, and restrictions on US visas for Chinese students apparently incoming. So on the US side, they appear to be very unhappy with what China has done following that deal. And what they have done is becoming a little bit clearer with some of the comments from the US. They seem to be unhappy that China has not started shipping rare earths and rare earth products from China yet. The agreement in Geneva implied that China would stop some non-tariff countermeasures. What we're hearing from the Washington side now more clearly is that this does relate to rare earths. We heard Jameson Greer, the US trade representative, saying that China needs to do more to speed up its exports of rare earths. And it's slightly complicated because China, for its part, it started these new controls on rare earths to exports to all countries in the world, not just the US. So they've been introducing this new system to check exports more carefully, and that takes a while. So what we're starting to see now is some of those exports happening now. We had AmCham, president, the American Chamber of Commerce in China, saying that over the past week there have been exports start. So we're at this situation now where the US seems to be complaining quite vociferously in public now about something which maybe is already starting to happen on the Chinese side.
Yeah, well, I was about to ask you too, do you get a sense that they maybe spoke too soon because this is a fairly complicated process to get underway? And do we have a sense as well of what would appease the U.S. side in terms of, how much exports they actually want to see take place?
Well, the interesting thing with this is we've got a sort of model of what happens with export controls in the past. In the past year and a half, China has put export controls, which are aimed at stopping military and defense uses, essentially, has put export controls on a number of other minerals and products. And what you see is there's a kind of hiatus of a few weeks to up to 6 weeks, where exports have to enter this new regime. Exporters have to apply for permits. They all have to get used to this new system of working. So there's a lull, and then exports start picking up again. It might be that we see the same with rare earths, and that certainly chimes with what I was just talking about, AmCham president saying the exports were starting again. What will actually appease the US is if those companies, those commercial companies like Ford, like the other automakers, start getting their supplies of what are called rare earth magnets, start getting their supplies flowing again and in the volumes needed. I know that Ford has already experienced some disruptions, just to give one example.
All right, Martin, thank you so much. Martin Ritchie there joining us out of Shanghai. Here are some of the global headlines that we're following for you today. Bloomberg has learned that the EU has agreed to curb Chinese medical device manufacturers' access to public procurement contracts. Now, sources say EU countries voted Monday to ban Chinese firms' access to public contracts worth more than 5 billion euros. An EU inquiry found that Beijing discriminated against foreign firms in procuring its own supplies of medical devices. Polish Prime Minister Donald Tusk says he'll seek a vote of confidence to shore up support for his coalition government. That's after nationalist Karol Nawrocki defeated a centrist candidate backed by Tusk's party in the presidential election. Tusk says he wants to reestablish unity in the cabinet, but has a plan in place if cooperation fails.
Now, let's stay on the election theme. You have South Korea, of course, today heading to polls to pick a new president. Now, the winner will face the challenge, of course, of reuniting the country after the worst political crisis in decades and negotiate separately, of course, a trade deal with the United States. Now, speaking exclusively to Bloomberg, Korean Air Chairman and CEO Walter Cho says securing a trade deal specifically needs to be the very top priority for the next president.
We've been without leadership for the last 5-6 months. and it's been troubling, especially with the economic situation or globally. And now with new leadership coming up, I think that will be the priority for the government, Korean government. Yeah.
So getting a trade deal done, is that job number one?
Yes, I believe so.
And what do you want to see from that?
Regardless of the outcome, I just want it to be done, so we could see some future into and predictability.
So you'd rather the details are less important than knowing what the future is going to be.
So we can plan on what to do next.
Do you think the currency volatility is going to continue? The won's been pretty volatile over the last few weeks. Is that something that's affected you, and do you anticipate that continuing?
It's been stabilizing for a few weeks now.
So you'd be happy with a stronger won? That would be something that you would actually welcome?
Yes.
Do you think that will be part of the conversation with the United States?
But the Korean governments would, I think they would prefer a weaker one because it's an exporting country.
Yep.
But for me, I would prefer a stronger.
Okay.
Yeah.
In terms of the trade deal, is it important to you, though, that we see aerospace being carved out? A lot of CEOs are telling me that
yes,
they would rather make sure that actually that aerospace goes back to its original format, which is no tariffs. How likely do you think that is?
Well, we're a large buyer of aircraft, but we also sell a lot of airplane parts to Boeing and Airbus as well. So this is very important for Korean Air as well. So, and historically, aviation was not part of the tariff. And now that it's going to cause a lot of confusion to the business. Yeah.
Are you already hearing that we're going to see price rises? Like I'm talking to, so the Boeing, Airbus, the big engine manufacturers, are they already starting to signal that price rises are coming?
Fortunately, we locked up all the prices before this happened, but I'm expecting some
spare parts and things like that
exactly,
could become more expensive.
Yeah, so that will be difficult to maintain and grow our business as well. Yeah.
What's happening with demand right now?
What?
Demand. What are you seeing in terms of?
So cargo, we've been seeing quite sharp decrease from traffic from China to U.S.
Right.
But and passenger, it's been steady, especially in the premium market side. It's been steady, but we're expecting some turmoil in depending on the trade negotiations.
The trade situation will also affect the passenger side of things. How exactly is that is it just in and out of the United States? Is it where are you seeing that?
Well, it's not just the United States, but it has a very big effect on the Korean economy, and that has a great effect on the passenger demands.
And you think, again, that's structural, that's a permanent feature of the landscape now?
Yes. So we'll have to adopt on that too, but there's too much to adopt right now.
There's too much volatility in so many parts of the business.
Yeah.
In terms, therefore, of going forward, how are you thinking about planning the network? How are you thinking about what you're doing with aircraft? Given the volatility you've described, can you make big orders right now? Do you have the degree of certainty you need to make big decisions?
We have demand for new aircrafts, not just for expansion, but also for replacement for more efficiency.
Yep.
And that's what we did in previous months with Boeing and Airbus. And we'll continue to do that. But for expansion and growth, there's still a lot of other markets that we are pursuing to grow and expand into.
Right.
Not just U.S., but other markets.
Okay, but you would take some capacity out of the U.S. and just put it elsewhere?
I think U.S. market is. I don't think we're going to pull out any of the capacity from U.S.
And that was the Korean Air Chairman Walter Cho speaking exclusively with us there. Plenty more ahead. This is Bloomberg.
Echo of the earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to get bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
All right, before we wrap things up, weakness in U.S. futures. We're doing okay, decently, not blockbuster. So I guess suffice to say we're a bad headline away from this reversing to the downside. A 10 to 1% to the upside, give or take, here on the Asia Pacific Index.
Yep, and up next is, of course, that JGB 10-year bond auction. And but we could try for some volatility after what we saw with the 30-year and the 20-year. And certainly, given the rise in Treasury yields, that's going to add to a little bit more angst in this bond market as well. So what is the bid to cover going to be? What's going to be considered to be high or low in terms of demand? And yeah, we're not done yet. There's another one on Thursday, Dave.
The 30-year is coming up on Thursday, also around the same time of the day. But that's it from us here in the China Show. You have to stay tuned for details on that bond auction coming through with Inside with Haslinda and team coming up.
Echo of the earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to get bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want? You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he was watching, what would you want to say to him?
Here, look at this.
The most influential people.
Who's the best coach in college football? Let me see a mirror so I can look at it.
Are you a billionaire yet? None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looted?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping? Where was the military?
Why are people suspicious?
That sounds like a problem.
How is this possible?
Oh, come on. Whoa.
Wow.
What is going on?
I'm Scott Pelley.
I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi. I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
showtime, baby.
It's time for 60 Minutes. Watch anytime.
Are you ready?
We were born ready.
Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
911 emergency. Yes, somebody killed two girls. My grandbaby and my friend. Dead? We're dead. Please, please.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you. I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls. So we'll see you guys later. Thank you.
The White House press secretary there saying that Presidents Trump and Xi are likely to talk this week as the world's two largest economies remain locked in trade turmoil. Live from the Nomura Investment Forum here in Singapore, this is Insight with Haslinda Amir. Asian shares edge up as investors await news on U.S.-China trade negotiations with a focus on whether Trump and Xi will pick up their phones and dial down tensions. Meanwhile, the dollar is near 2023 lows, with the Wall Street banks reinforcing their calls it will weaken further, hit by rate cuts, slowing growth, and Trump's policies. The White House is getting desperate for a win, as trade pacts seem elusive, and the one big beautiful bill faces hurdle. To speak to Donald Trump's former Chief of Staff, Mike Mulvaney, about how things are shaping up for the president. South Koreans are voting for a new president after months of chaos from the martial law gamble by Yoon Suk-yeol. The winner faces challenges, including a slowing economy. And New Zealand's golden visa is said to be shining as the US, the UK, and other countries tightened immigration. We hear from the country's former Minister for Economic Development on whether a slowing economy can handle the new arrivals. You're watching Insight. While investors await more clarity on trade and tariffs, the dollar is hovering near its weakest level since 2023. As President Trump's trade policies prompt a rethink of the world's reliance on the greenback, and Wall Street banks are warning of more losses to come. Avril Hong is here with the very latest. Avril.
Yeah, Has, I mean, as you highlighted, the dollar is really in the spotlight, falling amid the resurfacing of U.S.-China trade tensions, and we've seen it falling to almost the lowest level since 2023. The level to watch in the Bloomberg Dollar Index is 1206. If it breaches that, it'll be the lowest since 2022. And these headwinds for the greenback are growing. They could come in the form of weak U.S. data, further escalation of trade tensions, or further weakness in the Treasuries market. Certainly, we've already been seeing them starting the month of June on the back foot, with the long end leading the selling. And of course, we're also keeping tabs on the safe haven demand, gold reversing some of the moves from a day ago. But flip the board, as I said, the focus is on the dollar. And if you look at the weekly relative strength index, it's at the lowest level in 7 years. These bearish calls coming from Morgan Stanley, from JP Morgan, Goldman making an interesting point that Washington's efforts for alternative revenue sources, if their tariff agenda gets impeded, could actually prove even more negative for the dollar. And of course, that could come in the form of the obscure tax item buried deep in Trump's big, beautiful bill. Now, in terms of the positioning that we've been seeing on the dollar, recent CFTC data also suggests that it's not even at extremes yet, this bearish positioning. So that suggests potential for further weakness. Now, flip the board, take a look as well at
the dollar and how it's been languishing, even though stocks have rebounded. So that negative correlation has returned. But if you take a look at what we've been seeing for much of this year, it's very much that positive correlation. Some on the MLive team have highlighted that we could see stocks actually kind of matching up to the weakness in the dollar, something to keep an eye on. The point here, Haas, is really how when it comes to the greenback, Trump's policies have prompted this rethink. And even if we see an easing of trade tensions, a potential phone call, that genie, I think, is really going to be very difficult to put it back in the bottle, Haas. That's right. It's all about the big and beautiful. Avril Hong, thank you so much for that. Now, as you heard from the press secretary earlier, the White House says President Trump is likely to speak this week with Chinese leader Xi Jinping. Cracks have started to emerge in a temporary truce between the two countries just 3 weeks after negotiators agreed to reduce tariffs while working towards a larger deal. Each side has accused the other of violating the agreement. And Treasury Secretary Scott Bessent has said talks have stalled. But history suggests these developments shouldn't come as a surprise. Bloomberg Economics points out that Trump's first trade war with China was also marked by several temporary off-ramps and multiple rounds of tit-for-tat trade restrictions. For more on the implications of rising trade tensions, we're joined by Richard Koo, Chief Economist at Nomura Research Institute. Richard, good to have you with us.
Oh, thank you for having me.
We've seen the reaction in the markets, including in the dollar. I mean, how are you reading into where the dollar is right now?
I think we should get hints from Trump's first term on the dollar. At the very beginning, when he was elected, there was another Trump deal 8 years ago, and the dollar went up. And at that time, people said, oh, the Fed is raising interest rates, Bank of Japan and ECB is cutting rates, and therefore the dollar should be going higher and higher. Well, their forecast on monetary policy all turned out to be correct. Bank of Japan did nothing, ECB did nothing, U.S. Federal Reserve raised interest rates 8 times. But the dollar kept on going down and down and down. So those forecasters are completely wrong. Even with the much higher interest rates in the U.S., the dollar did not appreciate. And that happened because this president has been talking about trade deficit every day. And when the U.S. president talks about trade deficit, and then people look at trade deficit, it's a huge red, which means if no one else is buying, only exporters and importers are buying dollars, the dollar should be depreciating rather rapidly. That was offset by the investors buying, and that's why the dollar remains strong. But when the president of the United States keeps on talking about the deficit, and people have to pay attention to the deficit, and that suggests that you should not be, too exposed to the dollar. So when the investors kind of move to the sidelines, not taking large, long dollar positions, exporters and importers are still in the foreign exchange market. They cannot move themselves to the sidelines because they already sold Toyota in the United States or Jeeps in Japan. They have to convert those exchange rates. So in the foreign exchange market, the relative weight of importers and exporters grows, even though they're trading the same amount every day, because the investors' part is shrinking. The share of the exporters and importers grows, and that pushes the dollar down.
The question is where the dollar goes from here. There is quite an agreement that the dollar goes weaker from here. Morgan Stanley says 9% lower from here by the end of, by mid-2026. Your thoughts on that?
Well, I believe dollar will be going lower, but I don't think U.S. would like to see this go lower in disorderly fashion. Because if it does go down in a disorderly fashion, it could have impact on the bond market, stock market. And like 2 weeks ago, Taiwan dollar suddenly jumped 10% in just 2 days. And that was very, very disturbing, especially for the Taiwan financial market. But everybody else also noticed that something like that can happen in other parts of Asia and the rest of the world as well. So I don't think a U.S. government will be deliberately talking down the dollar until maybe some sort of an agreement is reached among G5 or G7 plus China perhaps on what people call the Mar-a-Lago Accord or something, or Plaza Accord number 2. But the markets could still push exchange rate in that direction.
Let's talk about exchange rates and let's talk about yields. We know that yields are headed higher. I mean, at what yield level would it be detrimental for the markets?
Well, let me put it this way. If
Mr. Trump really wants to resolve this trade deficit issue. And his supporters are all, not, I shouldn't say all, but the core part of President Trump's supporters are the victims of trade deficit. And US and the UK, only those two countries among the G7, kept on running this huge deficit. The amount of GDP that Americans lost as a result of allowing this deficit to continue, in today's dollars, something like $41 trillion. This is no peanuts. And that was borne by the people who are suffering from trade deficit. Those who are benefiting from trade deficit, I mean, those of us in the financial market, academia, services industry, of course, we are not hurt by strong dollar and the trade deficit. But the other people who are in the Midwest, Rust Belt, they were hurt very, very badly. And it was Trump's genius to recognize that there are so many people unhappy in that part of the world, which both the Republicans and Democrats over the years never paid attention to. So when you start talking about protectionism, we had this whole, groundswell of people beginning to support Trump, which was a shock to both Republicans and Democrats. And now we have Mr. Trump as the president. So he would probably push protectionism as far as it would go before he would move to the exchange rate.
The question is, how much pain will this impose on ordinary Americans already receiving mortgage rates close to 7%?
Well, if people think that eventually Trump will move toward the exchange rate, he's not doing that now, but eventually he will move that direction, then all these people who are holding U.S. Treasuries, especially foreign investors, but many American investors as well, will rather sell that now and buy it back when the dollar is a lot cheaper. But in the meantime, when people are selling these assets, interest rates will go up higher, and that's, of course, a very painful experience for the people who are borrowing money. I'm sure Trump is very aware of this risk. During his first term, even though he talked about trade deficit, he never talked about the exchange rate directly because he probably worried about the risk that you just mentioned. If he even talks once about intervening in the foreign exchange market to bring it down, I'm sure dollar will fall very quickly because of the trade deficit. But the interest rates will go much higher. And as a former real estate person, I'm sure he's very sensitive to higher interest rates. So this time we may go the same way. He may not directly talk about the dollar until it becomes absolutely necessary. But the signs that he's giving suggest that the dollar will be falling, which then means U.S. interest rates could be higher still.
Richard, hang tight. Richard Koo, Chief Economist at Nomura Research Institute, is staying with us. Now, still ahead this hour, we'll head live to Seoul to check how voting is going as South Koreans choose the next president. Keep it here with us. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Oh! Release the mink!
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
FBI!
There's a storm coming. You're about to be swept away.
Trust no one.
Don't do it!
Let her go.
Stalker's a woman.
Shots fired!
We need a medic now! Suspect is down. Repeat, suspect is down.
That's enough!
Rail, name something that's hard to do with your eyes open. Read. This boy in college. He leaned into the mic and said, read, Steve.
Watch the Family Feud channel on Pluto TV.
Welcome back to Inside. South Koreans are voting today for a new president after last year's short-lived declaration of martial law led to the downfall of Yoon Suk-yeol and the country's worst constitutional crisis in decades. Bloomberg, the Asia Trade co-anchor Sherry Yan joins us now from Seoul. And Sherry, what are we expecting today on Election Day?
Finally, South Koreans are going to see an end to the political uncertainty over the past 6 months, a leadership vacuum that led to 3 acting presidents to go through. Today, I'm here in one of more than 14,000 polling stations. This one is near Yeouido in the National Assembly in central Seoul. And remember, that was ground zero during the protests against the martial law declaration of ousted President Yoon Suk-yeol. Already this morning, the National Election Commission says that 8 million voters have cast their ballots. We're talking about 18% of South Korea's electorate. And add to that the 15 million people that already voted last week during early voting. There's an incredible amount of interest in this snap election. Of course, not surprising given the ongoing turmoil and protests that we saw over the past 6 months. Not surprising that police have deployed almost 30,000 officers across polling stations nationwide. It's a public holiday today. We'll continue to watch the voter turnout as, of course, the presidential race itself has really narrowed with the frontrunner Lee Jae-myung of the opposition Democratic Party still leading, but of course the runner-up of the conservative ruling People Power Party also trying to catch up, Kim Moon-soo.
Sherry, Korean assets have rallied leading up to this election, but what's the state of the broader economy?
It's been really interesting because we saw Korean assets just gain ground ahead of the elections. Today, markets are closed, but the broader economy has seen signs of deepening fragility. We're talking about the Bank of Korea downgrading their growth forecast for this year to 0.8% from more than 1.5% growth for 2025 just in February. So not surprising, this is top of mind for voters across South Korea. I spoke to one person who just cast his ballot about an hour ago. He told me that he is now changed his vote for a different political party because he was not happy with what happened during the impeachment process. He also liked the promises made by the candidate that he voted for when it comes to his generation, people in the 30s and 40s. He also liked housing policies of the candidate that he chose. Of course, it's not only about the domestic economy, it's also about external pressure. So Lee Jae-myung, the front-runner candidate, has already talked about making trade his top priority in his first 100 days in office if elected.
And Sherry, in terms of foreign policy, what kind of shift are we expecting depending on who wins?
Whoever wins this presidential election will have a very difficult balancing act when it comes to China and the United States. We have heard from Lee Jae-myung wanting a solid alliance with the U.S., but his approach is more nuanced. He also wants stable ties with China and not to mention, of course, Russia as well. Lee says that South Korea cannot really be bound to unilaterally to the United States. They want to avoid having really unnecessarily hostile approach to Beijing and Moscow. He wants dialogue with North Korea. Of course, that could be more tricky given Pyongyang's deepening alliance with Russia in its war in Ukraine. Rival Kim Moon-soo, though, committed to prioritizing relations with the United States, also with Japan, also supportive of Korea shouldering more of the cost of having almost 30,000 U.S. troops stationed in South Korea. So if we do see that change in power from the conservatives to the more left-leaning Democratic Party, we could see big changes when it comes to the diplomatic front as well.
Sherry, thank you so much for that. The Asia Trade Co-anchor Sherry Yan in Seoul. And we have Richard Koo from Nomura is still with us. Richard, we know that South Korea, among those countries, watching those negotiations between the U.S. and China really, really closely because of supply chain disruptions, in particular for Korea. It has to do with tech. I know 60% of memory chips of the world actually comes from South Korea. How much is at stake when you take a look at the upcoming talks between the U.S. and China?
Well, you talk about Korea, now you're talking about China.
Yeah, I mean, how much is at stake for a lot of countries like Korea when it comes to those talks that's coming up?
Yes, if you're in a really high-tech industry, I'm sure the price elasticity of your product is pretty low. So even with tariffs and higher prices, they can probably sell those things because there's no other suppliers that can supply them those products. But if you're exporting those products with high price elasticities, and there are many other producers producing the same thing at the same time, then of course you're affected very badly. And in the Chinese case, there are some areas that they are very good at, but there are huge other parts where the price elasticity is actually high. The Vietnamese can produce the same thing, and Indians can produce the same thing, and those areas are affected very, very badly in China today. And that is added to their own domestic problems, where the Chinese economy has been doing very poorly. So the two together, I'm sure, is one of the key reasons why President Xi Jinping wants to talk with Mr. Trump to make the situation a little better.
China's fundamentals this time round are different from the fundamentals when they had the first trade war with the U.S. Yet China is talking about how it is prepared for a longer trade war with the U.S. Is it realistic for China to think it can overcome the challenges?
Well, I'm sure they will come out to say those things to show how strong they are. But their economy is suffering from what I call balance sheet recession. Balance sheet recession is no ordinary recession in the sense that it only happens after bursting of a bubble. During the bubble, people borrow tons of money to invest in all sorts of assets. And once bubble bursts, your liabilities are still here, but your assets are down here, and your balance sheet's underwater. And if your balance sheet's underwater, you have to come out of this as quickly and quietly as possible before everyone notices it. But so how do you come out of this balance sheet's underwater? You either increase savings or reduce your debt. And the fastest way, of course, is to reduce your debt. That's the right thing to do at the individual level. But when everybody does it all at the same time, we fall into a fallacy of composition problems in that in a national economy, if someone is saving money or paying down debt, you have to have someone on the other side borrowing and spending money. And in the usual circumstances, central bank will lower rates, raise rates to make sure that all the saved funds are borrowed and spent so the economy can move forward. But in what I call balance sheet recession, central bank bring rates down to very low levels. Still, too many people saving, too few people borrowing. And we have that situation in China today in that if you look at 10-year government bonds, Chinese government bonds, it's yielding 1.6%. For a developing country with still so much investment opportunities, for government bonds to be down to 1.6% is a ridiculous rate. It should be much, much higher. And we had the same thing in Japan, 1997. Bond yields came down to 1.7. And I was trying to warn the government that this means nobody in the private sector is borrowing and spending money. Government has to come in to make up the gap, because private sector with balance sheet problems cannot change their behavior. They have to repair their balance sheets as quickly as possible. Well, Prime Minister Hashimoto, who I was advising at the time, listened to the IMF and the others who said, cut the budget deficit, cut the budget deficit. So instead of increasing the deficit, which I recommended, they cut the deficit, and the whole economy collapsed. We have 5 consecutive quarters of negative growth, complete breakdown in the banking system. So Chinese are aware of this experience, what happened in Japan. And so if you talk to many Chinese economists, they talk about balance sheet recessions all the time. But the government has been still reluctant to do the right things, that is, say, borrow massively and spend massively to make up the difference, because Chinese government is already having a huge deficit, 7% of GDP if you put the local government together with the central bank. And I think that's where things are kind of stuck in the sand, as it were.
Richard, you brought in Japan, JGB's in focus. What if the government issues fewer long-term debt? How might that play out?
Well, the 30-year bonds in Japan, the yield did spike up. But if you look at 10 years, where a lot of people pay most attention to, it's not that bad yet. But Japan, I think we all learned a lesson that all these economists used to say, as long as Japan got inflation, everything's fine. I'm sure you heard this a million times over. But it was complete nonsense, because now we have inflation in Japan. Everybody's so unhappy. The LDP, the Liberal Democratic Party, lost badly in the election earlier this year, because everybody started saying, especially this inflation is hurting households' food prices. And that comes from this weakness of the yen. Japan imports so much food, and the price of those foodstuffs have gone up in terms of yen. And so now, the Japanese government is moving away from this inflation was a good idea into inflation was a bad idea. And that's allowing Bank of Japan more freedom to act. So if it were not for the tariff issues, I'm sure BOJ would have moved to normalize monetary policy a lot sooner.
Very quickly, I'm just wondering, how many rate cuts do you see, rate hikes do you see from the BOJ this year?
That would depend a lot on the tariff issues, because Japan is also a very export-dependent economy. And with so much uncertainty in that sector, I'm sure Bank of Japan will be very cautious, even though it really wants to raise interest rates to normalize monetary policy.
Richard, we have to leave it there. Thank you so much for your insights today. Richard Koo, Chief Economist at Nomura Research Institute. We're coming to you from the Nomura conference, of course. Keep it here with us. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Elevate your space with up to 60 days of fragrance with Glade Max Control. Adjustable scent for any size room. SC Johnson.
Emergency. Yes, somebody killed 2 girls. My grandbaby and my friend. They're dead. They're dead. Please, please, please.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Oh! Release the mink!
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
Are you ready?
We were born ready.
Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
Are you ready?
It's full! It's fun! Why should you stay in Hell's Kitchen?
I'm a better chef.
The champion, ladies and gentlemen, this is Hell's Kitchen.
It's Jobs Day, and Bloomberg has the report under surveillance.
The risk was a downside surprise, the reality an upside surprise.
The shock has affected outcomes.
There's a pretty big cliff from an economic perspective.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
American exceptionalism continues.
This is not what we're going to experience in the upcoming months.
Is it going to be Biden data or Trump data?
The May Jobs Report, Friday on Bloomberg.
Welcome back. You're watching Insight, coming to you live from the Nomura Investment Forum here in the Lion City. Now, Senate Republicans are considering making significant changes to President Trump's tax bill. Senators are looking into the potential impact of a so-called revenge tax buried in the fiscal package. The provision would increase tax rates for individuals and companies from countries whose tax policies the U.S. deems discriminatory. Some of Wall Street worry this may discourage foreign investors. Well, joining us now is Mick Mulvaney, who served as acting White House Chief of Staff during Donald Trump's first presidency. He was also a four-term U.S. congressman and a former director of the U.S. Office of Management and Budget. Of course, the big and beautiful bill front and center. How do you see this playing out? Are we set for a showdown?
Yes, no question. Keep in mind, as soon as the Senate changes anything that the House has sent them, then it means it has to go back to the House. The Senate is under no way, no circumstances, ever going to accept what the House sent without any changes. So this is just round 2 of at least 3. I think, as Linda, that this July 4th date is completely artificial. The important date is this. Buried in this bill is the increase in the debt ceiling. Scott Bessent has said that the Treasury runs out of money, I think, effectively sometimes in mid-August. That's the real date here. That's the hard deadline. July 4th is a PR date. It's the 250th anniversary of the founding of our nation. So 249th, maybe. So I'm getting my math wrong. So the July 4th date is there for press purposes. It's that X date for Treasury that is the real deadline here.
Realistically, how will this play out?
The Senate will change it. And then the House will have to take the changes that the Senate has taken. They will pass something. These, after all, are the Trump tax cuts. They are his signature legislative achievement from his first term and from the second term. This would be like Barack Obama defending Obamacare. Trump will get his tax cuts extended. What it looks like, what goes along for the ride as part of the one big, beautiful bill remains to be seen.
The question is, at what cost? We know that Moody's downgrade was based on that fiscal concerns. I mean, how do you see the U.S. economy performing from here amidst the passing of that big and beautiful bill?
I think the Trump team is probably not watching the equity markets anymore. Keep in mind, he's not running for re-election, so sort of the popular culture of following the stock market won't affect his actions. The bond markets, however, are a different story. If they have continued soft auctions, they had a soft auction on a 3-year a couple weeks back. I think that led directly to the first 90-day pause. They had a rough 20-year auction a week before last one. I think we saw 105 basis points up on the 20-year. Those are the types of things that get the Treasury's attention, and when it gets Scott Bessent's attention, it's going to get President's attention.
So big and beautiful on the one hand, we have also the expected talks between Xi Jinping and Trump later this week.
Yeah.
Do you think it will will happen.
I'd be curious to see if they do happen. As you and I were talking off air, I think there's a fundamental disconnect here. Trump wants to talk at the very highest levels. That's not always how the Chinese want to do business, and I'd be curious to see if they're able to make any headway. Trump doesn't want to go through the back channels. He doesn't want to go through the ordinary course of business. That's never been his style as a leader, being in business or in his first term in office. He wants to talk to the principal. He wants to talk to President Xi himself. So we'll be curious to see if the conversations that the White House has telegraphed actually do take place.
I just want to put it out there. We've not heard from the Chinese about this talk coming through. I mean, what are the chances that the two sides can find a common ground?
Yeah, it's an ancient Chinese saying that it takes two to tango, or is that an American sign?
Can they de-risk without decoupling?
They're going to have to, at some point, they're going to have to find that middle ground. They're going to have to find a way to speak to each other that satisfies both sides. I do not see them being able to pull off a deal the old-fashioned way, which is going through the back channels, and I think it'd be very difficult to do a deal going the Trump way, which is only Xi to Trump, man to man. So they're going to have to try and find a way to sort of split the difference.
How much pain is the U.S. willing to go through to get those concessions from China? We've constantly talked about how China is in for the long haul. It is prepared. It's been preparing for the last 7 years.
I think that goes back to the issue about the equities versus the bond markets. I think if the pain is in the equity markets, the answer is quite some time. That Trump is ready for that. He's tried to prepare people back home for that, to take a hit maybe to what their 401ks, their IRAs might look like. The bond market's an entirely different story. You could see very quick change in American policy if you see something bad happen on an auction for a Treasury.
There's been a lot of questions on whether or not we're going to see stagflation in the U.S. economy. Do you see that? I mean, I had a conversation with Jamie Dimon, who says that we should actually prepare for that.
Well, I mean, that's... Look, Jamie Dimon struggles with his credibility in Washington, D.C. because he's been for all of the spending that got us here in the first place. So it's sort of hard then to sort of change gears and say, oh, now it's time for fiscal austerity. But Jamie Dimon's also the man that Trump says he listens to. He listens to, yes, he does. There's no question. I want to diminish that in any fashion. Trump listens to a lot of people. There's no question. Trump also watches the markets. He also watches the inflation numbers. The inflation numbers we got this past week or week before last, I lose track, I've been traveling, were actually a lot more benign than people realized. We thought that maybe the tariffs would have hit consumer prices by now. They haven't. Will they spike up next month? Maybe, but if you see a couple more soft months on the inflation numbers, it will just embolden Trump to continue what he's doing.
And do you think the U.S. is comfortable with the dollar where it is right now? We have the likes of Morgan Stanley saying the dollar will weaken 9% by mid-2026.
Look at it this way. Donald Trump has been a soft dollar guy his entire life. I've had these conversations in the Oval Office with the president dozens of times. I was a king dollar guy. So is Larry Kudlow. We lost those arguments. Donald Trump does believe in a softer dollar for the purposes of boosting American manufacturing and exports overseas and so forth. So you can expect the White House to continue to talk down the dollar just about any chance it gets.
I want to talk about Doge and what it's been wanting to do. It's something you yourself embarked on when you were with the Trump administration the first time round. How do you think Doge has done in managing those costs, in bringing in costs down?
Yeah, I think it's done a lousy job in actually bringing down the costs, but it always was going to do that. I've said from the very beginning that at the end of the day, and we are now at the end of the day for Elon Musk, he will find it easier to get to Mars than it is to fix the federal government. And that's because he doesn't have the tools. Doge didn't have the tools. The executive branch doesn't have the tools to do what they wanted to do, which is actually save money. Only Congress has that tool. But it's been a roaring success at another level, which is at the PR level. It's now cool. It's now popular to talk about government waste, government efficiencies in Washington, D.C. That was one thing I was never able to do when I ran the Office of Management Budget. Nobody cared about it 8 years ago. Now they do care, and that's the first step to actually fixing things. So did Elon Musk actually save any money? No. But did he set the stage for us to possibly actually start to fix things? Yes, he did, and that has to be seen as a success.
But where do efforts go from here with Elon Musk now pulling back from his responsibilities at Doge?
Well, I mean, Doge will continue. Keep in mind, Doge is under the Office of Management Budget now, as it has been in the first place. I think that Elon will continue to be one of those voices. You mentioned Jamie Dimon before. Elon will continue to be one of those voices that Donald Trump certainly listens to. He just won't be in the building every single day. And keep in mind, geography has a lot to do with your influence in Washington, D.C. Proximity to the president counts, and Elon won't be nearly as close physically as he was before.
Mike, we've been talking about negotiations within the U.S. and China. We know that when it comes to to Elon Musk. He has huge businesses, presence, footprint in China with Tesla.
Yeah.
Is that a liability for the U.S. in its negotiations with China?
It's certainly leverage for the Chinese. I can't tell you during the first term, I mean, it was a daily sort of march of corporate CEOs from Wall Street into the Oval Office trying to convince Donald Trump to go softer on China because that's where they were making a good deal of money. That will simply continue. Is it new? No. Is it sort of a higher profile because it's Elon Musk? Yes, it is. But there have been interconnections between these economies for decades now, and you're going to continue to see that play out during these tariff discussions.
You've been involved in these discussions. You have connections, networks. You know, back in 2019, we had Henry Kissinger talk about how the U.S. and China were on the foothills of a Cold War, and increasingly we're seeing signs of that, you know, inching ever closer to that.
Yeah.
What's your take on that?
Well, if we get there, we know how to win it. It's always been one of my questions. We beat the Soviet Union in a Cold War. You don't do it by doing business with them. You do it by effectively beating them economically. Can you do that to China? I think it may be too late to use that same playbook. But one of the questions I think that many conservatives in my country, not necessarily within the Trump administration, but conservatives are asking is, why are we treating China differently than we treated in the Soviet Union? It's a communist nation. They clearly have sort of their sights set on a bigger place in the world stage, much as the Russians did. Why are we treating them differently? Certainly the outcome has been different, but that's all part of the mix. It's not 1978 anymore in my country. It's not 1978 anyway. But it is certainly part of the debate back home.
How can the two coexist?
I think they can. I absolutely think they can. They have to work through this right now. Sooner or later, look, China has to stop. China has to become a leading nation of the world. They can't steal people's intellectual property. They can't force you into bad deals in order to do business in your country. They can't hide information when they deal with pandemics like they did with COVID-19. First-tier nations of the world don't do that. And if China is going to become a first-tier nation, they need to step up their game. Until that point, I think you'll see America deal with China differently than they do with everybody else around the world.
Great insights. Thank you for joining us today. Mick Mulvaney, former White House Chief of Staff under Trump. Now, let's get to Avril with the very latest on those JGBs. Avril.
Yeah, Haas, we just had the results of that 10-year auction, and markets obviously were keenly anticipating these reactions or results. We've seen that in terms of the bid-to-cover ratio, it's higher than the one-year average. So perhaps putting to bed a little the concerns of the markets that there wouldn't be enough. But as your guest earlier, Richard Koo from Nomura, highlighted, 10-year, that seems to be, you know, a bit of resilience there, where the concerns are really on the 30-year, the longer end of things. And we're seeing, if you flip the board, the concerns continue on the 30-year because we also have that auction that is due on Thursday. And of course, amid all this, we've heard from the BOJ Governor, Ueda-san, and speaking today, not really allaying or offering any comfort for bond market participants, saying that in a recent survey, they pretty much saw fit that they will keep at the tapering of bond purchases. So again, as the BOJ has been taking its foot off the stimulus pedal at a time where Japanese fiscal sustainability has been called into question, to what extent is the market going to be able to absorb the supply that's coming through? We're seeing dollar-yen. A day ago, we saw that sharp climb. Don't forget, a bit of reversal today because of the anxiety ahead of the bond auction. We're seeing a bit of weakness seeping through into the Japanese currency as well, Haas.
Great, thanks for the update, Avril. Again, the 10-year JGB saw a demand ratio that was higher than its one-year average. Still to come on the show, New Zealand's former Minister for Economic Development will tell us why he thinks most new applicants for the country's golden visa are Americans. Keep it here with us. This is Bloomberg.
Echo of the Earth. Hermès, new eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Being able to look at a screen and see myself is like no feeling in the world.
Get it.
That's how my friends hang.
Get in, loser.
That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Oh! Release the mink!
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
911 state emergency. Yes, somebody killed two girls. My grandbaby and my friend. They're dead. They're dead. Please, wait.
She wants to find more young women for him to kill. Each one he gets away with, he's emboldened.
It's very satisfying to be able to look at a bad guy and go, we never forgot you.
Actually continues to be really good for us. We're up about 103% on passenger numbers from where we were in 2019, and it's gaining momentum. I'm not seeing anything at the moment that would indicate any concerns I've got, that I read about. Anecdotally, I hear that a number of people in the US are very keen to come to New Zealand.
What about New Zealanders going the other way?
Yeah, no real issues with that that we're seeing. So it remains good, remains strong, and of course, New Zealand not only is clean and green and all the things that we know about, but it's pretty stable and safe too. So I think that heralds well.
That was Air New Zealand CEO Greg Foran talking with Bloomberg's Guy Johnson about the demand for travel into New Zealand, especially from the US. Now, New Zealand's immigration department says demand for its revamped Golden Visa program has soared amid rising geopolitical tensions. It's received dozens of new applications since April, with most coming from the US. For more on this, let's bring in former Minister for Economic Development, Stuart Nash. He now runs a consultancy helping high net worth immigrants settle in New Zealand. Stuart, good to have you with us. Talk to us about what you're seeing on the ground.
Well, all your listeners and your viewers know that America's polarised at the point in time, more so than it's been for a long, long time. We've got many Americans wanting to settle in New Zealand. As Greg Foran said, we're seen as a safe country. For example, our police don't carry guns. There's never been a school shooting in New Zealand. We've got a first world banking system. We've got a very stable government. And of course, we've got a very pristine environment. The sort of things that Americans like. And, we're seen as an oasis at the bottom of the world. And at this point in time of global uncertainty, geography is just as important as anything else, I would say.
I'm just wondering how New Zealand itself is making itself attractive to these Americans and other potential residents and citizens.
Well, we don't necessarily have to make ourselves attractive. I think we are by the very nature of the fact that we're 10, 12,000 miles away from the world's trouble spot. You had Keir Starmer come out and talk about putting his armed forces on ready just in case Putin does something. You've got a very high level of uncertainty in the Middle East, obviously, South China Seas, who knows what's going to happen there. And obviously the US is probably more polarised than we've seen for a long, long time. You jump on a plane, it takes a while to get to New Zealand, but by virtue of that, you're a long way away. So what we see at Nash Kelly Global is a lot of people are telling us they are looking for a safe haven. I mean, in the past, a lot of these people were looking for tax havens. Now they're after a safe haven for them, their family, and also their money and their wealth.
You got to wonder how the Kiwis themselves are looking at this. I recall back in 2018, there was a debate sparked by billionaire Peter Thiel, who some say didn't meet the requirements to be a citizen there or residency, to have residency in the country under the administration of Jacinda Ardern.
It's changed a lot since Peter Thiel's day. And in fact, Peter would not get that visa or get citizenship under the current rules. So the one thing about New Zealand permanent residency that you can get is you never have to reapply for it. And what a lot of our clients at Nash Kelly Global are telling us is that is incredibly attractive. Once you have New Zealand permanent residency, you've got it for life. But the system does have a high degree of integrity. For example, you've got to prove that the money is legitimately gained. You've got to go through health checks. So it's reasonably onerous, but we think that's important so the system does have integrity. New Zealanders love this. I mean, by and large, the people who are coming over, they're not competing with first home buyers. They're competing with the lotto winners and the very high-end businessmen. So all the Nash Kelly Global clients that we're getting love what they're buying into when they come to New Zealand. As we say, pristine, a world away from everything, like an oasis at the bottom of the world in these troubled times.
You got to wonder about the optics, though, right? I mean, you're welcoming the wealthy into the country at a time when unemployment is close to record high, and these people are likely to drive property prices higher.
We're not seeing the number of people who would drive property prices across the country higher. And keeping in mind, for me, it's not just the money they bring in, and they've got to invest it in New Zealand businesses or funds. It's actually the competency and capability and experience. So what we're seeing here is men and women who have actually been very successful in their own country, coming to New Zealand and leveraging a lot of that experience to help New Zealand businesses grow. And again, a lot of the Nash Kelly Global clients are telling us that they love coming over here, helping businesses. It's almost like a mentoring role. So if you're going to invest sort of 5 million Kiwi or 3 million US, you want to have a little bit of an active say in how this works. So there aren't the numbers coming over to really skew house prices in any way, shape or form, but there are the numbers that are coming over to make a noticeable difference to a number of New Zealand firms that want to internationalise. It's a great scheme, actually. New Zealanders, by and large, are welcoming. We're known globally as a really friendly people, and that's true. And it's the same for people who are coming over here and want to be part of New Zealand as well.
Stuart, I want to talk about the Hollywood tariffs. Trump intending to put tariffs on movies made overseas, and we know that a lot of those Hollywood movies are made in New Zealand. How do you see this playing out? What ripple effects do you see?
Well, because we understand President Trump has actually released these sort of thoughts on Truth Social. We know it's not a policy yet. If it was to become reality, then it would probably decimate the New Zealand film industry, to be honest. And we've got Peter Jackson, obviously Lord of the Rings, The Hobbit. We've got the Avatar made here. Some very, very big movies, big Hollywood movies are made in New Zealand. We've got actually Brad Pitt's over here at the moment, I understand. Minecraft has just been made. But we're just waiting and seeing how this would play out. We understand what President Trump is trying to do. We think it would be very, very difficult to put a 100% tariff based on overseas movies. So we're just waiting and seeing how this plays out. And we hope that common sense will prevail because we have a lot to offer here. We have a fantastic film crew here. There's about 24,000 jobs, 3.3 billion Kiwi. It's a pretty big part of our economy. It's not an American policy yet. We understand President Trump is just floating the idea, so we're just waiting to see where this goes.
The thing is, you oversaw about $650 million in film subsidies under the Ardern administration. Do you see this time around possibly that the Prime Minister would retaliate, and what are the options?
No, there's no point in a country like New Zealand retaliating against a country like the United States. There's nothing to be gained from doing that. You know, New Zealand actually has a very good relationship with the United States. Our foreign minister, a guy called Winston Peters, is a very seasoned and very professional politician. He's been dealing with the United States for many years now. The relationship between our two countries is very strong, and it goes back a long way. I just do not see any New Zealand government seeking to retaliate on any measure put in place by the United States. We're too small to make a difference. So, you know, we tend to negotiate as opposed to retaliate.
Even as you adopt a wait-and-see attitude, I wonder if you see a possible impact on tourism as well as the broader economy.
Well, about 19% of American tourists who came to New Zealand pre-COVID came because of what they saw in Lord of the Rings. So there's no doubt about it that the movie industry has flow-down impacts into the tourism industry. But as the CEO of Air New Zealand, Greg Foran, mentioned earlier, we're only seeing an increase in the number of Americans who want to come to New Zealand for all the reasons outlined. It is a long way away from home, but it's a bucket list holiday journey for many people. At Nash Kelly Global, we have our own ultra high net worth luxury tour package. We're seeing an uptake in that. This is Americans just getting away from the hustle bustle of, you know, the big cities, the New Yorks, the LAs, and coming to New Zealand, just experiencing the tranquility that is very, very difficult to find anywhere else in the world.
As it stands now, though, how's the Kiwi economy looking amidst all the tariffs and trade negotiations happening right now?
Yeah, look, there are bumpy wins. There's no doubt about that. We're coming out of a slow period. We're an agricultural-based nation. We're an export-based nation. People want to buy our protein. They want to buy our milk. They want to buy our meat. They want to buy our dairy products. So an export-led economy is going reasonably well. And keeping in mind, due to the size of New Zealand at this point in time, we tend to focus on the ultra-premium end of global markets. What we're finding is consumers around the world, as they become more engaged and enabled and educated, they tend to seek products that have a very high efficacy and high integrity, and that's what New Zealand prides itself on. Again, it's what a lot of my clients at Nash Kelly Global are telling us. They want a country where you get, you know, grass-fed beef, where you know your dairy is from cows that wander around paddocks as opposed to in stalls. We have it all in New Zealand. I know I'm a great advocate for the country, but it really is the sort of place where you get everything you read about in the magazines and hearing the wonderful TV programs like your own.
Stuart Nash, thank you. Stuart Nash, former New Zealand Minister for Economic Development and co-founder of Nash Kelly Global. A quick check on Adani stocks. Most of them are under pressure on the report of U.S. probe over Iranian LPG import. That is it for Insight. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Oh! Release the mink!
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
Are you ready?
We were born ready.
Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
FBI!
There's a storm coming. You're about to be swept away.
Trust no one.
Don't do it!
Let her go.
Stalker's a woman.
Shots fired!
We need a medic now! Suspect is down. Repeat, suspect is down.
That's enough!
There's this guy. He doesn't care about the law. He only cares about what's right.
I am not a hero because I have nothing to lose.
Who are you, mister?
I'm just a guy who wants to be left alone.
Join Meredith Vieira and play along to 25 words or less on Pluto TV.
Clever.
Watch 25 words or less on demand right here on Pluto TV. Stream now, pay never.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Trade talks. President Trump expects to speak to China's Xi Jinping this week as tensions between the nations surge over access to chips and rare earths. The dispute has the potential to endanger their fragile tariff truce. Prisoner swap. Russia and Ukraine meet in Istanbul and lay the groundwork for new prisoner exchange, but fail to reach agreement to end the war. And reshaping the Middle East financial order, how bankers and business leaders are shifting their attention across the region in the face of weakening oil prices. That is the focus of today's Big Take. It has just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai. Well, we kicked off the show yesterday with more of those tariff headlines and the fact that the U.S. were accusing China of violating that so-called Geneva Agreement. We're going to talk shortly about the latest developments in that space and whether that call between President Trump and Xi Jinping could actually take place this week, and we could see further de-escalation on that front. But take a look at how markets are faring. S&P dipping this morning, futures down about 0.4%. That we did manage to end in the green yesterday, eking out a positive session of 0.4%, despite the fact that ISM manufacturing number came in contractionary territory for the third time in a row. So keeping a close eye on how U.S. data is coming out. Today, we've got factory orders, JOLTS, durable goods, and then on Friday, the big one, NFP, to watch out for as well. 10-year yields, take a West curve continues to steepen. So you're getting weak data, so that's pushing front-end yields lower. But of course, concerns about the fiscal outlook continue to drive the steepening of that curve. And we're seeing that now, 530s in the U.S. almost breaching 100 basis points. So also keeping an eye on that development too. The USD today gaining up to 0.1%, but we are very close to two-year lows in the greenback as we talk of the diversion between what's been happening with equities versus the performance in the USD. And then Brent sitting just shy of $60 $65 here, up 0.4%. The reaction yesterday after that OPEC Plus decision, coincidental perhaps with geopolitical developments, was an increase in the price of oil of more than 3%, energy sector being the best performing sector in the S&P yesterday. So buy the rumor, sell the fact. Switching over, I just also want to draw your attention to what's been happening to the price of Ukraine bonds. This is interesting in the context of those discussions that have been taking place in Turkey. No real signs of a breakthrough. And as you can see, the prices of these Ukrainian bonds have dropped something like 8 percentage points since where we were mid-May, when there were a lot of hopes about the potential for a breakthrough, now sitting at around 48 cents on the dollar. So this just tells you that the markets are beginning to unwind the possibility of an imminent breakthrough when it comes to Ukraine and Russia. Okay, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. A lot of things going on, Avril, but maybe a lot of focus as well on that JGB auction too.
Yeah, certainly the Japanese government bond auction, but we're seeing Asia stocks more or less moving in tight ranges, though they're positive, tracking Wall Street. Aside from the Japanese government bonds, which I'll get to in a bit, we also have the focus on the Chinese manufacturing activity indicators. This is the private survey, the Caixin one, and it plunged, defying expectations of expansion, to about a 2-year low. So mainland markets that have been on a long weekend coming back to this data, our intelligence colleagues, Bloomberg Intelligence colleagues, they've been highlighting how it's not that uncommon. We've been seeing this in times in the past where the data from the official manufacturing as well as the private survey, they sort of tell us different things, go in different directions. That being said, it does seem to be feeding into expectations of stimulus and maybe a bit of support for stocks there. Now on the JGBs, we actually saw the bid to cover ratio, I think it was the higher than the 1-year average, so pretty solid demand. I think that's feeding into a bit of a feel-good factor when it comes to Japanese government bonds, and we're seeing them mostly rising across the curve. But after this 10-year auction, don't forget, we have a 30-year one that is due on Thursday to keep an eye on as well, Jumana.
Yeah, and it has ramifications across all fixed income markets. Avril Hong in Singapore, thank you so much. Now, the U.S. is extending the tariff pause on some Chinese goods until August the 31st. The White House also says President Trump is likely to speak this week with Chinese leader Xi Jinping.
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls. So we'll see you guys later. Thank you.
Let's bring in our China correspondent, Min Min Lo in Hong Kong. Well, the call that everyone has been anticipating and waiting for, how likely is it that it actually takes place this week? How open are China to having a call with President Trump?
Yes, Jumana, I was just scanning Chinese state media earlier today, and I haven't seen any article discussing the prospect of this call between President Xi and President Trump. And certainly it seems like it is the U.S. that is a little bit more urgent and a little bit more keen about having this call sometime this week. We haven't gotten any official confirmation from the Chinese side about a potential call. And we know President Trump has said that he's confident he will be able to clear up a lot of these tensions over a phone call with President Xi, that the two leaders must come together to break this deadlock. But from the Chinese side, we know from past tradition that they tend to favor having lower level officials meet to iron out certain issues before culminating in this leaders call. They often only agree to that when they're clear that there are certain expected outcomes that they're confident they will be able to get. So it looks like right now the conditions doesn't seem too favorable given all the sort of tensions that have ratcheted up in the last few days.
And also the commentary that came out of the U.S. administration over the weekend accusing China of violating the Geneva Agreement. Do we have an idea or better idea of some of the key issues that President Trump would want to raise on a potential hypothetical phone call with Xi Jinping here?
Yes, that's right. And both sides are accusing each other, Joanna, of violating that Geneva trade agreement so far. And when it comes to the U.S., they are concerned about the flow of these critical minerals back to the U.S. because part of the agreement was that China would roll back some of these non-tariff countermeasures, including the flow of critical minerals. But the U.S. is saying it has been slow, and they're not clear whether this was intentional on the Chinese part or is it just administrative backlog, because many of these exporters in China, they have to get clearance from the Ministry of Commerce in China for permission to export to all countries, and that process can be sometimes quite, opaque and not really open to outsiders' views. So it's something that, some people say the Chinese government can just turn on and turn off the tap as they like, but you don't really know. So that's what they want to clarify with China about. But when it comes to China, the Foreign Ministry has mentioned a series of actions that the U.S. has taken that they have been very upset by. One is the revoking of Chinese student visas, and there is also number two, the expansion of these chip curbs, limiting the sale of chip design software to China, and also limiting the sale of these critical parts and jet engines as well. And over the weekend, we had the Shangri-La dialogue. There was the playing out of the China threat. Reuters reporting that the U.S. is preparing to step up military arms sales to Taiwan, and that is something that China has always maintained is their red line. So a lot of issues that China also says means that the U.S. has been reneging on their part of the deal as well.
Yeah, and also, to your point, a progression from just speaking about tariffs to other non-tariff barriers as well, and those are significant. Bloomberg's China correspondent Min Lo in Hong Kong, thank you so much. Well, speaking of China, a private gauge of China's manufacturing sector has experienced its worst slump since September 2022. The Caixin manufacturing PMI fell to 48.3 last month, below the 50 mark, separating expansion from contraction. The results suggest that smaller Chinese companies were disproportionately affected by the trade war. Joining us now is Andrew Tilton, Chief APAC Economist at Goldman Sachs. Andrew, really good to talk to you. Thanks so much for joining our show. Let's just start with that data. How do you read the latest signals that are coming through from the Chinese economy with these Caixin numbers, the lowest they've been since 2022?
Well, we are seeing weak sentiment among manufacturers, not just in China, but in other parts of the Asia-Pacific region. More broadly, what we call the soft data surveys about sentiment tend to be weaker than hard economic indicators of actual activity. We saw that divergence in the U.S., and we're seeing it in Asia as well, with these manufacturing surveys suggesting that exporters are worried about the outlook.
Obviously, as an economist, your job is going to be tricky now because you're making forecasts predicated on a situation that may or may not happen. But can I just ask you how influential you think where we end up for tariffs and reciprocal tariffs is going to be for the economic outlook for China and the broader Asia-Pacific region?
Tariffs are the critical variable. We think that the level of reciprocal tariffs will have a big impact on regional growth. If we start with China, we think about 2.5% to 3% of China's GDP is exposed to exports to the U.S. So at the previous peak of over 100% tariffs on China, we would expect the vast majority of that activity to go away. More than 2 of the 3% exposed to the U.S. would be hit. With the current level of tariffs, so plus 30% relative to where we were at the beginning of the year, we think the hit to Chinese growth would be about 1 percentage point. That's manageable, but alongside the weakness in the housing sector, it is likely to require more policy support from China this year. The biggest potential growth hits are actually to smaller economies that have even more export exposure to the U.S.
It's interesting because you put out a report overnight saying that for other Asia-Pacific countries, they're actually caught between the demand hit that's potentially going to come from the U.S., but equally the supply hits coming from China as China looks to perhaps diversify its export destination countries and nations. So how, as a smaller Asian-Pacific country, can they navigate both of those headwinds?
Well, we have two opposing forces. On the one hand, China remains extremely competitive. If we adjust for the deflation in China and the inflation in other countries, China's real effective exchange rate has fallen by about 20% since COVID. So China's very competitive, gaining market share around the world, ex the U.S. That's going to be very challenging for exporters elsewhere in the region. On the other hand, there is the possibility of some trade redirection. As China faces higher tariffs, there may be efforts by Chinese companies to export to places, particularly in Southeast Asia, perhaps perform a bit more manufacturing or value added there, and then ship to the U.S. So there's the hit from direct competition with China, but the potential benefit from trade redirection. In most cases, we still think that's going to be a net negative, but to the extent that economies in Southeast Asia in particular can validate themselves as transshipment points, as waypoints for more processing, they'll have a chance to benefit in part from the trade conflict.
How do you see the outlook for Asian currencies? Obviously, on one hand, we've been talking about the weakness of the greenback, but on the other, it appears as though in certain cases, like in the case of Taiwan, authorities have been facilitating the appreciation of the currency versus the USD, perhaps in anticipation of some of these talks with the U.S. administration. What do you see as the path forward?
We expect more dollar depreciation. In part, that's because the dollar still looks highly valued on our currency models, something like 15% above long-term fair value. Those models don't have a lot of short-term predictive power, but it still suggests the gravity is towards weaker dollar. Of course, we also see suggestions that foreign investors might, on the margin at least, allocate a bit less of their incoming flow to the U.S. to U.S. investments in the future. That could be net negative for the dollar. And lastly, U.S. policymakers seem to desire a weaker dollar. The number of policymakers associated with the administration have suggested that a weaker dollar, modestly weaker dollar, might be a desirable thing, and it might be a feature of U.S. negotiations with Asian economies as they discuss trade. So we do think that some pressure to allow Asian currencies to appreciate, to intervene, for central banks to intervene less and stop trying to keep currencies weaker versus the dollar, that's likely to feature in negotiations. And we do think the net of these forces is likely to be further weakening in the U.S. dollar over the coming years.
Very clear. Andrew Tilton, always good to talk to you. Thanks so much for coming on Horizons, Chief APAC Economist at Goldman Sachs. Now, President Trump is trying to sway Republican holdouts on his multi-trillion-dollar tax bill. Trump is urging lawmakers to work swiftly to get the bill to his desk before the 4th of July. Senators have differing opinions on the bill, including disagreements over deficit reduction, clean energy cuts, Medicaid revisions, and budget cuts. Republicans are also looking into the potential impact of a so-called revenge tax buried in the fiscal package. Still ahead, we discuss the moves in treasuries and how that's playing out in the corporate space with Victoria Harling from 91. That's at 8:30 a.m. Dubai time. But first, Russia and Ukraine agreed to a prisoner swap, but a truce still looks elusive. An update next. This is Bloomberg.
Echo of the Earth. Terre d'Hermès. New eau de parfum intense.
Shopping, working, and relaxing online can attract various digital threats. To improve your protection against them, just turn on NordVPN. This cybersecurity app will block web trackers and malware-infected sites. It will also encrypt your internet traffic without losing a smooth connection. Get the deal now. NordVPN. Cybersecurity built for every day.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered all he needed in one place on Amazon Business.
Peter Piper picked peppers, but rock, Humpty fell down. It's his hard time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying. Peter Piper picked a peck of pickled peppers, but he persistently missed packages. So he scheduled his deliveries from Amazon Business.
Peter Piper picked peppers, but run, rock, rhyme. Humpty Dumpty fell down. Kids are time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Russia and Ukraine have laid the groundwork for new prisoner exchange after a second round of direct talks in Istanbul. However, the hour-long meeting failed to bring the two sides closer to ending the war. Kremlin officials, meanwhile, are said to be angry and alarmed over Ukraine's brazen drone strikes on Russian warplanes in Siberia and across the country. Now, for more, Bloomberg senior editor Bill Ferries joins us now. Let's talk through what was achieved during the second round of direct discussions in Istanbul. No breakthrough, but we did get a prisoner exchange.
That's right. And as you mentioned, it was basically about a 1-hour discussion, the two sides. And like they did in their first negotiation about last month in Turkey, they agreed to a prisoner exchange, specifically looking at severely wounded prisoners, soldiers under the age of 25, as well as the exchange of perhaps thousands of dead bodies that the two sides have collected so far in this conflict. In terms of the prisoners, the Ukrainian side estimated it could be about 1,000 prisoners or a little bit more, depending on those different categories. So that was the main achievement, and very little discussion about kind of the longer-term effort here to secure a major breakthrough. Russia is still seen as putting forward kind of maximalist demands on Ukraine. Ukraine calling for an immediate, unconditional ceasefire. Russia proposing more of a 2- or 3-day ceasefire to collect bodies that are strewn along the front. So not a lot of progress here in the second round. Ukraine saying they hope for a third round of talks at the end of the month.
Yeah, and yesterday, Bill, we were talking about Operation Spider's Web, which is what Ukraine dubbed the operation, the secretive drone strikes across 5 different time zones in Russia, a big victory for Ukraine and the Ukrainian army. How do you think this is being factored into the calculus of the war, into how Russian President Vladimir Putin views his chances of victory? Because, in the run-up to this operation, there was a belief, at least from the Russian perspective, that they were, quote-unquote, winning this war.
Yeah, it's a really embarrassing blow for Russia and for Putin in particular, especially that some of the targets were so deep into Russian territory, so far from those front lines, literally thousands of miles. And the fact that it took 18 months of planning shows that, the Ukrainians were really able to avoid getting disrupted in their effort. Strategically, it's important that some of these bombers were taken out. Some of them have been used in long-range strikes on Ukraine, but I really think it's more of a symbolic blow at this point. Russia has, it hasn't really backed away from its demands so far. They haven't perhaps felt like they've lost the leverage that they see themselves having in these negotiations. I think it's going to take more than one of these kinds of attacks, but it does show Ukraine's ingenuity on the battlefield and their use of drones, and I think it will make Russia cautious about how it deploys some of its assets in this conflict, even far from the front lines.
Yeah. Bloomberg's senior editor, Bill Ferries, thank you so much for the latest on Russia-Ukraine. And coming up, South Korea heads to the polls. We get the details on what this election means for the country and foreign policy. We're live in Seoul next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
what we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but he persistently missed packages. So he scheduled his deliveries from Amazon Business.
Peter Piper picked peppers, but run, rock, rhyme. Humpty Dumpty fell down. It's his hard time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
The future of trading is here on Robinhood. Purpose-built for how you trade. With new ways to execute your strategies and analyze, buy, and sell. Seamlessly trade stocks, options, crypto, and futures in one place.
South Koreans are voting today for a new president. That's after last year's short-lived declaration of martial law, which led to the downfall of Yoon Suk-yeol and the country's worst constitutional crisis in decades. The Asia Trade co-anchor Sherry Ann joins us now from Seoul, and I believe you're actually in a polling center, so a lot of excitement behind you, Sherry. Set the stage for us. The latest I was seeing was that the opposition candidate, the nominee Lee Jae-myung, was the front-runner going into today. What can we expect?
I mean, one of more than 14,000 polling stations across South Korea. We have seen a lot of excitement about this election. Of course, it's a snap presidential election after the constitutional crisis that you mentioned with the ouster of President Yoon Suk-yeol just 60 days ago. We have already seen 23% of the electorate casting their votes. And remember, we already had early voting with 15 million people casting their votes last week as well. A very important election for South Korea. Of course, we have seen the fragile state of the South Korean economy and the leadership vacuum for the past 6 months, really making it difficult for policymakers to negotiate with Washington when it comes to those tariffs from President Trump. 25% on all South Korean shipments, down, really dialed back to about 10%, but only temporarily. So this polling site right now is very near the National Assembly, about 10 minutes drive. And of course, Yeouido area has been very symbolic in this democratic fight here in South Korea after the declaration of martial law back in December.
Yeah, and Sherry, you cite obviously one of the big challenges, which is going to be on the foreign policy front, dealing with the Trump administration. How is foreign policy likely to be shifted depending on who actually becomes the next president of South Korea? Is it going to have a material impact?
Right. I could barely make out what you're saying right now, Germana, because it seems the connection is not that great. But I believe you asked about foreign policy. And what we have seen so far is that candidates, the leading candidates from the left-leaning Lee Jae-myung of the opposition Democratic Party against, say, rival Kim Moon-soo of the conservative ruling People Power Party have very different approaches. We have seen Lee Jae-myung talking about wanting a solid alliance with the United States, but then at the same time, he wants stable ties with the likes of China and Russia. Of course, that's going to be a tricky situation. Whoever wins will need to have to balance ties with both the United States and China, especially when it comes to key issues like imposition of export controls on advanced tech, a key export, of course, for South Korea. When it comes to China, we have seen, of course, that Kim Moon-soo does want a more traditional approach to foreign foreign policy. He wants a stable alliance with the United States and Japan as well.
Sherry, gonna leave it there. Thank you so much. It was so great to have you live from the polling center. That was Sharian in Seoul. Well, coming up, we're going to talk EM fixed income with 91 as traders increasingly buy into stagflation.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but he persistently missed packages. So he scheduled his deliveries from Amazon Business.
Peter Piper picked peppers, but run, rock, rhyme. Humpty Dumpty fell down. Kids are time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
Good for you.
Tom Hayes is passive progressive. Don't be like Tom. Switch to get good coverage and savings for yourself.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Oh! Release the mink!
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Trade talks. President Trump expects to speak to China's Xi Jinping this week as tensions between the nations surge over access to chips and rare earths. The dispute has the potential to endanger their fragile tariff truce. Prisoner swap. Russia and Ukraine meet in Istanbul and lay the groundwork for a new prisoner exchange, but fail to reach agreement to end the war. And reshaping the Middle East's financial order, how bankers and business leaders are shifting their attention across the region in the face of weakening oil prices. That is the focus of today's Big Take. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. We saw moderate gains for Wall Street yesterday, despite the fact that the ISM manufacturing number disappointed to the downside, third contraction in a row. But attention also now turns to other data coming out of the U.S. this week. We've got durable goods today, JOLTS, and then later NFPs as well. Futures, though, leaning towards the red, down 0.4%. 10-year yield sitting at 4.43. We moved up about 5 basis points yesterday in trade as we speak about the further steepening of the U.S. yield curve in the front end, growth concerns in the back end, perhaps fiscal outlook has been deterring some of those long-term investors. The USD today trading about 0.2% firmer, though we're very close to lows not reached since 2023, so 2-year lows for the greenback. And again, I mentioned this at the top of the show. As we speak about the recovery in U.S. equities, the dollar has not participated. So that is an interesting characteristic of U.S. assets this year. And then Brent just shy of $65. We are up 0.3%. A big rally yesterday, up 2.5%, despite the fact that OPEC Plus announced once more that they're increasing the production come July, and even setting the stage for a potential other increase in production come August as well. Switching over, I just want to point out those ISM manufacturing numbers that I referenced, and you can see from here that it's been several months of declines, back-to-back declines for the ISM manufacturing figures. We do get services as well later this week, so watch out for that. But we're basically not back to levels in terms of orders that not reached since the pandemic. So weakness coming through. Very interesting. Exports the lowest since 2020. Imports the lowest since 2009. And a clear manifestation of how these tariffs are impacting U.S. industry. Okay, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio, and it's not just weaknesses in U.S. data that we're talking about, but some Chinese data disappointing to the downside today as well.
Absolutely, Jumana. I mean, we had the factory activity indicator, right? This is based on the private survey, the Tyson one. And there were expectations for an expansion. It actually plunged to the lowest level in about 2 years in contraction territory. And it's interesting because the official PMIs for manufacturing out of China had been showing some signs of improvement. To kind of square this away, our Bloomberg Intelligence colleagues have highlighted as well that it's not terribly uncommon to see the official and the private survey gauges sometimes go in different directions, tell us different things. It could be a bit of a misfire. That being said, that miss is feeding into expectations of stimulus out of the Chinese authorities that seems to be helping to support Chinese stocks. Also keeping an eye on the 10-year yield in Japan. This is following on from the JGB 10-year auction, which saw solid demand. That being said, I think most market participants is reading this as short-term relief. Don't forget, we still have a 30-year auction on Thursday to contend with. Jumana.
Avril, thank you so much for the overview. Avril Hong in Singapore. Let's turn to the Middle East now, as bankers and business leaders are shifting more attention towards Saudi Arabia's neighbors in the Gulf, such as Qatar and UAE, as the kingdom grapples with lower oil prices and a deep deficit. That is the subject of today's Big Take. So for more, let's get out to Bloomberg's Matthew Martin in Riyadh. Really interesting deep dive into, I would say, the developments over the last couple of months, years even, Matthew. But then also coming on the heels of President Trump's trip around the GCC. And you point out in this piece that Saudi Arabia perhaps is a little different in terms of financial ass versus, say, Qatar and Abu Dhabi, because it has transitioned from being a net exporter of capital to a net importer of capital. Tell us more.
Yeah, good morning, Jumana. I mean, exactly as you say. I mean, you know, sort of very simply, Saudi Arabia, just the sheer extent of this domestic spending program that's been launched under the Crown Prince, Prince Mohammed bin Salman, means that Saudi Arabia, although it has all of this huge oil resource which has been pumping for decades and earning, you know, tens and hundreds of billions of dollars on, a lot of that is now all being sucked up on domestic spending, which means increasingly that Saudi Arabia actually needs to raise money from outside to bring into the country to invest in Saudi Arabia, which is a very different position from neighbors. I mean, especially this is relevant for Qatar and for Abu Dhabi, where they're smaller economies, they have big hydrocarbon endowments, so they are earning far more money than they can possibly digest in their local economies. And so what this means is that, you know, a few years ago when the PIF was making a big splash and doing all these big investments and seems to be sort of backing every deal that was coming across and, giving $100 billion to SoftBank. Everybody was flooding into Saudi Arabia because they thought that it was going to be an easy place to come and raise money. And now what they're finding is that actually what Saudi Arabia wants is quite different from the things that Qatar and Abu Dhabi want. Qatar and Abu Dhabi are much more able to say, we just want to do this deal for financial returns, whereas Saudi wants something quite different from what it's going to do with these sorts of partners.
Yeah, and also, the reason that this is the situation that these countries find themselves in is, of course, the break-even oil price in UAE is significantly lower than it is in Saudi Arabia. And Qatar, of course, have the boon coming from extra gas fields coming online. So that's the perhaps hydrocarbon backdrop to all of this. But how do you think this is going to translate into investment activity into Qatar and into Abu Dhabi in the coming years, Matthew?
Well, I think what we're going to see, and you and I were both in Doha a couple of weeks ago for the Qatar Economic Forum. The Qataris are painting a very bullish picture. They are they're very excited about the opportunities that they see investing into the United States. So the QIA has said that it's going to put $500 billion into investing into the U.S. over the next decade. So, that means that if you are a global fund manager, Qatar is going to be one of those key places that you're going to want to go to try and raise money for your funds or for your private equity takeovers and all of those sorts of big global deal making. And similarly in Abu Dhabi, you've got that same dynamic. Both those countries as well, of course, have already invested a lot in the infrastructure that they need domestically. So they don't need to invest as much within their own countries as you do in Saudi Arabia. Saudi's got a very different proposition. It's got 35 million people. It's got a very, very oil-dependent economy. It hasn't invested much in its domestic infrastructure, so it's plowing all of that money back in. And as much as it might do some international deals, it really wants them to have a local angle which play into this plan of diversifying the Saudi economy and developing it and creating jobs.
Bloomberg's Matthew Martin, thank you so much. And you can read today's Big Take on the terminal and Bloomberg.com. Now, traders are buying into the stagflation narrative, with the U.S. bond curve steepening after factory activity in May was a touch below April's levels, while prices remain elevated. Joining us to discuss this and more is Victoria Harling, co-head of emerging market corporate debt at 91. Really good to speak to you, Victoria. I actually want to start, before we talk about the steepness of the U.S. Treasury curve and how that's translating into EM opportunities, just merely about all of the noise around tariffs, the policy uncertainty now. Clearly, it's the U.S. that's in the driving seat. But is there any silver lining at all for emerging market countries in the middle of this haze of tariffs and what it might mean?
Yeah, I think it's an incredibly interesting time right now with a lot of uncertainty. So it's very hard to have strong conviction around the outcomes of tariffs and the impacts that will be felt. But I think what's really fascinating, and you've touched on it a little bit, here you can see local currency has appreciated quite meaningfully, because this now is not a story about EMs per se, but more about the sustainability of the dollar. So for the first time in a long time, you're now seeing emerging market currencies being able to support themselves, because actually you have very strong central bank policy, high interest rates that can now afford to be cut as we're starting to see some inflation dynamics stabilize and real rates can afford to come lower. This should therefore support the domestic demand that's offsetting these trade negotiations.
And as we talk about the strengthening in some of these EM local currencies, a renewed appetite to engage in those EM carry trades, how is that translating into opportunities in fixed income as well?
Yeah, I think one of the really interesting narratives that we haven't had really for some time is this overweight dollar policy that many emerging economies have ended up having. And so the repatriation domestically of some of the overweights that they've been having will support currencies. And we can see that particularly in Asia, where we have big bigger imbalances and big dollar overweights. And so I think you're going to see strengthening continue in emerging economies. And as those savers look for diversifying their savings pools, you can see other emerging economies benefit. And it's interesting, we just heard about the Middle East, but we are actually hearing and seeing on the ground that is really happening with renewed interest in buying and investing in the Middle East, particularly from China and Asia.
That is interesting. Let me pick you up on that then. What is the, I would say, allure to invest in the Middle East then from those types of investors? Is it the possibility of gaining access to a dollar-linked asset that isn't necessarily domiciled in the U.S.?
Yeah, as we know, everybody hates volatility, and that's been the one negative drag to attracting investors into emerging market currencies. But I think that narrative's shifting to a degree. But you're absolutely right. In the Middle East, the stability of the currencies is a really big pull. But actually, this diversification into the non-oil sector that's driving growth in other ways is actually a really compelling story. So we're seeing a lot of interest in project finance for some of these infrastructure deals, but also in investing in some of the bonds that are available, particularly in Saudi. I think some of the appeal and that the Chinese see is a replication of the China story 20 years ago.
So interesting. Yeah. And to your point, Asian investors obviously looking for other fixed income markets to invest their cash in. Speaking of fixed income, in the U.S., the curve has been steepening quite a lot. The front end moving lower or staying where it is, but the back end 10-year and 30-year yields keep moving higher. What knock-on effects could that have on emerging market yield curves as well? And do you see it as potentially also a tailwind? Because in times of curve steepness in the U.S., that tends to benefit EM markets.
Yeah, I mean, I would say that the biggest challenge to EMs is stability of their currencies, and we already have significantly high real rates. So I think we can afford to see those curves perform well generically with base rates being cut, and that should just benefit duration assets overall. I do think there is a concern around the steepness of the yield curve in the US when you consider how much net foreign investment is in long-term assets. It's a concern that we could see net losses should there be a big retrenchment of those assets away from the dollar. And of course, the US cannot be immune from the rest of the world, and the rest of the world can't be immune from the US. So if we did start to see significant steepness with no Fed interaction, that would have just a generic impact on risk assets all around the world, which would potentially weigh on growth, etc. But I do think the rate story is still quite compelling in EM.
Very clear. Victoria Harling, a pleasure to have you on our show today, co-head of Emerging Market Corporate Debt at 91. And coming up, Zambia plans to impose losses on institutions as it reworks $13.4 billion in loans. Details next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Being able to look at a screen and see myself is like no feeling in the world.
Hit it.
That's how my friends hang. Get in, loser. That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
This is 48 Hours.
This is why we have a death penalty.
The dark side of human nature turns all of us into detectives.
Fun place, isn't it, Mama?
Saddam. There goes my appetite.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Zambia plans to impose losses on African development banks as it reworks $13.4 billion in loans with Ghana, echoing the treatment. However, development lenders warn the dispute could prolong defaults and delay their economic recoveries. For more, Bloomberg's Ndiro Ganga joins us now from Kigali, Rwanda. Fascinating story as Ghana and Zambia work their way through debt restructuring. But there has been a lot of pushback on this proposal to impose losses out of the African multilateral lenders. Just walk us through the conversations that are being had between the Creditors Committee on one hand, Ghana and Zambia, but then also the African multilateral lenders as well.
Hi, Jumana. So this is a three-way tiff that we're seeing unfold. You have the Trade and Development Bank and the Afri-Exim Bank saying that they're multilateral development institutions, just like the World Bank and the IMF. And as a result, they should be given preferential treatment when it comes to their debt. These are banks that are also arguing, particularly Afri-Exim, that the preferred credit status is enshrined in its establishment. And you have member states who signed this treaty as a result. They are entitled to it. But the Official Creditors Committee does not see it like that, and they make a very strong case for it. One of them being that these African lenders lend at almost commercial rates, while you have the World Bank and the IMF that lend at concessional rates and also give grants to some of the poorest countries. Another reason that they raise is the fact that when these countries are in default, they can go to the World Bank and the IMF for programs to ensure net positive flows. And also they pointed out, which is very interesting, that these African lenders are fully profitable and sometimes pay out dividends to their shareholders, which discredit them from preferential credit treatment. And they are fighting back and in a rebuttal saying that one of the reasons why their cost of lending is really high is because they're also borrowing at a really higher rate. And they've shown willingness to go all the way. We saw them successfully sue South Sudan. And it raises a couple of issues, one of them being that these banks are feeling like they're being treated unfairly. Decisions about their outcome are being made without them being consulted and not having a seat at the table. And it also speaks to questions that the continent has been raising about the global financial architecture. And that's part of the priorities for South Africa in the G20 presidency, where we have already seen Africa get a seat at the IMF board. And they're also working on launching a continental credit system because they say that the big three have been unfair. They're not doing a differential diagnosis, which then their ratings does not reflect the true status of credit on the continent.
Okay, so clearly it could have ramifications on those multilateral lenders, but what are the broader ramifications on the continent and the cost of raising capital amongst other lenders in the continent as well?
Jumana, if these banks are forced to absorb these losses in the restructuring, what then happens is that they will be downgraded from a BBB to junk territory, and most of their bondholders will be forced to sell because they're not allowed to hold non-investment debt, grade debt rather. And what we will likely see is that the pool of people who can lend and invest in these banks is going to shrink significantly. And so if they're borrowing at a higher cost, then it means that African countries who go to them will also have to absorb some of that cost. Will there be winners in this? Absolutely, Ghana and Zambia, but it will be at the cost of every other African country that will go to borrow from them. But we're seeing this unfold in real time. When Bloomberg reported that Ghana intends to ask the banks to restructure their debt, the finance ministry wrote to them, and so we are seeing this unfold in real time.
Bloomberg's Ondiro Ganga in Kigali, Rwanda. Thank you for bringing us that story. Super interesting and important for the lending outlook for many of these borrowers. Well, coming up, Taiwan's TSMC is predicting record 2025 profits amid a global expansion. We'll discuss the latest developments next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Oh! Release the mink!
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount Plus.
Are you ready?
We were born ready.
Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
TSMC sees profits rising to a record high this year. The CEO, C.C. Wei, told shareholders its technology will remain secure amid a global expansion. It comes after suggestions the company was evaluating building an advanced production facility in the UAE. Let's bring in Bloomberg's Annabelle Jewelers. Belle, let's just start with the outlook that they gave, forecasting record profit in 2025. What do they point that down to?
Well, it's just that continued demand that we're seeing around AI chips, and actually saying as well that they're seeing very strong demand for chips that are used in humanoid robots. So it's not just about sort of tools that are being used for large language models or AI service for that use, but it's also going into hardware now. But just in brief, so we had the AGM and sort of reaffirming a lot of the lines that we got from the earnings just a couple of weeks back, but saying that the 2025 sales growth outlook is still going to be expansion of around 20%. That's in US dollar terms, and actually just on US dollar versus Taiwan dollar, it has been that rapid appreciation of the Taiwan dollar, and they said as well that's going to really impact their margins. They're saying that gross margins could take a dent of around 3% due to the local currency weakness. Also on the energy front, this was interesting because Taiwan recently shut down its final nuclear reactor. Energy security on the island has been a very, very big sticking point, but TSMC saying as well they're going to be using as much renewable energy moving forward, and that they do as well support the local government's plans to start collecting carbon fees, and that would start from next year.
Yeah. The other line that caught my attention was the CEO saying TSMC does not have plans for a factory in the Middle East. Give us the context of that statement.
Yeah, so this was in response to some reporting that we had from Bloomberg just a couple of days back, and what we were saying was that TSMC was looking at building an advanced production facility in the UAE, and that they had been discussing this possibility for a period now with the Trump administration. What we had in our reporting was that TSMC was looking at a substantial investment into what's known as a gigafab, and that's a complex that would have been multiple factories put together, similar to what TSMC is building in Arizona. Now, C.C. Wei, he said that they don't have plans. But I think it is important to add a bit of nuance here, which is that, in our reporting as well, we were saying that this UAE site could be perhaps years away in terms of groundbreaking, and certainly something to be tracked very closely, especially when you've got multi-billion-dollar investment deals being done between NVIDIA and also partners in the UAE and Saudi Arabia.
Yeah, a big push out of the UAE in that domain. Bloomberg's Annabelle Jewelers, thank you so much. Okay, a quick look at equity futures before we round up the show. Things are leaning towards the red. I've got to say, I've tended to notice something. Asian hours, you always get futures leaning towards the red, and then by the time the U.S. come in, by the end of the session, things are back in the green again. So that probably tells you about Asian sentiment versus U.S. local sentiment towards their own markets. But here's the picture for today. Futures in the U.S. leaning towards the red, European markets leaning towards the green. And that is it for Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
I just wanted to create an episode of The Late Show.
Damn it, Chris!
Sorry.
This is Stephen Tyrone Colbert.
That's right, Jack.
Oh! Release the mink!
The Late Show with Stephen Colbert.
You're my favorite uncool guy.
Weeknights on CBS and streaming on Paramount+.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want? You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football?
Let me see a mirror so I can look at it.
Are you a billionaire yet? None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looted?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem.
How is this possible?
Oh, come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley.
I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi. I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
Are you ready?
We were born ready.
Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
Good Tuesday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The White House says Presidents Trump and Xi will likely talk later this week. Investors watching for a dialing down of trade tensions. China's manufacturing slump, the sector slides to its worst reading since 2022 as US tariffs hit the country's smaller exporters. Plus, Poland's Prime Minister Donald Tusk looks to shore up support with a vote of confidence after his candidate for president crashed to defeat at the weekend. You saw a divergent picture yesterday. By the end of the close, you saw modest losses across European equities of about 0.1%. US markets ended in positive territory, up around 0.4. The divergence continues, but in the opposite direction this morning. European futures pointing higher, modestly higher by 0.1%. US futures, though, pointing lower by between 0.4% and about 0.3 on Nasdaq 100 futures. We'll see how that story evolves. There's been a positive reaction in terms of a bond auction in Japan. That has had impacts across the treasury markets, a bit of a relief, a bit more stability across the treasury markets, and we'll mark that shortly. FTSE 100 futures here in the UK also pointing to modest gains of about 0.1%. Let's flip the board and have a look cross-asset then with a focus on the 10-year. So you had a longer-dated auction in Japan, well received, bid-to-cover ratio higher than previously, and you're seeing that reflected across the treasury markets as well. So 443 right now on the benchmark 10-year. That's after yields actually moved higher yesterday across the curve, particularly at the long end, the 30-year, crossing above 5% briefly. You're back below that level this morning. Euro-dollar at 114. You're actually seeing some gains for the dollar after the greenback fell to its lowest level since about 2023 yesterday. Today, up about 0.2%. That is seeing the euro a little softer at 114. Brent continued to add to the gains that we saw yesterday in oil, up 0.4% so far in the session. And gold a little softer after the gains that we saw yesterday for the yellow metal, currently down 0.5%. Let's cross over to Asia right now. Avril Hong standing by in Singapore, and it's the data out of China that's in focus, Avril.
Yeah, the data and the auction, Tom. We're seeing Asia stocks running slightly higher, tracking Wall Street. That's it. They've been moving in pretty tight ranges. As to your point about the data, we got the private survey of manufacturing activity out of China, which unexpectedly contracted a couple of days after the official print showed signs of improvement. There are a couple of theories out there as to why we're seeing this divergence, which I'll get to in a bit, but we are seeing all that kind of feeding into expectations of stimulus from Chinese authorities that has been typically supportive of Chinese stocks. The Chinese shares in Hong Kong are among those that are gaining today. Keep in mind as well that mainland markets were on a long weekend, so this is the picture that they're coming back to. Japanese stocks have been struggling to rebound after 2 sessions of declines. For the board, the other thing that we've been watching out of Japan, the 10-year auction after the 20-year last month really took investors by surprise by how weak demand was. Today's auction for the 10-year showed solid demand and maybe some short-term relief. We're seeing that feel-good factor feeding into across the curve from the 2 years to the 30s. But don't forget, there's still those lingering concerns about not just US but Japan, fiscal sustainability, whether markets are going to be able to absorb the supply that's been coming through, especially when the BOJ is continuing to take its foot off the stimulus pedal. And don't forget, we also have a 30-year auction that's set for Thursday out of Japan. As for the Japanese currency, we saw a sharp climb just a day ago, a bit of reversal today following the anxiety ahead of the 10-year auction, and it's mostly been holding on to that weakness for the board. As I said, it's also about the data out of China, and we had the likes of Goldman Sachs kind of explaining it as when you look at the private survey, it's actually taken typically earlier in the month than the official print, so that might speak to how maybe the tariff truce not yet feeding into sentiment from some of these manufacturers. But aside from that, it could also show us how the trade war has been disproportionately affecting the smaller export-oriented companies, which is, of course, typically what the private survey actually reflects. Tom.
Okay, Avril Hong in Singapore. Thank you very much indeed. Breaking down the China data, the market reaction to that, expectations of more stimulus maybe out of China, and of course a successfully received bond auction in Japan. And as Avril said, we'll see if that continues, of course, with a 30-year auction later this week. To geopolitics right now in the trade story, because the White House says President Trump is likely to speak this week with Chinese leader Xi Jinping as the two economies remain locked in trade turmoil.
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls.
Bloomberg senior editor Bill Ferries is with us for the latest. Bill, we'll just take a step back before we get to the details around this potential conversation between the two leaders and just focus on what the main sticking points are right now between Washington and Beijing.
Well, you've had both sides since that meeting about a month ago between Treasury Secretary Scott Bessent and his Chinese counterpart in Geneva. Both sides now saying that the other country is violating the terms of the agreement that was reached there. The U.S. in particular seeming to focus on what they say are still restrictions on exports of some rare earth minerals that are really hard to get elsewhere and essential for things like F-35 jets, Ford Motor Company production processes, Elon Musk's Android robots. So a lot of industrial processes that depend on these rare earths. The U.S. say they're not getting them fast enough. And then China looks at a slew of measures they've seen from the Trump administration in the past couple weeks, including additional restrictions on Huawei, restrictions on chip design software, and reportedly restrictions on jet engine parts that it can't get elsewhere. They're saying the spirit of the agreement was broken. So both sides starting to ramp up their rhetoric about was or what was not achieved in that meeting in Geneva, and looking for perhaps a little bit of leverage or negotiation from the other side.
Okay, and as President Trump, of course, looks towards that potential phone call with his Chinese counterpart, he's also focused on domestic issues, notably his quote-unquote big, beautiful bill that is now working its way through the Senate. And we know that he's been wrangling, arm-twisting some Republican senators to try to embrace this tax bill. How much division is there within the Senate, and where do those conversations stand?
Well, when that House bill first passed, it wasn't pronounced dead on arrival in the Senate, but it was definitely an intensive care given the number of senators who were protesting different aspects of what the House had agreed to. So President Trump working the phones, trying to get support, but it's very clear that there's some opposition to some of the Medicaid cuts that are proposed in that legislation and how they go about it. There's some senators who are more deficit hawks than even President Trump. They want to see additional spending cuts made that the House wasn't able to agree on. So there's quite a few different issues cropping up. The Senate has basically said they're not just going to pass the House bill. The changes that they make will have to go back to the House for approval. On neither side can Republicans afford to lose more than 3 votes, so the wiggle room is really, really thin here. It sounds like they're still trying to get a bill to the president's desk by July 4th. That sounds like it's a long ways away. It's really not when you start adding up the legislative time that remains. So the Senate trying to put forward a draft bill by this weekend, we're hearing. We'll see how that lands with the House Republicans.
OK, July the 4th, seemingly still an ambitious target. Bloomberg senior editor Bill Ferry is breaking down the latest in terms of the movements around the tax bill and the Senate's reaction to that. Bill, thank you. Now, Treasury's beginning June on the back foot. There's a bit of stability today, but yesterday there was a sell-off again. Let's bring in Bloomberg's Valerie Teitel for more. And Val, maybe it ties into the tax bill negotiations. Maybe it ties in to broader, more macro themes around concerns about a build-out of debt and concerns about the long end of the curve when it comes to not just the US, but Japan as well. We had that successful launching in Japan. Maybe that's a factor in terms of the relief that we're seeing across the Treasury markets. Just walk us through where things stand in terms of the Treasury market reaction to these issues.
Hey, look, it is a more positive session for the Treasury markets thanks to that strong JGB auction. Again, really testing demand for long-end paper. It seemed to go quite well. But again, yesterday's session, Tom, was pretty brutal for the Treasury market. We did see those 30-year yields poke above 5% very briefly in yesterday's session. And the 530s curve, that's the difference between the 30-year yield and the 5-year yield, neared 100 basis points. So we're still hovering around the steepest levels in the Treasury curve since 2021. But a bit of stabilization. Remember, we also have another JGB auction this week. We also have 10-year and 30-year supply next week for the Treasury market. So that'll be a key test of demand, but it seems like we're stabilizing at the moment. The dollar is also seeming to stabilize this morning. The Bloomberg Dollar Spot Index is trading higher this morning, up near 0.2%. Some of that driven by some weakness in the yen after some dovish comments from Ueda. But it goes to show, Tom, they're still on the back foot in terms of momentum for the U.S. dollar, take a look at the longer-term chart in my next visual here. We hit the lowest since 2023 yesterday, and we have to go, if we breach that, we have to go all the way back to 2022 to find a similar level. We're still down over 8% from those January highs, and if you look at the RSI indicator, that's the relative strength indicator, we're the lowest in 7 years. So momentum is still on the back foot for the U.S. dollar. We're giving a little bit of reprieve in today's session so far.
Despite the reprieve, it may be short-lived for the US dollar. Bloomberg's Valley Titel, thank you. Now to the geopolitics in terms of the conflict between Russia and Ukraine in the meeting, of course, that they had in Istanbul yesterday. Both countries then laying the groundwork for a new prisoner exchange. That's after a second round of direct talks in Istanbul failed to bring the two sides closer to actually ending the war. It comes one day after Kyiv staged one of its boldest aerial attacks inside Russia. For more, let's bring in Bloomberg's Greg Sullivan with the latest. Greg, was anything achieved in terms of moving this conflict closer to a close, in terms of a ceasefire, in terms of a pause of fighting? Anything that came out of the meetings between the two sides yesterday?
Well, on the face of it, it appears that we are no closer to a ceasefire agreement. The two sides met for what was relatively a short time, and the biggest agreement that came out of it, like the earlier meeting in May, was a prisoner exchange, a swap of prisoners who were heavily wounded or very young, as well as the war dead. Now, that said, the two sides did exchange memorandum laying out their positions to reach a ceasefire. The Russian side handed Ukraine a two-part memorandum that Ukraine said that they would study, and Ukraine also proposed a meeting later this month. So, again, it's mostly the prisoner exchange that came out of this rather than any progress towards a ceasefire. And it's also good to note that this is happening against the backdrop of increased intensity in the fighting. Russian missile and drone barrages have increased. And, of course, there was that audacious attack that Ukraine pulled off against Russian airfields inside Russia. So increased fighting, very little progress towards a ceasefire, at least publicly. And the biggest takeaway, again, is a prisoner exchange here.
Greg, did the same sticking points come up with these talks? Is it about territory? Is it about the territorial demands of Russia, or are there other elements in terms of how this story has evolved?
Absolutely. That is a key point. And of course, there are other elements. Ukraine has been demanding a 30-day unconditional ceasefire. Obviously, Russia has not agreed to that. They have been resisting that. But from the Russian side, their demands are quite serious. There's that territory demand that you mentioned. They want all of 4 territories that they don't currently control and haven't militarily been able to take. They want Ukraine to withdraw from those territories before a ceasefire can start. They also want neutrality for Ukraine. They do not want Ukraine to be part of NATO. They want them to be a neutral country, and Russia has also laid forth a demand that Ukraine hold elections before any ceasefire starts. So these are very steep demands and very hard for Ukraine to accept all of them, at least from where we stand today.
OK, Bloomberg's Greg Sullivan, thank you for the latest update in terms of those talks between Ukraine and Russia in Istanbul yesterday. Here's what else to be thinking about today. 7:30 a.m. on the data front. We're going to break you down the Switzerland inflation story. So Switzerland's CPI, that drops, and we will break that for you at 7:30 a.m. At 8 UK time, the OECD will publish its economic outlook report. We'll bring that to you as well. And at 10 a.m. UK time, we're going to get Euro area CPI, with inflation increasingly moving closer to the ECB's 2% targets. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Coming up, South Korea votes for a new president who will face the challenges of uniting a deeply fractured country and navigating President Trump's trade tariffs. We are going to bring you the latest live from Seoul after, of course, the ruptures politically in South Korea. That's just ahead. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
we were born ready.
Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
Welcome to 25 Words or Less.
Join Meredith Vieira and play along to 25 Words or Less on Pluto TV.
Clever.
14 words, 45 seconds on the clock. Good luck. Okay.
Sports change.
Hi, Pluto TV. Meredith Vieira here. Catch 25 Words or Less all weekend long right here on Pluto TV. Stream now, pay never.
It's Jobs Day, and Bloomberg has the report under surveillance.
The risk was a downside surprise, the reality an upside surprise.
The shock has affected outcomes.
There's a pretty big cliff from an economic perspective.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
American exceptionalism continues.
This is not what we're going to experience in the upcoming months.
Is it going to be Biden data or Trump data?
The May Jobs Report, Friday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, South Korea's financial markets are closed today as the nation votes for a new leader. The election was triggered after an attempt, of course, by the now impeached former president Yoon Suk-yeol to impose martial law at the end of last year. Asia Trade co-anchor Sherry Ann joins us now from Seoul on the ground for us. Sherry, what are we expecting today then on election day in South Korea?
Tom, finally an end to 6 months of political turmoil and a leadership vacuum that saw 3 acting presidents go by. I'm right now inside a polling station in central Seoul, and we can see voters just behind me right there. More than 12 million have already cast their ballots today for a total turnout of more than 60%. And this, of course, after already more than 15 million people cast their ballots in early voting last week. So the interest in this snap election is high. Of course, you mentioned the political constitutional crisis that South Korea has seen for the past few months. We have seen protests pro and against the former president. Frontrunner Lee Jae-myung and other leading candidates like the ruling party's Kim Moon-soo have vowed for more stability in the country if they get elected.
Sherry, on the domestic front, the focus on the economy, yes, assets have performed quite well in South Korea, but the economy is challenged. I mean, what is the current state of the economy? What's going to be top of list for whoever wins in terms of addressing some of those economic challenges?
It's a fragile economy here in South Korea. Not surprising, the Bank of Korea actually downgraded its growth forecast to 0.8% this year from 1.5% just in February. Of course, we have the ongoing trade tensions with Washington, and that will be a key priority for whoever wins this election, getting to a trade deal with President Trump. We have these 25% tariffs on all Korean shipments, of course, dialed back to 10%, but only temporarily. So exports have already stalled, contracting for the month of May. We have seen also GDP for the first 3 months here in South Korea shrinking this year already. The Korean market, though, as you said, assets have rallied because this could bring an end to the political turmoil that we've seen in the past few months. So expectations of perhaps even more corporate governance reform that has been pledged by all candidates across the board. That could help markets here in South Korea. The Kospi just rallied 4% last week. We've seen gainers beyond just, say, semiconductors and heavyweights in the tech sector. For example, Samsung, that has a Kospi weighting of about 16% now, is down from more than 20% just last year. This is, of course, the most valuable stock in South Korea.
Sherry, on foreign policy, where are the splits most evident between the most prominent candidates, the key candidates, in terms of the divisions around foreign policy?
That's interesting, right, Tom? Because that's where we're seeing a different approach from the leading candidates here in the presidential election. Because when it comes to economic policy, when it comes to stimulus measures, everybody wants to spend more, which is also why we saw Korean assets rallying. Everybody wants to support the tech sector. They want to do more for housing. But when it comes to diplomacy, that's when you see different approaches. Lee Jae-myung of the opposition Democratic Party wants a solid alliance with the United States, but that approach is nuanced because at the same time, he wants stable ties with the likes of China and Russia as well. In fact, he has said that he doesn't want to be unilaterally bound to America. He doesn't want unnecessarily hostile relations with the likes of China and Russia. He also wants to engage with North Korea in dialogue, a little bit tricky given, of course, a deepening alliance between North Korea and Russia now. When it comes to Kim Moon-soo of the ruling People Power Party, we know that he has a traditional conservative approach to diplomacy, perhaps very similar to what we saw from the ousted President Yoon Suk-yeol, a strong alliance with the United States, a strong alliance with Japan as well. When it comes to China, a little bit more cautious. When it comes to North Korea, a hardliner.
Okay, a hardliner on North Korea. So divisions when it comes to foreign policy and the domestic economy in focus as well. Bloomberg's Sherry-Ann in Seoul. Thank you very much indeed. An update there in terms of the importance of that South Korean election, given the political tumult that that country has faced in recent months. Coming up, we're going to switch focus to what is happening when it comes to the chip space. TSMC says its profit will hit a record this year. A record. We're going to bring you the details next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Are you ready?
We were born ready. Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
Ariel and I won't lose. Does having two papas make you happy?
Welcome back to Bloomberg Daybreak Europe. Taiwan Semiconductor Manufacturing, TSMC, says it sees profits rising to a record high this year. The company's CEO told a shareholders meeting that TSMC's technology will remain secure amid global expansion. It is, of course, a key litmus test in terms of the story around demand, particularly for semiconductors in the AI space. Let's bring in Bloomberg's Annabelle Drulers right now for the details on these numbers. Annabelle, what stood out to you? So record profit, steady growth in an environment, of course, of trade tensions and question marks about China's ability to continue to absorb some of these semiconductors globally. What kind of stands out to you in terms of the numbers? What is propelling still this modest growth picture for TSMC?
Well, I think exactly as you say, it's sort of that contrast that TSMC is making between what it's seeing and then also this backdrop of really expanding global uncertainties. But essentially, they're just continuing to be optimistic about the demand for AI chips, and they're saying that there are new growth drivers. For instance, humanoid robots is standing out to them. But in terms of what we got at the AGM, it actually reflected a lot of the same tones and commentary that we got in the earnings just a couple of weeks back. But yes, you said that prospect for record profit this year, they're still saying that the sales growth outlook for 2025 is going to be around 20% growth. That is in US dollar terms, so important US dollar terms, because we've seen a really rapid appreciation of the Taiwan dollar, and that they're saying that that's actually having a bit of a bearing on their operating margin, rather, that's fallen by more than 3 percentage points of late. Also, some commentary was interesting around the energy space, because Taiwan recently shut down its last remaining nuclear reactor, and so there's a really big question around energy security on the island, where they're saying they're going to be using as much renewable energy as possible going forward, and also they support the local government's plan to start collecting carbon fees in 2026. Lastly, on the AGM, you also mentioned the global expansion. There was some reporting we had from Bloomberg saying that TSMC was considering or had plans for a factory in the Middle East, even if groundbreaking could be several years away. C.C. Wei, the CEO, did respond to that, saying that there's nothing actually in the works right now.
Okay, yeah, some colour in terms of the energy piece and, as you say, the strength of the Taiwanese dollar, really interesting as well in terms of these numbers. Briefly, Annabelle, in terms of xAI, Musk leaving the White House's official role or unofficial role and quickly and pretty rapidly raising additional capital, at least looking to raise additional capital for xAI.
Yeah, I guess it's been a really rapid move from the streets of Washington right back to Wall Street, because he's back on the fundraising path for his businesses, and now we're hearing that he's looking at selling $5 billion in debt for his AI startup, xAI. So what we're hearing from people that are familiar with the matter is that Morgan Stanley is shopping the debt, and in terms of the package, it could include a floating rate term loan, a fixed rate term loan, and senior secured notes. For the pricing side, they're saying that at the early stage, it could be 7 percentage points over the benchmark for the floating rate term loan, roughly 12% yield on senior notes as well. But certainly this financing, again, $5 billion in debt, could help them be spending aggressively on AI infrastructure.
Okay, Bloomberg's Annabelle Drewless, thank you very much indeed with the latest there in terms of xAI's updates, in terms of fundraising and TSMC as well. Coming up, we're going to dive into the markets with Alexandra Ivanova from Invesco. Stay with us for that conversation. That's next.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
The future of trading is here on Robinhood. Purpose-built for how you trade. With new ways to execute your strategies. And analyze, buy, and sell. Seamlessly trade stocks, options, crypto, and futures in one place.
Being able to look at a screen and see myself is like no feeling in the world.
Get it!
That's how my friends hang.
Get in, loser.
That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
Good morning, this is Bloomberg Daybreak Europe. Happy Tuesday, everyone. I'm Tom Mackenzie in London. These are the stories that set your agenda. The White House says Presidents Trump and Xi will likely talk later this week. Investors watching for whether the phone call will see a dialing down of trade tensions. China's manufacturing slump, the sector slides to its worst reading since 2022 as US tariffs hit the country's smaller exporters. Plus, Poland's Prime Minister Donald Tusk looks to shore up support with a vote of confidence after his candidate for president crashed to defeat at the weekend. Let's check in on the markets then. The Asian session focused on that China data, weaker across the board when it comes to the Caixin manufacturing picture, but that is building expectations of additional stimulus from policymakers in China. Here in Europe, futures pointing higher by 0.1% after some modest losses by the end of the close yesterday on the Stoxx 600. Here in the UK, the FTSE 100 looking to add just 9 points, pointing higher by 0.1%. S&P futures stateside after gains of around 0.4 yesterday, pointing lower by 0.3%. Nasdaq 100 futures also off by 63 points. Let's flip the board and have a look cross-asset. There's some stability this morning in the Treasury market after a sell-off again yesterday across Treasuries. You saw the 30-year yield crossing back above 5%. You saw yields up about 6-7 basis points on the benchmark 10-year today. The 10-year is yielding 4.42. Yields just down close to 2 basis points. A little bit of relief around an auction in Japan on the 10-year, well received, and so that is leading to a little bit of stability in the Treasury markets. 114 on euro dollar. A little bit softer in single currency, down 0.2% as the dollar picks up a bit of steam after the losses of yesterday. Brent adding to the gains of yesterday, up 0.2% on oil, and gold selling off by 0.6% after strength of yesterday in that haven move. Some of that is being paired in the session today, 3,360 per troy ounce on the yellow metal. Let's get more details in terms of how to think about these markets with particular lens on credit and rates. I'm very pleased to say I can bring in Alexandra Ivanova, fund manager at Invesco. Alexandra, thanks for joining us in the studio. Morning. Let's start with the story. It's a big week in terms of the data coming out of the US. So we had the manufacturing gauge coming in softer out of the US. We've got jobs data, JOLTS, so the job openings, and then non-farm payrolls on Friday. Are we starting to see a turn in terms of the data in the US? Should we start to brace for a softer US economy, or is that relative stability still there?
Well, I do think that given all the uncertainty, I wouldn't be surprised that the data might start surprising to the downside. But so far, it has been quite resilient. The labor market has been surprisingly strong, and our expectation is that we might see the payrolls to come down, a step down a little bit from the last 3 months. But it still shows some resilience in the U.S. economy. Okay, so a little bit of softening, but still that resilience, not major cracks at this point. Are the trade tensions proving a crack? When it comes to the credit space, how do you trade these trade tensions, and what positions would you take if we get a renewed détente between the two presidents, if indeed a phone call happens this week? Well, the credit market has been absolutely strong, and the demand and the technicals are still there. And I think given the volatility in other risk markets, credit has been quite resilient in that sense that if you look at the risk-adjusted returns on credit and credit spreads, given where the yields are for yield investors and income investors, it's a nice place to hide, probably not to go too far in the back end of the curve, but in terms of investors looking for good quality yield, quality credit is actually still doing okay. Fundamentals are weakening, and we are seeing in some of the earnings calls that we have seen, but overall, it's still resilient. Regionally, where does that take you then on credit? Oh, that's a good question. I do think that European credit looks quite attractive. However, the valuations do reflect that. And if you think about investment grade, we are still dependent on the duration of the bonds and underlying curves. And given where the inflation is coming down, ECB is still in the easing path. And obviously, we also have ECB this week. And it makes sense to still stick with the investment grade in Europe. Having said that, US, it's also starting to look attractive because the valuations have detached from other credit markets because of the whole U.S. exceptionalism or not being there, people starting to sell some U.S. credits. But I think that there are places where you can get good returns.
Okay. On the sovereign story, on the rate story, when it comes to the U.S., given the tax bill that is working its way now through the Senate, and we'll see if they meet that July the 4th deadline that the President has imposed, the White House has imposed on themselves, to what extent are we getting to a kind of make or break moment for the bond markets in terms of a tax bill that could add potentially $3 trillion to the U.S. deficit?
Well, that's where the back end of the curve is very nervous about it, right? So we have seen the rate sell off, and as you mentioned, we are above 5% again. So this is where I do think that
a lot of investors are questioning whether the debt sustainability, the budget deficits will continue in this trajectory. And it seems to me that it's going to be a feature in the next couple of years. But I do think that in some places where you have a longer duration assets, say Japan, you were talking about how the auction has been received quite well. That is a relief, and I think that's kind of indicative of the fact that we are starting to stretch the valuations, and it is attractive. For example, I was looking at the 40-year JGBs, and if you hedge it back to euros, you're getting 4.8% yield. That's actually higher than some of my credits in my portfolio. So you just have to be cognizant of what kind of risk you're putting in your portfolios, whether you're doing credit risk and default risk versus the volatility risk and some of the long end, the duration risk.
Yeah.
So.
Oh, that's really interesting. And the Japanese bond market and the auctions there now having that kind of global impact. And you're seeing potentially yields of 4.8% if you hedge around the euro on the 40-year.
It's 7% if you hedge it back to sterling.
Wow. Okay. So 7% if you hedge it around to sterling. What other opportunities are you finding in terms of sovereign? And I guess the question before I get to that point is on treasuries and on the back end with the 30-year. Is there a level at which yields get to whether it's 5.5, 6, that then just there's an automatic function where fund flows move back in because you can't avoid wanting to lock in yields at that level? Or is the glide path just clear in terms of higher yields on the back end?
No, I do think there is a level because as the rates continue to rise, it's going to be much more difficult to fund yourself, becomes a problem for the Treasury. And they are paying attention to this. And I do think that there is some levers where you can say you can change the composition of your issuance. You can get funded more in the front end. So there is a supply and demand dynamic that is driving these yields much higher at some point, and I do think that we are getting close to it. My target is around 530 to start buying the back end of the U.S. curve, but it's a little bit early, and I'm still cautious. And if you do buy it, you buy it for a trade.
Okay, because, 530 would be the target on the 30 in the U.S. Just briefly on equities, you're still steering clear of U.S. equities, so structurally long non-U.S. markets. Is that a play around optimism on Europe, or is that your views on negativity around the US? What would have to change that dynamic for you?
It's mostly the relative view. I would say that U.S. exceptionalism is still there, and I always worry that if you go to one side, yo-yoing from being too positive to too negative is quite a dangerous place to be. And if you see my notes, it's the most boring allocation where you have the beta is one or neutral everywhere. But within each asset class, you do get some pockets of opportunities. And this is where I think Europe has also coming out of a little bit of a slow patch. So growth is going to be slightly better. We do have some fiscal expansion in Germany, of course. And then at the same time, U.S. will be catching down. So the growth differential is going to be shrinking. And then you also look at the size of the European equity markets and the size of the U.S. Still, the liquidity is much better in the U.S. So that you have to consider it for a long-term investor. But the impact, so just the fund flow into Europe could be positive.
Okay, so a catch-up for Europe, not necessarily catch down for the US. US exceptionalism
both.
has
a
not.
little bit of both.
A bit of both. Okay. Yeah. Alexandra, thank you very much indeed. On the credit markets, rates, and of course equities as well. Fund manager at Invesco with a view on these markets. Now, some other stories making the news this Tuesday as the White House says Presidents Trump and Xi will likely speak this week. Bill Winters, CEO of Asia-focused bank Standard Chartered, of course, has told us he's keeping a watch on the China tariff situation.
Sorry, but the China will be at 30% with some gap.
OK, we were hoping to hear from Bill Winters. We'll bring you that sound later in programme. Of course, the CEO of Standard Chartered speaking to Francine Lacroix yesterday. To the tech space now, Microsoft cutting hundreds more jobs just weeks after its largest layoff in years. More than 300 employees were told their positions had been eliminated on Monday. That's according to a Washington state notice reviewed by Bloomberg. A Microsoft spokesperson said the latest headcount reduction is in addition to the 6,000 job cuts announced last month. And Disney is laying off several hundred employees across its film and TV businesses in a sign the entertainment industry's contraction is far from over. Disney has eliminated over 8,000 jobs in recent years as it works to cut expenses by $7.5 billion. And Uber has named longtime executive Andrew McDonald as its first chief operating officer since 2019. McDonald will oversee both the mobility and delivery businesses. The move is part of an executive shakeup at Uber, which includes the departure of the senior delivery vice president and the promotion of 3 long-serving employees to the leadership team. Coming up, Polish Prime Minister Donald Tusk calls for a vote of confidence after an electoral defeat over the weekend. We're going to have those details next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Are you ready?
We were born ready. Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
Welcome back to Bloomberg Daybreak Europe. Now, Polish Prime Minister Donald Tusk says he will seek a vote of confidence. That's after the candidate backed by his party was defeated in Sunday's presidential election. Tusk spoke about the election's outcome.
Over 20 million Poles elected a new president of the Republic of Poland, showing their strong commitment to democracy and its key principle, free and universal elections. No matter how we judge the winning candidate, we should recognize his victory and congratulate his voters, which I hereby do. I also thank the loser for his determination and fighting for every vote to the end.
And Oliver Crook, who was on the ground for us in Warsaw yesterday, of course, to cover those elections, joins us now for the latest in terms of the political fallout of this election, or at least the realignment that we're seeing now in Poland. What is Tusk's motivation, Ollie, for calling a confidence vote? Does he need to call this vote at this point?
He wants to demonstrate before lawmakers, before the whole world, that there is still a mandate within the government, that this is a vote that he really believes that he's going to win very comfortably. This is not the sort of thing that is going to sort of bring down the government, but it does follow, Tom, as you say, the loss of his ally, the candidate that he really wanted to win in that election, the person who would have made his legislative priorities possible to defeat to the Law and Justice Party, the far-right, nationalist part of the Polish political spectrum that basically now creates a huge amount of gridlock within Poland because the president has a lot of veto powers over everything that the prime minister would like to do. Donald Tusk is still this sort of prominent political force, but he can be basically blocked by a lot of his priorities by the president. And at the end of the day, he's going to have to figure out how to navigate that landscape. We are also going to expect a reshuffle of the government to maybe streamline things a little bit. We also heard from Donald Tusk saying also that he wanted everyone to see, including his opponents at home and abroad, that we are ready for the situation, that we understand the gravity of the moment, but we do not intend to take a single step back. He may not take a single step back, but it's going to be very difficult to see how he's going to manage to take steps forward, particularly feeling the heat as he is coming from the far right at a time when Poland was really going to change its trajectory and sort of unlock a bunch of EU funds and sort of his liberalizing agenda. That basically comes potentially to a dead halt. He needs to figure out what his plan B is, and that is what he's assembling now.
Yeah, how to enact that agenda, given the potential opposition he now faces from the newly elected president. Meanwhile, elsewhere in Europe, Ollie, and I know you've had your eyes on this, is the Netherlands, where this coalition is potentially at risk of a collapse. Relatively new coalition, of course, in the Netherlands in terms of the historical context. And this comes down to migration. What are the dynamics at play here?
And Tom, this is the perennial issue that is threatening to pull down the government in the Netherlands, sometimes every few months. It's what brought down the government almost exactly a year ago, 11 months ago, when Mark Rutte left to the Netherlands to become a NATO Secretary General, and now is being led by a sort of three-party coalition, the biggest party of which is the Freedom Party that is led by Geert Wilders, who has now proposed last week, put in front of the parliament, this 10-point immigration plan. And he says that basically if most of these points are not adopted, he is going to pull the plug on the government, going to bring down the Dutch government. So just to give you a couple of the points within this 10-point plan, he wants to, for example, use the army to guard land borders around the Netherlands. He wants to turn away all asylum seekers. He wants to halt temporarily family reunification, sending Syrians back to Syria. These are the kinds of initiatives that we were expecting really from this far-right sort of anti-immigration party of Geert Wilders, but is causing a lot of problems within this legislation, does not have the support. And as of yesterday, he says, if you do not adopt this, I'm going to pull the plug on the government. And we should say this is the thing that keeps coming back again and again in the Netherlands, just 3 weeks before the Netherlands is meant to host Donald Trump in this NATO meeting. So again, when you think about sort of the Brussels perspective on both of these stories, both Poland and the Netherlands, they really would like to see a strong, stable, pro-EU government. That is not what you have over the last 24 hours.
Yeah, and that is the important broader context, isn't it? Thank you. Oliver Crook, of course, with the latest in terms of the political shapes and tensions within the Netherlands and the reworking, of course, of the political map in Poland. Ollie, thank you. Now, the Trump administration's trade war with China, meanwhile, has many European regulators and retailers bracing for a flood of ultra-cheap Chinese goods. Good for inflation, maybe, but a tide of products from e-commerce platforms such as Shein and Temu may not be coming, at least not yet. Bloomberg's Sonia Wind is here to discuss, has been writing about this. So Temu and Shein spending heavily in Europe. We know they have a footprint here and exposure, of course. Are those efforts now paying off?
Well, based on our reporting, we're seeing real tension between what the platforms want and what the sellers are doing. So Temu and Shein, they have really poured money into advertising campaigns. They even offer to subsidize the shipping costs into Europe. But the sellers are more hesitant and they don't seem to be convinced. That's because the US is a really lucrative, uniform market compared to Europe, where we have multiple languages, different rules and regulations, and that makes it much harder to scale fast in this region. So for now, we are seeing this mismatch between the ambitions of the platforms and what the sellers really want.
Okay, and we'll see if they can close that gap, which is interesting, isn't it, in terms of the tension between the sellers, most of whom, of course, are in China, and the platforms themselves, Chinese-based platforms. How is Europe then potentially preparing for a possible surge, if it comes, a tidal wave of cheap imports?
Yeah, so Europe is definitely trying to get ahead of it. And while we're not seeing a huge influx of cheap Chinese goods now based on these US trade tensions, we have been seeing a massive rise in the past years of low-value parcels that have entered the European Union and also the UK. And that is a problem because many of these products are not compliant with EU regulations. So the regulators are also under pressure from local retailers to do something about it. And something that they have been doing is ramping up the custom checks to prevent, laser pointers that exceed power outage by 300 times to stop them from coming into the market and harming consumers. Another thing they have been doing is discussing the end of the de minimis rule, which allows the tax-free import of low-value goods into Europe, something that the US has now done. So they're definitely cracking down, and once it might become necessary for Chinese sellers that are still hesitant now to come into Europe, they will definitely be walking into a more strictly policed environment. And it also seems that Temu is aware of that, and they're trying to combat this new reality by increasing the share of local merchants. So they said by the end of the year they want 50% of the products to come from the UK, and that's a model they plan to roll out across Europe.
Okay, we'll see if that comes to fruition. Bloomberg's Sonia Wind with that reporting, and well worth a read on the Bloomberg terminal, of course, and on Bloomberg.com. Sonia, thank you. In other news, Italy's Mount Etna erupted yesterday, setting off large clouds of smoke and causing tourists to seek shelter. You can see some pretty dramatic pictures there. The country's National Institute of Geophysics and Volcanology reported volcanic activity of high intensity, which it said had also caused the collapse of part of the volcano's crater. No casualties have been reported, and there has been no impact on flight activity so far. Located in Sicily, Mount Etna is Italy's biggest volcano and one of the world's most active. Local media say the latest eruption is the most intense since 2021. There's plenty more coming up. We're going to break down some of the data we expect out of the US and the jobs picture, and reflect again on the factory gauge out of China, with manufacturing data slumping when it comes to that Caixin survey. Stay with us. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Being able to look at a screen and see myself is like no feeling in the world.
Get it.
That's how my friends hang.
Get in, loser.
That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
Who's our suspect now? Who did this?
Pluto TV has 3 classic sitcoms all in one place.
You want to go upstairs and fool around?
No.
Classic TV Families Channel on Pluto TV.
Welcome back to Bloomberg Daybreak Europe. It's a big data week in terms of the focus on the US with jobs data, and we'll get to that. But manufacturing data came out yesterday, and really in focus was the division in terms of exports and imports. You are seeing the impact now from tariffs. Imports falling to the lowest level in about 16 years, falling to the lowest level, 16-year low in terms of imports into the US. That's the white line here. So those are contracted pretty significantly. When it comes to exports, the biggest drop in about 5 years for exports. So in terms of the import story, interestingly, because at the beginning of the year, you did see that pull-in of imports by companies trying to get ahead of the curve in terms of the tariff story, trying to build up these inventories. That now seems to have come to an end. And you saw manufacturing for a third straight month, top line manufacturing out of the US, softening for the third straight month in the month of May. But again, the export and import story pretty dramatic when you lift the hood. Let's flip the board and have a look at the job openings picture, because that comes through later this week, of course. Then you have non-farm payrolls on Friday. Bloomberg Economics actually thinks you could get, in terms of the ratio between job vacancies and those looking for work, that number, that ratio could actually drop below 1 for the first time since COVID, since just after COVID. That's the expectation from Bloomberg Economics as the labour market does start to soften now in the US. So the job openings number is going to be consequential as we lead up to non-farm payrolls. Meanwhile, in China, we may get that phone call, of course, between the two presidents. It may or may not happen this week. The White House certainly hopes it will happen. Worth reflecting on the Caixin data when it comes to manufacturing, because that has really softened pretty dramatically and surprising, particularly when it comes to the small and mid-sized companies that the Caixin survey gauges. So plummeting in terms of the manufacturing story in China. A little bit of weakness then, and a softer hand maybe for Beijing as it heads towards those conversations on trade with the Trump administration. The opening trade is up next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Being able to look at a screen and see myself is like no feeling in the world.
Get it.
That's how my friends hang.
Get in, loser.
That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
We're going to solve this case with a little thing that I like to call police work.
Let's get started. She's the yin. The brain activity shifts to carry out productive gray. And she's the yang.
I have no idea what that means.
Sometimes opposites attract.
It's a match.
And solve crimes together. Watch Rizzoli and Isles. Anytime on demand. On Pluto TV.
I'm on a mission for what's left of the government, and I need your help. You're looking at the only human known to have survived being bitten by a zombie. I suggest we run for it.
What the is Paul till my arm falls off?
Party's here!
Oh, yeah!
Guidos everywhere. Hot girls and house music.
It's like we beat up that beat. GTL, baby. Gym Tan Laundry. That's how we like make the Guidos.
We are here to blow this place apart. As one big blur.
I don't know how I'm alive.
Watch the Jersey Shore channel now on Pluto TV. Stream now, pay never.
Come on, MJ Plummer. Hook me up with a treat.
I love
Good morning from London. I'm Anna Edwards alongside Lizzie Bourbon. We're an hour away from the opening trade. Here's what you need to know. The White House looks to dial down trade concerns, saying Presidents Trump and Xi will talk soon. There's US praise for the EU coming to the table, but Europe warns again about possible retaliation. Higher stimulus hopes help push Chinese stocks higher despite a private sector factory gauge falling to its worst reading since 2022.
Plus, Poland's Prime Minister Donald Tusk looks to shore up support for his coalition with a vote of confidence after his candidate for president lost out.
Well, good morning, Anna. Checking in on these markets, and we are waiting for Xi to pick up the phone to Trump or vice versa. But in the meantime, stocks are tired of the uncertainty. You're looking at futures pointing lower stateside, pretty flat here in Europe. A bit of a recovery for the dollar today, so euro-dollar down to a 1.14 handle. And we had the 30-year Treasury yield actually poking past that 5% level yesterday amid all of this tariff uncertainty. 4.93% is where we are at the moment, though. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. This is the opening trade. It is Tuesday, the 3rd of June. Once again, we have plenty of trade lines to focus on. We also need to factor in the latest data out of China and some of the politics in Europe. But Lizzie, let's unashamedly return to the trade theme, because that does seem to be where the market's focus is right now. And it's not giving us necessarily a very clear signal around risk appetite, because US futures equities point a little lower, but oil prices going higher. So not getting a sense that perhaps this is driving sentiment in the moment. But we're waiting really for some word out of China on whether Presidents Trump and Xi will actually meet, because the spokesperson for the White House says they will, but we haven't heard from China yet.
Yeah, ever since that Geneva truce, it seems both sides have just got annoyed at each other, right? So you've got the Chinese student visa issue, you've got the chip design software restrictions, AI chip export guidelines as well. But on the US side, they're annoyed about the critical minerals and the exports of those not being ramped up enough, according to Donald Trump, for all these cutting-edge electronics. So, as I say, the US wants Trump and Xi to get on the phone, but Beijing not looking like they're really into the idea at the moment.
Yeah, waiting for some confirmation as to whether that's possible. But certainly the signals from the White House are that this could happen at the end of this week. Meanwhile, what's Europe doing? We have had slightly more positive signals from the White House about how much they appreciate that Europe has come to the table, negotiating in good faith, they say. But Europe has been responding to the 50% tariff threat on steel and aluminium, and said that this is undermining the wider trade talks, and once again they reserve the right to retaliate, put further tariffs on certain products or new tariffs if they don't manage to get to some sort of resolution by the middle of July.
Yeah, because the EU wants to fast-track these talks before July the 9th. Perhaps they're feeling grateful that they didn't rush into a settlement with Trump like the UK, perhaps you might say, did, now that we've seen the steel and aluminium tariffs. Because if you were the UK, you would be annoyed right now that trade pact is undermined by the steel and aluminium tariffs, and Trump doesn't have the time now, when he's got all of this court battle going on, to renegotiate your deal and maybe give you an exemption on the 50% levy. So yeah, there is this European negotiation happening at the same time, and Macron and Meloni meeting in Rome today, because they've got to try and present a united front, not just on Ukraine, but also on trade. Now, when it comes to the China story, if we can go back to that, I think a key question is who's got the upper hand here. And we have some interesting data out this morning from China that shows really it's an ugly picture, at least for Chinese manufacturing.
Right, and at least for a specific part of Chinese manufacturing that the Caixin index picks up on, because as we've said many times, Lizzie, the composition of this index is not the same as the official PMI. It's much more small, medium size, it's much more private enterprise, it's quite export orientated, and all of that is, sets it up to be weaker than the sort of official PMI data. So Bloomberg Economics saying, is this a Caixin misfire? Is this data giving us a little bit of a sort of duff steer as to where the overall Chinese economy is going?
This is despite the trade truce. That's what's worrying about these numbers. And John Authers makes an interesting point this morning that, the financial markets can rage about TACO. Does Trump always chicken out? But if you're a business dealing with Trump's trade policy, you've got to take it seriously. Yes. And that's what we're seeing in the market.
And you make an important point about the survey period here, because the survey for this was the 12th to the 21st of May. When was the Geneva truce Davos, when did that take place? That was the 12th of May. So that entire period of positive, more positive at least, relationship between China and the US should have been picked up here. Now, maybe that's far too soon for businesses to just sort of pivot on a dime, as you suggest, and in the way that markets can, but certainly something that we continue to watch. So that's where we are on China. Lots to think about when it comes to China, and also Chinese assets getting a boost then, because people immediately go, well, will we get stimulus?
Well, that stimulus, maybe that should come in the form of trade talk. Get on the phone, and then you could maybe alleviate some of this.
Right, so we'll see whether those talks do come to the fore, do take place. Let's pivot to some European politics then, Lizzie. We've got news out of Poland. Of course, no doubt you gave plenty of coverage to the results of the Polish election yesterday, but this, the sort of second order effects of that. Now we have Prime Minister Donald Tusk calling for a confidence vote in his coalition. He wants to shore up the coalition because we see a continuation in some ways of the situation that has existed in Warsaw, where they have a president from a different party, but this new president from a different party comes in with even more perhaps explicit support from Donald Trump and that sort of that conservative nationalist bent, and with a renewed mandate, I suppose, in terms of what he's going to stand in the way of, and that's what the Prime Minister is concerned about.
Yeah, there's a lot of anger from the coalition partners of Donald Tusk, saying that this is just unnecessary theatrics, that he should be calling this confidence vote. Notably, it isn't a snap election. He'd said that he wasn't going to do that even if Nawrocki won, because the regular ones come in 2027. But still, of course, as you say, this is Tusk trying to shore up his position here, because the fact that the MAGA candidate has won in this presidential election is not good for Tusk's pro-EU agenda, and it's not good for the pro-Ukraine agenda either.
Yes, and just briefly on Ukraine, we did see some progress in the fact that Ukraine and Russia in Turkey, in those conversations, managed to get to some kind of agreement on prisoner swaps, and there was that achievement, but really it fell short of many, if anybody had expectations there would be some kind of truce, it fell short of those expectations, and Russia's demands certainly seem extensive still coming into this, asking Ukraine to give up 4 regions that it essentially still owns, and asking Ukraine not to accept foreign intelligence and to demobilise its troops. So huge demands on Ukraine coming from Russia.
Well, yeah, Turkey's Erdogan suggesting that they need another meeting now between Putin, Zelensky and Trump, but Zelensky kind of saying even if you got that meeting, it still wouldn't lead to a lasting ceasefire, because ultimately Putin just isn't ready to end this war.
Shall we go to another corporate story then, Lizzie? Just breaking on the Bloomberg terminal, the long saga around Thames Water.
Yeah, Thames Water saying that KKR will not proceed with the equity raise process. KKR's preferred partner status has now lapsed. Thames Water is going to progress talks on the senior creditors plan, and Thames Water saying that KKR will not be in a position to proceed. So this is very interesting, given all of the nightmares that have been going on with Thames Water, and of course the headache for the UK government that all of this has been creating.
Yes, is this coming a little earlier than expected? Some of our more recent brew the month of June, so we'll continue to watch this story. Let us tell you what is coming up on the show. We have a great lineup of guests to talk about trade, talk about investment strategy, to talk about defence, and much in between. Kellyanne Shaw, Akin Partners, joins us, has served with the previous Trump administration, so a really important voice to listen to on trade. Ludovic Subran at Allianz joins us, now CIO over at Allianz, so we'll get his perspective on trade, on defence opportunities and much beyond. Georges Debasse is with us at BNP Paribas, European Equity Derivative Strategy Head, and Hobie Bluvat, Deutsche Bank's co-head of capital markets EMEA. Lots to talk about there when it comes to leverage finance, Lizzie. We haven't seen perhaps as much M&A and IPO activity taking place, and sometimes there is that link, of course, between that capital markets activity and the debt raising, and so what does the outlook look like?
And then we have a lot on the docket, of course, for the economics and politics as well, so let me take you through that. At 10 a.m. London time, we get the Euro area CPI numbers ahead, of course, of the ECB meeting in Frankfurt on Thursday, the expectation being that inflation hits 2% for the first time in 7 months, so setting up a cut on Thursday. Then, as we say, we've got Macron and Meloni meeting in Rome to try and present a more united front between France and Italy when it comes to Ukraine and trade. Then at 3 p.m. London time, we have lots of data coming out of the US, durable goods and factory orders, as well as the US JOLTS data as well.
And I heard Tom McKenzie saying this earlier. I think it's a really important point, Anna. We're not expecting that much of a drop in the job
openings in these numbers, even though they're for April, when, of course, the tariff rhetoric was absolutely at fever pitch. But what you could see is that there are fewer job vacancies than unemployed people for the first time in 4 years.
OK, well, that'll be an interesting milestone to witness, especially coming as it does in the same week we're getting on-farm payrolls, and that'll be on Friday. The expectation there is we drop down from 177,000 on jobs created to 130,000. So the effect of DOGE, the effect of, well, is it Microsoft, Disney, all the other job cuts we've been talking about of late, we will be watching to see if we get any of that showing up in the macro data, because it's been kind of absent up to now. Really interesting to watch the Meloni and Macron meeting in Rome. They've got lots to talk about. Trade, no doubt, will be on the agenda, trying to find much more common ground perhaps on that, on Ukraine, on the Middle East, and this coming ahead of a NATO meeting and G7 meetings which continue.
Yeah, because it's significant even that they're in the same room, because Meloni was absent from that Albania meeting last month, and there was, as I say, this split when it came to the Ukraine position. So perhaps that's the priority over the trade story in this meeting in Rome.
OK, here are some of the other stories that you need to focus on this morning. Microsoft has cut hundreds more jobs just weeks after its largest layoff in years. More than 300 employees were told their positions had been eliminated on Monday, according to a Washington state notice reviewed by Bloomberg. A Microsoft spokesperson said the latest headcount reduction is in addition to the 6,000 job cuts announced last month. Taiwan Semiconductor Manufacturing, TSMC, says it sees profits rising to a record high this year. The company's CEO says he expects to see steady growth in 2025, adding that its technology will remain secure amid global expansion. And the ruling coalition in the Netherlands has failed to reach an agreement on the far-right Freedom Party's migration plans. The proposals introduced by party leader Geert Wilders include a temporary halt to family reunification and closing borders to asylum seekers. Wilders has threatened to quit the coalition if a majority of his party's proposals aren't adopted. Talks are set to continue later today.
Well, coming up, we've got a packed programme. The UK Prime Minister looking to reassert the country's defence capabilities amid all of these heightened geopolitical tensions on the European continent. So we're going to dig into the details of those plans and where the money will come from. Plus, Chinese e-commerce giants Temu and Shein are finding it difficult to divert focus to Europe, with the US markets still being their main driver. So we'll bring you that story as well. But up next, Washington signals more trade talks, but do markets expect a dialing down of tensions? We'll discuss. If you've got any questions of your own for our guests, please do send them to us on IB plus BBTV Go. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
This is a chessboard. It's a playing field where people test their skill, imagination, and daring. Because a chessboard is also a map, complex logistics and global supply chains can be reinvented with AI. Thanks to reliable and secure connectivity from AT&T Business, goods are delivered quickly and efficiently. And a chessboard is a bridge, connecting generations, creating new friendships, and encouraging us all to be more thoughtful about our next move. And the one after that.
We were born ready. Walmart Plus members get the Paramount Plus Essential Plan at no additional cost. From epic tales of the past to futuristic showdowns.
Try to keep up.
Whatever your current obsession, stream it on Paramount Plus.
Someone wants us.
Now members can also save on an upgrade to Paramount Plus with Showtime to keep up with even more of the buzziest hits.
I love it.
Save on the Paramount Plus with Showtime plan with a Walmart Plus membership. Stream now.
This is 48 Hours.
This is why we have a death penalty.
The dark side of human nature turns all of us into detectives.
Who's our suspect now? Who did this?
My family has drama food.
It's real emotions.
I do.
All in one place.
There is a skinnier person inside of me.
Robbing the bank is kind of a turn on.
I'm here for it, honey. All of it.
All reality, WeTV.
It's Jobs Day, and Bloomberg has the report under surveillance.
The risk was a downside surprise, the reality an upside surprise.
The shock has affected outcomes.
There's a pretty big cliff from an economic perspective.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
American exceptionalism continues.
This is not what we're going to experience in the upcoming months.
Is it going to be Biden data or Trump data?
The May Jobs Report, Friday on Bloomberg.
Welcome back. This is the opening trade. 16 minutes past 7 here in London. So 45 or so minutes until the start of equity trading. And the futures picture looks slightly positive for Europe, factoring in a little bit of late in the day optimism in the US session. But US futures, equity futures, point a little lower. So we bear that in mind. Now to treasuries. 30-year treasuries are again testing the 5% level as concerns persist over Donald Trump's trade war. Let's get more from Bloomberg's Valerie Teitel. Good morning, Valerie.
Good morning, Anna. Yeah, treasuries are stabilizing. Yesterday, though, was a pretty brutal session. We did see those 30-year yields breaching 5%. They poked above it just briefly, Anna, but we're back below it as well. Also, the 5s 30s curve yesterday neared 100 basis points, which is still near the steepest level for this Treasury curve since 2021. But we're stabilizing today mostly due to a strong JGB auction. There was a 10-year auction that took place in Japan a few hours ago. Came through really strong. Remember, it was a very weak 20-year JGB auction, which really ignited global fixed income weakness. We do have some more tests of demand coming. We also have a 30-year JGB auction on Thursday, and then next week we get 10s and 30-year supply from the U.S. Treasury. So that'll be very interesting to watch for how there really is demand for these yields at this higher level. So treasuries are stabilizing. We're also seeing stabilization in the U.S. dollar. The Bloomberg Dollar Spot Index is trading stronger today, up nearly 0.2%. This is after yesterday's session saw it close at the lows year to date and the lows since 2023. We can flip on and just look at the U.S. dollar a bit longer term. Take a look at how much this year has really pummeled the U.S. dollar. We're down 8% from those January highs and really nearing the lows of 2023. If we breach those, we have to go all the way back nearly to 2021 to find those lows similar for the U.S. dollar. So the momentum is really on the back foot for the U.S. dollar, but we are stabilizing today.
Okay, Valerie, thank you very much. Bloomberg's Valerie Teitel with the latest on treasuries and FX markets. Now, where does the latest on the trade narrative leave Donald Trump, President Trump's trade policy? Let's talk about that with Kellyanne Shaw, partner at Aiken and a former deputy assistant to the President for International Economic Affairs during Donald Trump's first term. Kellyanne, nice to have you with us here in London. Welcome to the set here in London. So the latest news lines around trade suggest that markets are really waiting to see whether we get a meeting confirmed between President Trump and President Xi. We've heard from the Chinese Foreign Ministry. They say they have no information to share on whether this is going to take place or not. So we'll wait for any confirmation of that. What difference could that make? Knowing a little about the relationship perhaps between the two or witnessing it in the first term, what difference can it make when these two actually speak to each other?
Yeah, well, thanks so much for having me back on. And what I would say is the U.S.-China relationship with President Trump and President Xi at the helm is a very dramatic and mercurial relationship. But the way that this worked during Trump 1.0 is that sometimes you would see key negotiators and some of the key figures in the administration bring deals to their respective leaders, and then the leaders would have a call. But oftentimes it worked the opposite way, where it actually took a leader-level call to try to break through some of the ice. And so that's what you're seeing the White House tease right now, is the fact that we need a call between Trump and Xi to deal with some of these export control issues. The fact that China is still not making good on its Geneva agreement. China will have its set of requests and demands as well, including U.S. export control. So it's really teeing up an interesting conversation. But it is not unusual to have the leader-level call go first before progress.
Yes, so we'll see whether we get this call and whether we then see any progress delivered. What is your base case assumption then, Kellyanne, as to where we land on some kind of measure of trade tariffs into the United States? We've seen the legal challenges. I know you were on with the team last week talking about the various options, the various tools that the U.S. administration can still use to try and get its policies enacted. Are you managing to boil that down to a number, say, I don't know, low teens, mid-teens percentage tariff on U.S. imports? What's your expectation?
Yeah, and what's been interesting is if you watch the Sunday shows, you had multiple U.S. administration officials out there saying, look, there's this court case, but it actually won't matter. Either they say we're going to win the case, or even if we don't, we have an entire toolkit full of potential tariffs that we can use. So what I'm telling clients and what I'm advising is don't expect these tariff rates to change. The fact that we have this 10% across the board baseline tariff, the president has other tools he can use to impose that, and then potentially raising tariffs on trading partners who don't want to negotiate. He's got other tools to do that too. So I don't really think that this changes the chessboard. What it does change is a bit of the timing as this litigation plays out.
So does that mean then we still get, what is it, 10% average tariff, 15? What's the ballpark?
Yeah, that's where we are right now. And the president has said that he can use 122, 301, 232, and other types of legal authorities to reimpose some of these same 10% tariffs.
But where we've seen, Kellyanne, this doubling of the steel and aluminium tariffs, does that make you think that the UK was a little premature in agreeing this trade pact with the president?
Well, I think where the UK is actually coming out probably better than any other trading partner right now is those steel and aluminum tariffs were part of that trade deal. So the U.S., although we didn't have much detail in terms of what was agreed, there was an agreement on steel and aluminum that certain UK products would be exempt provided that they adopt similar measures as the U.S. And so the UK is actually in a much better position than other governments who don't have those commitments. Now, what I do think this means is that steel and aluminum are going to feature as a very prominent part of some of these other trade negotiations, like with the EU, Japan, Vietnam, and others who are currently negotiating.
Well, yeah, so when it comes to the EU deal, how quickly do you think that they can get that over the line? Or are there other lower-hanging fruit that you think will come first?
Yeah, I'm not optimistic, and I never have been, about a U.S.-EU trade deal, in part because some of the blocks that have existed in the past continue to exist about two entrenched regulatory systems that really don't see eye to eye on a number of issues. Now, that said, they're making a run at it, and the president is turning up the heat to try to get the EU to come to the table. But I think countries like India, Japan, and South Korea will be first before we see anything with the EU.
Yeah, so it might take some time to get there. I mean, what expectation is there, really, do you think, in Washington that Europe or any other jurisdiction changes its VAT regime as a result of a request from the Trump administration?
Yeah, well, so far we've seen very little interest from our trading partners in adjusting some of their taxation policies. But what's been interesting is that part of the big tax discussion happening in Washington is this concept of a revenge tax, the Section 899, and that is designed to get at the digital services taxes that a number of our trading partners continue to impose on U.S. tech companies. So that is looking like a potential pathway for the U.S. to go after some of these tax issues, but it doesn't look like the VAT is really going to be part of these negotiations. It could be that the administration has other tools that it plans to execute.
But Kellyanne, Valerie was just showing us how you've got long-end yields rising in the U.S. Are you not worried that if you have Section 899, it's going to drive away that foreign investment even more?
Yeah, that's certainly a concern, right? Because it has to do with whether or not companies and individuals are going to be investing in the U.S. There's also a question about treasuries, whether they're included. I think there are a lot of questions about this legislation. And what's not clear is whether the Senate takes it up as part of its big, beautiful tax bill as well. So we don't actually know if this is going to become law. But it is certainly a messaging tool that the administration is using to try to say, look, we haven't forgotten about digital services taxes, and we have some tools there.
Yes, I mean, and and the digital services tax suggestion from the United States is that these taxes are extraterritorial. But then a lot of what we're hearing in terms of policy coming out of the White House would seem extraterritorial. I mean, from sanctions regimes around Russia to some of what we're talking about here with 899 of the big, beautiful bill. Does this just need a whole new reset across the Atlantic? It seems that there are just so many areas of disagreement and a lack of consensus.
There are certainly no shortage of challenges in terms of this economic relationship. What I would say is the view from the United States on a relatively bipartisan basis for the last 20 years has been that our trading relationships are asymmetric, that the deal that was cut back in the 90s just doesn't work and it's not fair in terms of today's economy. That's going to take updates and changes. Now, where the line is in terms of is the U.S. Being too aggressive in terms of responding to some of these asymmetries, I think that's for the two trading partners to work out. But clearly there's going to be some changes if the president's going to land something that is more equivalent.
Yeah, I mean, there would have been a choice to, another U.S. administration could perhaps have teamed up with allies and said, let's try and reinvent the global trading system so it suits all of us a little better because it's maybe skewed too much in China's favor. But that's not an approach that the Trump administration felt it wanted to take.
Well, what I would say is I spent 10 years as a U.S. negotiator working for different administrations, and other administrations have tried to use more traditional forms of diplomacy and negotiation, and it just hasn't worked. And even in Trump 1.0, you had this trilateral deal between the EU, Japan, and the U.S. to try to get at some of China's unfair trade practices. It took 2 years to negotiate, and they couldn't even agree on a common definition of subsidies. It's not a particularly effective way to reorder the global trading system. Now, is Trump's? We'll have to see. But certainly traditional methods just don't work.
And given that you know Trump's mind so well, you can settle something for us. Does Trump always chicken out?
Well, I think he would take a great issue with that characterization.
He didn't like it.
Nasty, you said.
Yeah, but I mean, here's the thing, too, right? Like, if this idea of chickening out means that we have 30% tariffs across the board on all Chinese imports and 10% on everything else, I'm not sure I would describe that as chickening out. That is a de-acceleration from a trade embargo, which was just unsustainable.
Okay, always good to get your insights. Kellyanne Shaw, Akin partner, we really appreciate you coming to join us in the studio. Now, coming up on the programme, few signs of trade deal breakthroughs with either China or Europe amid all these tariff threats. We're going to discuss the market impact next with the Allianz CIO, Ludovic Subran. Stay with us for that conversation. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
People couldn't see my potential, so I had to show them.
I've run this place for 20 years, but I still need to prove that I'm more than what you see on paper.
Today, I'm the CEO of my own company.
It's the way my mind works. I have a very mechanical brain.
Why are we not rethinking this?
I am more.
I'm more
than who I am on paper.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want? You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football? Let me see a mirror so I can look at it.
Are you a billionaire yet?
None of your business. Then you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looters?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem. How is this possible?
Oh, come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley.
I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi.
I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
Welcome back. This is the opening trade. 30 minutes until that opening trade, that equity market open here in Europe. And the futures picture suggesting we'll see a little bit of upside perhaps at the start of trade. But we bear in mind that we see weakness in some China-related assets as a result of the data out of China. So iron ore prices and the like a little weaker. That could weigh on some of the mining names. Energy, we do see further gains in oil prices, so that could be an upside. But more into the future, US futures pointing a little bit lower. We have seen a bit more stability returning to treasuries, as we heard from Valerie Teitel, after the 30-year yield went above that 5% mark yesterday. But we have a little bit more stability courtesy of Japan and its decent 10-year bond auction. As a result, we see a little bit of movement at the 10-year horizon on these European bonds. 3 basis points, though, not too much of a move then, Lizzie.
Well, let's stay in Europe and turn to the politics. The Polish Prime Minister Donald Tusk says that he is going to seek a vote of confidence. That's after the candidate backed by his party was defeated in Sunday's presidential election. Tusk spoke about the election's outcome.
Over 20 million Poles elected a new president of the Republic of Poland, showing their strong commitment to democracy and its key principle, free and universal elections. No matter how we judge the winning candidate, we should recognize his victory and congratulate his voters, which I hereby do. I also thank the loser for his determination and fighting for every vote to the end.
Well, Oliver Crook joins us now to talk about the latest. Ollie, do you think that Donald Tusk is playing with fire with this confidence vote?
He certainly doesn't think he is. This is why he's calling this confidence vote. He's hoping that this is going to be able to demonstrate that there's still support for his coalition government, for his cabinet, for his agenda, broadly speaking, despite the defeat of his ally and the preferred candidate in the election over the weekend, we should say, who only lost by about 90 basis points. This is an election that was decided by less than 1 percentage point, but it's that less than 1 percentage point, Lizzie, that will basically dictate whether Donald Tusk was able to get his liberalizing agenda through and basically versus guaranteeing deadlock within the Polish political system, in which the president has a great deal of veto authority, in addition to having key roles like appointing the central bank governor, which has caused tension in the past between the finance ministry and the accusations of politicized monetary policy. And that is basically the fate that Donald Tusk is now staring down, having real difficulty trying to get his agenda through. So his next steps are going to be to call a confidence vote to demonstrate that his government still has a mandate. He will likely then also reshuffle the government, but he's also alluding to basically a plan B that he has to put in place, that they are prepared for the situation. And he's vowed that despite the outcome of the presidential election, they're not going to take a single step back, though it is hard to see how he's going to be able to take any steps forward, because, again, there is a lot of power within the president within Poland, and that law and justice candidate is likely going to block many of his initiatives.
Meanwhile, Ollie, with a view to European politics, we see migration and asylum policy getting a lot of attention. I know Friedrich Merz, where you are, has had trouble with some of the policies he's been trying to enact. And now the ruling coalition in the Netherlands risks collapse after failing to reach an agreement on migration. So what are the dynamics there?
So once again, in the Netherlands, we have migration basically threatening to bring down the government. This is exactly what happened just less than a year ago when we got this new government. It is a government that the largest coalition is the Freedom Party, that is led by Geert Wilders, anti-Islam, anti-sort of immigration, wants to put a lot of restrictions. And what Geert Wilders has done is basically put an ultimatum to the government within the Netherlands. He has put forward a 10-point plan on migration. He says that if the majority of those 10 points are not adopted by the parliament, he will pull the plug on the government and bring it down. He said yesterday that he's going to sleep on basically what he's going to do. So those negotiations will continue a little bit later today. Just to give you a flavor of what some of these policies are within the 10-point plan, he wants to use the military to guard and secure the land borders of the Netherlands. He wants to turn away all asylum seekers. He wants a temporary halt on family reunification, and he wants to send Syrians back to Syria, which he judges is now a safe place for people to return. Whether or not he will pull the plug, he threatened to do so, by the way, in February, a little bit earlier. But again, this shows us some of the political instability that we're suffering here across Europe, with the Netherlands as the last example.
Thanks very much, Oliver Crook, there with the latest on some of those political threads across Europe, and Europe really trying to get itself on the same page when it comes to global trade conversations as well then, Lizzie.
Yeah, the President Donald Trump eager to land more trade deals, but talks with Europe and with China as well continuing to languish amid all of these communications breakdowns and the fresh tariff threats as well. Let's think about the market impact now. We have Ludovic Subran, who is the CIO of Allianz. Good to have you with us back on the programme, Ludovic. I mean, as we've seen in the market reaction, the dollar's been battered, but really it's quite surprising perhaps that stocks in the US have rebounded since the so-called Liberation Day. So I'm wondering who's going to meet whom first. Is it that equities are going to fall to match the dollar, or that the resilience in the US economy lifts the dollar?
It's a very good question, and I think it's very hard to have an answer right now because the dollar is a very politically loaded segment of the market as we speak. So if you believe fair value models like I tend to do every other day, I think the euro dollar could land around 1.12, 1.13, which is basically where it is today. If you believe Donald Trump, there is still room for another 15% devaluation of the dollar. And he's ready to do whatever it takes to make sure that the dollar goes down again so that he can rebuild the manufacturing of the US. And so investors across the globe are watching that space very closely. So there is indeed this tension now on the direction of the dollar. And there are a lot of people looking for hedges. Hedging against, further depreciation of the dollar is now, I think, the biggest trade in the market. Trying to find cheap hedge, trying to find efficient hedge, and this is something that has been unfolding over the past 4 months and is not going anywhere. Then you ask about equity. It's very interesting to me because I think this disconnect between the equity and the bond market is something that we've seen in the past. I would say when you look at the corporate credit market, which is also a good indicator, it actually confirms the strength of the companies that are on the stock market. So there is really maybe a moment where people trust more big investment-grade companies than they trust the government of the United States, which is something I've barely seen in the past, maybe in Argentina or Greece during crisis time, maybe also, during the 2010, 2009 section in the US, right? So this is also very surprising, and this is something that cannot hold. So these two disconnects, so on the tension on the dollar direction, and indeed this disconnect between the bond and the equity market, or more generally between corporates and governments, is something that is indeed really, about whatever is happening on trade, on the future of the currency, on the future of the fiscal sustainability of the US, and also on the future of alliances, especially on defense and on a global provision of common goods like security and so forth.
Yeah, and I want to pick up on all of those themes, but let's start with what you just said about Trump being willing to do whatever it takes, because that seems to be the opposite of Trump always chickens out. And I wonder, is there a level when it comes to the S&P or to Treasury yields that you think precipitates the Trump policy put, as so many others have faith that it does?
Well, in the past 5 months, I think we've seen a form of disciplining by the market, especially the bond market. So there is one thing that's still to hold the fort, which is indeed the bond market. So when we see the 10-year US reaching around 5%, I think this is something that is creating a bit of stress. When we see liquidity squeeze in the bid to ask spreads, in the issuance of the US Treasury, this is also something that I think gets Donald Trump a call by Jamie Dimon and others. And so that seems to be, I think, the ultimate guardrail against, some of these policies. And so, but what people need to understand is that it is really eroding a lot of the trust on its way, right? So you have to go really far. It's like the Overton window in communication politics, right? You have to go each time a bit further into dislocating markets so that there is a pulling out in terms of, some of the more radical policies. And this is something that is testing fires. This is playing with fires, and this is something that is testing and stress testing the system. So there is indeed a bit of a last, adult in town, which is the bond market. But the question is now, bond market are also asking for more, especially on how much are you ready to lend to the United States government when you have 7 or 8% deficit looming ahead with the big, beautiful bill, right?
Yes.
So even that market is going to prove to be extremely complicated in the coming months.
Okay, with that in mind, Ludovic, let me ask you a couple of things about the big, beautiful bill and the things that come from it. Section 899 getting a lot of attention, and this is sometimes called the retaliatory tax on foreign investors and increasing the cost, basically, of foreign investors buying US assets. Are you factoring that into your assumptions at Allianz, Ludovic, and are you therefore going to buy fewer US assets as a result of 899 if it comes to pass?
Look, 899 is for me exactly what people don't spend enough time on. Everybody's looking at trade, which is the tip of the iceberg, but there is below this momentum around capital controls in the US in different forms. And one of the forms is indeed this increased tax rate for foreign corporations operating in the US, and more generally, frictions, frothy, capital flows between the US and the rest of the world. I don't think markets are pricing in today a full implementation on Section 899. So that could actually spook markets vividly because a lot of people, I talked about the hedge being the name in town today, but a lot of people are also looking at cross-border exposure at large. So beyond hedges, when you're a European investor, you look again at, okay, there is the dollar depreciation. There is indeed, yields in the US are a bit under duress, and there is this additional taxation. Would you go long-term in the US? And when you are President Trump, and the whole policy continuum is about making sure that people do long-term investment in the US, do you really want to spoil that party? So I think the market has to say that he's going to withdraw on this, because that could actually completely annihilate what he's trying to do on, his policy agenda. But if he were to move on with that policy, I think that could create a big, scary moment, especially on the equity market and also again on the bond market. And so that is not factored in today because a lot of investors are not thinking that it could go through as it is, explained today in the bill. Yeah.
Okay, so if that does add up to a big scary moment, Ludovic, what would pricing in that big scary moment look like? A sell-off in stocks, you suggested, but how high for yields and how weak for the dollar?
I think Section 899, we're talking about a sell-off around 10%, yields that could go up around half a point, and then the dollar that could go down another 5%. So it's quite huge.
Ludovic, I want to turn to your report on defence funding, if I may. We also had the UK's strategic defence review coming out yesterday, but a reluctance from the UK Prime Minister Keir Starmer to guarantee that he is going to spend 3% of GDP on defence in the coming years. I wonder, as you look ahead to the autumn budget from the Chancellor Rachel Reeves, does she need to commit to raising taxes in order to fund defence spending?
Well, this is the biggest discussion we've been having. When President Macron came to television, I think it was March 5th, 2025, to tell us we're at war with Russia, without any announcement. But at the end of this television speech, he did say, and we will not raise taxes. And so that was the big economic announcement, right? And so basically this idea that we can go to war without raising taxes is somehow, the assumptions that we have here in France. When you look at history, you usually need three things to go to war. A third of your issuance or defense spend, you have to, raise taxes. A third, you have to substitute expenditures, and a third, you go to debt, right? This idea that we can go to war and that we increase, our defense spending to 3% without raising taxes, I think is not possible. So this is indeed a big question mark for the UK. I think the headroom, the space that exists, the fiscal space in the UK is very limited. It was around 10 billion pounds over the past few months. And this is something that is really, a major issue for this government. So I think it would be a very hard sell for Chancellor of the Exchequer to go and say, we're going to raise taxes for funding peace or war, the name you call it. So I don't think this is feasible. So that means that's going to, again, be one of these government that are going to say that we can go to war without increasing taxes. And this is going to be extremely nefarious, I would say, for the bond market in the UK. And again, for the bond market in Europe generally, because there is no plan for funding this war. And this is very costly.
Yes, nothing that we have talked about, Ludovic, sounds like lower yields. anywhere. I mean, at least in the US or Europe. Would that be the correct conclusion?
This is the exactly correct conclusion. I think last week we wrote something on the return of the term premia. I'm very worried about real rates increasing across the globe, from Japan to the UK to the US to Europe. This is really a moment where people are getting a lot of distrust into the ability of governments to fund the multi-injunction they're trying to fund at a time where the economy is in such a situation of tension. So yes, indeed, rates are increasing across the globe.
Okay, Ludovic, thank you very much. Ludovic Soubrun, Allianz CIO, thank you very much for joining us. Coming up on the programme, today's stocks to watch, we take a look at miners after China's manufacturing activity unexpectedly contracted in the month of May. That was thanks to or reported by the private sector Caixin Index. We will get further details on the stocks that we're watching this morning. That's next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Ooh, fun. Yikes. The leaky refrigerator coil card. Is that bad? Oh, death! Death? Of an AC fan motor. Oh, no. But your future is bright with an American Home Shield warranty to protect your covered appliances and home systems. Are there bees behind me?
My bees escaped.
Phil, we talked about this. American Home Shield. Don't worry, bee warranty.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want? You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football? Let me see a mirror so I can look at it.
Are you a billionaire yet?
None of your business. Are you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looted?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem.
How is this possible?
Oh, come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley.
I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi.
I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
Welcome back. 7:48 here in London. This is the opening trade for Tuesday, the 3rd of June. And European stocks suggest will be a little bit higher at the start of trade. A little bit of late in the day optimism on Wall Street, perhaps yet to filter through into European markets. But US futures do point a little bit lower. Let's talk about the markets in 3 minutes. Bloomberg cross-asset strategist Ven Ram joins us now. And Ven, I actually want to start with the dynamics we've seen overnight and what they mean globally in the bond markets. Over in Japan in particular, we saw an auction there, which, unlike last week's, which caused a lot of concern and had people scrambling and asking questions about long-end yields, today's auction in Japan seems to have been a little calmer, and that calmness seems to have spilt over into Treasuries a little bit. What was your assessment?
Morning, Anna. Absolutely spot on. I'm not surprised that the 10-year auction in JGB sailed through, because it's not a debt per se that investors are averse to. I think what they are averse to is touching debt at the longer end of the curve, the 30-year part, the 40-year part. And we are in a milieu where the 30-year Treasury yield is around 5%. So investors are beginning to ask questions that, look, how long can this story of fiscal profligacy go on unchecked and unpunished? And that is what the message investors is sending out, that message. Now, if you look at last week's 40-year auction in JGBs, that went through at close to 315. And so investors are basically asking the question, what is the opportunity cost for me to invest in JGBs at just 315 when 30 years from now, will that principal that is redeemed to me hold its inflation-adjusted value intact? And that sentiment is spilling over everywhere, across treasuries, across German bonds even. Now, the interesting dichotomy in all this, Anna, is that, if you look at German 30-year bonds, they're yielding north of 3%. And, if you'll have to go back to the Eurozone financial crisis, Eurozone debt crisis, to see those levels, because we haven't done those levels in a long time. So investors are touring German bonds as though they were smeared with the same brush as JGBs and treasuries, which is not quite the right thing, because even with the debt brake scrapped in Germany, Germany's fiscal rectitude is as good as it gets. And if you hedge the currency yield on the exposure to the euro, you will get 550 on the German 30-year yield. Nowhere are you going to get a yield as high as that with sterling credit as Germany. So I think that there is an opportunity here for German bonds to shine in the long term.
Okay. And Ben, I just want to pick up on something that we were talking about with Ludovic Subran just before you, which is this divergence between the dollar and the US equity markets' fortunes since so-called Liberation Day. Actually, today, we're seeing a bit of a recovery for the dollar and euro-dollar weaker. What do you make of that?
Well, I think it's nascent, but I don't think it's got legs, because we are in an environment where the U.S. economic weakness data is going to show up in the data in the coming months, and I think that will put the Federal Reserve on the back foot. They will want to rescue. At the moment, they are agnostic between the inflation mandates and the unemployment mandate. But come weak data, they will quickly pivot to the rescuing the economy, which means that they will cut rates and real rates will go down, and that will put the dollar on the back foot, and that means good fortunes for the pound and the euro.
Okay, Bloomberg M Live strategist, cross-asset strategist, Ven Ram, we thank you. And don't forget, you can get all of the analysis and insight from Ven and the team by going to MLIV Go on your terminal. Let's go from the macro to the micro. Joe Easton from our equities team is with us for the stocks to watch. Joe.
Morning, Lizzie. So we're going to be watching the miners today after a pretty significant reaction to that data out of China. Take a look at the copper futures, down around 2.5% in the US exchanges. And also we did see drop down in iron ore as well. So potentially we're going to see weakness in some of the basic materials stocks, which have already underperformed this year, as we can see from this chart. The orange line there being the basic resources index, significant underperformance versus the broader market, given we have had concerns around the economy and China specifically weighing on those. One of the stocks, though, that I've had my eye on recently is Glencore, given this is really one of the most favourite stocks among analysts across the entire UK market at the moment. 18 buys on that one, but some of those might be disappointed with that data out today. Then we've got Prosus on the radar. The Chief Investment Officer, Irvin Tu, standing down. Now, he's been at the company for around 4 years, and we can see that this stock has pretty much underperformed the broader market over that time. However, a lot of that is due to weakness in tech in general, although some of their assets, including some of the food delivery stocks, really underperformed after the pandemic. So potentially a bit of a refresh at the investment firm could be a positive for that stock, which trades over in Amsterdam. Keep an eye on Prosus. Then finally, UBS. It's a big week for that one because we've got a decision coming up on the capital issue over in Switzerland. We're going to get a decision on that on Friday. And today, Jefferies upgrading the stock to buy, saying that they think it will be a positive turning point when we get that ruling on how much capital the bank has to keep on its books. That one is upgraded at Jefferies. Potentially, we're going to see it trimming some of that underperformance. Keep an eye on UBS in Switzerland.
Joe, thank you. Equities reporter Joe Easton, of course. I'll add another to the mix then, Lizzie. We've got MJ Gleeson, which is not a huge house builder in the UK, but topical because they are warning this morning about profitability. The stock could drop at the open, and one of the reasons they give is planning delays, and that has been seen as something of a priority for the government to get through those.
Yeah, definitely for Angela Rayner, the Deputy Prime Minister, and reporting that she is one of the ministers, I think it's 4 ministers, who are really angling to get funding secured by the Chancellor before the spending review, but she's one of the last to settle. So is that money going to come through? The uncertainty not good for the likes of MJ Gleeson. Also keeping an eye on the defence stocks this morning. Outperformance for DAX futures. Rheinmetall looking to be up in Tradegate. Is that going to hold when we get into the session? We're coming up to the opening trade. Stay with us. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Being able to look at a screen and see myself is like no feeling in the world.
Get it.
That's how my friends hang.
Get in, loser.
That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want? You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football? Let me see a mirror so I can look at it.
Are you a billionaire yet? None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looted?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem.
How is this possible?
Oh, come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley.
I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi.
I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
Welcome back to the programme. A few minutes then until the opening trade. Let's cast our minds back to yesterday's trading session, and particularly into the US and the closing hours of the US session, and see if that teaches us anything about where we go here in Europe this morning. We've got the US here in the blue, and you can see that we did see some positivity towards the end of the session, and that could be still captured in European trading today. So we are perhaps expecting ourselves to go a little bit higher with that in mind, but US futures are pointing lower. If we can show the futures picture, US futures pointing lower. European stocks, though, could be going high, as I mentioned, as a result of playing a little bit of catch-up. Not a huge amount of corporate news flow surrounding earnings, certainly, but we'll certainly be keeping our eye on some of the sectors that Lizzie's going to go through in just a moment. More broadly, treasury markets, bond markets, Lizzie, seem a little bit calmer than they have been of late, and perhaps that's a positive signal for stocks. But what are the individual companies and sectors that we're watching for today?
Well, I want to pick up on that DAX futures outperformance that you've just shown, Anna, because we are minding the defence stocks this morning. We saw outperformance yesterday off the back of the UK Strategic Defence Review. Maybe it's a bit of a hangover from that, but we're also seeing Rheinmetall up on Tradegate. Is it the opposite of the peace dividend? Because, of course, the Istanbul talks towards a Ukraine peace deal didn't go so well yesterday. We also keep an eye on the miners this morning. We've seen base metals falling after the China Caixin data, manufacturing activity falling to its lowest level in more than 2 years in this private survey, so keep an eye on the likes of Glencore. And finally, Prosus, their chief investment officer, stepping down, so we keep an eye on those shares in Amsterdam as we head towards the open, Anna. OK, so some individual sectors and companies to watch out for. Yeah, really interesting what's going on with the mining sector. Over in the Chinese session, in the Asian session, we saw actually Hong Kong and Chinese markets going higher on expectations of stimulus. That doesn't necessarily translate, though, into higher commodity prices. So let's have a look at what the European Open has for us this morning. Waiting to see a little bit of positivity on the board this morning, although it could be short-lived given what we know that the US futures are suggesting. So FTSE 100 futures up by 0.1% out of the gates first this morning. Not a huge amount of news flow then, Lizzie, that we're dealing with in terms of European corporates. Stock 600 up by 0.1%. Yesterday's dynamic was pretty interesting. A number of stories over the weekend throwing markets around a little bit. We saw weakness coming through in steel. We saw strength coming through in defence. We saw energy stocks going higher as a result of higher oil prices. But those themes, we've left some of those behind, and some of them continue to move into these markets, I suppose. Defence being one of those. So broadly higher across these European markets seems to be the way to summarise it this morning, Lizzie. What do you see deeper down? Yeah, let's look at the sectoral picture then. So we've got about 3/4 of sectors in positive territory this morning across Europe, but at the bottom of the basket we have basic resources. So they're down 0.6%, and this is what we expected, isn't it? Because we've seen the base metals falling after that China manufacturing data. A private survey, I should say, it's the Caixin data, but at its lowest level in more than 2 years, and that hitting the likes of Anglo, their shares down 0.9%. Glencore, though, taking a beating, down 1.8%. Rio down 1.8%. Anto about the same as well. You talked about defence. If we turn to that sector, so Rheinmetall is up about as much as Tradegate was suggesting, so 1.2%. Also gains for Leonardo, BAE Systems, Safran, Airbus, all in the green, but Saab a little weaker this morning. What else should we be watching this morning, Anna? Yeah, I'm actually just going to linger further on one thing you've already talked about, Lizzie, which is basic resources, because that is a real underperformance from that sector. Rio Tinto, Glencore, you can see coming through there on the Stocks Europe 50 performers as some of the worst performers, both of those down by more than 2%. And the sector as a whole is down by 1.3%. And it's one of there are only two sectors in negative territory, and that's quite a big movement to the downside. So as is often the case, that is the most direct read across from Chinese markets into what we see here in Europe. And we see a bit of weakness then coming through in basic resources. Financial services, the best performing sector, a fairly mixed bag of other performers this morning. Yeah, Prosus was another one that I had said to mind, because the CIO, Irvin Tu, is stepping down, the Amsterdam tech investor, of course, but really not that much market reaction, only down 0.2% at the open. And the broader tech sector really in the middle of the basket, up 0.1%. But let's get more analysis now. We can bring in Georges Debas, who is head of European equity derivative strategy over at BNP Paribas Markets 360. Lovely to have you with us round the table. I wonder if it's fair to say that the reason that not much is happening in this market this morning is because we're all a bit fatigued by all the tariff news.
Yes, I think it's a fair assumption, and it's also a function of where we currently are trading. So if we take a bit of a step back, the market has rallied back quite a lot. We are even pre-liberation days, even though there's more uncertainty and there's a bit more fatigue. So right now, I think investors and the market are taking a bit of a step back and say, okay, let's wait until we either have a bit more clarity around the trade negotiation or more clarity around fundamentals, because right now people are expecting either a weakness coming from earnings and also from growth, or a bit more of a stagflationary and inflationary. So we need to see where the data will take us, but in fairness, fatigue is very much part of the narrative also.
So we're waiting for the hard data, but we're also waiting for all these all-important deadlines, the 90-day deadlines, of course.
Correct.
How much upside is there left for European equities when we get some certainty?
Yes. So, listen, I'm also a bit of a student of the market. And if you look at the technicals, we're only 2% from the all-time highs in Europe. In order for us to reach that, it doesn't require quite a lot, because if you look under the hood, positioning is still light. So even though the market is back to almost the highs, the positioning and investors' allocation are still a bit more underweight than they were back in March, let's say. So on that metric on its own, you could have a continuous grind higher. But in order for us to breach new highs and create a new trend, we need to have this fundamental momentum. And in Europe, we have quite a positive and constructive narrative, basically with the fiscal stimulus coming. But we don't expect that to drip until H2 of this year. So it's going to take a bit of time. And right now, most, at least us and investors, are questioning what's going to happen this quarter.
Yeah.
And our corporate are going to wait, or going to invest, or are they going to restore the confidence as quickly as the market has seemed to have?
Yeah, you say we're not far in European stocks. We're not far from all-time highs.
Correct.
Should we, and you talk about the grind higher, maybe to those levels, should we not expect to go much higher than that? Should we expect George to go much higher than that, given what Europe is doing, what Germany in particular is doing in terms of fiscal spending, and everything we're hearing from the United States, things that are causing investors to pause when thinking about further exposure to the US? How much further has Europe to go, I suppose?
Well, I think there is what you call the tactical versus the strategic. On the strategic view, on the medium to long term, I think there's still more room to go. And if you look at where valuation are compared to history, we're currently trading at 50 percentile. So on that metric, we still have a bit more room to grow. And especially if we converge towards the divergence between the US and Europe, it's still quite a long way. However, tactically, on the short term, like I said, because positioning is relatively light, you could have a grind higher. But what we've seen over the past month is earning downgrades, because a lot of the positive constructive narrative in Europe is going to feed in later, whereas the tariff implication are a bit more short term. And that's what you're trying to mitigate, the short term technicals versus the strategic, a bit more medium to long term.
Okay, and I wonder where you think we go on the America First trade. I received an invitation yesterday. It was not from BNP Paribas, from someone else, which was called From America First to Global Financial Anarchy. I mean, maybe that's a stretch.
Yes.
But
it's a nice one. I've never heard that before, but yeah.
But I wonder where you think, and maybe that's too binary, but I wonder where you think we land on investors' preference for America, speaking as people who are based in Europe and witnessing what we're seeing in the big, beautiful bill with this Section 899.
Yes. I think the Bill 899 or Section 899 is just another one of the many reasons why people or investors are rethinking their allocations globally. And if you've had a good decade or more where U.S. assets in general outperformed the rest of the world, which meant that investors, including Europeans, have over-allocated to the U.S. Now there's a bit of loss of confidence in the Trump administration, and there's also a bit more loss of confidence around the uncertainty that's stemming from all of these policies, which means that people are reallocating to other parts of the world which have self-help story, like Europe, for instance, which is a very good candidate right now. So on that metric, if you look again of all the inflows that the US have had compared to the rest of the world, there's still quite a long room for that trade to go.
Well, you mentioned the data. We're waiting for cracks in the hard data to impact US equities. What do those cracks need to be to stop this rebound? We've got the jobs data on Friday.
Correct, the job data. I think right now it would be surprising if we have a very big crack. What we've seen today and yesterday are first signs of a slowdown in activity or uncertainty. But that's what we've learned from 2022, the surveys and the economy are not really working as they used to be. And so we just really need to see what the earnings is going to give us, which is in July as of now. And right now there's this wait and see what corporates are deciding to do. Look, if you're a CFO or a CEO of a large company and you have to steer the boat over the next 3 to 4 years, what matters is not the level of the tariff or what's coming in the bill. It's the certainty around what are your constraints that you need to work with over the next 3 to 4 years. And right now, there's no certainty around that. So that breeds a bit of loss of...
And do the conversation, and when you're talking to clients about derivative strategy and about hedging,
Correct.
Is it all about hedging for uncertainty? What is it about, George?
No, a lot less. It used to be pre-Liberation Day. Now, actually, we've restarted a bit of this conversation. But like I told you, many investors have already reduced a bit of their exposure, which means that the hedging is a bit less needed. But given that also volatility has receded a lot with the sentiment narrative a bit lower, what we're seeing and what we're telling investors is now is a good time to potentially hedge ahead of your summer and into potentially the end of next year. Or if you still have quite a large exposure to equity, use the lower volatility to do some what we call stock replacement. So it's a better way of allowing to have a beta exposure without actually a lot of downside.
Can I just flag what's been happening in the defence market since we've been talking? Actually, Rheinmetall, Saab and Leonardo have all turned into the red, which I think is interesting given, of course, we've got to factor in the Ukraine talks yesterday.
Yes.
But we did have the UK Strategic Defence Review giving a boost to UK defence stocks just yesterday. Do you think that was a bit of an overreaction? Because the Prime Minister's not committing hard to the 3% spending on defence.
Correct. It's all a question of also positioning and what's embedded in the price. If you look at the defence sector in Europe, it's up 25% as a sector over the 1 month, which is a very large number. So a lot of positivity is already baked into the numbers. We have been the structural buyers of the theme, and we still think it's a very secular long. But ahead of the NATO summit or into this month, I think the risk-reward is if you have been long and you have had a hefty profit into these trades, maybe reducing a bit and waiting for, again, the trend to reaccelerate, just because expectations and valuations now are a bit overstretched. The fundamentals are not going to change. Strategically, we are going to spend more on defense over the next decades, however you slice and dice it. How you fund that is less important for equity investors, but again, what's in the price and what's positioning, and right now it's quite a consensus long, so that's where one has to be a bit more...
Could be more important for bond markets, though, couldn't it, than maybe for equity investors. So just to finish the conversation then, George, I mean, you're bracing for lower... You think volatility goes lower from here in the second half of the year? Does the second half look less volatile?
I would say the second half of the year is potentially more volatile, but in the next month we could have a bit of less volatility until we get into the summer. The reason why we potentially could have a bit more of a volatile is because we expect in H2 of this year, that's when the US stagflationary environment starts breathing in. So the slower growth, higher inflation, and also if you look at Trump 1.0, if you look at the sentiments around tariff in general, they go through waves. And we had a peak of uncertainty. Now we're back in the low. Yeah. Most probably, if you use just that playbook, by H2 you would have a bit more volatility, again receding.
And in that stagflation environment, what's your assumption about the Fed's reaction function?
That's quite a difficult one. I think the Fed right now will have, I think as a BNP view in general, the Fed will have a lot more difficulties acting as long as the labor market is quite resilient. So as long as the labor market is resilient, their first mandate will be on inflation, and they will actually make sure that that's quite impact. If then it comes in balance, what we've learned from them, they're very data-driven, and they will take actions depending on that.
Okay, George, thank you very much. Thanks for joining us. George Abbas, Head of European Equity Derivative Strategy at BNP Paribas Markets 360. Guy's not here, but his core six are still here. Let's have a look at what they are doing this morning, shall we? This is the picture, fairly mixed actually, across some of these heavyweights in Europe. The biggest move we see on the screen there, Schneider Electric, which in fact features twice. In fact, a couple of them feature twice. Anyway, that's going higher, which is nice. Let's get the individual stocks on the move this morning. Joe Easton has a briefing. Joe.
So we are seeing some pretty significant moves lower in the mining stocks this morning, given that data that we saw out of China. Remember, it did show that the manufacturing gauge was in contraction, below 50, below the key number in the latest reading. So Glencore coming down 1.9%, Rio as well, similar amount, Anto, all of those slipping with the copper and also iron ore prices declining on that data. So clearly a bit of a feed-through into that one today. Then UBS, actually the best performer on these Stock 600 this morning after that rating change that we flagged earlier today. So that went up 3.6%. Now remember, UBS has this big update on Friday around the capital, how much capital they need to have on their books, given the takeover of Credit Suisse a couple of years ago. And UBS is a buy at Jefferies, given they think potentially concerns around that event are overdone. So it's a nice move on that one. Pretty happy that that one moved higher after we had it in stocks to watch earlier. Then one stock not looking very happy at all is MJ Gleeson, down 26%. Pretty rough for that stock today. Remember, that is kind of more of a smaller cap home builder in the UK, warning that the housing market not recovering as much as they had hoped. This is more affordable housing in the north of England, in the Midlands as well. That one getting hit pretty hard. We did have some data showing yesterday around mortgage approvals not coming up as quick. Potentially that is playing into that as well, but more of a specific thing maybe for MJ Gleeson. Then staying in real estate, we have got a bit of M&A, not much M&A going on at the moment, but we have got Confinimo. I probably got that one wrong on the pronunciation, but it does look like that one is around 3% higher. We've got Takeover. It's in the medical real estate sector, I'm told. So Confinimo getting a takeover bid. We did actually know this was going on. It was just a pricing that we've got on that, hence why the move in the stock not actually that big for that one, but Confinimo rising nonetheless today. And then finally finishing on the broker moves, ASMI, don't get confused with ASML, excuse me. Couldn't get those, get my ASMs right this morning, but that one up 1.7%. Barclays switching preferences. They like ASMI more than ASML because ASML has seen a drop down in orders. They prefer that one, and that one is gaining 1.8% in Amsterdam this morning.
All right, Joe Easton from our equities team, we thank you with your movers. 14 minutes into the session, the Stock 600 only up 0.1%, but it's green across the screen for European equities so far. We've been talking a lot on the programme about trade policy, the market reaction. We're going to dig into how it impacts businesses next. European regulators and retailers bracing for the impact of Trump's trade war with China. That's next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go. 60 minutes. Is this what you want?
You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would he want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football? Let me see a mirror so I can look at it.
Are you a billionaire yet? None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looters?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem.
How is this possible?
Oh, come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley.
I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi.
I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
Being able to look at a screen and see myself is like no feeling in the world.
Get it.
That's how my friends hang. Get in, loser. That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore A Mountain of Pride on Paramount Plus.
There's no question in the short term with what we've seen coming out of Washington and the challenges of the trade negotiations. It's choppy.
We think we've got about a $500 million residual cost challenge as a result of those tariffs.
Since tariffs were announced on the 2nd of April and until the state of execution on April the 9th, we have seen some softening.
Things are steady, as we've been saying publicly for quite a while now, and we're reassured that our premium demand is holding.
And some of these events that we're seeing at the moment are short-term in nature, and therefore, they're not going to have a long-term impact.
They've got to just take stock and take a medium to long-term view as to what their costs are going to do, and then have a conversation with us as to what that may be.
Aviation industry executive speaking to Guy Johnson at the International Air Transport Association's meeting, the IATA meeting, taking place in New Delhi. Quite mixed movement on airline stocks this morning. They were talking there a lot about the availability of aircraft, the supply chains, that sort of thing, and other dynamics. But the trade conversation, though, Lizzie, no doubt very close to the minds of those airline executives, and with one eye on cargo, possibly wondering how many of those small packages are going to keep coming from China into Europe.
You lead me nicely to the issues that are happening for Temu and Shein at the moment. The Trump administration's trade war with China has really many European regulators and retailers scratching their heads, holding their heads in their hands and bracing for a flood of ultra-cheap Chinese goods. But this tide of products from e-commerce platforms like Shein and Temu may not yet be coming for now. Let's bring in Bloomberg's Sonia Vind, who's been writing all about this. Sonia, we've had Temu and Shein spending heavily in Europe, but are those efforts paying off yet?
Well, based on our reporting, we're seeing there's a real tension between what the platforms want and what the Chinese sellers on the platforms are doing. So Temu and Shein, they have pulled back on advertising spend in the US and poured it into Europe. They are also offering to subsidize shipping costs into Europe. But that doesn't seem to be enough to convince these Chinese merchants. One merchant we talked to described entering Europe as entering hell mode. What he means by that is that Europe is very complex. It's a fragmented market with varying rules and regulations, multiple languages. So it's not as easy as the US market where things are more uniform. And initially, sellers did take a look at going into Europe, but they quickly realized it's not that simple. And with the US tariff reprieve, they were quick to prioritize the US market again and milk that market as long as they can.
OK, so Sonia, if the aim is to keep cheaper products out of Europe, and that might or might not be the aim, then it seems that the lack of common regulation and the lack of a real on-the-ground single market might be playing in that direction. How is Europe then preparing for a possible surge in cheap imports from China? Because I hear what you're saying about maybe it's harder to send those parcels into Europe than into the United States, but some in Europe must be concerned about what impact that might have.
Yes, definitely. And Europe is trying to get ahead of that because it's true Chinese sellers might be hesitant to push into Europe, but we've also seen a massive rise over the past years of low-value parcels coming into Europe. And the European Union and the UK needs to do something about that because many of these products are actually not compliant with the regulations and the rules. And it's also a pain for the local retailers who are complaining that it's unfair that they have to spend money and invest into complying with the rules, whereas many of the products that are coming in do not. An example are, for example, toys that exceed the legally allowed threshold for chemicals or laser pointers that are so strong that they could cause blindness. So European regulators, they have been ramping up the custom checks. They are investigating Temu and Shein over the sale of illegal products, and they are also considering to scrap the de minimis rule, something that the US has recently done. So there are various measures they are implementing, and it's yet to be seen how that will play out. But it's clear that at some point when the Chinese sellers might have to come into Europe because the trade tensions worsen again and it's just not profitable anymore to simply rely on that alone, then it's clear that the environment they'll be walking into here in Europe will be more tightly regulated.
Okay, Sonia, thank you very much. Bloomberg, Sonia Vind with that interesting story around retail, global retail, Chinese retail, those small products and their way into Europe. Let's talk European politics then, Lizzie. We've had some headlines coming through.
Yeah, the far-right Dutch leader pulling out of the government, triggering its collapse. This, of course, is Geert Wilders. He'd threatened to quit if a majority of his party's proposals on migration were not adopted, and indeed he has. They had been struggling with these migration plans, failing to reach consensus. We'd spoken to Oliver Crook earlier about part of these plans, for example, being returning Syrians to Syria. They'd faced lots of legal headaches, concerns that the laws could put too much pressure on the legal system. And the talks were set to continue today, but here we have Wilders actually quitting because of the lack of progress. So you aren't seeing that much of a reaction when it comes to Dutch bonds, but we have seen the AEX dropping. It's now down 0.3%, straight off the back of this news. A real plunge in the Amsterdam index.
Yes, not hugely out of step with what we're seeing elsewhere on European markets, but yes, we do see some evidence of that response there. Let us pivot our attention to the global economy, though. The OECD has slashed its global economic forecast due to Donald Trump's trade policies, citing the impact of tariffs and uncertainty on confidence and investment. Bloomberg's Valerie Teitel joins us around the table. And Valerie, I take away from this chart, ably supplied by our colleague Dan Curtis, that the OECD has cut its growth expectations, its growth estimate, but it's still quite high. It's still an outlier.
It's still above at least the Bloomberg survey of economists' expectations. We have great tickers on the terminal for this that I watch very keenly, but the consensus estimate for 2025 U.S. growth at the moment is around 1.3. So what the OECD came out with recently is they're calling for 1.6. So it's still slightly above a consensus estimate. But look, it just goes to show that there has been, at least in the last, at the beginning of this year, there has been a very steep downgrade of what economists had penciled in for growth this year. You know, at the height of the excitement and euphoria around Trump's return to office, we were penciling in 2.2 percentage points of U.S. GDP. That's really been slashed, not in half, but taken a percentage point off that due to the trade war that was unleashed and all the uncertainty that was unleashed around the new administrations and the way that they're going about the tariff policy. But at least for me, and at least I think what the market cares about, is beginning to see upgrades to U.S. growth. Now that we have this tax bill, more certainty around the tax bill, more spending to come, fiscal spending to come that will keep the U.S. economy strong, and a lot of this uncertainty and kind of the worst fears about the trade war have kind of been put to bed. So I'm more interested to see if anyone is upgrading their U.S. GDP forecast on the back of that.
Feed that into the Treasury story then, Val, because as you've said earlier, that you saw the 30-year poking, I love that word, above 5%, but it's pretty calm in the Treasury market today.
Yeah, it is calm in the Treasury market today. Across really fixed income is really taking a big breather today, and that's nice to see. But maybe if we connect how the long end is trading, connecting that to global growth, better global growth means there is a higher term premium that should be baked into longer term yields. So I mean, you can read the rise in longer term yields in maybe a more positive spin, is that it's just pricing in maybe the effect of all this fiscal spending keeping U.S. growth okay.
Okay, Valerie, thank you very much. Bloomberg's Valerie Teitel with another take on the bond markets and what we've seen there. And the latest from the OECD and their growth expectations. Coming up on the programme is European leveraged finance set to benefit from US uncertainty. We get Deutsche Bank's view. That's coming up next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
weight loss. For so long,
I felt stuck. But Zepbound means change. Zepbound is for adults with obesity to help lose weight and keep it off.
it's changing what I believe is possible when it comes to weight loss.
It's changing how much weight I lose, up to 48 pounds. And some lost over 58 pounds.
Don't take if allergic to it, or if you or someone in your family had medullary thyroid cancer or multiple endocrine neoplasia syndrome type 2. Tell your doctor if you get a lump or swelling in your neck. Stop Zepbound and call your doctor if you have severe stomach pain or a serious allergic reaction. Severe side effects may include inflamed pancreas or gallbladder problems. Tell your doctor if you experience vision changes, depression, or suicidal thoughts before scheduled procedures with anesthesia. If you're nursing, pregnant, plan to be, or taking birth control pills. Taking Zepbound with a sulfonylurea or insulin may cause low blood sugar. Side effects include nausea, diarrhea, and vomiting, which can cause dehydration and worsen kidney problems.
Zepbound means change.
Ask your doctor about Zepbound.
Being able to look at a screen and see myself is like no feeling in the world.
Get it.
That's how my friends hang.
Get in, loser.
That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride.
Explore A Mountain of Pride on Paramount Plus.
It's a beautiful day in this neighborhood.
Make your day extra special with Mr. Rogers' Neighborhood on Pluto TV.
My neighbor.
Welcome back. This is the opening trade. 30 minutes into today's session. And I was just about to say that we were making gains. I will say we were making gains at the very start of the trading day, but that didn't last long, did it? We're down by 0.3% on the stock 600. The FTSE 100 holding its head up a little better. And in fact, the FTSE mid, so the periphery getting worse hit, down by 0.7% right now. So that optimism, such as it was at the start of trade, did not last long. US futures have continued to worsen just a little bit as the market tries to pass the latest lines on trade policy, and the likelihood of any meeting, any conversation between Presidents Trump and Xi, that continues to be one of the big questions for markets. Let's pivot to leveraged finance, though. Bankers are waiting for clarity from private equity firms, corporate borrowers, and the Trump administration to move forward with deals. That's a read from the Goldman Sachs Leveraged Finance Conference in California. Goldman's global head of credit finance, Christina Minnis, lent her perspective. Let's have a listen.
The cost of capital is higher, which puts a bit of a governor on the amount of debt. So the quantum of debt's a little bit lower. It's about a turn lower than it used to be. And so I think companies just have to be much more nimble and very thoughtful about how they manage their businesses, whether it's their CapEx plans or working capital. And yes, probably not taking that last quarter half turn of leverage and thinking through putting a little bit more equity in.
Sticking with this theme, Deutsche Bank is set to hold its annual European Leveraged Finance Conference here in London, bringing together more than 1,000 investors and issuers. Deutsche Bank's co-head of capital markets for EMEA, Hobie Bouvat, joins us now. Hobie, nice to speak to you. Thanks so much for coming to talk to us. So you're about to host this event, and clearly before then you can't know what the conclusions will be, but what kind of mood do you think participants will arrive at this event in? Within leveraged finance markets, capital markets broadly, what is the mood right now?
Look, I think the mood is generally positive in Europe, I would say, as far as capital markets are concerned. What we have seen so far is recovery from global markets, obviously, after the heightened volatility we've seen, post-tariff announcement early April. And we've seen a recovery across asset classes. I think we've seen also rotation away from U.S. equities into the bond market, also into the leverage markets, also into European assets. So, we are hosting about 100 companies today. A lot of them are global companies, European-based.
Yeah.
And I would say that from a access to capital markets perspective, their sentiment is positive on the basis of what we're seeing, in markets.
Okay, so expecting that positive sentiment to arrive with participants then at this event. But what about a lack of M&A and a lack of deal flow? Because that's sometimes the thing that drives companies to want to raise more money or can get bidders into the leverage finance market. So what's the link there? Break down the link between that part of capital markets and where that leaves your side.
Yes, I mean, absolutely. When we look at European leverage markets or global leverage markets, one of the greatest use of proceeds is acquisition finance, so LBO financing. What we've seen over the past few years, you're right, is that the proportion of acquisition finance into use of proceeds of financings has gone down tremendously. So it used to be around 60-70% acquisition finance driven, and now it's gone down to 30-20% even year to date.
So a decade low, I think you were saying.
So a decade low, absolutely. Why is that? The lack of deal making comes back to also the size of the LBO transactions and P activity in acquisition finance for leverage markets as well, and that has gone down, materially, even though announced M&A volumes have gone up actually over the past, couple of months. And there is a significant shift actually in terms of the LBO environment when you think about it. As Christina Minnis said, we have a higher interest rate. And base rates, so cost of debt has gone up. That has had an impact on the amount of leverage that a company can take. You've also had a discontinued trend in terms of the multiple expansion that we've seen, in asset prices since 2021, 2020, after the post-COVID environment. That has also changed, quite materially, also based on where the base rates are, have been, and their impact on asset prices generally. And then the third thing is we've also entered an era of lower growth prospects. And so we've gone out of the sort of inflation-driven growth that we've seen post-COVID. And of course, with all these, tariff headlines, there is definitely, a change in sentiment in terms of growth prospects across the world and in Europe.
So with that backdrop, what are kind of the underappreciated risks, shall we say, when it comes to European leverage finance? I mean, are there sectors in particular that you think present signs of stress at the moment?
Yes, this is a good point because actually, as far as the markets have recovered, there is definitely pricing dispersion. And there is definitely sectors that have recovered better than others. So the more defensive sectors have recovered generally well. The more cyclical sectors, heavy industrials, autos sectors, and auto parts as well by extension, have underperformed, generally when you look at cash prices for, listed assets. So what we are hearing from investors, and this is one of the reasons we're having this conference today, we have about 800 investors as well, is really to listen to, that they have cash, the technicals are quite strong in the market, but we'd like to understand what are the sectors that they would like to buy and at what price. I think at the moment, there's still quite a lot of uncertainty around the impact of tariffs into earnings, and we haven't really seen that playing through in Q1. We think it's going to play through more in Q2 and probably more H2 of this year.
And where do you think you're going to see the greatest default risk mounting?
I mean, it's generally going to be around the sectors that will have the most impact from a raw material prices perspective, the ones that will have the most cost increase from a supply chain perspective. And then there will be some impact as well on consumer confidence. I think we've started seeing that. even if consumer spending has held up okay globally, I mean, there is definitely a change in consumer confidence and perception of discretionary spending. So the sectors that are the most impacted will be around, those ones.
And Hobie, you were talking about opportunities in Europe, and maybe that's been quite a theme of the last few months as investors have increasingly been looking at Europe, maybe less so at the United States because of a host of factors, not least of which policy-driven. But I wonder, we just got a reminder of the possibility of volatility in European politics this morning. The Dutch government has collapsed, migration talks failed, and as a result, the far-right lawmaker has left the coalition. How do investors think about political risk in Europe? We saw this in France, didn't we? And in some markets, that political risk really sticks, and in others, it doesn't seem to matter.
Yes, I mean, I think political risk is perceived by investors as just one of the risks, obviously, that are out there. There is a strong perception now in Europe of political will for more European autonomy. In terms of, we've seen on the defense side, on the infrastructure side, on the energy side. So as far as Europe's concerned, investors are buying into the political willingness, around countries and also at the European level. But you're right, the execution of this political will is really the key. And there are a lot of different things that have to happen. And a lot of the decisions will be made at country level, hence the importance of stability at country levels as well. But going back to, the French episode, for example, yes, we've gone for a time of heightened, premium for French risk. But overall, I wouldn't say that we've had a sustained, perceived weakness of France, and definitely not a desire from investors to not participate in sovereign issuances and also company issuances from that country.
Okay, so really interesting, keeping the political uncertainty in mind. I just want to end, Hobie, with a comment that you made the last time that you were on Bloomberg, and you said that investment banks are going to need to work with private credit more to satisfy all of the needs of the new economy, the capital expenditure. How do you see that dynamic playing out, and is it happening at the pace that you expected?
Right. I think it is happening, and we're all part of a financial system and an ecosystem. It is happening, and we're all part of a financial system and an ecosystem where everyone is playing a part. Definitely, there's been a lot of cash inflows, funds inflows into private credit, and those players have to deploy, this money that they've raised. And then, similarly on the bank side, if I take our example on the defense side, for example, we do see a big role to play, in particular in bringing some of the small and medium-sized enterprises into financing, their capex and their investment in order to supply the bigger OEMs, for example. So to answer your question, I would say, we will probably always want to move faster. The great thing is that, the needs are there, and that's also the feedback we're getting from companies that they would really like to have a broader pool of capital markets in Europe, so public capital markets, supportive banks, as well as access to this, really increasing pool of private credit funds.
Okay, Hobie Bovat, who is co-head of capital markets for EMEA over at Deutsche Bank. It's lovely to have you with us around the table before your conference today. We wish you luck with that.
Yes, and we were just ending our conversation there with Hobie talking about private markets. So a nice opportunity to remind everybody that Kriti Gupta will be at the Super Return Private Equity event, which takes place in Berlin. We will be featuring a host of great conversations during Wednesday and Thursday's programming here on Opening Trade.
Coming up on the programme, Russia and Ukraine failed to reach agreement to end the war, but they do lay the groundwork for a new prisoner exchange. We'll bring you the details next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Being able to look at a screen and see myself is like no feeling in the world.
Get it.
That's how my friends hang.
Get in, loser.
That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want? You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football? Let me see a mirror so I can look at it.
Are you a billionaire yet?
None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today?
Absolutely not.
Do you think people visiting know that these were looters?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem. How is this possible?
Oh, come on.
Come on.
Whoa.
Wow. What is going on?
I'm Scott Pelley. I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi.
I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
Welcome back to the opening trade, 8:45 here in London, so 45 minutes into our European session, which is showing some weakness. US futures haven't deteriorated much in the last 10 minutes or so, but they are weaker than they were at the start of this programme an hour and 45 minutes ago. So we're down by 0.5% on E-minis right now. Now, some of the political risk we're monitoring here in Europe is in focus. The Dutch coalition has collapsed after it failed to reach an agreement over far-right lawmaker Geert Wilders' Freedom Party's plan to curb migration. Oliver Crook joins us now to talk about the latest. So, Oliver, we have these headlines telling us that he's left the coalition has collapsed then. So what's the latest detail?
So once again, the perennial issue in Dutch politics is this issue of migration. It's what triggered an election not too long ago that ousted Mark Rutte and then put the Freedom Party by Geert Wilders party into government after many, many, many months of coalition building. And this is a government that has stood now for less than 1 year, 11 months before its collapse, to be brought down again once more by this issue of immigration. What precipitated this was last week Geert Wilders put forward a 10-point plan on immigration. These points included using the military basically to guard the land borders of the Netherlands, turning away all asylum seekers, temporarily halting family reunification, also sending Syrians back to Syria, which he considers now a safe place for refugees and other migrants to be sent back. He said that if the majority of these 10 points are not agreed to by the government, yesterday he threatened to pull out of the government, and today, just a few minutes ago on X, we have him saying no signature for our asylum plans, no changes to the main outline agreement. PVV, the Freedom Party, leaves the coalition, and that is how we got the news this morning of the collapse now of the Dutch government. The next steps will be likely another election that will have to be called in the Netherlands. That was supposed to happen sort of by the term limit in 2027. That, of course, has now been accelerated with the fall of the government.
So, Ollie, what are the implications then for the rest of Europe and the Netherlands' position in Europe after this?
Yeah, so very interestingly, I mean, listen, we just had an election in Poland in which you had basically this liberalizing force of Prime Minister Donald Tusk elected 2 years ago, trying to get his agenda through. It had basically been blocked by the former president and will continue to be blocked by the next president. And when you think about this from the sort of European and the perspective in Brussels, who is currently waging trade warfare with the United States, trying to show a sort of sign of solidarity, political stability, pro-EU, that is definitely not the sort of context that we get over the last 24 hours. In Poland, you basically have Donald Tusk, the pro-European, hamstrung in terms of getting his agenda through. And the Netherlands, which is going to host, by the way, in just 3 weeks' time in The Hague, a big NATO meeting that will be attended by Donald Trump, where all of these NATO countries are basically seemingly auditioning for continued participation of the United States. You want to project strength, you want to project stability, and that is not something you're going to be able to do, particularly when your host country's government just collapsed with many of the same themes that you've seen in the political disagreement in the United States and many of the sort of MAGA themes running in Dutch politics, in Polish politics, and of course politics in Germany, France, and elsewhere.
OK, Bloomberg's Oliver Crook, we thank you for the latest out of the Netherlands, the collapse of the Dutch government. And let's turn now to the geopolitics and dive more deeply into what that means for the rest of Europe. Because, of course, we already had Russia and Ukraine laying the groundwork for a new prisoner exchange yesterday. And that's after a second round of direct talks in Istanbul failed to bring the two sides together closer to ending the war. Now, these talks come as Prime Minister Keir Starmer's new defence policy aims to show the UK's commitment to being a key power in Europe and NATO, but the funding for those plans remains unclear. So there's a lot to thread together here, and I'm pleased to say joining us now is Rachel Elhouse, who is Director General of the Royal United Services Institute, RUSI, and she was also previously the US Secretary of Defence's representative in Europe and Defence Advisor for the US mission in NATO, and she contributed to the UK's 2010 Strategic Defence and Security Review, so she really is a true expert. Rachel, it's great to have you with us on the programme this morning. Thinking back to that strike by Ukraine on Russia, the many strikes over the weekend, I just want to start there and ask to what extent they weakened Russia militarily or shifted its negotiating hand as we went into the talks in Istanbul yesterday. Is that perhaps why there wasn't a success? Oh, we're just struggling to hear Rachel here, but we will get back to her as soon as we can. Anna, it's a really fascinating moment for defence, of course, as we tie all of these threads together. I had wondered whether, the fact that Russia didn't want to agree to peace at this point was perhaps because Ukraine had been so strong into these talks, and maybe it wanted to wait for a moment when Ukraine was weaker. Let's try and get back to Rachel Elhouse, the RUSI Director General, now. Rachel, can you hear me?
Yes, I can.
Perfect. What's your answer to that question? Is this strike perhaps a reason why we didn't get closer to peace yesterday in Istanbul?
The strike is a really great example of how Ukraine has performed throughout this conflict. They've always contained an element of surprise. They've always innovated. They cannot outmatch Russia en masse, but certainly when it comes to innovation and creativity, they have used those things to their advantage to gain the upper hand. So I wouldn't link that with the failure or success of the talks, because in my view, the problem with the talks is from the outset, they haven't included all parties, and they haven't held Russia to account for its role in this war.
Do you think that's something that the US administration is going to do, Rachel? Good morning.
Good morning. I believe they're slowly coming to the realization that any sort of sustainable ceasefire agreement must take account Ukraine's views, the views of Europeans who are alongside the conflict. But it's been a long time going, and Ukraine has to continue to assert its agency in this fight and its demands, as do European countries, in order to be heard.
Well, we had, of course, the Strategic Defence Review out of the UK yesterday. A lot of money being spent on heavy weaponry. But when you think about what happened in Russia by Ukraine over the weekend with these $200 drones taking out heavy weaponry, does that suggest that maybe the money is being misallocated, or just the vulnerability of these big, expensive assets in modern warfare?
It's important that the review has a balance of both mass in terms of people and capabilities, but also a focus on innovation. Again, if we take the example of Ukraine, they've really shown how you take those more conventional capabilities and forces and you pair them with unmanned systems, satellite communications, the element of surprise. So I took the defense review as a move in the right direction because it does have a clear focus on transformation.
Yeah, move in the right direction, Rachel, but is there enough money behind it? 3% has become the new target, and others talking about whether it should actually be 3.5% as we move towards that NATO meeting later on this month. How important is that kind of detail? How do you project strength when these conversations are all about 0.5% of GDP?
You're correct that the NATO ambition, as we anticipated for the Hague summit, is 5%, with 3.5%, excuse me, of that going towards core defense spending. And so even 3% by 2034, as the review anticipates, will fall short of that. That having been said, I think we do need to look at the quality of the spending. We need to make sure that every year there is a real term increase in spending. So while it's probably not as much near-term cash and uplift as many had anticipated, it is a step, again, in the right direction. And if that money and that increase in spending can be paired with a sustainable plan that makes cuts where needed and strategic investments to get that innovation edge, then I think we can be relatively optimistic.
What about the investment in nuclear deterrence, Rachel? Because we've reported that the UK is planning to take an enhanced role in NATO on that front. Do you see that capability being necessary in the near term? And if so, under what circumstances?
Certainly, given Putin's careless use of messaging his intent to use nuclear weapons, in particular tactical nuclear weapons, I think the UK, the US, and France having a safe, capable, modernized, responsibly managed nuclear deterrent is absolutely important. It is a very expensive capability, and it does take up a lot of the defense budget. So controlling those costs while getting the maximum effect in terms of messaging towards the Russians is going to be very important. And working together with the United States and France to use that messaging together to send that signal.
Yes, Rachel, if I could broaden the conversation, picking up there on what you said about working with the United States, given the extent of your experience on both sides of the Atlantic, how do you assess the US reaction to any attack on a NATO ally right now? How much has it really changed since years gone by? I was reminded recently that European leaders have often had doubts about whether the US would really respond, from Adenauer to de Gaulle. What's your assessment of the US response?
I think we are seeing an evolution in the U.S. thinking. A number of U.S. leaders in the current administration have signaled a desire to lead from behind when it comes to Europe. That's due both to a sense that we've got more pressing problems in the United States that have to be addressed, as well as a desire to be more active in the Indo-Pacific. That having been said, I think Europeans have shown that they're willing to step up and spend more in defense and take on more responsibility within their own theater. I was really pleased to see a NATO first approach in the Strategic Defense Review, because the UK is a very important partner in making sure that security and defense in Europe is really solid and taken care of, in particular if the United States does step back from that leadership role in the alliance. But for the time being, the United States nuclear deterrent is still extended under that NATO umbrella. U.S. forces remain in Europe. U.S. leadership continued to talk about the importance of NATO, and even more importantly, the U.S. Congress and public are firmly behind the alliance.
Okay, Rachel, thank you very much. RUSI Director General Rachel Elhouse, we thank you for your time. Quick reminder then, Lizzie, some of the data points we're watching out for today. We get Euro area CPI, which is expected to come down just ahead of that ECB meeting. That's
no more
on
inflation problem for Europe,
no,
it would seem.
2% or below,
Yeah, reflect that. And then they can cut on Thursday, and then do they cut again? That's the question.
And then we'll get US durable goods later on today. We get US jobs. We talked a little bit about that coming before the non-farm payrolls data. That is it for the opening trade. The pulse is up next. European stocks just on the back foot a little. US futures pointing 0.5% to the downside this Tuesday morning. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want? You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football? Let me see a mirror so I can look at it.
Are you a billionaire yet?
None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looted?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem.
How is this possible?
Oh, come on.
Come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley.
I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi.
I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
Saturday mornings were made for shopping. Get ready to meet up with your HSN besties for super savings and tons of fun. We've got you covered. Kick back and start your Saturday shopping with HSN.
The White House looks to dial down trade concerns, saying Presidents Trump and Xi will talk soon. There's U.S. praise for the EU coming to the table, but Europe warns again about possible retaliation. The OECD slashes its global economic forecast, with the U.S. among the hardest hit as President Trump's trade policy take their tolls. Plus, the Dutch government collapses after the far-right Freedom Party pulls out in a row over migration. In Poland, the Prime Minister, Donald Tusk, looks to shore up support with a vote of confidence after his candidate lost this weekend's presidential election. So there is quite a lot going on, quite a lot of stories that we need to cover, from politics to trade and, of course, everything in between. This is what the market is doing. Look, U.S. stocks actually dipping a little bit to extend days of fluctuations, pretty big fluctuations. Again, traders grappling with a fog of uncertainty surrounding the global trade war, so they look to this and that, but there's no clear picture that's actually emerging. This is 2 months after Donald Trump's sweeping tariff announcements and push for new trade deals. And again, there are very few signs of a breakthrough, certainly when it comes to talks with China or the EU, the biggest U.S. trading partners. The U.S. 10-year yield 4.4181, euro dollar 114.11, and Brent 65.08. Let's also take a look at the European markets map that usually follows what happened in the U.S. at the close and then in Asia. And we're seeing a little bit, again, of wait-and-see situation. Risk off, not huge, but the CAC 40 down some 0.3%. The FTSE MIB in Italy 0.6% lower. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This
is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the White House says President Trump is likely to speak this week with Chinese leader Xi Jinping as the two economies remain locked in trade turmoil.
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls.
We're joined by Rosalind Matheson, our EMEA news director, and then in a second we'll speak to Janet Henry. So there's a lot going on, of course, as always, Ros, in terms of trade. There doesn't seem to be a massive breakthrough. I mean, it's been 2 months since actually we heard what Donald Trump wanted to do. What's the way forward? Like, what are the main sticking points?
Well, with China, they're complex and they're many. And it's interesting to see the US officials talking repeatedly about the prospect of a phone call this week between Donald Trump and Xi Jinping. It's almost like they're trying to will this call into life. And it's been radio silence from China, I guess unsurprising. But for Xi Jinping, the real question is he's not going to rush to a call unless he has a clear sense of what he's going to get out of it. But it does reflect, as you say, like months on, we've got a bit of a framework deal with China that's wobbling heavily, accusations on either side of breaching understandings, US, criticizing China over rare earths, China bringing everything in the relationship into it in response, including student visas, including AI chips, you name it. So that doesn't seem to be moving anywhere. Meanwhile, very slow-moving, complex negotiations with the EU. Again, a lot of conversations, but not a lot of progress. And, Donald Trump's coming up against a lot of self-imposed deadlines here to get a lot of deals done, or at least framework understandings done. And so far, what has he really got on the table? The UK, which was arguably a fairly easy one to achieve, but a lot of hard stuff still very much on the table.
Ros, first of all, the overarching, basically, theme of trade, do we have a better understanding how the Trump administration is trying to get through it?
Well, we do and we don't. We can see the negotiating styles that are coming in from the US. We can see how countries in turn are learning how to deal with the US in response, and looking at some of the examples and saying, well, you need to some extent, stand up for yourself against the US. And that response is somewhat respected by the US, even if it makes the conversation more difficult. But again, what is it that fundamentally the US is trying to achieve here? Donald Trump went into the election with a bunch of promises that he made to the American people, and he's trying to show that he's enacting on those promises. And, how he gets there is for him probably less important than trying to get there and show that he's getting there. And meantime, you can see in the US economy, the concerns are coming in about the impact of this whiplash on trade, on sentiment, on jobs, on companies, on behaviour. So he's got a very close eye on that as well. And he's clearly just trying to get some sort of announcement out there in the coming days.
Ros, thank you so much. As always, Ros Matheson there on the politics of the trade war. She is director our EMEA news desk. Now joining us is Janet Henry, chief global economist at HSBC, to understand the implication that has on inflation, monetary policy, and many other things. Janet, as always, thank you for joining us. Because of the trade uncertainty, how difficult is it to set the right monetary policy right now?
Very, very hard indeed, which is why what we're hearing from central banks, particularly from the Fed, we need to wait and see. And that's why they are going to very much wait on the sidelines. And as Ros was saying, there's so many complexities to a lot of these discussions that President Trump is having, or his administration is having, with various countries. And while we've got this July 9th deadline at which the pause ends, we really don't know whether we'll then get the step up in the reciprocal tariffs thereafter. And clearly markets have taken the view that tariffs are now primarily a negotiating tactic and we're not going to be ratcheted up again. But the recent path has shown we really can't be sure what is going to happen tomorrow. So central banks have to stick to their mandate. And their mandate, in the case of the ECB, is price stability. For the Fed, they have to balance the two. And if inflation is still a little bit above target and the economy is still at full employment, you just wait on the sidelines until one of those tips the balance towards trying to set policy policy. And for now, it's all about inflation expectations.
Yeah, and that's the messaging clearly from the Fed and numerous Fed governors, right, that they worry about an uptick in inflation in the third and fourth quarter. Is there a danger that that some of the things that we were expecting to show up in the data is not showing up? Is that because there's something structurally with the economy, or is it just being delayed?
Well, that's the question I am asked most frequently by investors. They say, when will these awful surveys show up in the hard data? And you know, what we saw in the April surveys was that they absolutely tumbled. Some of them were at COVID type of levels in terms of consumer confidence and business confidence. And then they revived a little bit in May. Now, we haven't even got the May labour market data. We'll get that on Friday. And I think you are going to still have this difference between survey data, which is now stabilised but not back where it was, because maybe people are thinking, well, maybe this isn't really going to happen for sure, and then the uncertainty impact. Yes, you're not seeing mass firings at this stage, but you're certainly seeing a slowdown in hiring. But the Fed also has to consider what's happening to the supply of labour against a backdrop of potentially slower immigration. But certainly on our outlook, we've got the worst point for growth being the fourth quarter and the first quarter. Some of it's the impact of higher inflation weighing on consumer spending and real incomes, and then you get the impact of much weaker hiring and a potential increase in unemployment leads to the sharper weakening of growth.
So are you expecting a cut from the Fed?
Yes, we still have cuts. Well, by the end of 2026, we have a bit less than is priced into the market. We've got 75 basis points of rate cuts, but obviously the market is repriced to some degree because, of course, in 2026, you've got the additional complications of what happens to the budget reconciliation bill and when that takes effect, and, of course, a new Fed chair next year. But based on that view, now that we might get a little bit of fiscal stimulus next year, actually, I think some of the prospects for bigger rate cuts next year are overdone. Actually, you know, I don't think the Fed will be easing through 2026 because the growth may be disappointing, but the inflation numbers will still be quite sticky.
Janet, you mentioned the ECB. I mean, it's the big one. After they cut rates, you know, now on Thursday, which, or in June, actually, which is pretty much priced in, what happens?
What happens? Well, a lot of that depends on what happens in terms of legislation or executive orders generated by the White House. So I think they sit and wait. And absolutely, we're going to get a great inflation number. It could even fall below 2%. So that will be helpful. The ECB has been clear that they are in neutral territory already at 2.25. We get the cut today to take it to on Thursday to get the 2% level. And I think they certainly are on hold in July before you have to take a view at later meetings. Are you seeing further downside risks to growth? Do you need more accommodative policy? But again, in no hurry, because there is going to be higher fiscal spending in Europe and core inflation is still at 2.5%. So they can afford to wait a little bit in the absence of a really disappointing growth outlook.
Because I guess, I mean, interest rates at 1.75 for the ECB, it must mean that the economy would be really in bad shape, right, to get to that level, or is that unfair?
Well, that's a little bit unfair. So I think it's, you know, what they consider to be the neutral range is 1.75 to 2.25. There was a time not so long ago when people were saying, oh, the ECB needs to slash rates to sub 1%. We got so used to rates being at that zero level. But I think 1.75 is still just about in neutral. Do they need to go super accommodative only if they see big downside risks to inflation? Europe's had weak growth for several years, but inflation has not been below target. And on their new projections, which is what the market will really have its eye on Thursday, how low do they go on inflation? Is it 1.7? Is it 1.8? When we look at 2026 and 2027, their mandate is very clear. And their forecast for growth will not have the fiscal impact in it because they won't have had time to process that. And in Europe, you never quite know when the fiscal spending will hit the ground.
But Janet, do you worry about inflation undershooting, basically 2% in the Eurozone for quite some time?
If there is an undershoot in Eurozone inflation, I suspect it will be primarily driven by what happens to energy prices. If core inflation is but obviously the ECB, they forecast headline inflation, but if core inflation is at 2.5%, you would need a severe weakening in demand against a backdrop of what is a complicated supply picture in terms of productivity and labour supply in Europe to lead to big downside surprises and undershooting in the Eurozone.
Janet, what do you worry about the most? So, we haven't talked about China or Japan, many concerns there, but also the UK. Is there something that we're missing, given all of the uncertainties?
Well, I think, the market always has to price in all of the available information as soon as it comes through. And I think, everyone's looking at the world knowing that this is unlikely to be good news, what is happening, what is underway globally, even if some of the worst case scenarios are not where they were perhaps on April the 2nd. So I think it has more become about the relative winners and the relative losers, who's less exposed to the US in terms of selling consumer goods or the sectors that are subject to those sector-specific tariffs. So, this is why some people are saying, well, actually, you mentioned Japan. It's still, a very large bond market. Maybe we'll reach a stage where there are opportunities there. Others have pointed to Australia. If only 4% of exports go to the US, obviously they need some domestic growth drivers if China's still going to be somewhat sluggish. So I think it's all about the relative stories in this world.
Okay,
yeah.
We could talk about this for another 2 hours. You'll have to come back, Janet. Thank you so much. Talking, as always, extremely insightful, talking about the relative values and the relative plays, given all these bifurcations. Janet Henry, Global Chief Economist at HSBC. Now, coming up, our interview with Bill Winters, the Chief Executive of Standard Chartered. We talk regulation, we talk tariffs, AI, and of course the company's outlook. That's next, and this is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Hey, did you find the manual?
Yes!
Summon Dale!
Who's Dale?
American Home Show now provides video chat with live repair experts for home fixes over the phone. Let's go fix that oven.
Okay, Dale.
Sign up today at ahs.com.
Hey, you want to go upstairs and fool around?
No.
Pluto TV has 3 classic sitcoms all in one place.
Let's have a toast.
Mama's Family, Married with Children, and All in the Family.
I can't kiss you.
It's okay, you did not kiss the Brillo pad.
Classic TV Families channel on Pluto TV.
Fun place, isn't it, Mama?
So dumb. Just spit it out.
When's the last time you saw a family smarter than this one?
Last time I watched the Flintstones.
Do you think there's a chance that you and I could go someplace and laugh together?
Makes you laugh so hard the beer comes out of your nose.
Life is funny.
Hilarity ensues.
So, if you're in the mood to laugh out loud, stream Cheers and Frasier.
Come on, you'd love these guys.
Well, chip giant TSMC sees profit rising to a record high this year and is maintaining its sales growth outlook. The company also says there's strong demand for chips used in humanoid robots. Now, let's bring in Robert Lee, a senior analyst at Bloomberg Intelligence. Every time I say humanoid robot, I kind of slightly freak out. But what stands out, Robert, from TSM's results?
Okay, yeah, there was a lot of talk on different topics. I would say nothing substantially new, and in fact the stock actually traded off in the local session here in Taiwan. Having said that, it had been flirting with its 200-day moving average, so there's a a technical line of resistance there, which is failing to break through in the short term. But there are a number of different areas covered. One was on the future locality of their fabs, and as I guess yourself and most of your viewers are aware, TSMC has committed $100 billion over the next 5 years to build out new fabs in Taiwan. The CEO actually shared some personal conversation he'd had with President Trump. President Trump's message was essentially, do your best, because building out $100 billion of fabs in 5 years is a very tight deadline. And the main issue that TSMC faces is finding the appropriately qualified production staff who can run these things. So that was one issue. They recommitted that Taiwan will remain central to their capex plans going forward. They referred to the local fabs there as their mother fab. In other words, they'll develop and perfect the technology before transferring elsewhere. But AI dominated the conversation. But overall, I think it was a steady as you go sort of message. Some short-term impact maybe from the Taiwan dollar on their earnings. But again, that's well known and well factored given the moves we've seen in currency markets in recent weeks. So, but a reassuring message that steady as she goes, and they remain bullish on the long-term outlook.
So meanwhile, Robert, Elon Musk is selling $5 billion in debt for his artificial intelligence startup. What more do we know?
Okay, well, what we know is that this $5 billion they're looking to raise, if that is confirmed, is likely to be part of an ongoing capex rollout plan at their so-called Colossal Fab, which is in Memphis in the US. They've currently got 200 to 300 GPUs installed at that facility. They're looking to add up to 1 million at an adjacent facility. So it's likely the funds raised will be in support of that, which reconfirms that capex remains strong. Although I would say, what about the monetization? I think that remains the elephant in the room here, and thing that investors need to continue to focus on given the proliferation of free or low-price products in the market.
Robert, thank you so much. As always, Robert Lee there from Bloomberg Intelligence. Now, private credit firms enjoy a significant capital advantage over traditional banks. That's according to the chief executive of Standard Chartered, Bill Winters, who says banks have to deal with higher capital costs, and this won't change anytime soon. In a wide-ranging interview, as he marks a decade at the helm, Winters discussed UK bank regulation, the impact of tariffs, his own future, and the role of AI.
I think that the biggest challenge for an organization like ours is what are the use cases that are existential for us. Right. Because when you talk to, as I did, I spent a week on the West Coast 2 weeks ago of the US, and you talk to hundreds of people about their AI strategies, and there are thousands of absolutely, everybody's got a use case. We're all using ChatGPT or Claude or whatever. And the key is to focus. So what we've really tried to do is say, what are the one or two things within each of our key businesses that are existential for us? Because those things we have to build ourselves. We have to be at the cutting edge. For a lot of the rest of the stuff, RFP generators and file reconcilers and PowerPoint editing, we can take somebody else's. Right. Application, bring it in.
Is that what you see as your ultimate job? Is yes. If you look at trade tariffs, if you look at AI, it's these big shifts in society.
That's right.
And that's what basically is that what gives you a certain buzz today?
It gives me a buzz. Those are also the imperatives. And if there's one thing that finding myself in the position where I've got a great team that runs the business day to day, every single day, and I've got a great chairman who's new, but the old chairman was also great. I'm in that middle zone where I can really think more strategically, and AI is a huge part of that.
How do you think about regulation?
It's interesting to see how that pendulum swings. So, I was on the UK Independent Commission on Banking back in 2010-11.
Yeah. You were one of the architects, actually.
Well, for better or for worse, right? Out of that came ring fencing, but we made some assumptions at the time about the likelihood that the Basel Committee would continue to be pretty light touch in terms of the way that banks' risk was calculated. And as a result, we put structural recommendations in place, like ring fencing. Now, as it turns out, the Basel Committee has been super rigorous, and some would say too rigorous, but let's just say the Basel 3.1 endgame, for those of your listeners that aren't in banking, they'll know that's intended to be the last stage of bank capital regulation. It's pretty conservative, I would say. So the cost of capital for a bank is significantly higher than the cost of capital for a private credit company. Okay, that's just a reality. I don't think that's going to change anytime soon. The result of which is banks are disadvantaged lenders.
De facto, right?
De facto, and that's okay. And banks also have the opportunity to be very leveraged and take insured deposits.
But is that okay, or would you actually roll back some of the ring fencing?
Well, the ring fence, that's a different question. I know there's a debate now about whether the ring fence entity should be allowed to be bigger or take more deposits before you have to ring fence. I think those kinds of refinements make perfect sense. But the Bank of England did a review, or Keith Schiak, I guess it was the Treasury, Keith Schiak did a review 3 years back on the ring fencing. I can't add much. I might talk to him quite a bit during that. Yeah, he said it's fine-tuning, yes. Fundamental rethink, not necessary. I like the fact that UK banks that have ring-fence banks have different views on this.
Yeah. Okay. Is there one regulation that you would get rid of if you're in charge today?
There's not one regulation that I would get rid of. I would say that we've erred on the side of very, very extensive micro-prudential supervision. We've got really huge numbers of individuals in the UK, in the PRA and the FCA, who are focusing on our business. And I think one, they're too intrusive. It's too costly. And two, I don't think you actually get a good return on that, because at some point the board and senior management start to think, well, if it's okay with the regulator, it must be okay, which is a terrible conclusion to reach. Of course, we don't make that consciously, but deep down, I think there's a risk that we get there. So,
but I mean, every day do you wake up to, of course, service your client, but is it to also have a fair share of beating the likes of JP Morgan? And actually, what needs to happen?
Thankfully, JP Morgan is one of our great partners, but
or someone else.
No, but I mean, we're an interesting bank because our biggest single customer base, broadly, is banks, other banks, because we're a banker's bank. But of course, we also compete with them in many markets. I would like to wake up every morning, most mornings I do, thinking, how do we give a better service to our customers? If we get the customers right, including banks, if we get the customers right, the rest is going to follow.
So Standard Chartered is also known for its prowess in trade finance. How does this change because of the trade wars?
It's fascinating. Every day is a new adventure. If there's, I think we all have our assessment of what's likely to happen here, and a base case, call it the base case. And the base case that the whole market is assuming is there's going to be some increase in tariffs, maybe 8 or 9% for 10% from the U.S., that the rest of the world, that China will be at 30% or something like that. With some gap, which means an ongoing evolution of this China plus one into all the markets that we call home. So, of course, China is already adapting to that. China has been adapting to that for some time. With Chinese manufacturing, Chinese corporations have been moving to Malaysia, Vietnam, Indonesia, increasingly to India, fascinatingly, despite the geopolitical tensions there. So, we have a very important business in China, but most of it is cross-border. So, as Chinese corporations reach out to the rest of the world, and as international corporations are diversifying their own supply chains, they're going into the markets that we call home. So it's actually been feeding a lot of our growth.
Right.
And so I'm not saying that we're complacent about the trade war, because if we get anything like the kind of scenarios that have been mooted from time to time coming out of the U.S., there will be a severe economic implication. And recession, we'll see, but definitely a cost. And that's not good for anybody.
Bill, the next 10 years for Standard Chartered, what does that look like?
I think it's going to be a glory decade, actually. I really do. And so right now, the core of our strategy is focusing on the affluent population in Asia, Africa, the Middle East, and focusing on global corporations' cross-border needs, but with an anchor in Asia, Middle East, and Africa, but with, we have a big business in the US and Europe. Both those things feel really good right now. Structural growth in both demographically and in terms of wealth creation in Asia. In particular, global Chinese and Indians, but it's everywhere. And the cross-border needs are getting more and more complex, and we've got a very, very relevant role to play. So obviously, lots could disrupt that period, but if we get it right on our core infrastructure is actually very good. We have single sets of systems to serve those clients. We've got to incorporate everything AI and data related effectively. Jury's out whether we can deliver. I'll make the bet that we can. And then we have to navigate some of these geopolitical tensions. And I don't see the U.S. and China bifurcating. I see constant antagonism and disintegration, but bifurcation is many, many years out, if at all. And in the meantime, there's lots of roles for a player like us, which is global.
Bill Winters there, the chief executive of Standard Chartered, speaking to me a little bit earlier. Now, Microsoft has cut an additional 300 jobs just weeks after its largest layoff in years, where the tech giant slashed 6,000 roles. The cuts underscore the industry's efforts to trim costs, even as it plows billions of dollars into artificial intelligence, while Microsoft and peers, including Meta, have touted the effectiveness of AI-assisted coding tools in speeding up the software development process. Coming up, Polish Prime Minister Donald Tusk calls for a vote of confidence after an electoral defeat over the weekend. We'll have the details next, and this is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Being able to look at a screen and see myself is like no feeling in the world.
Get it!
That's how my friends hang.
Get in, loser.
That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want?
You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football? Let me see a mirror so I can look at it.
Are you a billionaire yet? None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looters?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem. How is this possible?
Oh, come on.
Come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley. I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi.
I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The White House looks to dial down trade concerns, saying Presidents Trump and Xi will talk soon. The OECD slashes its global economic forecast as President Trump's trade policy take their toll. Plus, the Dutch government collapses while in Poland, the Prime Minister, Donald Tusk, calls a confidence vote after his candidate lost the presidential election. Now, we'll have plenty more on that story, but Polish Prime Minister Donald Tusk says he will seek a vote of confidence in his government.
Over 20 million Poles elected a new president of the Republic of Poland, showing their strong commitment to democracy and its key principle, free and universal elections. No matter how we judge the winning candidate, we should recognize his victory and congratulate his voters, which I hereby do. I also thank the loser for his determination and fighting for every vote to the end.
Well, Oliver Crook now joins us to talk about the latest. So, Ollie, what is Tusk's motivation for this confidence vote?
This is Donald Tusk's attempt to basically shore up confidence in his government, in his coalition, in his cabinet after his ally in the Polish presidential election lost by less than 1 percentage point in favor of the hard-right candidate from the Law and Justice Party, which is the party that Donald Tusk himself replaced about 2 years ago after 8 years of rule. And this is really a big blow to Donald Tusk's liberalizing agenda, and it really would have made life a lot easier for him if he had the president on the same side. Because of the Polish system, you have a huge amount of veto powers from the presidential side of things. So any legislation that Donald Tusk puts forward that the president doesn't really like, he can very easily veto. There's also powers of appointing the central bank governor that lie with the president. This has been an issue in Poland in the past where there's been claims of politicization ahead of elections, that basically monetary policy is pulling for one side or the other. And then, of course, there is the big question of billions of euros worth of EU funds that were basically re-released to Poland on the idea that there would be more liberalizing, particularly in terms of judicial reform. That is potentially also at risk. So these are all the issues that now Donald Tusk needs to deal with, which he would not have to have dealt with if the vote had been different by 0.9 percentage points. Very, very close race.
Ollie, elsewhere in Europe, the Dutch government collapsed this morning after failing to reach an agreement over migration. What happens next?
This is the perennial issue in Dutch politics. It's what has brought down the government several times in the past. Geert Wilders, the head of the Freedom Party, has threatened to pull down the government. Even earlier this year, back in February, he did not pull the trigger. He did pull the trigger today. This is the biggest party in the Netherlands. This is the far-right party that is anti-immigration, anti-Islam. He put forward a 10-point proposal to deal with immigration, being very frustrated by the pace at which the government had been dealing with it. And some of those points on the proposals were to use the military to guard basically the land borders of the Netherlands, turning away all asylum seekers, temporarily halting family reunifications, sending Syrian refugees back to Syria, which he now deems a safe place for people to be going, closing the borders basically to all asylum seekers. These are some of the issues that he said, if you do not pass at least the majority of this 10-point plan, I'm going to pull the plug on the government. And that is exactly what he did just over an hour ago on X, saying that he's now leaving the government. This now precipitates another election, which will automatically be triggered. And we should say that he right now in his party, the Freedom Party, is polling #1 in the Netherlands, in part probably why he feels bold enough to call this election, though he will lose a number of seats. You know, in the last election, they had 37 seats. They're now polling at about 31. But Geert Wilders feeling empowered to pull the plug on this government and now threatening an election. We should say just 3 weeks before Donald Trump is meant to arrive in the Netherlands for that NATO meeting.
Ollie, thanks so much. Oliver Crook there with the very latest, of course, on Poland, the Netherlands, and NATO coming up. Now, nearly 1 year into Britain's Labour government, sentiment in the City of London seems to be shifting, with new tax rules seeing an exodus of wealthy non-doms. Meanwhile, asset managers are pushing back on mooted pension reforms, and a much-hoped-for boost to deals has actually yet to materialise. So here to take stock of all of this and more is one of Britain's most powerful bankers, Tina Lee, Citi's UK Chief Executive. Tina, as always, thank you so much for being with us. Look, there's a lot of things going on. I know we've spoken in the past about the UK. It's almost 12 months since the Labour government have come in place. What kind of impact have their policies had on the City of London?
So they've done a lot. They really do have an ambitious growth agenda, which has followed on really from the prior Conservative government and the actions they took, particularly around the Mansion House Compact and listing rules, for example. But there's still an enormous amount to do. So if you sort of think about some of the reviews that we're about to see, both in terms of the pensions investment review and also the financial services growth and competitiveness strategy, there's still a lot to play for. And the government has been very open in terms of engaging with the industry. At the end of the day, financial services is a key industry for the UK, but not only as a sector in itself, but also as a powerful transmission mechanism for capital and investment to other sectors in the country.
Tina, what's your business like actually here in the UK? I know there's an overlay of uncertainty because of trade, because of volatility in the markets. Chief executives don't really want to spend that much, but are you confident that IPOs will come back to the UK and the City of London?
Absolutely. Look, I mean, there's a couple of things. I think when I think about the UK IPO market, clearly, as we've seen across the piece, there has been a delay in terms of investment decisions, in terms of coming to market. So transactions that we thought or were hopeful that would be executed in 2025 are still absolutely in the pipeline, but are more marked in for 2026. But at the same time, anecdotally, we are hearing from clients that actually there's fewer inquiries about US listings, a desire maybe to stay a little bit closer to home. So that, of course, is a real opportunity for the UK. And I think it's also important to note that, of course, the IPO market isn't the only thing that is here in the City of London. So when we're speaking to clients, whilst there may be delays, for example, in big long-term investment decisions, delaying CapEx, for example, because we know that rewiring supply chains just takes a long time. At the same time, we're seeing a lot of clients that are thinking about how to rebuild their balance sheets, increase liquidity, and of course using Citi's global trade platforms to mitigate any short-term supply chain pressures.
Does a rebound in IPO in 2026 go hand in hand with M&A?
Absolutely. So we have seen a pause in M&A, particularly after Liberation Day. So no surprises there. But at the same time, particularly in terms of sponsor IPOs, we do see a pretty healthy pipeline for 26.
Tina, HSBC recently debuted this new loan that helps U.S. clients cope with the price of tariffs. I mean, is there something that more banks should be doing? Is this something, the disruption in trade, is it here to stay? And have you had any UK clients actually asking for mitigation or services like that?
Certainly not at this point. So when we actually think about the impact on tariffs, and again, what we're hearing from clients is that, more broadly, a permanent 10% tariff rate is something that our clients and their consumers can probably bear. Anything that's sort of 25% and above certainly requires a different type of calculation. But in terms of taking those strategic long-term decisions, actually our clients are saying, look, we need a lot more clarity, a lot more certainty before we actually pull the trigger.
I mean, I guess, because of the trade and uncertainty, it's not great for IPOs, M&A, but it's great for trading revenue.
Absolutely.
And that continues?
That's right. So we've seen tremendous momentum in Q1. We've seen a lot of market activity. So again, when we think about what our UK clients have been doing, they've been increasingly hedging across asset classes, in particular G10 rates, core currencies, as well as commodities. And we've also seen pension funds and insurance companies just begin to edge away slightly from the US towards other areas, for example, Japan, India, and of course parts of Europe, including the UK.
Have you had, clients question the fact that you're a US bank, or has there been some of the European banks say, look, they're hoping to win business because they're European and, there's maybe more of a heart pulling towards a domestic bank. Have you seen anything like that?
None whatsoever. I mean, Citi is in really, I think, quite a unique position. We've been on the ground and are on the ground in 94 different countries, in some cases for over 100 years. So what that means is that whilst we are a global bank, we are very often the only foreign bank that is on the ground locally. So what that means is that we're in actually quite a unique position to advise clients through this uncertainty.
When it comes to your staff in the UK, is there any unsettled, staff because of the proposed changes to the settled status? And actually, what would be your preferred outcome?
So we have heard nothing on that front at this point. Of course, we have a whole mix of nationalities that are located in the UK. We don't believe it would make a considerable difference. What I would say is that we're continuing to hire and make sort of strategic senior appointments in the UK. We recently hired a new head for EMEA ECM, of course, located out of London. We've appointed a new head for our global asset manager group. Financial sponsors are a key focus for our investment bank, and we've appointed a new head for our wealth business here in the UK. So in terms of senior leadership in the UK, it's never been stronger.
Have the non-dom rules affected either staff or actually clients a lot in the UK?
Very little impact in terms of staff. We know that our people are committed here for the long term, so they don't come for 3-4 years, and we have many nationalities that have been here for decades. What is interesting interesting is, of course, from our wealth business, we continue to monitor whether there are clients deciding to move out of the UK into other jurisdictions. We've seen that selectively, but we still continue to have a considerable number of clients for whom the UK is their home.
Do you think the government is very in tune with some of these changes? Will we see a recalibration when it comes to some of the rules on that?
It's one of the topics that we continue to engage with government about. We're very fortunate in the sense that we see these flows firsthand, but I think it's also important to acknowledge that the government is also in a very tight fiscal position and therefore have very limited options with regard to how to maximise the tax take. So when I think about the UK and I think about the government, really it's less about fiscal policy now and probably more about monetary policy.
You've been in banking for quite some time. What makes you most nervous about now? I know, a lot of chief executives point to, the fiscal situation and actually a bond auction that could go sour in the U.S. and maybe infect, also things here in the UK. Others say it's the flow of capital. It's the fact that it's now a new world order where we don't know where globalization goes. What do you concretely worry about?
So we do think a lot about the fragmentation of the global system. We've always been of the view that we are moving into a multipolar world. And actually what has happened since the beginning of the year has only reinforced that point. But for Citi, that just means there's only opportunity. We have clients everywhere. So it's actually just helping them navigate through that uncertainty. But certainly it's something we're continuing to monitor. But at the end of the day, we're a US firm. And when we think about the US, it still has incredible advantages. So whether that be deep capital markets, a very flexible labour market, or of course an incredible entrepreneurial spirit. So the US isn't going anywhere, but certainly the geopolitics is going to be super interesting for the years to come.
Yeah, and we're also seeing a bit of more closeness between the UK and the EU from a governance standpoint, but also the Bank of England last week weighed in saying there should be stronger trade ties.
That's right.
And that makes a difference.
It absolutely does. Certainly, I think the summit that we saw last month between the UK and the EU was a welcome first step in terms of further collaboration in what are really strategic areas such as defence and security. And of course, don't forget the UK-India trade deal. India is one of the fastest growing countries in the world, so that's a big win for the UK. And of course, the trade agreement with the UK and the US. We're very hopeful as well that there will be an agreement around tech. So I think that there are absolute wins that the UK has been able to achieve in the last couple of months.
Tina, on the slight changes to the pension funds, I mean, does it make not maybe a material difference, but does it change risk perception? Will that lead to more, retail investors and just a risk appetite for the UK?
We are hopeful that it will. I mean, Citi has long advocated for a consolidation of pension funds. The landscape is highly fragmented in the UK, so the creation of mega funds with assets under management of £25 billion or more certainly is welcomed. We believe that will reduce costs, increase efficiency, but most importantly allow diversification of investment assets into alternative asset classes such as private equity or indeed infrastructure.
Tina, thank you so much, as always, for joining us here on Bloomberg. Tina Lee there, the Citi UK Chief Executive. Now, back to politics, and Russia and Ukraine have laid the groundwork for a new prisoner exchange. That's after a second round of direct talks in Istanbul failed to bring the two sides closer to ending the war. Now, it comes one day after Kyiv staged one of its boldest aerial attacks inside Russia. Greg Sullivan, our Russia government and economy editor, joins us now. Greg, thank you for joining us. So was there any progress towards peace or even a temporary ceasefire after yesterday?
Well, on the face of it, it appears that the two sides are no closer to a ceasefire agreement, despite the second round of talks. The biggest thing to come out of this round of talks was an agreement to prepare a prisoner exchange, especially of the heavily wounded and younger prisoners, those under 25, as well as an exchange of the war dead. In this, it sort of mirrors the first round of talks that happened in Istanbul, where the biggest thing to come out of that was also an agreement on a prisoner exchange and not a ceasefire. That being said, both sides did exchange a memorandum that laid out their points points and positions needed to move towards a ceasefire. That was expected from this meeting. Ukraine did say they would take back the Russian two-part memorandum and study it, and did propose another meeting later in the month. Now, it is important to note that this round of talks is happening to the backdrop of intensified fighting. Russia has really upped their missile and drone attacks, the intensity of those strikes on Ukrainian cities, and of course we saw the most audacious Ukrainian operation within Russia striking those strategic bombers. So even as the talks continue, the fighting does not seem to be abating.
Greg, thanks so much. Greg Sullivan there with the very latest on Russia, Ukraine. Now, South Koreans have been at the polls today to elect a new president. It comes after an attempt to impose martial law at the end of last year triggered its worst constitutional crisis in decades. Sherry Ann has the latest from Seoul.
One of more than 14,000 polling stations across South Korea. This one is an elementary school in central Seoul where voters cast their ballots for a new president. South Korea has gone through 6 months of a leadership vacuum that hit the economy and deeply divided society. Voters are focused on the candidate's economic policies. One 32-year-old man I spoke to here explained the importance of housing policies for young people and the big economic and political gap between the older and younger generations. Leading candidates Lee Jae-myung and Kim Moon-soo have both pledged billions of dollars of new stimulus measures, a big fund to support the tech sector, and prioritizing a trade deal with the United States. These expectations have led to a rally in Korean assets in the lead up to the vote. Promises of corporate governance reforms from candidates have also spurred optimism in the market. Whoever wins, however, will have the challenging task of balancing ties with the U.S. and China. Lee has pledged pragmatic diplomacy based on a strong alliance with the U.S., but also stable relations with China and Russia. Sherry Ann, Bloomberg, Seoul.
That was the latest on the South Korea elections. Now, coming up, the OECD slashes its global growth forecast, citing the impact of tariff onslaught. We'll have more of the details on that next, and this is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
The future of trading is here on Robinhood. Purpose-built for how you trade. With new ways to execute your strategies and analyze, buy, and sell. Seamlessly trade stocks, options, crypto, and futures in one place.
Hey, did you find the manual?
Yes!
Summon Dale!
Who's Dale?
American Home Show now provides video chat with live repair experts for home fixes over the phone. Let's go fix that oven.
Okay, Dale.
Sign up today at ahs.com.
Being able to look at a screen and see myself is like no feeling in the world.
Get it!
That's how my friends hang. Get in, loser. That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
Pluto TV has 3 classic sitcoms all in one place.
You want to go upstairs and fool around? No.
Classic TV Families Channel on Pluto TV.
Well, a new report by the OECD finds that Donald Trump's combative trade policies have tipped the global economy into a slowdown. Now, the organization forecasts global economic growth to slow 2.9% this year from 3.3% last year. With us to discuss these findings, the OECD chief economist Alvaro Santos Pereira. Mr. Santos Pereira, thank you for joining us. What worries you the most going forward about the world economy?
Well, good morning, everyone. First of all, I think the key word is uncertainty. There's been a huge increase in trade and economic policy uncertainty. This is having an impact on consumer confidence, on investors' confidence, and also on activity indicators. And if you take this into account, and you take into account our own estimations about the impact of tariffs going forward, we revise down almost everybody. It doesn't matter if you are a G20 economy, a non-G20 economy, small or big. Almost everybody was revised down, and was exactly because of difficult circumstances and all this uncertainty going forward.
It does seem that a lot of the uncertainty comes from the U.S. Because this is man-made. Could the reversal come quite quickly?
Well, we do have a scenario. In fact, we take into account the possibility that trade barriers coming down. We think that the top policy priority is exactly to avoid further trade fragmentation. So basically, to avoid increasing trade tariffs, trade barriers going forward. And in fact, to get an agreement, sit down on the table, get an agreement so that we are able to bring down trade barriers. If we do that, we would expect that growth will be brighter than we are forecasting right now. At the same time, there'll be less inflationary pressures. But if we continue to insist of having increasing trade barriers, this will lead to a decrease in growth in the world economy in most countries of the world. At the same time, that will have additional inflationary pressures in the economy.
Yeah. But when, because of the downgrade to global economic growth, is this actually the worst slump since the global financial crisis, maybe excluding COVID?
Well, it is since COVID that it has been the lowest growth rate of for the world. It's one of the lowest growth rates since the global financial crisis. Usually, when the world economy was at cruise speed, used to grow around 3.84%. Right now, we're talking about lower than 3%, which means that there's a part of the world that is not growing much, and then that means there is not enough jobs being created, and there's not enough prosperity going forward. So that's why we think it is absolutely essential to get an agreement so that we are able to bring down trade barriers, but on second, to focus on policies to revive investment, which has come down significantly after the global financial crisis. Just to give you an idea, just in OECD countries, investment came down by more than 22% in OECD countries, and for EMEs, the cut in investment was around 33%, so massive decrease, which got even worse with COVID. So reviving investment is key.
How do you see it going forward? If the U.S. downgrades seem particularly hurtful, so why do you see it so weak going forward? And is it entirely on the trade tariffs, or is there also more structural things, maybe post-COVID, that could explain it?
Well, it is explained by what we see in terms of business indicators and consumer indicators. It is also explained by the impact of tariffs and in the short-run impact, which according to our own models, lead to lower growth. And so that's why we think that it's advantageous to everyone, including the United States, to get to the table and get the agreement. On the other hand, there's an upside risk that we think it could be quite important, which is the diffusion of AI and an investment in AI. And this is an area where there's a widening gap in terms of productivity between the United States and the rest of the world. China is also in the lead here. But if the investment in AI continues, this will likely bring more productivity and more growth.
Has the trade uncertainty inflicted some lasting damage, actually, on the global economy, even if some of the trade policies are reversed?
Well, I think certainly the effect is the short run in terms of uncertainty and all these indicators. But let's put it this way. If in the next few months countries get together and are able to sign trade deals that bring down significantly trade barriers and tariffs, this will give a boost to the world economy. Together with the boost that could come from AI, that means that likely we're going to have much brighter economic outlook going forward.
Mr. Pereira, what surprised you the most, actually, in putting together this growth outlook? I know India is meant to have one of the biggest growth, growth numbers going forward. Is actually India the new China?
Well, India is certainly the champion, the growth champion of the G20 right now. And India is investing in many areas that I think will be the future. And so you see very strong investment in India. The thing that I like the most about India is the reforms. In the last 10 years, there's been massive reforms in terms of taxes, in terms of also competitive federalism, and right now also part of the property rights reforms and so on. These are this reformist attitude is bringing a lot of growth, and we expect that this would entail even more growth in the future for India.
Yeah. And very quickly, in 30 seconds, how much do you worry about the UK? I know, the thin fiscal buffers are something that may put some people sleepless at night.
Well, the most important, I think the key for the UK is going to be boosting productivity, keeping fiscal discipline. We think that, as long as fiscal discipline is maintained is important, but most important, how can the UK boost productivity? So investing in AI and the new technology is going to be absolutely key, and also to address skill shortages. So I would focus on that.
Thank you so much, Alvaro Santos Pereira, there, the OECD chief economist. Now, tomorrow and Thursday, Kriti Gupta will be at Super Return, private equity event in Berlin, speaking to some of the biggest names in the industry. We'll talk credit. We'll talk, of course, the revival and some of the debt issues out there. Up next, Bloomberg Brief, and this is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Congratulations.
Yay.
Now that you got the easy stuff done by comparing insurance rates with Progressive's Home Quote Explorer, you can start thinking about all those other homeowner things.
Yay.
I'm not even clear on what half these people do.
Being able to look at a screen and see myself is like no feeling in the world.
Hit it.
That's how my friends hang. Get in, loser. That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore A Mountain of Pride on Paramount Plus.
Do you think there's a chance that you and I could go someplace and laugh together?
I love that.
Come on, you'd love these guys.
Sally is falling into some quicksand.
Let's go.
Good morning. It's 5 a.m. in New York. I'm Matt Miller in for Danny Berger with your Bloomberg Brief. Here's what you need to know. Stock futures dip as trade uncertainties linger, and the OECD slashes its global economic forecast, citing President Trump's tariffs. The president presses on Republican holdouts to back his multi-trillion-dollar tax bill as senators return to Capitol Hill, and Microsoft cuts more than 300 jobs in addition to the company's largest layoffs last month. Let's take a look at what's going on in futures at this hour. As I said, we have a little bit of a dip here. S&P futures down 0.5% right now. You can see NASDAQ 100 futures also down just a little bit less than that. This after we finished the day yesterday in the green, so at least a positive kickoff to the month. In terms of what we're seeing in treasuries, the all-important bond levels here are being bought, so you're seeing the yields come down. The U.S. 2-year yield at 3.92, the 10-year yield at 4.41, and the 30-year at 4.93. So backing off that so-called danger zone. We're getting some breaking economic news right now in terms of CPIs for the euro area. You can see here that we got preliminary May CPI. Looks like the CPI month over month was a gain of 0.4%, year over year 3.5%. And in terms of the core year-over-year number, 2.3%, the Eurozone CPI is then coming in, and you can see the euro dollar right now at 1.14. Let's get some more on in terms of the market this morning, the stocks that you need to be watching on both sides of the Atlantic. For that, we go to Joe Easton in London. Joe, what have you got?
Morning, Matt. So we are looking at Microsoft. As you mentioned there, we are seeing more job cuts at the tech company, potentially around 300 more layoffs following those thousands of layoffs that we heard of just a few weeks ago. Microsoft recently hitting or approaching at least a closing record high, but coming down very slightly today. We're down 0.3%. at the moment. Then we've got a big mover in the pharma space. It is a Swiss-based company that does actually trade in New York. This is being taken over by Merck, which we have on the screen here. We're down 0.2%. Merck potentially going to be taking over MoonLake Immunotherapies, which makes some skin drugs, and actually it's worth a few $1 billion. That stock was rising around 20% in the pre-market, but Merck itself actually slipping very slightly given that news flow, that report out of the Financial Times. Then finally, in the online dating space, a bit of a move to the downside. Bumble hit today. We're down 5.5% on this one. Gen Z not doing enough dating online. I think they prefer the IRL in real life dating, according to JPM. So JPM cuts the stock to underweight, says the price target needs to come down, and also potentially the new users and new additions in the next quarter are going to disappoint. And as usual, take a look at the before the bell opening wrap for a wrap up of all these news movers and more. Back to you, Matt.
Always read that at 5:30 a.m. New York time. Joe, thanks very much for that. Now, in just moments, we're going to speak with Paul Donovan, the chief economist at UBS. And then later this hour, we're going to get JP Morgan's Kelsey Barrow joining us to discuss the labor market. I want to take a quick moment to correct the CPI numbers that I read on air, because you saw the correct headlines on the Chiron, but I, for some reason, have Croatia plugged into my terminal. So it wasn't 0.4% and 3.5%. Month over month, the CPI was unchanged for the Eurozone specifically, and the core year-over-year number was a gain of 2.3%. 2.3%. The expectation was 2.4%. So much more in line with expectations there. Don't miss, by the way, our exclusive conversation. You must have seen just now her picture. U.S. Secretary of Agriculture Brooke Rollins joins us on trade negotiations around food and crops. That's at 5:30 a.m. New York time, as we also watch to see how much the government allows ethanol to be put into our gasoline. We'll ask her about that as well. Now, the OECD has slashed its global economic forecast for the second time this year, with the U.S. being hit the hardest, citing President Trump's trade policy. It now forecasts U.S. economic growth to slow to 1.6% this year, down from a previous projection of 2.2%. Joining us now is Paul Donovan, chief economist at UBS Global Wealth Management. Paul, great to have you on the program. I wonder what your take is on the slowing growth picture in the U.S., as well as expectations for increased inflation here and a much more divergent decrease in the Eurozone. I just read a 0.0% month-over-month figure for
and it's a tax which is paid ultimately by the US consumer. We've got 4,000 years worth of history of how trade taxes work. The consumer ends up paying. So it's not surprising, I think, in the face of such a significant tax increase that we are then going to be seeing a slowdown in the economy. And on top of that, we have the effects of the uncertainty caused by the rather wild swings in policy that we have, not just on trade policy, although that, of course, is something where President Trump announces something and then retreats and then announces and retreats, but also on fiscal policy, where there is considerable uncertainty. And that's weighing on firms' willingness to commit investments, to commit to hiring, and that is going to slow down. But the pattern that we see in the States is likely to be, first you get the inflation hit. That's going to be the first thing that comes through. And then subsequently you get the growth slow down as consumers go from rising real incomes to falling real incomes as a consequence of these trade taxes.
So do you think we see a bigger slowdown then in 2026, Paul? Because 1.6% in 2025 doesn't seem as bad as we may have feared on April 2nd.
Well, bear in mind, what we're talking about here are annual average numbers. And the way that this works means that the boost to the economy in 2024, which pushed up growth, means that when we compare the average of this year to the average of last year, you're going to struggle to get a number below 1%, let's put it that way, in terms of the annual average growth rate. So some of this is just sort of a statistical sleight of hand. If we look at the momentum in the second half of this year, then I think we're probably looking at a fairly soft momentum in the US economy. Not so much elsewhere, but in the United States, you've got that softness as a consequence of the first round shock, the inflation shock, and then the second round effects, the uncertainty, the impacts on hiring that come out of the current policy stance.
What are the effects then on global growth of these tariffs, Paul? Because, if it's just a tax and we trade taxes on tips and Social Security for taxes on goods bought, yes, it may be regressive, but we're still getting that revenue. It's no big deal. Do you see then, though, a slowdown in growth in other countries because maybe Americans don't want to pay that tax?
Well, so this is where things start to get a lot more complicated. The first point, which we need to stress, this is not the 1930s. In the 1930s, everybody was fighting everybody else. Everyone was putting tariffs on everyone else. That's not what is happening here. This is the United States versus the rest of the world. The UK is trading very happily, in fact, more happily, with Europe. Europe is trading with China. China is trading with Japan, etc., etc. So this is something which is US specific, and that blunts the impact elsewhere. The second thing is, what is the reaction of US companies to the tariffs? And that does make a big difference, because US companies have a choice. They could go for market share, keep their prices unchanged, try and take market share from their competitors, and that, of course, would be very negative for exporters in the rest of the world. But if US companies say, actually, you know what, we're not going to go for market share, we're going to go for profit margin, we're going to raise our prices under the cover of these tariffs, then that means that whilst a slowing US consumer does do damage to rest of world exporters, that damage is more muted because the rest of the world still maintain their market share. Now, I suspect that we're going to be erring towards that scenario. US companies do raise prices as tariffs come in. They don't go for the market share so much, and that means again that the impact on the rest of the world is a little bit blunted. Obviously, we're seeing rate cuts in many other countries around the world because they're in a disinflation environment at the moment, which the United States is not. We've also got more room for fiscal maneuver in the rest of the world. We don't have these enormous deficits that the United States has got. Again, that provides a degree of support.
Paul, great to get your take on this stuff. Obviously very complicated, so really great explainer there. Paul Donovan of UBS Global Wealth Management giving us a little education this morning. Let's get to some of the other top stories trending on the terminal. Far-right lawmaker Geert Wilders pulls his Freedom Party out of the Netherlands ruling coalition, causing a collapse of the Dutch government. That exit triggers an election which would otherwise have been held in 2027. China's manufacturing sector had its worst slump since September 2022, falling to 48.3 in May from a reading of 50.4 in the prior month. The figure was below every estimate in a Bloomberg survey of analysts. It came as higher tariffs took a toll on smaller exporters, despite a truce in the trade war with the U.S., although that looks like it's been unraveling. Elon Musk is selling $5 billion in debt for his startup XAI. It's the latest in a series of fundraising events across his business empire as he pivots away from politics. Sources say the package includes a floating rate term loan, a fixed rate term loan, and senior secured notes, with proceeds going towards general corporate purposes. Coming up, the White House pushes for a Trump-Xi call while Secretary Lutnick shows optimism for a deal with India. More on trade talks next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Drop go bad. Every episode.
We're in.
On demand. Without a trace. Watch it anytime on demand on Pluto TV. Stream now. Pay never.
There's this guy. He doesn't care about the law. He only cares about what's right.
I am not a hero because I have nothing to lose.
Who are you, mister?
I'm just a guy who wants to be left alone. Got my eye on you, Jake Quellen.
Hook me up with a treat.
I love
it! When you need your sports in us now,
we're bringing you that breaking news right here on HQ.
Find it on CBS Sports HQ. Streaming free anywhere you are.
It's Jobs Day, and Bloomberg has the report under surveillance.
The risk was a downside surprise, the reality an upside surprise.
The shock has affected outcomes.
There's a pretty big cliff from an economic perspective.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data. Speed.
American exceptionalism continues.
This is not what we're going to experience. Trump data.
The May Jobs Report, Friday on Bloomberg.
Trump wants to talk at the very highest levels. That's not always how the Chinese want to do business, and I'd be curious to see if they're able to make any headway. Trump doesn't want to go through the back channels. He doesn't want to go through the ordinary course of business, being in business or in his first term in office. He wants to talk to the principal. He wants to talk to President Xi himself. So we'll be curious to see if the conversations that the White House has telegraphed actually do take place.
That was President Trump's former White House acting chief of staff, Mick Mulvaney, speaking to Bloomberg Television earlier. Simmering trade tensions between the U.S. and China seem to be at an impasse ahead of a potential phone call between President Trump and his counterpart, President Xi, if that even happens. For more on trade, we're joined by Bloomberg's global trade editor, Brendan Murray. And Brendan, I guess my first question would be, how likely is this call to happen? Because President Trump has been asking for it, as have his cabinet members, for months now, and Xi continues to demur.
Yeah, exactly. There's a real clash of culture here when it comes to trade negotiations. As Mick Mulvaney was saying, the Chinese want to do a lot of back channeling. They want to have some deliverables that both leaders can announce after a call like this, rather than the leaders meeting and setting the tone for a series of conversations. So it would appear that the Chinese are digging in their heels here, and the U.S. side, the White House, the officials we've heard from in the past 48 hours are really pushing for this call to happen. But they seem to be, that message seems to be falling on deaf ears so far. The Chinese will want some sort of concessions to the tariffs that the president has in place. But Trump doesn't seem to be ready to budge much on his side either. So it is a real a chess match here that's at a stalemate.
Right. I mean, one side is begging for a phone call and the other side isn't. So that kind of shows you how the balance of power shakes out. What do we know about the deal that Scott Bessent and his Chinese counterparts negotiated in Geneva? Is that deal still holding, or is that done?
Well, both sides are pointing fingers at each other, saying you haven't lived up to your end of the bargain on that. That was 3 weeks ago. The U.S. wants China to sort of unlock the control it has over critical minerals, things like magnets and other sort of things that are needed for advanced technology. China wants the U.S. to ease up on export controls of high-tech equipment like semiconductors. And so both seem to be pointing a finger at each other and saying, hey, you said you do this, but you're not doing it. And so that deal, while it doesn't look to be holding at the moment, it isn't broken just yet, but it seems to be very fragile. And the tone, the move, the impetus seems to be moving toward escalation as opposed to de-escalation, at least in the rhetoric.
All right, Brendan, thanks very much. Brendan Murray is Bloomberg's global trade editor. Now let's get to the domestic front. President Trump working the phones to try and sway his party's Senate holdouts to back his one big, beautiful, multi-trillion-dollar tax bill. He's also posted on Truth Social, calling on Senate House Republicans to, quote, work as fast as they can to get this bill to my desk before the 4th of July. Bloomberg's Josh Galou joins us now for more. Josh, what do we know about the holdouts? I mean, I'm guessing these are Republicans in states that would normally be getting a lot of, for example, clean energy subsidies, or Republicans in states that are going to see hundreds of thousands, if not millions, cut from the Medicaid rolls. So how do you sway those kind of politicians?
Yeah, that's exactly right. I think there's a clear playbook for the White House when it comes to the Medicaid cuts. They're trying to sell the idea that they're really diminishing the pool of people that are going to access Medicaid rather than cutting actual benefits, by disallowing undocumented immigrants or other people who they say are able-bodied and able to work. So having that work requirement. Whether or not people go for that is an open question. Josh Hawley, of course, of Missouri, is one of the biggest holdouts on Medicaid, and he said that Trump has assured him there won't be any cuts to actual benefits, which seems to work for him. We'll see if it works for others. But whether that's enough to satisfy the fiscal hawks is another question, because the House bill at least is meant to add $3 to $5 trillion to the debt over time, over the 10-year period. And you have Ron Johnson, you have Rand Paul, you have Mike Lee, and others who are really pushing for deeper cuts. And where you're going to find those is tough to see. And as you pointed out, clean energy is one of the big ones. But you have people like Tom Tillis, Collins, Murkowski, that they have enough support that if they really are willing to block the bill for that, they can, because Trump can really only afford to lose 3 votes in the Senate.
So, having said that, Josh, why is no one concerned that this bill doesn't pass? Is it just that changes need to be made, but eventually we're all confident it gets over the line?
Well, I think there's a lot of confidence that it's going to get over the line. Whether it happens on Trump's timeline is another question, because the things that the Senate is talking about are also very different from what the House wants. The House, it barely squeaked by in the House, and the Senate, for instance, one of the sticking points for the House was the state and local tax deduction. And that's driven by high-tax states like California, New Jersey, New York. In the House, there are Republican representatives who wanted that the cap to be raised. But in the Senate, they don't care as much. The people from the senators from those states that care about SALT are Democrats. So it's an entirely different calculation right now, and they don't need those people to come along with them for this vote. Whether it gets, Tillis says that they're going to have a draft to Trump by this weekend. That seems ambitious given all of the discrepancies that are still out there. But it still seems like a pretty long and patchy road ahead.
So what you're saying is there's a chance that the state and local tax deduction, already capped by President Trump in 2017, is going to stay capped, possibly at a lower level than the House has negotiated.
It's certainly possible. I think the House negotiated it up to $40,000 and from $10,000 after it had been uncapped before, and the Senate is talking about a compromise there.
Josh, thanks so much for joining us. Josh Galou there talking to us about the one big, beautiful bill. Coming up, tensions escalating in the war between Russia and Ukraine. More in your front page news next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want?
You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football?
Let me see a mirror so I can look at it.
Are you a billionaire yet? None of your business. Then you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looted?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem.
How is this possible?
Oh, come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley.
I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi.
I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
Hit it.
We need stories, characters, love.
Wherever we go from here, we go together.
We need pride. Explore A Mountain of Pride on Paramount Plus.
Time now for our front page news, a look at what's making headlines around the world. First up, the Wall Street Journal leads with the escalation of the Russia-Ukraine war. Despite saying they want peace, this follows the weekend's drone attacks in Russia. The two sides met for a second round of talks in Istanbul, but the meeting lasted barely an hour, producing only an agreement to exchange prisoners, nothing more. Next up, on the FT, the Polish government is bracing for a confidence vote on Donald Tusk. After a bruising defeat in the recent presidential race, Tusk aims to reestablish unity in the cabinet and has an emergency plan in case of difficult cooperation with the new ultra-conservative president. And on the New York Times, more details have emerged on the suspect in the weekend attack in Boulder, Colorado. The suspect came to the U.S. in 2022 and lived with his family in a suburban neighborhood. He told police he disguised himself as a gardener when he headed towards members of a Jewish group walking downtown before attacking them with incendiary devices. Coming up, we'll take a closer look at food standards and trade.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
It's just like our new house.
I hope you have an American Home Shield warranty. Leaky toilet? Fixed. Oven beyond repair? If AHS can't fix your covered item, they'll replace it, no matter its age.
Sign up today at ahs.com.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go. 60 Minutes. Is this what you want?
You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football?
Let me see a mirror so I can look at it.
Are you a billionaire yet? None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looted?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem.
How is this possible?
Oh, come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley.
I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi.
I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
We're gonna put birds on things. Put a bird on it. What happened?
I fell through the floor again.
Everyone's been so nice to me.
Everyone?
Well, not you.
Good Good morning. It's 5:30 a.m. in New York City. I'm Matt Miller in for Danny Berger with your Bloomberg Brief. Here's what you need to know. Stock futures dip as trade uncertainties linger, and the OECD slashes its global economic forecast, citing President Trump's tariffs. The president presses on Republican holdouts to back his multi-trillion-dollar tax bill as senators return to Capitol Hill, and Microsoft cuts more than 300 jobs in addition to the company's largest layoffs last month. In terms of the indexes, futures are down, but we did finish in the green yesterday, even with a red start to the trade. The S&P 500 closed up 0.4 to 59.35. You can see S&P futures now down about 0.4 or 0.5%. NASDAQ futures down 0.4, and Russell 2000 futures falling as well. Treasuries have been all important for this market, but look relatively tame today. U.S. two-year yield coming down almost 2 basis points to 3.92. The 10-year yield coming down more than 2 to 4.41, 4.42, and the U.S. 30-year yield trading well under 5% at 4.9428. For some of the stocks to watch this morning, let's get over to Joe Easton in London. Joe, what do you got?
Hey, Matt, so Microsoft in the radar once again. We are seeing that stock slipping only by around 0.3%. Remember, we got news of the company laying off around 300 workers. This is according to a state filing seen by Bloomberg, and does come just a couple of weeks after we saw around 6,000 layoffs at the company, the biggest layoffs in years at the firm. Keep an eye on that one in pre-market. Then I've got UBS on my radar. Now, UBS has a big ruling coming up on Friday from the Swiss government around how much capital they need to have on their books following that big takeover of Credit Suisse that we saw a couple of years ago. Now, analysts at Jefferies saying there is too much fear heading into that report from the Swiss government, and they upgrade the stock to buy this morning, and therefore we're seeing the shares gaining around 2.5% for UBS in the pre-market. And then a different kind of broker move, this over in the online dating space. JP Morgan downgrading Bumble today, and that stock falling almost 6%. JPM saying that the Gen Z users are cutting back on their online dating. I think Gen Z needs to be a bit more romantic to help this stock out, but we're seeing it down 6% at the moment. JPM reckons they will see a drop-off in their active users when Bumble next reports its quarterly update. So that broker move really hitting the stock today, Matt. Bumble declining almost 6% in pre-market trading this morning.
There's nothing you and I can do about it, Joe, because you know how Bumble works, right?
We're well past that, I think, in terms of the Gen Z element, at least.
Yes. No, I mean, we're too old for sure. But the thing is, the woman has to make the first move on Bumble. That's what differentiates it from
Right.
Tinder
okay.
or
Yeah. I'm well out of line with these data.
Joe, as well, you should be. Joe Easton, get over to your desk and push the button on Before the Bell. Before the Bell is Joe's newsletter. Highly recommend checking it out. Comes out every day, New York time at 5:30 a.m. and really sets you up well for the trade. One sector at the center of the U.S.'s recalibration of trade is agriculture. Washington has been lobbied by farmers who've lost their biggest export market due to the tariff battle between the U.S. and China. Trading partners, particularly China, have also had to readjust their food and farming industries as they navigate a shifting trade landscape. For more, we're joined again by Bloomberg's Brendan Murray, our global trade editor. So, Brendan, this is pretty fascinating and important to the livelihoods of millions of Americans. What do we know about farmers' lost revenue due to the trade war?
Yeah, well, if you remember during Trump's first administration, he negotiated what he called this Phase 1 agreement with China. And in that agreement was a promise by Beijing to buy $80 billion worth of American agriculture products. Well, that deal went dormant during the Biden administration and remains non-existent today. So with the U.S. and China currently at a stalemate in these trade negotiations and trade between the two countries, that's really fallen a great deal. Farmers who've just planted their soybeans and their corn across the Midwest are looking at this summer going, well, who's going to buy these crops at the end of this? And so you've got the Trump administration trying to do these deals with individual countries. These are tariff deals and deals that address non-tariff barriers like food safety regulations and sanitary standards and those kinds of things. So the Trump administration is looking for other customers for American agriculture exports, and this is going to be a big issue for the farm vote as we head into the next several months. Now, what we understand is that Vietnam is looking to buy some, and there will be other deals between these countries. The Trump administration hopes to make up for that lost market in China. Maybe there'll be a deal with China that restores those purchases, but if for the time being, American farmers are looking out going, look, you've just, you kind of burned a bridge with our biggest, our export customer, and how are we going to replace that demand? So that's what the Trump administration is trying to address.
All right, Brendan, thanks very much. Global Trade Editor Brendan Murray there setting us up for the Secretary. Agriculture at the center of so many of the Trump administration's negotiation. U.S. Agriculture Secretary Brooke Rollins joins us now, where she is in Rome for meetings with Italian counterparts right now. She posted on X yesterday about her mission balancing trade and putting American ag first. I'm pleased to get the Secretary on a television with us, Brooke Rollins. Secretary Rollins, thank you so much for joining us. Let me first ask what you've achieved there in Rome, because as we know, exports to Europe and the UK have been important but problematic. They have issues with genetically modified crops. They have issues with the hormone that we use in our beef. They have issues with the chlorine that we use to wash our chicken. So what can we do about those kind of non-trade barriers, and what have you achieved there?
Well, thanks so much for having me on. A couple of quick top lines, and then we'll talk about that. The first thing is this, that the president's vision to realign the world economy around putting America first was long coming. For too long, America has been subject to a tariff regime of other countries, and now that's changing, and it's changing for the better for our country. So I think that's really, really important, and from my perspective, for our farmers and our ranchers. The second thing I think is important is being in Italy today. I was in the UK just a couple of weeks ago. I'll be in Vietnam, Japan, and India next month. That it is time that we move these products and continue to work on the world stage. Last night we had an incredible day, all day yesterday and last night, with my counterparts here in Italy. Their Minister of Agriculture, Lollobrigida, who is wonderful. We talked about getting more of our soybeans, more of our wheat, more of our great products from America into Italy and, of course, across the EU. But the third thing I'll say, and that is your point, that this concept that American agriculture isn't safe, or the genetically modified, whatever it is, there are thousands of research data compilations that prove that to be wrong. Those are called non-tariff trade barriers, and they are absolutely not real. It's not based in science, and it's time that changed. And I know our trade team from America has been working on that. They continue to work on that. We've got more deals that will be or should be announced in the next week or two, and that non-tariff part of that is a really important part. When people say the chlorinated chicken, only 5% of our chicken in America still uses that chlorine rinse, and even if more used it, it's still considered safe according to worldwide standards, not just American standards. Same on the GMOs, same on the hormones, et cetera. So we feel very confident we have the best product in the world, and we're going to keep moving it out.
Ms. Secretary, the issues that you're raising seem to be some that our own Health Secretary, Robert F. Kennedy, has with foods. The science clearly notwithstanding, right? He has issues with chemical treatments. He has issues with additives in some of our foods that are very similar to those that the EU and the UK have. Aren't you looking at changes along those lines for U.S. food standards as well?
Secretary Kennedy has been very clear that the American product is safe, and it is really the best. Now, where he comes in is, can we do better? And I think what everyone, everywhere in every product, every lane, it's always about how do we do better? How do we do better? How do we ensure that our products are continually improving? And we're doing that, and that's where he's coming down. But really, as part of the Make America Healthy Again Commission, as the mom of 4 teenagers, a MAHA mom myself, it isn't just, it's more about the ultra-processed foods. It's more about all of the other parts of the environment in America that are making our population as, you know, more unhealthy, chronic disease, et cetera, is at an all-time high. But this has nothing to do with our soybeans, our wheat, our beef, our seafood, all of the great products that are coming from America. And Secretary Kennedy and I are very close. We've talked about this at length. He's visited farms with me in Texas. We have another couple farms we're going to be visiting in California in the next month. So we are simpatico on this. Now, do we agree on everything? No, but we agree on most things. And I think that the American people under President Trump's vision will be the ultimate beneficiary of that. But also, as we are on the world stage, continuing to move our great farming and ranching products out there. And I know your guest a minute ago talked about China. Listen, we had a great deal with China in 2019. The Biden administration decided not to enforce it. And as a result, we now have a $45 billion trade deficit in our ag products. So that's what we're trying to sort of make up for right now.
I would have thought that RFK Jr. had a real problem with our wheat. I've heard him for years talking about the glyphosate used in pesticides and linking that to non-Hodgkin's lymphoma. So it's interesting. And I look forward to seeing that the two of you together visiting farms. Let's talk about the recalibration of trade. If you lose, say, $2 billion from food aid programs, but gain it in Vietnam, I know that you're headed there and they want to buy $2 billion more of our products. That's, I mean, that's fine, I guess, but it takes time to do those things. So in the meantime, we've seen soybean exports drop, I think, 79% below the 5-year average. Corn exports drop 49%. Do you have to make that up with some sort of farmers subsidy program? In the first administration, President Trump gave the farmers $28 billion. Is something similar like that going to happen again this year?
Well, we remain really convicted that we're just at the beginning of these renegotiations, that the market has reacted, but at the end of the day, inflation is down, jobs are up. We continue to see a positive sign. Specific to soybean, corn, really our row croppers, that's really a very direct result of China. And I know we're making progress on China. We'll continue to make progress, hopefully. But if we don't, opening up markets all over the world. Listen, EU, for example, charges a 10% tariff on average on American products, and vice versa, we only charge 5%. That's 2x. The average tariff charge around the world is about 15% on American products, when we charge on average 5%. We've been taken advantage of over and over and over again. So as we are realigning, we're also opening up these markets with the trade deal. The UK just a couple of weeks ago was a massive deal. 25 years we couldn't get a deal done with the UK, and now all of a sudden we have the deal. And that will be extremely beneficial for our corn farmers, our soy farmers through ethanol, and our beef cattle, et cetera. So you'll continue to see this moving forward. Now, if around harvest time, into the summer, beginning of the fall, we see some real economic harm with our farmers, our president has been unequivocal in saying that he's got the farmers back. And if there is short-term consequences, we'll make sure to do everything we can to mitigate that. And I'm here to execute on the president's vision. So yes.
Can I ask about ethanol specifically? I'm from the great state of Ohio. I grew up surrounded by corn farmers, and I have a lot of respect for the work that that those farmers do for our country, really for our national security. And it's delicious. But I'm also a fan of the big American V8 motor, and I do not want to put ethanol-based gasoline in my car. I'll drive miles to get premium grade fuel. It doesn't have any ethanol. What are you thinking about in terms of the level of crop-based biofuels that should go into gasoline?
Well, I think the most important thing to realize is that we've got an energy national security crisis, and that there are many different ways to solve that. And that's what Doug Burgum and Chris Wright, two of my cabinet counterparts, are really focused on. The President Trump, talk about being unequivocal. He's been unequivocal in his support for ethanol and biofuels. And it isn't just about America. And listen, this is the great thing. It's America, where you can choose what you prefer and what you want to put in your vehicle. But the ethanol conversation that's happening around the world, you talk about the UK, which whether we agree or not, I happen to not agree, but their goal is to get to net zero, right? Net zero, which again, we could have a whole other show on that. But in order to get to net zero, they're going to need our biofuels from America to do that. So it isn't just about specific to, you know, what you're going to put in your truck when you drive across Ohio, which there may be some that disagree with that, what you just said, but it's also about where America stands on the world stage. A, how we achieve energy independence, but B, how we continue to support our great farmers and our ranchers. And food security is national security. And I think that's really important. If we don't have a strong agriculture sector, if we can't feed ourselves, we are no longer the superpower in the world. And so all of this, it's a complicated sort of balance that we're striking, that we're working to achieve. But with the president's vision, and I think with arguably one of the greatest cabinets in the history of our country, we will achieve it for the American people by putting America first.
Mr. Secretary, thank you so much for your time. Really appreciate it. U.S. Agriculture Secretary Brooke Rollins in Rome. Coming up, JOLTS data comes out later this morning ahead of the jobs report on Friday. We're going to push ahead with J.P. Morgan's Kelsey Barrow next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Shopping, working, and relaxing online can attract various digital threats. To improve your protection against them, just turn on NordVPN. This cybersecurity app will block web trackers and malware-infected sites. It will also encrypt your internet traffic without losing a smooth connection. Get the deal now. NordVPN, cybersecurity built for every day.
Why don't you like us anymore? Why are you leaving us? Oh, we're so sad that you left us. You don't even know me. LL Bean. There are questions that I would say are straight up homicide inducing.
Hot take. Nobody thinks your kid is as cute as you think your kid is.
I've had it with pictures of food.
I've had it.
Being able to look at a screen and see myself is like no feeling in the world.
Get it.
That's how my friends hang. Get in, loser. That's how I dress.
It's who we are.
That's how I love.
Wherever we go from here, we go together. I have loved you my whole life.
We need stories, characters, love.
That sounds great.
We need pride. Explore a mountain of pride on Paramount Plus.
Celebrate National Game Show Day all month long with our favorite wins on Buzzer.
Cement. Concrete.
I was so busy thinking of a clue.
Oh.
I've got one. Have you?
Section. Slab.
Yeah! Oh, that's great, Laura. That's just great.
Celebrate all month long. Watch now on Pluto TV.
Brenda is a CIA-trained interrogator with specialization.
Do I make myself clear?
A host of jobs data coming this week, starting with JOLTS at 10 a.m. today, ADP on Wednesday, jobless claims on Thursday, and the all-important payrolls report on Friday. J.P. Morgan's Kelsey Barrow looking ahead to Friday, writing, quote, "We view the labor market as treading water. Companies are not firing workers, but we don't see any reason they should be accelerating hiring either, given elevated trade and policy uncertainty. On the margin, though, Shadow's slack does appear to continue to build." Kelsey joins us now. She is fixed income portfolio manager at J.P. Morgan Asset Management, and we'll get to Treasuries, obviously, but I want to ask first about this, not necessarily jolts this morning, but just the labor market in general. How does it look to you? Because I'm sure Jay Powell and the Fed have really been weighing which side of their mandate to pay attention to. It doesn't seem like labor is that much of a problem.
Labor is not a problem, but it's not a problem in a few different ways. So the thing that the Fed was concerned about in prior years was that the labor market was a source of inflationary pressure, particularly wages. Now, I think the labor market has rebalanced and continues to rebalance such that we feel fairly confident that labor market isn't a source of inflationary pressure right now, which is why you've seen so much stability in the front end of the Treasury curve. So today, when I look at the JOLTS report, what I'm expecting to see is a continued deceleration in job openings, a continued deceleration in the quits rate. All of these things suggest continued moderation in wages. That's not something that's going to get the Fed to jump as it relates to changing policy, but it keeps them comfortable with the current policy stance.
On the inflation side of the mandate, that also doesn't seem to be a problem, right? I mean, they want to get down to 2%, and by some measures, they're bang on that.
Right, 2.1% on headline PCE year over year, exactly. So they're kind of in this position where they can wait and see, which is exactly what they've been communicating. But if I think about the risks, I do think that they're asymmetric towards the risk that we could see weaker growth data, weaker labor market data, particularly relative to what we saw last month. So I look at the job growth data we saw last month, 177,000. Was the job growth created in the April payrolls report. I don't expect that we can maintain that pace of job growth, particularly when I look at things like continuing claims, which continue to trend higher. I look at the Conference Board labor differential. You know, you've seen a rebound in consumer sentiment, but you haven't seen a rebound in some of those specific labor market focused questions. Those continue to show it's kind of a tricky time to be finding a job.
But you do expect then, if you're more concerned about growth, then I imagine you're pricing in cuts for this year.
We do think that later in the year you may see cuts. What I would say is that the risk is that they happen later, but the risk is also that they could do more in the end. So kind of similar to what we saw in 2024, where the Fed held off for a while, and then ultimately they saw the labor market start to slow, and they reacted more aggressively.
So in a vacuum, right, if you told a trader the Fed is going to cut later, you want to own today's debt, right? But we've been seeing bouts of selling in the Treasury market, especially at the long end, and that's on concern about our growing budget deficit. How much of a concern is that? Because, to be honest, we're not at 4.5 on the 10-year. We're not at 5 on the 30-year. Like, the alarm bells aren't ringing right now.
Right, but we were not that long ago, and so I think people are still on edge. So we have been thinking about a range for the 10-year yield this year of 375 to 450, and it was tough when we were up at 450 and we were testing those levels, but it does look like we've settled in a little bit here. And I do think that there is a fair bit of term premium already priced into the long end, reflecting what are real concerns about the deficit. But those, I would say, are generally already priced in. And so I think the risk is a little bit more two-way here. And the question is, what are the catalysts that can get us lower from here? So term premium is elevated. The long end, on a historical basis, valuations look quite attractive, but you need a catalyst to reprice. On the technical side, I think there are some catalysts that we should be watching, particularly as it relates to the debt management offices in the U.S. and also abroad. You look at Japan today; they had a 10-year auction. It went well. Part of the reason it's going well and the things have stabilized a little bit is that the debt management offices there are indicating that they're going to be adjusting their issuance patterns to cut some of that long end supply. I think that is essentially kind of inevitable for the U.S. as well, that they're going to need to start to think about where is the demand on the curve. The demand right now is clearly in the belly and the front end, and how can they adjust their issuance patterns to support where the demand for fixed income really is.
So much for issuing a lot more long-term debt. That's what this administration was
where the demand for fixed income really is.
So much for issuing a lot more long-term debt. That's what this administration was complaining about at the front end, right?
Right, but we have a different treasury market now, and we have a different curve now. The yield curve was inverted back then. The yield curve is now very steep, and it could continue to steepen. And in that environment, when you're looking at getting the most cost-effective, interest costs for the treasury, you're looking at a different situation now.
All right, so do we see the curve continue to steepen then? I mean, do you see long end demand just not there, and do those yields rise?
I don't think that they necessarily need to rise from here, but that's the risk. I think that the further curve steepening from here probably does need to come from some follow through in terms of expectations of rate cuts. So right now we're in a situation where I think the market is going to persistently, on like a 6-month to 12-month rolling basis, continue to price in some probability of rate cuts. But the base case for most people is going to be that the Fed stays on hold. To get a lot more curve steepening from here, I think it has to come from the growth data actually weakening and the market pricing in a more aggressive rate cutting cycle rather than further increases in the long end.
Not from a buyer's strike, because clearly international buyers may be offended, and we had a story yesterday that DoubleLine, PIMCO, and TCW are like either not buying or shorting the long end.
Right. I mean, and Bob Michael, the CIO of JP Morgan fixed income, who I work with, was also in that article stating that we need to be a little bit cautious in the 30-year part of the curve, and that there are some technical signals that we need to see before we really feel comfortable stepping in. But there has been a lot of value created, and it's about what are the fundamental or technical catalysts that are going to get term premium to reprice further from here.
Kelsey, great having you in here. Thanks so much for joining us. Kelsey Berry there from JP Morgan Asset Management. Give our best to Bob Michael as well. Let's get a look at what's ahead today. Dollar General earnings coming before the opening bell. Then we get the JOLTS numbers we were talking about, along with factory and durable goods orders at 10 a.m. And Fed speak today from Austin Goolsbee at 12:45 and Lori Logan at 3:30. That's it for Bloomberg Brief. Surveillance is ahead. I'm Matt Miller. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered all he needed in one place on Amazon Business.
Peter Piper picked peppers, but run, Humpty Dumpty fell down. Kids are time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
Why don't you like us anymore? Why are you leaving us? Oh, we're so sad that you left us. You don't even know me, LL Bean. There are questions that I would say are straight up homicide inducing.
Hot take. Nobody thinks your kid is as cute as you think your kid is.
I've had it with pictures of food.
I've had it.
Autobots, roll out.
Dear God, what is this?
You have to get in the car. Trust me.
We're under attack!
Oh my God. This is gonna be the start of something huge. Here's to us.
I'm an angel. I'm here to help people.
It's a miracle. The doctors, it's all they can say.
You've been an angel your whole life. Don't be afraid to believe what you feel in your heart.
You and your friend saved my life.
An awful lot of good people in this world, Mark. I'm just here to try to help them.
I really love this job.
So do I.
I've got my eye on you, Jake Quellen.
Hook me up with a treat.
I love it.
She's the yin.
Brain activity shifts to periaqueductal gray.
And she's the yang.
I have no idea what that means.
Watch Rizzoli and Isles anytime on demand on Pluto TV.
I think the market, has probably some near-term upside.
We do remain a bit more cautious on the long end of the curve.
When we look at the equity market, we see more risks on the downside than the upside.
If things stay status quo, then I think you have the opportunity to see the markets move higher.
What's going to drive things higher? And then it's got to be the environment and earnings.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back. All eyes still squarely on Washington, D.C., with President Trump working the phones to wrangle votes for the one big, beautiful bill. Trade tensions still high, even with a possible phone call between Xi Jinping and Donald Trump on deck. And the drip feed of economic data continues with the latest read on factory orders and job openings coming up today at 10 a.m. Eastern. Just a note, John is on a well-deserved vacation. Anne-Marie is on assignment. I would be here by myself with a white flag, but alas, we got incredibly lucky, and Damien Sassower has agreed to join me for the next 3 hours. Damien, thank you so much for doing this. I really can't thank you enough.
Oh, no, thanks for having me here. I mean, I love to be here. Let's get after it.
Are you having fun?
I'm having a lot of fun.
Honestly, I was looking
I think the makeup department's having a lot of fun this morning on me also, to be honest with you.
Well, I will say I was looking today at the series of different news that potentially could be swaying markets one way or another, and I was struck by the budget down in Washington, D.C., and how it's steadily gotten an increasing amount of attention. How much is this really going to dictate so much of the mood in effect, given the fact that bonds have been responding so much in lockstep to this?
Well, it's all about the 30-year, the price action at the 30-year. And you remember last week when we saw the move in the 30-year, that was kind of driven by that poor 30-year JGB auction. And just last night, we had a JGB 10-year auction, which came in pretty good, but we have another 30-year auction coming up in Japan. We're going to see whether that spills into the long end of the U.S. Treasury curve, or whether you're right. Maybe it is the big, beautiful bill and the rising fiscal deficit in the U.S., which is driving the zoo steepener, as Cam Dawson likes to put it.
I'm sure you will get all into the zoo steepener. Meanwhile, overnight, we did get a Truth Social from President Trump talking about how the one big, beautiful bill does not increase the deficit, does not necessarily cut Medicare and Medicaid. It doesn't necessarily do anything other than just give people tax breaks and continue with their policies. How much do you think Wall Street's listening? How much do they think that there is some faith that ultimately there will be some fiscal discipline in Washington?
Well, I mean, that's a very good point. And I really don't know, but I will say this, the Senate is definitely going to make their mark on this bill. I think, they are the adults in the room. They're going to try to do whatever they can. But from what I understand, President Trump is pushing through. He's working the phones. He's trying to push through its current iteration, and just how successful he's going to be is going to have a lot to do with whether or not you're right. The end of this, the 30-year portion of the U.S. Treasury curve really kind of reacts to that. I mean, I'm not so sure it will.
In the meantime, can we ignore the trade issues, or is that something that people are still paying attention to? How much has that actually been priced in with respect to a possible fall falling apart of the U.S.-China truce.
Well, it's funny because these steel tariffs, everyone's been pointing to that being a China issue, but it's really more of a Canada and Mexico issue from where I sit, you know? So I think what you're seeing is the Trump administration sort of readying itself, steeling itself for those negotiations with Mexico and Canada, which are our two biggest trading partners right now.
Meanwhile, what you can see is a buy-the-dip mentality that has been taking hold pretty much across Wall Street this morning. You do see a bit of softness, but this is where we were yesterday. If you take a look at markets right now, down about 0.4%, about where they were yesterday, and we ended with a positive tilt. Euro actually falling versus the dollar, weakening. A little bit of dollar strength. Let's see if that can hold. Yields marginally lower. This is the kind of price action exactly on the heels of what Damien was talking about, that successful 10-year Japanese bond auction. And then you have crude just a touch lower. But, you know, to me, I think that might be one of the most interesting things, the buy-the-dip mentality. And actually, that is what we got from Max Kettner this morning from HSBC, where he said that is the reason why he is a buy-the-dip kind of guy. This is incredibly bullish action to see everything really get bought, even with some of these lingering concerns about trade.
Well, Lisa, after declining slightly in the first quarter of this year, the U.S. economy is running hot at like 4% quarter over quarter right now in the second quarter. So, and look, inflation. I mean, if you look at J.P. Morgan's forecast for inflations over the 4-month period from May to let's call it August, CPI is going to be running at something like 6%. So you're right. Where is this catch-up of the hard data to the soft data? I mean, we all wish the Knicks had 9 games to beat the Pacers, but that's just not the case. We're all going to be sitting here waiting for the hard data to catch up.
And we all wish that the Knicks could have caught up to the Pacers, but alas, there we are. Coming up this hour, Cameron Dawson of New Edge Wealth and the latest market swings. Rob Casey of Signum Global Advisors as Trump urges the Senate to pass his tax package. And Leland Miller of China Beige Book as the White House pushes for trade talks with China. We begin this hour with stocks pairing gains on renewed trade uncertainty. Cameron Dawson of New Edge Wealth writing, the market has shown signs of resilience as it burns the overbought condition from mid-May. We think the pain trade is still higher. Cameron joins us now. And Cameron, it is so good to have you. Thank you for being here. A lot of people agree with you. And that's what we saw from Max Kettner this morning, where he said recent dips in risk assets have been very short-lived amid less supportive news flow. Our sentiment and positioning indicators are still flashing buy signals.
We still come back to that positioning indicator from Deutsche Bank, consolidated positioning, which shows that we're still just in the 23rd percentile. So despite a nearly 20% move, you still have so many people sitting on the sidelines. Now, that's important to note. It's institutions sitting on the sidelines, mostly these systematic traders. It's the lowest numbers in things like the CTAs as well as algorithmic traders, whereas you see the discretionary traders have gone a little bit more all in, as well as retail. Retail has definitely been buying the dip, and that's where we've seen the greatest flows into this market. So because you still have people sitting on the sidelines, though, we do think that it comes down to the pain trade being higher.
Does it matter that we don't have a trade deal, that the budget is being negotiated? Do any of these things that I opened the show with matter?
Yeah, we do think that they matter, and we're calling this the summer of mud. So it's a lot less exciting than Hot Girl Summer or Brat Summer. It means that we're just
You're crushing it, by the way. Carry on.
It means that we're just stuck in this muddle through, which means that from a policy perspective, we don't see a lot of things that are ultimately stimulative. We think that even if you do see the pain trade be higher, you still have valuations that are rather high, earnings estimates that have room to come down. So we still think that we're stuck in this sideways choppy range, a really muddy outlook from a growth perspective. So the summer of mud is what we get.
Well, Cam, I mean, I'd love to talk about stocks and bonds, but for me, it's all about the dollar. I mean, off 9% year to date, worst start since 1973. So, for me, the Trump administration tariffs, just how much runway does U.S. dollar weakness have in the current environment?
I think we should all be raising our eyebrows at a dollar that can't rally as the stock market rallies. And the dollar is not oversold yet. It rolled over, it broke through or tested 98 yesterday on the DXY. If that breaks, we could be talking about 95 on the DXY, which again is a challenge, mostly when we consider the environment that the Fed is set to be more tight than what we're seeing out of the ECB and other central banks. Usually, you would think that would translate to a stronger dollar, but now it's not, and it's all because of trade, tariffs, as well as what's going on with these budget negotiations.
Well, Cam, you make an excellent point. The correlation between the U.S. equity market and the U.S. dollar has tightened significantly. So let me ask you then this. Let's fast forward to payrolls. If we get a weaker print, Can we see a lot of dollar weakness? If we get a better than expected print, is the dollar going to strengthen off of that? What's your view there?
Well, I do think that we have to have this through the looking glass kind of perspective when it comes to market reactions. We do think that if you do see a weaker print on non-farm payrolls, the first order reaction is a lower 10-year bond yield, lower 30-year bond yield, meaning that we get a rally across the curve. If payrolls mostly come in below 100,000, then it's a guess of what the dollar does. The other important thing about the dollar that we have to note is that futures positioning is incredibly short, meaning that everybody is now positioned for a weaker dollar. So as the pain trade in stocks could be higher, the pain trade in the dollar could also be higher.
Are we getting a little bit carried away? When I talk to a lot of investors and I ask them, is U.S. exceptionalism over? Are you seeing this massive flight of foreign investors from the U.S. market? They all say no. They all say that actually their foreign investors that they deal with are not shifting away from the U.S. en masse at all. They might express displeasure. They might use corporate executives as their bouncing off points for how much they are concerned about policy, but they're not actually taking action with their dollars. And actually, they do have confidence in corporate America. Do you think that that's not true, or that that's on the brink of fading?
B of A just published a survey that showed that you have seen $138 billion annualized into equity flows from foreign buyers this year, which is nearly at the record that we saw $155 billion last year. So as much as we have had this narrative that nobody wants to buy U.S. assets, we're still seeing inflows. The inverse of that, though, is that if you look at the inflows into U.S. bond funds, it's only been $3 billion. So people are still buying U.S. equities, but not buying U.S. bonds. The other thing to watch, though, is that revenge tax that's in the bill that's being considered. Could that mean that we see less demand for U.S.-based assets if we start taxing that passive income that's part of the revenge tax? Big question.
Yeah, that's a concern for a lot of people. Exactly what the ramifications of this bill. I believe that that's 899, Section 899. There's a big op-ed challenging that in the Wall Street Journal today. I recommend people read it. It's sort of a compelling read. I'm curious going forward what you're looking for to understand whether this narrative has more legs to it rather than just simply a timing trade, maybe after a really strong period in the dollar, and frankly some concerns about duration in the U.S. right now.
Yeah, I mean, I think that is the biggest question, is that do we see duration risk continue to be something that people want to avoid even as yields test prior highs? We have seen people step in and buy dips within bonds at 4.8% on the 10-year, 5% a couple years ago. The question is, as you start potentially testing those levels, is the appetite for duration as much, given the fact that we are dealing with all these fiscal concerns? And I think the big question for us is whether or not the Senate's version of this tax bill is going to be even more deficit inflating than what we saw from the House, because of some of the considerations about not wanting to do as many spending cuts.
European harmonized CPI collapsed to 3% overnight. It was expected to come in at 3.8%. That all but solidifies the fact that the ECB is going to cut by 25 bips on Thursday. We've seen cuts from South Korea, South Africa, Indonesia, the whole slate across the world. Yet, if CPI is really going to be running at something like 6% over the next few months here in the U.S., just how much scope will the Fed have to cut rates in the face of all these other central banks being able to stimulate their economies?
Yeah, and I think the other thing to note is that a lot of these economies are dealing with much weaker growth than what we're seeing within the U.S. It's pretty wild to think that German unemployment is at 6.3%. It peaked in 2020 at 6.4%. So with weaker inflation as well as much weaker growth in the Euro area, the ECB just has a lot more room to cut. And the Fed is telling us that they are in no rush to cut whatsoever, that they're going to look through some of this soft data that shows weaker, potentially weaker growth. Right. And note, the soft data is actually rebounding a little bit as we've seen some sentiment rebound post the tariffs being walked back.
Yeah, this is a real key question. How much will that divergence continue? And how much is the Fed actually not going to cut, especially if you do start to see growth falling off in a significant way? Cameron Dawson of New Edge Wealth is also sticking with us for the hour, which we are so pleased about. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Senate Republicans are considering making significant changes to President Trump's tax bill. Senators are looking into the potential impact of a so-called revenge tax buried in the fiscal package. The provision would increase tax rates for individuals and companies from countries whose tax policies the U.S. deems discriminatory. Meanwhile, China's manufacturing sector slumped the most since September 2022, according to a private survey. It fell to 48.3 in May from 50.4 in the prior month, well below the 50 mark, separating expansion from contraction. The results were far weaker than the official PMI reading released on Saturday. And the government in the Netherlands has collapsed. Far-right lawmaker Geert Wilders announced on social media that he's pulling his Freedom Party out of the country's ruling coalition because the three other main parties refuse to agree to his plan to curb migration. This move forces the Netherlands into a snap election. Otherwise, the next vote wasn't scheduled for another 2 years. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Coming up next, looking for savings.
I want this to pass, but there's no reason that the Senate should just simply rubber stamp it when we can do so much better. I do think, though, by and large, it will look similar to the House bill, but we just may be able to find some other places for savings.
Rob Casey of Signum Global Advisors joining us next. This is Bloomberg Surveillance.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Upstairs and fool around? No.
Pluto TV has 3 classic sitcoms all in one place.
Let's have a toast.
Mama's Family, Married with Children, and All in the Family.
I can't kiss you.
It's okay, you got kissed the Brillo pad.
Classic TV Families Channel on Pluto TV.
This is 48 Hours.
This is why we have a death penalty.
The dark side of human nature turns all of us into detectives.
Fun place, isn't it, Mama?
It's a dump. There goes my appetite.
Coming back to a Tuesday with a little bit of losses, but this kind of feels like deja vu. It looks almost exactly where we were yesterday, except with dollar strength rather than dollar weakness. But what you can see is a little bit of weakness across the board, down about 0.4% on equity indices in the United States. Yesterday, we started the same way. We ended positive. Why? People buy the dip, and that is telling us something. That's something that Max Ettner underscored of HSBC this morning. Under surveillance this morning, looking for savings.
I want this to pass, but there's no reason that the Senate should just simply rubber stamp it when we can do so much better. I think it was interesting listening to the leader from the House say they don't think there's any way to find more savings, and I think that's really the thing we have to do. We will not be able to pass the bill without finding some more spending cuts. I do think, though, by and large, it will look similar to the House bill, but we just may be able to find some other places for savings.
Here's the latest. President Donald Trump trying to sway Republican holdouts on his one big, beautiful bill. Trump posting on Truth Social, I call on all of my Republican friends in the Senate and House to work as fast as they can to get this bill to my desk before the 4th of July. Bloomberg's Tyler Kendall joins us now from Washington. Tyler, I want to start there. How much is there a sense that July 4th is getting further away, and some of these calls have to be made throughout the night even more so?
Yeah, hey, Lisa, good morning. Well, it's definitely an expedited timeline, but we can say that at least one senator, Senator Thom Tillis, a Republican from North Carolina, did tell reporters yesterday that the Senate is going to try to get a finalized package in the next 10 to 15 days over to the White House to review. Now, of course, a lot of different things actually need to happen as President Trump is dealing with conflicting demands from members of the Senate who say that they want to make their mark on this House bill. On one hand, you have a group emerging that is pitching themselves to be more fiscally conservative fiscal hawks, perhaps run by Senator Ron Johnson, a Republican from Wisconsin, who did have a call with President Trump yesterday and says he plans to meet with the White House's economic team. And at the heart of this is that Johnson says he wants to see deeper spending cuts, and he's also taken issue with claims that some of the tax priorities, like no taxes on tips or overtime pay, could really incentivize growth. But on the other hand, President Trump has to contend with those more moderate members who are raising concerns about really what's at the heart of the spending cuts, which are changes to benefit programs, including how quickly work requirements could be instituted when it comes to Medicaid, and also that the House plans to freeze the Medicaid provider tax and also shift some of that cost sharing on to states. President Trump doubled down in his post on Truth Social yesterday, saying that there would be no cuts ultimately to Medicaid, but we know there's a few different analysis out there, Lisa, including one cited here at Bloomberg News that projects about 7.7 million people by 2034 could ultimately lose benefit coverage because of shifting eligibility requirements.
Tyler Kendall of Bloomberg, thank you so much for being with us. Right now, Rob Casey of Signum Global Advisors here in studio. Rob, great to see you. I want to start there. How difficult is it going to be to get some of these Republican senators on board, given the fact that, as Anne Marie said yesterday, they're all kings at a time of very slim margins?
Yeah, it's true. I mean, many of these senators, I think that the five that you all highlight are probably the five to watch. Many of them want to have their fingerprints on this bill, right? Generally speaking, the Senate sees the House as being an inferior legislative body, right? They want to write their own bills. They want to then force the House to vote for them. But in this case, there's only one king, I think, and that's President Donald Trump. He wants a one big, beautiful bill. He wants it as soon as possible. I think July 4th is a really hard deadline to meet, but I think by the August recess, he's going to be able to have everybody coalesce around this bill like they did in the House.
You said there's one king. The one king put out a truth yesterday that said that it doesn't increase the deficit, that actually it does everything good and nothing bad, and that everything bad is a Democratic fiction. Do you think that there are enough Republican senators who will just take him on his word?
I mean, the short answer is yes. Will they take him at his word? No, they're all pretty smart, right? They can read a pretty simple math equation, which is that this is going to add to the deficit. The thing about senators like Ron Johnson, among others, is that, well, first of all, Donald Trump can lose three of them, right, and still pass this bill. So it's not to say every single one is going to vote for the reconciliation bill. The thing about these senators, though, is they want to get reelected, right? And maybe some of them aren't reelected for another 2, 4, 6 years, but they need Donald Trump in their corner between now and then. And so, frankly, I do think that they will listen to the president. They will make their tweaks, no doubt about it. But the president himself has said that he's okay with tweaks, right? He's okay with some changes. And I think that's him setting up, going back to the House and saying, yes, the Senate made some changes, right? Maybe SALT's a little bit lower. Maybe the deficit expands a little bit further. You now have to eat this because we're in July, and I'm asking you to.
Rob, the focus is on future spending. It's on the bill. But I want to ask you a little bit about the rescission request that President Trump is sending to the Office of Management and Budget today, the one that's going to request for a $9.4 billion clawback on all that U.S. aid funding and public radio and broadcasting. Is that just the first of many to come, and will it be successful?
The first of many, I would say probably not. The truth of the matter is, right, we've sat around this table before for months talking about cuts, right? First it was Doge and Elon Musk. Second of all was all these cuts to Medicaid and to SNAP and things supposed to be included in this bill. Some of them certainly are. But I think the truth of the matter is that this Republican trifecta in Washington is learning what many trifectas in Washington have learned before, and that is there just aren't that many places to cut, right? And it's incredibly unpopular to cut. And so do we get this $9-10 billion rescission package? Yeah, I think it probably passes for the most part, right? There aren't that many Republicans out there who are going to defend, USAID, NPR, et cetera. These are their punching bags. But are we going to get a lot more of that? I think probably not.
Rob, we know where the cuts are coming from, the proposed cuts, that is Medicaid, state and local tax deductions, EPA, clean energy credits, et cetera. But I want to know, where are the new tax funds expected to go? I heard shipbuilding, I heard air traffic control. Talk to us a little bit about where taxpayer funds are going to be redirected in the new bill.
Absolutely. Well, I mean, obviously, if you listen to President Trump, if you listen to him on the campaign trail and listen to him today, he's talking about no tax on tips. He's talking about no tax on overtime. Those have been really pretty significantly narrowed by the House and the Senate. What we hear from the Hill is that, honestly, Congress people aren't incredibly enthused about those policies. They don't see them as being pro-growth, growth-driving policies. I think that makes sense to a lot of us. But they understand that that is what President Trump wants to, wants to run on. President Trump isn't running for anything, but it sort of feels like he is, right? President Trump is always in campaign mode. And so those are what they're pointing to. And then, yeah, I mean, to your point, there are some sort of shifts away from some green investment, some, a green energy spending to what I think we would think of as slightly more traditional, infrastructure investment, energy spending. But that shift is not all that significant.
Rob, not to get too technical, but will we be talking about the Senate parliamentarian this summer? Meaning, could we see her review of this bill potentially delay its ability to get to that July 4th deadline?
We definitely will be talking about the parliamentarian, potentially a lot, right? So all of this has to pass, and this is unique to the House, unique to the Senate, not so much in the House. Everything has to have a budget impact, right? That's review for everybody here, everybody watching. But the truth of the matter is, a lot of these policies may not have a budget impact, right? You were just talking about Section 889. There's a huge question as to whether or not that is going to have an explicit impact on the budget one way or the other, right? And if it doesn't, the parliamentarian is going to say it can't be included in the bill. Now, Republicans have opened up the possibility that they're essentially going to not listen to the parliamentarian. They can do that. It's been done once before. I believe it was Senator Rockefeller at the time who didn't listen to the parliamentarian, moved forward with something, and then had to apologize about that profusely. But if you listen to Leader Thune, among others, there's a chance that they essentially go around the parliamentarian, and that is akin to breaking the filibuster, right? So that would be the nuclear option. It would certainly open the door for, Medicare for all the next time Democrats have a trifecta.
And you mentioned that the Senate version could add even more to the deficit. How much more as we think about the long end of the bond market?
Absolutely. Well, I think that is where these 5 Republicans in the Senate come in who are going to kind of constrain this spending. I think Ron Johnson in particular is probably the majority maker here, right? The 50th or the 51st vote. They are going to constrain the deficit expansion from here. I think maybe a couple of months ago, consensus was that the Senate was going to blow out a lot of these spending cuts. I think the truth of the matter is most of the spending cuts stay in at this point, right? So the bill, I mean, we heard Senator Kramer, the bill probably looks relatively similar to what we saw in the House. Maybe the Medicaid cuts are pushed back out in terms of timeline, but in terms of the actual policy, like the teeth of the policy, I think they remain relatively the same.
Rob Casey of Signum Global Advisors, thank you so much for being with us. I imagine you get a lot of phone calls because everyone's a congressional expert these days, no?
Yeah.
It seems like it. Rob Casey there of Signum Global Advisors. You raised a great question, Cameron, which is essentially what will the bond market pay attention to? And what will actually trigger that Liz Truss type of moment that we've heard about, or the cracks in the bond market, as Jamie Dimon warned over the weekend?
It's one thing for you to say it doesn't add to the deficit, but we can all see the numbers. And so really the bond market's reaction, we do think bond yields would be lower if it were not this bill being debated right now.
Well, I mean, I think it's more, I mean, look, again, you mentioned it a little bit earlier. It's about positioning, and it's about position size, and it's about magnitude, and we just don't have any color on that yet.
I love that we're going to be talking about the parliamentarian, and I love that everybody is whipping out their Congress history books and understanding exactly how it works. We're also whipping out our future books when it comes to artificial intelligence. Coming up, Matt Wood of PwC on whether AI is coming for your job. The answer, it depends what your job is. This is Bloomberg Surveillance.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want? You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him? Here, Bill, look at this.
The most influential people.
Who's the best coach in college football? Let me see a mirror so I can look at it.
Are you a billionaire yet? None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looted?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping? Where was the military?
Why are people suspicious?
That sounds like a problem.
How is this possible?
Oh, come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley.
I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi.
I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
We had a drop go bad. Every episode.
We're in.
On demand. Without a trace. Watch it anytime on demand on Pluto TV. Stream now. Pay never. From the frontier to the front porch, classic TV comes home on Pluto TV.
Anybody home?
Catch Gunsmoke.
I run a nice, quiet town here.
And the Andy Griffith Show.
That's a real opportunity.
On demand. Relive the earliest moments in black and white and ride off into a sunset full of color.
Thought I'd drop around and say hi.
Timeless TV, anytime you want to watch it. Catch Gunsmoke and the Andy Griffith Show anytime on demand on Pluto TV. Stream now, pay never.
I turned 26.
We were making more money than we knew what to do with. Was all this legal? Absolutely not. Stop. You don't want to get a bad reputation.
A bit softer this morning as we head to the Open. We've got 3 hours until the opening bell, and you can see futures lower just a bit, but this really feels like deja vu. It feels like what we got yesterday, down 0.4% pretty much across the board, although the mix is much better in the bond market with yields lower and the dollar market strength, something we haven't seen very often. 3 hours away from the cash open, here are your morning movers with Yahira and Anand. Yahira.
Hi, Lisa. We start with the check on Disney and Microsoft shares. Both are slightly lower after announcing fresh job cuts yesterday. Microsoft laid off over 300 workers, adding to the 6,000 jobs it cut last month as it shifts toward artificial intelligence. Meanwhile, Disney cutting several hundred roles in its film and TV divisions, mirroring what's happening across Hollywood. They're scaling back production as traditional revenue models come under pressure. So both companies navigating major industry transitions, which of course have led to these job cuts. Next up, we have shares of JetBlue. Those are down more than 1% here after CEO Joanna Geraghty clarified that their new partnership with United isn't a step toward a merger. She emphasized that after years of scrutiny from the Department of Justice, the company is playing it safe to avoid any regulatory issues. The reaction telling me here that maybe investors were hoping for a more transformative deal between the two companies. And last up, we have Bumble stock falling 5% here after JP Morgan hit it with a downgrade. The analyst saying the recent rally has gone too far, and with revenue and paying users expected to drop, they are setting a $5 price target on this stock. And the problem, they say, is that Gen Z is just not feeling the love with this app, which is the one where the woman messages first after matching. I wish Gen Z the best with their love life. Lisa?
Thank you so much, Yahira. Thank you for that. On our radar this morning, the Dutch government collapsing. Far-right leader Geert Wilders pulling his party out of the Netherlands ruling coalition. Joining us now is Bloomberg's Oliver Crook. Ollie, everyone talks about how Europe is the grown-up in the room. They're the one that actually has the cleaner shirt right now than the U.S. And now we have this. Please explain.
Yeah, flying a little bit in the face of the Sell America, Buy Europe concept that they're really trying to push the adults in the room. As you say, Lisa, this is really sort of the classic issue in Dutch politics, which is a question of immigration, a question of refugees, and that is what brought down the government about a year and a half ago. It took them about 7 months to pull together a government that now held for 11 months, and they just pulled the plug on it this morning. And it was pulled by Geert Wilders, who is the leader of the Freedom Party in the Netherlands. He is a sort of far-right candidate who is sort of very anti-Islam, very anti-immigration. And what he did is he went to the parliament with an ultimatum 10-step program that he put before them. He said, listen, we need to get a majority of these 10 steps through in order to curb immigration. If we do not, I will pull the plug on the government. Some of these points were using the army to guard the Dutch border, turning away all asylum seekers, temporary halting family reunification, and sending Syrian refugees back to Syria, which he judges now a safe place. He said he was going to sleep on what he was going to do about it overnight. Then in the morning, 3 hours ago, he pulled the plug on the government. This is the biggest party in the Dutch parliament. So now the government has come down. They're going to convene in about 1 hour's time to discuss the next step. But what it will probably mean is an early election.
All right, Oliver Crook, thank you so much. Great reporting, as always. I'm sure we'll be coming back to you again throughout the day for other developments that have been going on throughout the continent, frankly. It has not been dull. Meanwhile, President Trump putting pressure on Republican senators to pass his tax package, making phone calls and posting on Truth Social that he wants that bill on his desk before the 4th of July. Damien, as a credit strategist extraordinaire, how closely are you watching all the details and dusting off your congressional description books?
Well, for me, it's all about recession probabilities, and I just can't understand, right? If we were running an effective tax rate here in the U.S. of 2.5% last year, and I think consensus expecting it to go to something like 15 to 20% by the end of this year, that the recession probability in the U.S. isn't higher or isn't probable as opposed to non-probable. And so I think the markets haven't woken up to the reality that the hard data will definitely follow if these tariffs kick in after the 90-day window.
The challenge is that there's so much of a lag here. We're going to get the inflation portion first, and then we'll possibly see the impact to the jobs market and to demand. So we've seen about 100 basis points come out of 2025 GDP estimates to about 1.4%. Is there further downside from there? I think is the question that we'll be answering as we go through the summer.
Speaking about tariffs, the White House saying President Trump and President Xi speaking potentially this week. We've heard this before. Both sides have accused each other of violating their trade agreement. Beijing has yet to publicly comment on potential talks. It just raises a question about whether this impasse is something that can be closed, Damien, or whether people have gotten overly complacent that they can put this particular story on the back burner.
Well, I mean, when you see the Chinese Navy circumnavigating Australia and doing live fire exercises in their EEZ, and then you see the U.S. responding by sending its own frigates through the Taiwanese Strait, I mean, the answer to me would be no. I mean, I don't see any real, any sort of agreement being reached in the near term. I think that's what the market needs to see here in order for it to snap back.
Is he being too pessimistic?
Well, we do think that it's like Trump is singing Carly Rae Jepsen, Call Me Maybe, to Xi, because he's just, we have all this intention that we're going to have discussions, but there's no discussions happening, which just means that for all the promises of deals that are going to happen, we've just seen no progress. So again, we wait through the summer to get that muddle through.
Cameron, do you have like a playlist that you go through
100%.
and you basically try to glean inspiration for all of your notes?
Yes, welcome to the Free Association.
Okay, yes, and so today was a bit of Prince, and yesterday maybe a bit of Taylor Swift. Right now, let's get to some news just crossing the Bloomberg. Meta signing a 20-year contract with Constellation Energy to buy power from an Illinois nuclear plant. More evidence of technology companies' appetite for energy to run data centers and AI as the promise of that technology potentially transforms the world we live in. PwC out with its 2025 AI jobs barometer, which shows a link between AI adoption and productivity growth. Matt Wood of PwC joins us now. And Matt, you're answering the questions that a lot of people have been asking, which is basically how many of us are going to lose our jobs and become irrelevant because of some of this new technology?
Well, it's looking like right now, none of us. In fact, counterintuitively, the number of jobs and the wages associated to them are actually going up, not going down. So we looked at over 1 billion job postings globally from 24 different countries, and we found that for organizations, whether they were advanced in their AI use or early in their AI use, they had more job postings than they had before. We found that the productivity of people working inside those organizations was up. We found that the revenue generation for those workers was 3x higher than it's ever been before, and that the wages associated with those workers were also going up. And so it's a little counterintuitive to what maybe some other folks are seeing, but our barometer shows a very, very different picture.
A really optimistic look for people who have the tools, have the capability of using artificial intelligence and machine learning to actually become more efficient, become more relevant at a time where Microsoft is cutting hundreds of jobs because a number of people currently in their roles can be replaced by artificial intelligence. How messy could this transition be? Because even though there are some people who get paid more, be more productive, and be more in demand if they have those skills, there are going to be even more people potentially who lag behind that and can't catch up quickly enough.
Well, for sure, the way that we are going to work is going to change. And for those organizations that are furthest ahead on the AI journey, the skills are changing the fastest. And this is a very humane problem. This is not a technical problem. This is a problem that we have to work through with all of our workers, with all of our staff. And as leaders, we need to make really sure that we're investing to make sure that all of our workers in every industry have the access to the skills and the education and the upskilling to be able to take advantage of this dramatic productivity gain.
Matt, the courts are going they just gave Donald Trump approval to take away 500,000 visas here in the U.S. What impact is that going to have on the AI sector?
Well, education is a remarkably vibrant place for AI to not just be used, but also to be created. Right. AI is very, very, very early, and a lot of the research that we need to do to advance the state of the art is going to come out of those sorts of organizations, those sort of institutions. Super important that they remain funded and remain active.
Well, Matt, let's talk data centers for a second because we got this big news in the market with Meta. I've seen some statistics that last year, for the full year 2024 here in the U.S., data center build-out accounted for roughly or more than 80% of the entire U.S. economy's capital expenditures for the full year. First we had Microsoft scaling back its plans following DeepSeek. Now we have Meta, buying or leasing a nuclear plant. Who are today's investors? Who's going to provide the long-term takeout capital for these data centers after all is said and done here?
Well, data centers are super interesting because they're not just data centers. It's actually more of a full vertically integrated stack of investment that covers just an entirely new ecosystem that is being built out across industries because of AI. So if you think of just the real estate that those data centers have to sit on, the energy infrastructure that has to surround those data centers, the data centers themselves with all of their disks and their GPUs and all of the infrastructure required to house and cool them. Then you've got the large language models that sit inside that infrastructure. You've got the applications that sit on top of those large language models. So there's a full ecosystem that bleeds from real estate to energy to computer science to big tech, which just didn't exist before. And this blurring of industries into new ecosystems is happening around data centers because of AI, and I think we expect to see it across multiple different industries going forwards.
Given the massive investment we've seen from all these companies into AI infrastructure, how are you thinking about monetization? Mostly as you've seen competition pick up, what will the returns look like for all of this investment?
I think it's an interesting question. I don't personally see it as an investment that most organizations should be seeking a return from today. AI is more like intellectual infrastructure for your organization. We don't look at internet access inside an organization and say, hey, what's the return on investment of my bandwidth? Instead, you say, well, all of my work is done in a completely different way and in a much more efficient way and a much more productive way, 3 times more productive in the case of AI. What is the impact of not doing that? And so you see very, very few organizations today that don't enable broad, fast internet access to their organizations and to their teams. We'll see the same thing with AI. Most organizations will want for upskilling and retention and for hiring the very best people and keeping productive the people they've already got. They're going to want the most robust AI intellectual infrastructure inside their organization, similar to networking.
How advanced have companies been in the U.S. at adapting to some of these new tools, given the fact that it is quickly evolving? The bigger have an advantage with respect to data, with respect to resources. How much is this really bifurcated, the sphere from big to small companies?
It's not so much big to small. It's actually, again, a little counterintuitive. So those organizations that we see moving the quickest are actually the regulated industries. So financial services, insurance, healthcare, manufacturing, those sorts of domains where the compliance with the regulations around that they've had to live with for the past 20 years and maybe have felt like a bit of a headwind, particularly around data governance and data quality. Those are all the things that you need to get right to be successful in artificial intelligence. And so whilst that headwind has been there, it's actually driven all the right investments for those organizations to be successful with artificial intelligence. And as a result, the AI piece is just a small incremental lift on top of that, and they're able to move much more quickly.
Matt Wood of PwC, thank you so much for being with us.
You're welcome.
Really interesting. And you raise a great question, Cameron, which is essentially how much can shareholders expect to get this back in their pockets?
We also know that a lot of these companies have massive margins on their legacy businesses. They're near monopoly businesses. So as they're investing in areas that have far more competition, do we see the total ROICs for these hyperscalers, for these Mag 7 names actually come down? And how will investors digest that?
Especially given the fact that it has to be a flip to the equal weight versus the NASDAQ, which is what a lot of people have been arguing, that if you get this adoption, you could see a bigger benefit through the rest of the S&P.
Well, Lisa, you know, if you just look at the experience of companies like NuScale and TerraPower, these next-gen nuclear reactors require a 10-year build-out. So just when exactly is this going to be up and running for Meta? And when, I mean, I was under the impression that, you know, nuclear was going to miss the whole AI boom, but maybe I'm wrong.
We shall see. Right now, let's get a check on what else is going on around the world. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Russia and Ukraine held a second round of talks in Istanbul yesterday, but failed to reach a peace agreement, though the two sides did lay the groundwork for a new prisoner swap. Russia presented peace proposals that include Ukraine surrendering control of territory in 4 partially occupied regions, while Ukraine demanded an unconditional truce and proposed another meeting later this month. Meanwhile, Commerce Secretary Howard Lutnick says he expects the U.S. and India to strike a trade agreement before higher tariffs kick in on July 9th. He says President Trump's strong personal relationship with Indian Prime Minister Narendra Modi has made an easier path to trade negotiations with that country. And Toyota Industries said it received a $33 billion offer to take the company private. The deal will involve a tender offer for the shares of a supplier of textile looms, forklifts, and parts for Toyota Motors cars. A new holding company will be established to privatize Toyota Industries, according to the company, which says it plans to make an official decision today. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Coming up next, resetting U.S.-China relations.
It has been a whirlwind, I think, in the U.S.-China space. President Trump, of course, has sent some mixed messages around what he expects and hopes from China. I do think his long-term goal here is to reset the relationship with China, but to continue to have an economic relationship with China.
Coming up next, Leland Miller of China Beige Book, who will talk about not only what that relationship could look like, but some of the economic data we've been getting that kind of conflicts with itself from China. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want?
You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football?
Let me see a mirror so I can look at it.
Are you a billionaire yet? None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looted?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience? What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem.
How is this possible?
Oh, come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley.
I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi. I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
Just a touch softer today after yesterday's bounce, which really was, I think, the notable takeaway. Question will be whether we can repeat that today. Right now, down across the board, but not by much, considering the gains that we've seen after the biggest May return for a year, going back to 1990. Right now, under surveillance this morning, resetting U.S.-China relations.
It has been a whirlwind, I think, in the U.S.-China space. The very baseline issues between the two nations remain very much in place, even though domestic pressure forced both sides to bring those tariffs down. President Trump, of course, has sent some mixed messages around what he expects and hopes from China. I do think his long-term goal here is to reset the relationship with China, but to continue to have an economic relationship with China.
Here's the latest. The White House saying President Trump and Chinese President Xi Jinping will speak later this week after both sides accused each other of violating last month's trade agreement. Joining us now is someone with tons of context, both when it comes to strategy as well as when it comes to the economy in China. Leland Miller of the China Beige Book. Leland, great to see you. Thank you for being here. I want to start with this question of what is at stake in order to even get a phone call between Xi Jinping and Donald Trump, something that we've heard a couple times before, but that, from what we understand, hasn't yet happened.
A phone call should be very easy, but I think the reality is that the Chinese side is very skeptical that the U.S. side will keep whatever commitments that it asks for, and that it will convey exactly what it wants, and that it will have a point person that will be able to have the authority to be able to make a deal for what for whatever the U.S. side wants. So, a call is easy, a meeting is easy. There's nothing that you really have to give away in order to do that. But I think that in Beijing right now, there's a worry that if they come to the table and President Xi looks bad, then this will be a net negative for the relationship and for China's leverage. So they're holding off on that until they think that they have a better hand. We'll see if it happens this week.
Leland, the renminbi is up 1.5% this year versus the dollar, yet it's fallen in each of the last 3 years. I had a number of friends in attendance at the J.P. Morgan Global China Summit last week, and they all came away with this bias toward a weaker dollar. Does that mean a weaker dollar relative to the yuan?
Well, the dollar and the yuan are tied very closely together. I mean, we pretend like the yuan is a free-floating currency. It's not. It's pegged to the dollar. So if you have a weaker dollar, you're going to have pressure on the yuan to fall. But I think that China will want to keep it a little bit up relative to that because their bias is for a little bit of upside appreciation in a falling dollar world. So, yeah, if you have reciprocal tariffs and the U.S.-China relationship and all these other things weighing on the dollar and the dollar's falling, then the yuan will be pulled down a little bit, but they'll want to have a little bit of an upward bias from it. So yeah, you should expect some mild, modest upward appreciation in a falling dollar world.
Leland, it was only a few years ago when multinationals claimed that they couldn't afford to pull out of China, given the economy's size, its overall influence. What are your thoughts on China as an investment destination? From the perspective of a U.S. institutional investor, is China investable now?
Well, I think you made a nice distinction between, institutional investors and those companies that are in there with hard assets and a presence throughout China. Very difficult to extricate themselves at that point. If you're an institutional investor and you're looking at China, then you have to be asking yourself, what edge do I have here? Am I just waiting for this ridiculous thesis of, things have been down for 11 years, but now they're going to bounce back in the stock market? Do you have an edge in a technology sector, but that's going to be closed off by export controls or by tariffs in the near future? It's not impossible to trade in China, but it's getting very dangerous. And most of the people who have traditionally done this have done this very lackadaisically. They look at Chinese data. They've got a DC consultant that tells them a little bit about China, and then they buy a bunch of Chinese tech companies. You can't do that anymore. So if you're still in China, then you better have a tremendous edge in terms of investing there.
Leland, the Chinese 10-year rate is a mere 1.7%, near multi-decade lows. Is there any signal to take from that about underlying Chinese economic health, mostly as we consider the rest of the world where long-end yields are screaming higher?
Yeah, absolutely. There is a signal. If you look at our credit data, China Beige Book credit data, it's remarkable what's happening on the monetary easing side. I mean, we've seen rates continue to go down, 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 and this is a time in which there's elevated inflation elsewhere. So what they're trying to do is, on the fiscal front, they're manning arming the cannons. On the monetary side, they continue to cut rates. There's a downside to doing that because you're hitting the profitability of banks and you're hurting savers. But right now, they're just trying to keep the economy going during the early onset of these trade tensions, trade war 2.0. So they're cutting rates, but it has a lot of detrimental effect, downstream in the economy.
How much fiscal firepower do you think that China has? There seems to be an assumption that China has a lot more room than other countries around the world. Is that the case?
It is the case. What's interesting is that for several years, while every headline, we'd see every day was, China stimulus, promising stimulus, pledging stimulus, it was never happening in 2022, 23, 24. We got to the very end of 2024 and early 2025. We have a fiscal activity index that showed significant things were happening and a significant borrowing and bond issuance by transportation construction firms. So they were really getting ready for what might be a real downside scenario. We've seen that ebb off a little bit. So we have not seen the blast any type of cannon, but they are preparing in a way very differently than they did the last 3 years. This should have been expected. China does not want to do big stimulus, but at the end of the day, they're going to have to batten down the hatches of their economy if they get in a larger trade tiff with the United States.
Which is the reason why, Leland, and I think that all of us are trying to get at the ultimate question, which is who has the most leverage, who's in the better position economically right now as the U.S. and China go head-to-head. We got this data overnight that China's private factory gauge plunged the weakest going back to 2022. It went against some of the official data. Some people are saying it's messier, it's a smaller sample size. Do you think that China is hurting more or the U.S. is hurting more? Is it possible to even make that equation?
Well, look, first on the Caixin survey, I mean, we agree with the official data here. We're much, much bigger. We survey a lot more companies than Caixin does. And we actually saw an improvement in manufacturing activity. Not great. It's down from a year ago, but it's up from the lows that we've seen the last couple of months. So there's something there. There's a lot more resilience, both in the consumption side, which is surprising, and the manufacturing side, which is not, in China right now. So I would take that away from the economic data. So I think at this point, look, we have to be watching the data closely, but also keeping in mind that China is looking a little bit more resilient than we thought going into the Geneva talks and beyond.
Leland Miller of China Beige Book, thank you so much for your insights. Really helpful and interesting that the official data is more accurate in this case, according to Leland Miller, than the private factory gauge. Cameron, I'm going to ask you the question that Damien asked, which is China uninvestable, or do you feel like there are sections that you like because of that potential impetus from fiscal?
We've been finding a lot of opportunities within China, mostly on the tech side, where they trade at such massive discounts to what we see within the U.S. But we have to keep in mind that there's just a lot more volatility, a lot more uncertainty in investing in some of these companies, which is reflected in those huge discounts that they've been trading at.
Well, I thought you asked a great question. Brilliant. Talking about rate differentials between the U.S. and China, I'll give you this one. China and Japan, that 10-year is only 17 bips differential right now. I mean, China is the new Japan.
Well, maybe Cameron can find a song that represents that the next time that she's on. Cameron Dawson, hopefully it will be soon, because it was really wonderful to have you. Cameron Dawson, thank you so much, of New Edge. Coming up next, Chris Harvey of Wells Fargo, Henrietta Trey's of Veda Partners, Marriott International CEO Tony Capuano and Jason Draho of UBS. A real question here about the consumer heading into the summer. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Taking the kids for pizza after the game.
Nancy Dawson is passive progressive.
Well, that's nice. So nice of you to spend a fraction of your progressive savings on the team. That's so generous. Oh!
Don't be like Nancy. Drivers who switch could save hundreds. Live now.
Here we go. The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want?
You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football? Let me see a mirror so I can look at it.
Are you a billionaire yet? None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looted?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem.
How is this possible?
Oh, come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley.
I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi.
I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
We're gonna put birds on things. Put a bird on it.
What happened?
I fell through the floor again.
Everyone's been so nice to me.
Everyone?
Well, not you.
Fun place, isn't it, Mama?
It's a dump. There goes my appetite.
I got my eye on you, Jay Quellen.
Hook me up with a treat.
I love it.
The economy is still, as of now, fairly resilient.
You still have a bigger growth engine in the U.S. than you have in most of the other parts of the world.
The gap between the what people call the soft data and the hard data has been pretty dramatic over the last few months.
It's just really hard to read the data right now.
The markets haven't really had to come to grips with the idea that the economy might be slowing.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the second day of the trading day. President Trump back in D.C., and now everyone is focused on what the U.S. budget will look like, given the fact that he is making the rounds, calling, whipping, trying to get votes to get the Senate on side. Meanwhile, we are expecting some sort of call between Xi Jinping and President Trump as that truce potentially starts to fall apart. And this comes as we still try to understand what the data means. We get, of course, job openings today. We get some factory orders data. We get some other ADP data tomorrow. Then, of course, we get that key non-farm payrolls report. Damian Sassower, so glad that you're still with us here today in the seat.
Thanks for having me.
I'm curious about whether this economic data on Friday actually is going to be the market mover, given the fact that very much front and center seems to be the deficit, seems to be a whole host of other policy considerations.
Well, I mean, you're looking ahead to Friday. I'm just trying to get through today. We've got durables. We've got auto sales. Auto sales are going to fall off a cliff this afternoon, probably. So, to your point, yeah, the payroll data definitely matters, but I think it's all about magnitude. Do you think that growth in the U.S. is going to slow off the back of this? Yeah, probably. But what magnitude? You think inflation is going to pick up due to tariffs? Yeah, probably. But what magnitude? So we're talking about magnitude here.
It seems like everything needs to get done all at once, right? And that seems to be the way that it has been going in Washington, D.C. for a while. Right now, the focus for the bond market very much has been squarely on the budget and what's going to happen with the deficit, given the fact that there are concerns about bond vigilantes and whether this fiscal overhang is going to be unsustainable. How much do you believe that actually is what's driving the bond market versus just a lack of liquidity, a lack of conviction, and the back and forth about whether we actually will see expansion and whether we can take recession off the table?
Well, look at who plays in the 30-year, right? I mean, these are basically lifers. These are pension funds. It's not a very big, deep investor community, and that goes for Europe and Japan as well. I mean, in Europe, Euro swaps, I mean, it's all pension schemes. It's the Dutch. So, to your point, I agree with you. I think it's positioning. I think it's finding a clearing price for these bonds that not a lot of people want to own.
Meanwhile, right now, what we're looking at is people actually finding bonds that they like. You are seeing a bid into bonds, which is different than what we saw yesterday. You're not seeing as much of that positive feel in stocks. If you take a look, equities just a little bit lower, even though you do see bond yields lower. This is a correlation people want to be seeing, and this comes on the heels of an auction in Japan that went better than expected. It was a 10-year auction that actually had pretty good participation that came, Damian, after an adjustment by authorities in Japan, particularly the Bank of Japan, saying that maybe they would stop rolling off their balance sheet. In other words, maybe we'll just observe a little bit more of that to prevent some of this shakiness that we've seen in the bond market.
Well, I think the BOJ did the right thing last week in going to the market and asking them what their thoughts are. That just shows an openness and a lack of, and just a transparency that you didn't see previously. So I think, look, the market is trying to come to terms with, where is that clearing price for the long end of all these curves? Where is term premia going to settle in here, not just in the U.S. but abroad?
The market is trying to grapple with how to get to summer vacation at a time when it seems like there is always a new narrative to be held. Coming up, we've got Chris Harvey of Wells Fargo as markets are whipsawed by everything, renewed trade concerns in particular. Henrietta Trey's Aveda Partners as the White House pushes for a call with Chinese President Xi and Marriott International CEO Tony Capuano on the outlook for summer travel, which we want to get to. We begin this hour with stocks lower, given back tech-fueled gains as trade uncertainty weighs on investors. Chris Harvey of Wells Fargo staying bullish, writing tariff risks, both in terms of the news flow and actual effects on consumer spending, are priced in, if not overstated. And with Fed easing on schedule, we see a constructive second half for equities. Chris joins us now. Chris, wonderful to have you. Thank you so much for being here.
Good to be back.
So the positive spin on this is that you do believe that there is not going to be some sort of inflationary wave from the tariffs and that Fed cutting is squarely on the table. Why is that good for equities if it potentially could come on the heels of some weakness?
It's good for equities. Well, lower rates, the Fed getting in motion is generally good for equities as long as it's outside a recession. And I don't see a recession, right? Credit spreads are still incredibly tight. If you look at the consumer, we can argue about how strong the consumer is, but the consumer is holding up pretty well. And when we look into the second half of this year, one of the things we haven't seen is really the positive effect of the change in regulation. We'll start to see that with a stress test. The other thing is M&A activity has been very muted. We've had a massive repricing here. The secular AI trade is out there, and it's going strong. I think the AI Diffusion Act or the mitigation of the AI Diffusion Act is still understated. And if we look at the consumer, right, if we really stretch, right, maybe 20% of what tariffs touch, the consumer spends on. And if we add 10, maybe 15% of that, and we assume that all of that, you're not looking at a big upward move in spending or a big hurdle for the U.S. consumer. And the U.S. consumer is very, very savvy. They're going to shift around their basket. They're going to look for where they find utility. And tariffs at this point in time, I think, are just overstated. The fear is more important than the fact, right? When I talk to people about fundamentals, they're like, yeah, fundamentals are actually pretty good. The soft data, we're really discounting the soft data because when we look at the prediction markets, they're telling us something else. When we look at the hard data, it's hard to find a really difficult story. And so people are afraid to be bullish, I think. But when they look at the fundamentals, it's hard for them to say, yeah, there's a recession looming, hey, job cuts are looming, and the wheels are about to fall off the cart.
I hear you, and it seems like a lot of people believe that. HSBC's Max Kettner came out this morning and said, look, you see the buy the dip again, and it just highlights the strength that you've seen in the market. The pushback that I would say is the ISM manufacturing survey yesterday. Some of the commentary that we heard, this from the electrical equipment, appliances, and components sector. The administration's tariffs alone have created supply chain disruptions rivaling that of COVID-19. Then you have an unresolved trade deal with China will result in empty shelves at retail for many do-it-yourselves and professional goods. This according to the paper products industry. How do you fully discount that?
Don't fully discount it, but the thing that we have to watch, and I think that's most important, is will we make progress over the next couple of weeks on trading tariff? Will we have something from India, from Japan, maybe from the EU, North America? And if we do, you can start to look through a lot of that information. If we don't, then yes, things will start to come down to roost. We may get a lot more volatility, and you have to grit your teeth a little bit. But ultimately, I think we're making progress on trade and tariff, and I think we will continue to make progress on trade and tariff. And if so, you can start to look through that.
Chris, where do you and the team at Wells Fargo stand on where the U.S. effective tariff rate is going to be by the end of this year?
So we're thinking somewhere in 12 to 15%.
Okay.
I'm a little.
And that's not going to stoke a recession here in the U.S.?
I don't think so.
Okay.
I don't
Interesting.
think so. Right? I'm closer to 10. Like my philosophy coming in here was we should have just put a 10% tariff on everything across the board. They had Congress, they should have mandated it. Everyone understands the seller's fee, whether you pay that through Airbnb or the New York Stock Exchange or Amazon, right? That was easy to sell. The unintended consequences weren't as big as what we're doing right now. But if you get to 10%, think about it this way. A third is eaten by the exporter, a third is eaten by the corporation, a third is eaten by the consumer. That's fine.
So margins, corporate margins, the pass-through of these price increases onto the U.S. consumer, you think the corporates here in the U.S. are going to be successful in pulling that off?
So when we talk about corporates, right, what we're talking about a lot of times now is we're very positive or constructive on the AI trade, right? And if you're tied to CapEx and CapEx spend, it's a much different story than if you're tied to consumer and consumer spend. And so you can't just say corporates across the board. Right. If you're tied to the consumer, yes, there are certain companies, and if you look at some of the general merchandisers, it's been a little bit tough, right? If you look at some of the tech companies, not so tough, right? And our analysts have done a lot of work on data centers and what would happen to data centers if the tariffs stay in place. And the cost to data centers is actually 5% or less for building a new data center. And that's just not prohibitive in any way, shape, or form.
So we expect U.S. equities to rally through the end of this year, or maybe not, and certainly not in a linear fashion. But, just take me through the fact of which sectors are going to do the heavy lifting there. I mean, you talk about AI. I imagine you think it's going to be technology again.
We think it's going to be technology. We think it's going to be more your growth companies. If you look at the AI trade, it is a very robust, secular, U.S.-centric trade. And what is the S&P 500? S&P 500 is a growth index, right? I've been talking to people, recently people have been talking to me about mid caps and small caps and so on and so forth. And I think eventually they can work, but you need the Fed to get in motion. You need the Fed to start cutting rates. But if you look at the broader market is really driven by growth in technology, and growth in technology is okay right now. Actually, not bad.
So what's the risk event for you?
I don't like this whole taco thing that's being thrown about, and I don't think it's on deaf ears, right? So Trump doesn't want to be seen as weak. He wants to be seen as strong. So does he go out of his way to say, no, that's not happening? Right? That's a concern, and that's a concern to other people. The concern is, hey, can rates go higher? Sure, rates can go higher. But I think the real concern is what we've been talking about or implying. If you don't know, you know. If at the end of June, we still don't know what's happening when trade and tariff, then you have to start making some of those hard decisions. And that's the big risk. Because if you don't know, then I know that I need to start tightening the belt. I know I need to start bringing down costs. I know I need to start looking at labor, and that will start to cascade.
It's in June, so is the range getting a lot wider given the fact that you could have both of these things, especially given the Reuters report overnight talking about how there was a memo drafted to send out to all the trade partners today by the U.S. saying, hey, we want your best deals and we want them today.
Yeah, I think time is of the essence. Obviously, we've all seen what's happened with the VIX and volatility in the equity markets this year. This will not be a calm market. The market is expecting some sort of resolution or some sort of progress. If they don't get that progress and we go the opposite way and we start putting in more and more tariffs and not making progress, we're going to have a problem. So is the range of outcomes large? Yes, it's large. How do you handicap that? That's a much different conversation or question.
Have we learned anything in the past couple of weeks that has changed your allocations in any material way?
Have we learned anything?
I mean, in the sense of anything concrete.
That's a loaded question. Well, I pose this to a bunch of people. If you knew today, if we roll the clock back to the beginning of the year, and you know what you know today, what would you think the market would look like? What would you think the economy would look like? And most people said, I would have thought the economy would be in much worse shape. The economy is much better shape than people think, given what we have right here, right now. So what we've learned is the U.S. economy is still robust. Some people think, and I think it's fair, right, there's a lag effect to trade and tariff, and maybe we'll see that. But ultimately, if we get that, not resolution, but if we get that progress, you can start looking through it. If you don't get that progress, really tough to look through it.
A really important month, and I'm so glad that you're going to be with us. Chris Harvey of Wells Fargo will be with us throughout the hour. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Shares of Constellation Energy are surging more than 14% in the pre-market after it agreed to sell power from an operating Illinois nuclear plant to Meta Platforms starting in mid-2027. Deal could spur construction of a new reactor at the site as AI sends power demand soaring. Meanwhile, new details are emerging about the suspect in this weekend's attack in Boulder, Colorado. The FBI identified him as Mohammed Sabri Solomon, who came to the U.S. in 2022. On Sunday, he brought flowers and disguised himself as a gardener in an orange vest so he could get as close as possible to members of the Jewish group before attacking them with incendiary devices. And Elon Musk is selling $5 billion in debt for his AI startup, xAI. It's the latest in a series of fundraising efforts across his business empire. Morgan Stanley is set to be shopping the debt. Musk has also raised $650 million for Neuralink and is selling $300 million in xAI stock through a secondary offering. So busy. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Maybe that's the good kind of deal making for a lot of these banks. A big question about whether it will pick back up in the second half of the year. Up next, pushing for a deal.
President Trump has talked about wanting to meet with President Xi. Has that call been scheduled?
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls.
Henrietta Trey's of Veda Partners joining us next. This is Bloomberg Surveillance.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Nationwide is more than you think.
Definitely. Their resources help me create customized retirement income plans that help clients feel more confident.
Helping them get in their comfort zone, their retirement comfort zone.
Good zone.
Like my other favorite zone, Cal Zone.
Spirits and spice? Let's see what all the buzz is about. Whiskey? I'm in. Wait, are those people tasting those fine liqueurs? Let me taste. Woohoo, spicy. Rewards with loyalty points? Sign me up. Visit spiritsandspice.com.
To the mom who's always there, even when no one else sees. You give so much, day after day. You hold their hand, then let go, little by little. Because you know one day, they'll need to be brave on their own. At Goldfish Swim School, we're here to help them grow, so you can take a breath. Because you do it all, and somehow make it look easy. We see you, Mom, and you're doing an amazing job. Goldfish Swim School. You got this.
This market looks like it's going down, but it is not one that likes to end the day down. And what we're seeing right now is some of those losses getting clawed back as time goes on, which seems to be very much what we have been seeing over the past few trading sessions. The Nasdaq now down just 0.1%, the Russell 2000 almost flat, and S&P futures lower by 0.25%, which you can see in the bond space. And this is notable. Yields lower, and it is on the heels of Japan. It seems like Japan, Damien, is driving everything this morning.
Well, I wouldn't say everything, but if you look at the global ag, and most people don't realize this is the benchmark Bloomberg Global Aggregate Bond Index. It's up 5.5% this year, and the reason is most of those bonds are non-dollar denominated. So forget about the declining dollar and all the currency risk that's embedded within that index. Your bond portfolios, if you're diversified, are doing well.
Well, maybe not, though, if you're in the U.S., and that's a real question when it comes to some of the fiscal considerations. Under surveillance this morning, pushing for a deal.
President Trump has talked about wanting to meet with President Xi. Has that call been scheduled?
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls. The European Union came to the table thanks to President Trump's threat of tariffs. And now we are seeing that they are negotiating in good faith with our delegation. As you know, we are in discussions with many other countries around the world as well who understand the need to cut a good deal with this president and the administration.
Here's the latest. Reuters reporting that the Trump administration is urging countries to make their best trade offers by tomorrow. This comes after the White House says Trump will likely speak with Chinese President Xi Jinping later this week. Bloomberg's Tyler Kendall joins us from Washington. This as we hear about a trade deal with India potentially to be announced in the next few days. What do we know about the state of play about all these deals that are being made?
Yeah, hey, Lisa. Well, it does appear that the White House wants to show some sort of forward progress after we really haven't gotten any sort of update since that agreement framework that was reached with the United Kingdom. And perhaps we're getting some clues as to why. We heard from NEC Director Kevin Hassett, who has previously said that deals really are imminent, say that ultimately China has been the, quote, laser beam of this administration's focus. And perhaps that's taken away some of the momentum towards other deals. Now, amid this Reuters report, we should say that it has, according to the reporting, has asked these other countries to come forward and put up basically their best offer, which of course would include a lowering tariffs, but also boosting some U.S. goods. We know that U.S. LNG and agriculture has long been a priority of this White House, and then how they're going to address those non-tariff barriers, which this White House has really been pushing, needs to be at the forefront of any conversation going forward here. Now, at the moment, Lisa, we still aren't quite sure exactly what sort of concrete details we are going to get. Of course, the U.S. is under active negotiations with those countries that have been prioritized, that are geographically close to China, such as Japan and India, with Howard Lutnick saying that he's optimistic a deal could be reached before that 90-day pause is up. And then also the European Union, which we know has sort of had this fire lit under it to try to get some sort of deal soon.
Bloomberg's Tyler Kendall, thank you so much, as always. And we'll be tracking the progress throughout the morning. Joining us now, Henrietta Trace of Veda Partners. Henrietta, I'm wondering why the market isn't paying more attention to this. In particular, that Reuters story talking about how there could be a deadline in the sense that maybe there's a level of impatience as there aren't as many deals that have come to the fore as some had expected.
Right. We're at 0 deals in 60 days, and we need to get to 90 deals in 90 days. So I think the market is doing exactly what it did for the entirety of 2024. It's continuing to sort of trust in Trump. I hear it from crawfish boils to calls with clients. People are saying, well, it could happen, and that's precisely what the administration's comms team delivers. When Caroline Leavitt says, I will tell you with certainty that there might be a call, that obviously suggests that there may or may not be a call. The biggest problem really is that most nations don't know what President Trump wants. So the biggest news item, and as you point out from Reuters this morning, is that USTR is saying, hey, bring us your best offer. And that's because the president has told us he's going to be sending letters instructing roughly 100 nations as to what their go-forward tariff rate is, and he needs an excuse to bring those rates down. If you're going to put 50% tariffs on a nation that does $293 million worth of trade with the United States, that's nonsensical. You do need a reason to put them at a much lower rate, and I think that's what the White House is searching for, a reason to lower rates and avoid the July 9th Liberation Day implementation.
Henrietta, you're down in New Orleans. I'm up here in New York City, but up in Westchester County, the residential real estate market, we like to call that going to highest and best. Let me ask you something. Going to highest and best, all cash, no contingencies, is that the right way to run trade negotiations with your trade partners?
It's funny, I'm actually from Westchester, so this is great for me. The highest and best idea is, come to the White House with anything. So what we're going to see, I'll point to the EU because I think that's one of the most important ones, and it's one that I think has the most risk for higher tariff rates, all the way up to the 20% Liberation Day rate, for example, is that we want to do agriculture trade with the EU. We want to have genetically modified poultry go to the EU. If you go to the EU and ask them if that's acceptable to their population, they will tell you no. Those political operatives will pay a price in Brussels should they agree to those trade terms. And that's the same thing we're seeing in Japan and South Korea as they face voters. And so the biggest question we have is it a good thing for nations to negotiate with President Trump, or is it seen as weakness on the part of their leaders? Australia and Canada would suggest that the strategy of being tough with Trump and coming with an offer, but not something that capitulates and gives away your national protected resources like agriculture trade, is really where folks stand. And that is, of course, the story of trade going back to the beginning of humanity. Everybody wins or everybody loses.
I want to link what we're talking about to what Chris Harvey, who's here with us this morning, just was talking about, that he's worried about the taco stuff, which is the Trump always chickens out kind of framing. Whether that's irked the president enough to say, okay, I'm going to take a hard line and go through with some of this. Do you get the sense that that actually is something that's increasingly on the table with some of this demand for the best offers by the end of today?
I think the taco stuff, if we're going to play what's your emotional response in the White House, then, that's a question for a therapist, I think, not for an economist. But what I do think, and I lived through the first trade war, is that there are very emotional responses and reactions that happen in the blink of an eye in the Oval Office. I remember them viscerally, and I can tell you exactly where I was, sort of like people can say, where were you when JFK got shot? I can tell you where I was when the List 3 tariffs went on. Those are a very big sort of knee-jerk reaction. The impulsiveness of this administration is a holdover from the first term. So I don't see this as new. If he's bothered by, investors calling him taco, get used to it. That's what Wall Street's like.
Henrietta, I have a question, right? So it sounds like you're not so optimistic on deals getting done in the short term. Paint us a picture. What do you think is going to happen between now and the end of June?
Sure. I think that we're going to get increased Section 232 tariffs. Specifically, I'm most concerned about pharmaceuticals, lumber, which is obviously critical for the housing market, including up in Westchester. I'm expecting Section 301 tariffs to rise. I'm getting a lot of questions from clients right now about the actual process. How many days does it take to conduct an investigation? How many days does the president need to notify the Federal Register or Congress or collect comments? And it's specific, 270, 90, 15-day delineations. And all of those are optional. The president has the authority to escalate Section 232 tariffs on steel, aluminum, automobiles, and automobile parts as it stands today. In the works are about 7 other items that will all see tariffs as he sees fit. All that Commerce needs to do is publish those reports. And then we have the Section 301 tariffs, which are, of course, covering all of our trade, $550 billion worth of goods with China. So I think what I'm seeing from investors in Wall Street is a focus away from sort of the macro, what's the global tariff rate, which I think is not a relevant conversation in this sort of questioning IEEPA space, but what sectors are going to be targeted. And so that's where I'm spending my time. I think that's where folks need to concentrate. All of China is exposed, and then pharma, semiconductors, et cetera.
Henrietta Treyz of Veda Partners, thank you so much. We saw this not so long ago with the auto sector, right? I mean, Chris, at a certain point, we saw that with respect to is Ford and GM investable if they could potentially be in the crosshairs of all of these tariffs?
That's right. And the big concern is, does Lutnick come on and say, hey, we're going to roll out the electronic tariffs? Because that has big ramifications for a very important sector, the tech sector, be it the iPhone market, semiconductors, what have you. And so that has broad-reaching effects, and that's a concern.
You know, I have to say with Henrietta, I know she's focused on the sectors, but I'm an emerging markets guy, and so I focus on the countries impacted. And I take your point, you know, is India ready to do a deal? Is Japan ready to do a deal? If one is announced, just how quickly will the rest follow? Are they going to be like dominoes, or is this going to be a long, drawn-out experience?
And who feels like they have the actual leverage at a time where right now it had been that maybe the rest of the world would have the real pain. Now it seems like that's being turned on its head, at least so far in trading action. Coming up next, we'll find out about summer vacation and who's taking it. Marriott International CEO Tony Capuano on the outlook for summer travel, which should be happening. This is Bloomberg Surveillance.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Nationwide is more than you think.
Definitely. Their resources help me create customized retirement income plans that help clients feel more confident.
Helping them get in their comfort zone, their retirement comfort zone.
Good zone.
Like my other favorite zone, Cal Zone.
This is a chessboard where people test their skill, imagination, and daring. Because it's also a map, complex logistics can be reinvented with AI. Thanks to reliable and secure connectivity from AT&T Business, goods are delivered quickly and efficiently.
It's just like our new house.
I hope you have an American Home Shield warranty. Leaky toilet? Fixed. Oven beyond repair? If AHS can't fix your covered item, then replace it, no matter its age. Sign up today at ahs.com.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want?
You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football? Let me see a mirror so I can look at it.
Are you a billionaire yet?
None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looted?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping? Where was the military?
Why are people suspicious?
That sounds like a problem. How is this possible?
Oh, come on. Come on. Whoa.
Wow.
What is going on?
I'm Scott Pelley. I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi.
I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
Coming into the second day of the trading week, we have 2 hours to go before the opening bell, and we have that bit of softness across the board, but not much, especially given where we were earlier this morning. Futures lower by 0.2%. You can see it's actually turned positive on the Russell 2000. Yields a bit lower as people take a look at a successful Japanese bond auction overnight, 2 hours away from the opening bell. Here is your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We start with Dollar General. Those shares are surging up 10%. It just reported results. The retailer topped expectations in Q1 and boosted its full-year comparable sales forecast. That's because it's gaining ground not just with its core customers, but also with new shoppers that are trading down for more expensive stores. Obviously, that's a bit worrisome when it comes to the health of the consumer, but it's good for this company and good for the stock this morning. Next up, I mentioned this stock earlier, Bumble. Those shares are falling more than 5.5% after JP Morgan hit it with a downgrade. They say that the recent rally has gone too far and that with revenue and paying users expected to drop, they're now setting a $5 price target on the stock. And the problem, they say, is that Gen Z is just not feeling the love with this app. But I hope they do find love and maybe they go to Signet Jewelers, which is my next stock. Those shares are soaring up 13%. This is the parent company behind Kay and Zales, and it just reported better than expected earnings in Q1. It also raised its profit outlook for the full year and lifted the low end of its sales outlook. They have been making changes to their strategy, including offering more lab-grown diamonds and gold jewelry, and it looks like those changes are working for them. Lisa?
Yahira, it sounds like someone just got married. Congratulations. That was fabulous. I love it. On our radar this morning, President Trump working the phones and social media trying to sway GOP holdouts on his massive tax package as it works its way through the Senate. The bill passed the House last month, but now faces opposition from both moderates and ultra-conservatives in the Senate. The goal is, Damien, to get it to that July 4th deadline, which seems like it's going to be a pretty high task.
Yeah, no, I completely hear you. You know what's interesting? I just had somebody texting me about the carried interest and private equity, and I hadn't seen anything in that bill about any of that, about the impact on the uber wealthy tax bracket. But, you know, I guess we have to look a little bit deeper and see where these revenues are coming from and whether or not the market even cares.
Yeah, there's a real question here about what people care about more right now. Is it the tax bill with the potential ramifications for the deficit, or is it trade? And we'll get to trade in just 1 second, but Chris, from your perspective, which is more important?
I think trade is more important, but right now the narrative is all about the deficit. People are talking about the back end going up, back end yields going up. People are talking about the deficit and taxes. But the funny thing is, we've had a deficit this big for some time. The deficit looks like it's going to stabilize, yet people still talk about the deficit and how that's going to cause back-end rates to go up. Not really sure what's changed, but there's a lot of narrative, a lot of talk just about why rates should go higher at the back end, and that's really the conversation of today.
On the trade front, the White House saying it wants countries to provide their best trade offers by tomorrow. Reuters reporting a letter from the Office of the United States Trade Representative asking countries to list their best proposals in a number of key areas, including digital trade, non-tariff barriers, and more. A real question of trying to expedite a time frame, whereas Henrietta Trey said there have been 0 deals in 60 days. We have 90 days. We've got 30 more days to get 90 deals at a time when you have very tight deadlines.
Well, Lisa, as I mentioned, this is what we call going to highest and best in the residential real estate market. Our next guest can probably tell us a little bit about that. But truthfully, you know, these countries, the way their governments are structured, the way, you know, to get a deal done just because Donald Trump wants it immediately, it seems like a bygone conclusion that that's going to be a tough bridge to swallow.
Yeah.
Yeah, I think so. So to get a deal done, and you're seeing this with the EU, is there's a big bureaucracy there. You're really not sure who's leading the charge. And again, what you said earlier is, what exactly does the U.S. want? So there's that uncertainty breeds more uncertainty. It makes it difficult. I think if we can get things done in spirit, then the market will accept that. If we don't need ink on a piece of paper at this point in time, but an agreement between parties, an announcement, a framework that people are talking about, then we can take that framework and then we can push that out to other countries. The market would really like that.
Meanwhile, in other news on the layoff space, Microsoft cutting hundreds of jobs just weeks after its biggest layoff in years. Sources telling us here at Bloomberg over 300 people were told yesterday their positions had been eliminated, something we're watching just in terms of efficiency as well as some of the big tech giants. that are less capital intensive, at least on the human side, when they can potentially get efficiencies from artificial intelligence. We'll get back to that in just a little bit. This, of course, also as Disney is laying off several hundred employees across its film and TV businesses. We do want to get, however, to the main event, which is summer travel, which we all want to do. My co-hosts have already done it. That's why they are not here. Summer travel season is here. And while temperatures are finally heating up here in New York this week, the forecast for the travel industry remains a real question mark. Airlines, cruise operators, online booking sites like Expedia cutting gross booking forecasts for the year. Joining us now is someone who knows much better than I do and much better than anyone else, Marriott International CEO Tony Capuano. I'm just curious, Tony, thank you so much for being here.
Thanks for having me.
Thanks for not being on vacation, although maybe this is vacation. Yeah, exactly. I am curious about whether you have seen any kind of drop-off in any material way, or whether that resilience that we see in the hard data really has been the theme for you as well.
So we just did Q1 earnings. January and February were gangbusters. And then you saw the consumer pause a bit in March, and we saw some softness in March. But April and even the early days of May, we started to see a little more stabilization. So the days of post-pandemic double-digit rate growth is behind us, and we're seeing more stability. But we saw globally a little over 4% RevPAR growth in the quarter. Softer in the U.S., about 3%, closer to 6% internationally. And I think that's a theme that will continue. We'll see we'll see growth, but a little more modest growth in the U.S. Every international market except Greater China with really strong both RevPAR and unit growth.
Can you build on that in terms of what's behind it? Is it this idea that the rest of the world doesn't want to come to the U.S. because Canadians are mad? Or is it that right now it seems like the U.S. is the place where people are showing the greatest amount of discretion with respect to spending?
Yeah, there's a few things in there. Maybe I'll attack the narrative a little bit about inbound. To be sure, we're spending a lot of time with Secretary Lutnick's team, with Secretary of Transportation's team, because there is some concern from international travelers about, are they welcome in the U.S.? What's their experience going to be coming through customs and immigration? With that said, in Q1, we saw inbound from Canada down about 5%, but total international inbound for our business was up. And so the drop in inbound Canadian was offset by inbound from other parts of the world.
Tony, is this the year where ADR growth for limited service hotels actually outperforms that for luxury hotels? I mean, talk to us about consumers' relentless search for that White Lotus experience.
I think it's going to be the inverse. In Q1, the strongest occupancy growth we saw globally was in the luxury tier.
Yep.
The Select brand, slow and steady on the occupancy side, but not nearly the pricing power we saw coming out of the pandemic.
Well, I want to shift gears with you, just if I may. I know we want to talk about tourism as we head into the summer. At least that's what Lisa wants to talk to you about. But I want to talk to you about hotel investment. I mean, the U.S. saw hotel investment down 11.5% in last year. It's down 40% since 2019. Are international opportunities crowding out the U.S. market? Or are you seeing something similar abroad?
Yeah, so when I think about our growth, our investors, our owners, and our franchisees, they have all gladly and willingly decided to invest in an industry that is cyclical by its nature. The good news is most of them are very long-term asset holders, so they're not necessarily timing their investments for a quarter or two. These are assets with 20, 30, 40-year useful life. It's not lost on me that against the backdrop of a lot of economic headwinds, a lot of uncertainty, we signed more deals and more rooms in 2024 than in any year in our 98-year history. In Q1 of 25, with more and more headwinds and uncertainty, most productive growth Q1 we've had in 98 years. And so what that would suggest is both here in the U.S. and internationally, the investors believe long-term in this fundamental shift from the consumer to prioritizing travel and experiences in their spending.
Tony, a quick question. So what's the difference between what you see on the business side and the consumer side? Is there a big difference?
Business side, meaning business travel?
Business travel, excuse me.
So we think about our business in terms of three segments. The group segment, which has been the strongest segment for the last number of quarters. In Q1, global group RevPAR was up 8%. The other thing that's nice about group is we've got more visibility over the medium term because those customers tend to book out a few years. The two transient segments we have, leisure transient and business transient, which is your question, the booking window is sub 21 days today. Okay. So I can tell you what I know today, but with the caveat that trends could shift relatively quickly because we have such a short booking window. Within business transient, we look at small and medium-sized businesses and then the big multinationals. Small and medium-sized demand recovered several years ago. It was one of the first segments to recover. Big multinationals are still down double digits from where we were pre-pandemic. The good news is it's growing sequentially, quarter over quarter, but modestly. In the quarter, business transient was up 2%.
And just to follow up to that, on the consumer side, are you seeing people book later and later?
We are.
You are. Okay.
We are. And you know, I'm here for the NYU Investment Conference, so I did the CEO panel yesterday, and we all had a similar perspective that while we're pleased with the level of growth that we're seeing, you sort of go to sleep at night and wonder what's coming tomorrow, because that consumer, because of all this uncertainty, is sort of standing on the edge of the pool saying, should I book, should I wait? And thankfully, so far, they've been booking.
Well, this is a reason why I think a lot of people have been wondering what the read-through is for the consumer. And you've been talking about how it is down in the U.S., or it isn't necessarily growing as quickly as in the rest of the world. How do you see that manifest? Is it with respect to an inability to absorb higher pricing? Is it for people who are looking for value in the very many ways that you can put that out there?
Yeah, I think if you look at our brand strategy, it is reflective of exactly what you described. So we have brands from mid-scale all the way to ultra-luxury. But we're seeing a bifurcation of the consumer in the U.S. and in many markets where we operate. That's why you're seeing us double down on the luxury end of our portfolio, because that consumer has almost an insatiable appetite for travel. It's also the reason that 2 years ago we made a big push into the mid-scale segment, which was a segment we didn't operate in just 2 years ago. And what we hear from that lower income consumer, they absolutely, just like the higher income consumer, are prioritizing travel and experience, but they need to do it through a value lens. And our entry into mid-scale is allowing us to open the aperture a little bit and bring them in.
Before we let you go, I want to talk about the other side of the equation, which is the hiring side.
Yeah.
And I remember during the pandemic when it was really hard to get everybody back. And I wonder from your perspective, especially with some of the questions around immigration and the changes that have happened there, whether you've noticed anything with how hard it is to hire people, whether that's shifted either salaries or just some of your recruitment plans.
Yeah, thankfully, some of that confidence around the job prospects in the travel and tourism sector that was shaken in the early days of the pandemic seems to have faded in folks' memory. We've got lots of candidates. Our number of open positions here in the U.S. is lower than it was pre-pandemic. Wage rates are certainly rising, but every time the job report comes out, you see that travel and tourism sector leading in terms of job creation. And so we are having good luck filling open positions.
Marriott International CEO Tony Capuano, thank you so much for being with us. Really appreciate your time.
Thanks for having me.
Great to see you, and hopefully we all get to go on vacation. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Uber has named longtime executive Andrew McDonald as its first chief operating officer since 2019. McDonald will oversee both the mobility and delivery businesses. The move is part of an executive shakeup at Uber, which includes the departure of the senior vice president of delivery and the promotion of 3 long-serving employees to their leadership team. Meanwhile, Klarna is test driving debit cards for U.S. customers as it looks to expand further into banking services and chases revenue. The fintech giant says 5 million consumers are on the wait list for the Visa-backed card. Customers will be able to make real-time transfers and deposits alongside Klarna's signature Buy Now, Pay Later service. And Coco Gauff beat Ekaterina Alexandrova in straight sets to book her place in the French Open quarterfinals. The number 2 seed will face fellow American Madison Keys, who defeated Haley Baptiste. Meanwhile, Novak Djokovic earned his 100th career win on Paris's red clay by overwhelming Cam Norrie. That's your Bloomberg Brief. Lisa?
I was wondering where John was. Now I know. Obviously, he's there. Obviously. Up next, slowing growth.
The economy is growing below potential, and markets haven't really had to come to grips with the idea that the economy might be slowing. We haven't really had that one piece of very, bad, hard data.
Coming up next, we'll address that with Jason Draho of UBS. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Nationwide is more than you think.
Definitely. Their resources help me create customized retirement income plans that help clients feel more confident.
Helping them get in their comfort zone, their retirement comfort zone.
Good zone.
Like my other favorite zone, Cal Zone.
My mom, she says I'm brave, but really, she's the brave one. She knows just what I need, even when I don't know myself. She seems really busy, but she brings me to my swim classes because she knows it's good for me. I feel safe because she's always there, cheering me on every time. So this is for you, Mom. Thanks for helping me feel like I got this.
Goldfish Swim School. You got this.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go. 60 minutes. Is this what you want?
You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football? Let me see a mirror so I can look at it.
Are you a billionaire yet?
None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looted?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem. How is this possible?
Oh, come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley. I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi. I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
When you need your sports in us now,
we're bringing you that breaking news right here on HQ.
Find it on CBS Sports HQ, streaming free anywhere you are.
A bit softer just here ahead of the open. We see futures lower, but just lower. And they've actually turned positive on the Russell 2000, up now 0.1%. Now just down 0.1 for the NASDAQ. The S&P down 0.2%. This really interesting based on what happened yesterday, which was pretty much the same thing. Started soft and ended with firmly gains across the board after the sense that maybe things aren't so bad and why not buy the dip. Under surveillance this morning, slowing growth.
The economy is growing below potential. The markets haven't really had to come to grips with the idea that the economy might be slowing. We haven't really had that one piece of very, bad hard data. Even though the stock market's had a really good run over the last 12, 18, 24 months, that hasn't stopped labor market conditions from continuing to cool off.
Here's the latest. The OECD slashing its global economic forecasts, citing the impact of tariffs and uncertainty. Jason Draho of UBS writing, the resilience of the U.S. economy will continue to underpin markets, even if growth moderates. Jason joins us now, and it's kind of this two poles of the discussion. On one hand, you have Neil Dutta saying, look, the market is weakening. You can see what's going on in housing. You can see what's going on with sentiment. And then you say, well, even if it slows, it's coming from a very high base, and you can see in a lot of the earnings, people are still doing okay. So how do you parse those two polls?
Well, I think it comes down from a market perspective, like what's the market price and what do people think? And so a slowdown in growth is already expected. Last year we grew at 2.7%. Consensus coming into this year was 2.3. Bloomberg consensus is down to like about 1.4%. So that's sort of, to me, kind of the bar. Like, is the market sort of pricing that or not? So if we get some moderation, that's expected. It's really, you need to me, like, get a big downside surprise. We need a payrolls report on Friday that is like sub 100,000 or later in the summer. Similar to what happened last summer, where you had that July jobs print that was really disappointing. Then the market's kind of freaked out. Until we see a really disappointing data point where you think, well, maybe growth is going to be sub 1%, I think the market just sort of kind of looks to a lot of this noise at this point in time.
Jason, you're head of asset allocation for UBS Wealth Management. I need to ask you about private credit and private equity here. I mean, you know, private credit's consolidating. Private equity fundraising has plunged by more than a third over the first 3 months of the year, I think. You know, investors are heading to Berlin for that super annual event, you know, to raise money. And, you know, I just want to hear, what is your thoughts on all these continuation vehicles, deteriorating CLO demand, M&A activity falling off a cliff? I mean, what is the bullish narrative for private credit in your eyes?
Well, for private equity, at least, we know like the flywheel of how they can, you know, buy then exit. That's been sort of, you know, that's been delayed, and so their ability to exit, raise new money, that's impaired. This is, you know, could go on for a little bit longer this year, but I think that's not a fundamental, you know, broken model at all. I think for private credit, it's something where the way we kind of think of it is like from an allocation perspective, how much do you already have in your portfolio? So it's true these asset classes might be facing at least a little bit of near-term stumbles, but when we think about what our average client is doing, they're still significantly underallocated to what we think should be, you know, alternative asset classes, private markets. These are secular allocations. These are not things you should be thinking about trying to get in and out one quarter to the next. So from a long-term perspective, I think we'd say most people are still underallocated.
Jason, the linchpin for the economy for spending is labor, right? Tell me what you're seeing with labor in the here and the now, and then tell me what you're expecting in the 1, 3, and 6 months, because I keep hearing labor's going to get worse, labor's getting worse. We just heard labor is cooling, right? But we're not hearing about mass layoffs. When I talk to people, they're not saying, hey, we're getting ready to fire a ton of people, but I keep hearing that labor is going to get more and more challenged. What are you seeing and what are you expecting?
Well, I think that the general idea is that everyone expects the economy is going to slow. Tariffs are going to be inflationary, and they're going to be bad for growth. We've yet to see that in the data. This gets into the kind of the data resiliency point. I do think back to a couple of years ago when everyone was forecasting a recession because the Fed's going to raise rates, and instead the data went the other way. So I'm a little bit, at this point in time, kind of the boy who cried wolf on the data. I want to see the data actually kind of roll over. I think that's sort of a consensus view among investors is that low conviction, if you're running a business with a low conviction on the macro outlook, you don't want to fire too much. At the same time, you're reluctant to hire. So the market's in, like the labor market's in a bit of a holding pattern. I think that's a general nature for the economy as well. So until you really see demand destruction, there's a point where like forecasting, you just don't need that labor supply. I think companies are going to hold on to labor, hiring will be moderate. But if the consumer holds up, that sort of cycle, it won't break. And so you need one of these legs to break, and it really has to be the consumer. And the consumer's only going to break unless tariffs go up, real incomes decline, and then that's a problem. And we just don't see that yet.
When you put what we're talking about together in this idea of how to construct some sort of asset allocation, it raises the question, what's the biggest risk? Is it the question of inflation? Is it the question of potential downside risk to growth? Is it something that has to do with the risk asset portfolio, which traditionally has been stocks, or does it have to do with the risk being inherent in bonds? I just wonder, from your perspective, do you agree with so many people on Wall Street right now that stocks seem like a less risky asset class than the long end of the yield curve, given the exposure to a whole host of different risks that seems unquantifiable right now?
So I think the 30-year right now, sort of, it's in, I wouldn't say its own world, but clearly it's, the factors that are driving are different than what's driving, say, the 5-year. If you think about the Treasury curve and the relationship between equities, it's relatively well behaved in terms of diversification. You know, equities, you know, rallying, you see, you know, rates rise at the front of the curve, and that, or vice versa. So I think that part is sort of working fundamentally. The 30-year, it's less liquid, you know, not a big natural buyer base. It's going to do its own thing. So I'm not sure I'd want to interpret too much from what that 30-year is doing. I'd rather look at like how is the 5-year reacting to the data? How is that part of the fixed income portfolio, you know, correlating or not correlating with equities? I think for the most part, that's kind of relatively well behaved. So I'd want to just, you know, tamp down a little bit of the information I'm getting from the 30-year.
In other words, you're rejecting this idea that 60-40 is dead and that isn't necessarily a ballast to have bonds in your portfolio.
I think, well, right now we're saying kind of buy up to the 5-year point of the curve, kind of that area. So that's, in that case, it's working. 30-year, we'd see kind of be cautious on sort of taking that duration risk right now because it is hard to predict.
Jason Draho of UBS, thank you so much. And I think a lot of people, it seems like, Chris, would agree with him.
I would agree, right? If today's your first day on the job, what would you be saying? Would you be saying, oh my goodness, we're going into recession? Oh my goodness, the consumer's collapsing? You would not be saying that, right? There's a lot of fear about the unknown. There's a lot of fear about what could happen. But when we look at the data, you're not seeing it in the data. You don't want to put your head in the sand and say everything, I don't see anything, right? You have to be concerned about it. You have to be respectful of it. But at the end of the day, you have to follow data. And the hard data is telling you something else. And I really do discount the soft data. And I look to the prediction markets, and they tell you something much different.
But Chris, it's not the first day on the job for a lot of traders on Wall Street, right? I mean, they've lived through these markets many, many times, and credit spreads are just not reacting to some of the risks that are inherent in the economy.
We talk about this all the time. I've never seen a recession with credit spreads at 90 basis points over, right? And if you look at the issuance that's going on, you and I could issue $500 million worth of bonds. Now I'm exaggerating, but that market is healthy and it's healthy and it's funding, and that's very, very important because credit is getting to where it needs to go. And this gets back to CapEx and our thought that where you want to align yourself is with that CapEx because the companies are issuing the debt, they can spend it, they're cautious, but they're still saying, I still need to spend, and they are.
Chris Harvey of Wells Fargo, thank you so much for spending the hour with us. Damien, you're still with me. Coming up, we've got Tom Kennedy of JP Morgan Asset Management, Congressman Andy Barr, Lorena Lurici of T. Rowe Price, and Vishy Tirupatoor of Morgan Stanley as we parse through just what will be the main theme of the day, given the fact that we've got the roulette wheel of trade, we've got the roulette wheel of the budget discussions, and the roulette wheel of the economic data. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Nationwide is more than you think.
Definitely. Their resources help me create customized retirement income plans that help clients feel more confident.
Helping them get in their comfort zone, their retirement comfort zone.
Good zone.
Like my other favorite zone, Cal Zone.
Live now.
Here we go.
The ultimate tradition continues.
From what I've seen, it's like chaos.
America's #1 news program is now a free streaming channel with full episodes anytime.
Hey, let's go.
60 minutes. Is this what you want?
You're willing to talk about anything. I'm open to all of it.
The hardest hitting interviews.
The former president is known to watch 60 Minutes. If he's watching, what would you want to say to him?
Here, Bill, look at this.
The most influential people.
Who's the best coach in college football? Let me see a mirror so I can look at it.
Are you a billionaire yet? None of your business. Ain't you trying to get me robbed?
Exclusive investigations.
Am I getting a real look at what life is like in here today? Absolutely not.
Do you think people visiting know that these were looters?
For stories that impact our lives, 60 Minutes demands answers.
To those holding American hostages, you say what?
So many American officials are being targeted. Why is it not a bigger issue?
What is the most important takeaway for our audience?
What is your role in all of this?
How big of a problem is doping?
Where was the military?
Why are people suspicious?
That sounds like a problem. How is this possible?
Oh, come on.
Whoa.
Wow.
What is going on?
I'm Scott Pelley.
I'm John Worth.
I'm Leslie Stahl.
I'm Bill Whitaker.
I'm Sharon Alfonsi.
I'm Cecilia Vega.
I'm Anderson Cooper.
This is 60 Minutes.
The CBS News original.
Showtime, baby.
It's time for 60 Minutes. Watch anytime.
My mission is to protect you.
Who sent you?
You did.
Never seen one like you. Almost human.
I am human.
I'll be back.
You want to know who I am?
3, 2, 1, go.
LAPD! When you push yourself, sky's the limit.
SWAT's about saving lives.
Not every police officer that wears that badge holds himself to the high standard that we do here at SWAT.
Let's go get him.
Pluto TV has 3 classic sitcoms all in one place.
You want to go upstairs and fool around? No.
Classic TV Families Channel on Pluto TV.
I think the market, has probably some near-term upside.
We do remain a bit more cautious on the long end of the curve.
When we look at the equity market, we see more risks on the downside than the upside.
If things stay status quo, then I think you have the opportunity to see the markets move higher.
What's going to drive things higher? And then it's got to be the environment and earnings.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back. 90 hours and 90 minutes until the start of the trading day, 90 days until the start of the trading month, and we are clawing back losses. A real bullish tone in the markets over the past few days with any sell-off getting bought. HSBC's Max Kettner writing this morning. Recent dips in risk assets have been very short-lived amid less supportive news flows. Our sentiment and positioning indicators are still flashing buy signals. This has been the tone that we have seen over the past few days. Right now, we are seeing slight declines. Damian Sassower alongside me today, and I'm just wondering what you make of this increasingly bullish tone, even amid so many question marks on the trade front as well as on budgets.
And in the run-up to payrolls this week, I mean, look, I have to look abroad. I have to look at all these central banks that are meeting. We have Canada tomorrow, we have Poland tomorrow, we have the ECB on Thursday, we have India's probably going to cut rates on Friday. The stimulus is there globally, and the question is it going to feed through into asset valuations? My guess is, possibly.
Yeah, well, right now it also feels like people are looking past a lot of what they don't know and looking to what they do know, which is that earnings came in very strong, that there clearly is a sense that not only it was the negative data in sentiment really bearish, but it's actually coming up to the hard data. The hard data is actually hanging in there. So what is the incentive for people to truly throw away a rally that has really been the pain trade for the past couple of weeks?
Well, has it really been inventory building and front loading? I think that's what the market has to kind of parse through.
And that's the question about the data and the integrity of the data. Today we get JOLTS job openings data as well as manufacturing factory orders and durable goods. Tomorrow we do get the beige book, which I actually think is going to be interesting, as well as the ADP. I do find it fascinating. Hold on a second. I actually think the anecdotal information right now is really interesting. I read the ISM manufacturing survey from front to back yesterday because that's what I do in my free time. Thursday we get initial jobless claims. I'm just moving on really quickly from that. And Friday non-farm payrolls. I just wonder what we can do with this, because a lot of people have been saying that the actual headline number is going to be a lot lower than it has been in the past number of years, just simply because we're in a low churn, low job creation kind of market.
My question is, what is immigration going to do to some of these future payroll prints? I mean, can we really rely on them now that Trump just got the court approval to remove 500,000 visas, 500,000 jobs? So, my question is, we're looking forward into the next, few months. Are people going to put less onus on the payroll data? Possibly.
Well, it sounds like a soup, but the soup is getting less bad, at least when you take a look at futures throughout the start of the day. What we have seen is futures clawing back earlier losses, with the Russell 2000 actually turning positive. Now 0.2%. NASDAQ basically flat. The S&P futures lower by just 0.1%. In the bond market, a bid, and this is a shift from what we have seen over the past few days, and an important one. What you're seeing is a bid across the curve, in particular in duration. 3 basis points lower. Not a huge move considering the fact that this trades like a penny stock for the 30-year, but still notable given the fact that we got that Japanese bond auction action that went well. 30-year yields at 4.93%. And then in the currency space, also kind of turning the recent narrative on its head. Dollar strength, who knew? You've got the euro weaker just slightly versus the dollar, 113.93. Coming up this hour, Tom Kennedy of JP Morgan Asset Management. A shifting policy calls for new portfolio construction. Congressman Andy Barr on why he says the Senate must pass President Trump's big, beautiful bill, and Vishy Tirupattur of Morgan Stanley on why he prefers U.S. assets. We begin this hour with stocks steady as trade uncertainty persists. Tom Kennedy of JP Morgan Asset Management writing, as we deglobalize, higher inflation will likely come and bonds are unlikely to be the best diversifier in a portfolio. Tom joins us now for more. Tom, so glad to have you here. Welcome.
Good morning.
So why is it that everyone is getting more bullish on stocks, but more bullish on bonds at a time when it doesn't seem like we're really facing runaway inflation?
Yeah, and when we're talking about the sentiment in the market, I love listening to you guys set this up. But what's happening in the background is that betting markets have decreased its probability assigned to a recession in the next 12 months in the U.S. by 35 percentage points in just 2 weeks. This is a massive move, and for the first time since the tariff news really came out earlier this year, you actually now have betting markets recession probabilities below what economists are suggesting. So this is a new regime. I think it feeds into this bullish sentiment that's happening. Things are shifting so rapidly, and to us, that makes a lot of sense.
Well, Tom, why do you suppose that is? Is that because of the fact that they think deals are going to get done, that Trump's going to do a deal with India, they're going to do a deal with South Korea, with Japan?
I think that's part of it. I do think the Trump administration has suggested that the negotiations can happen, and they've backed away from some deals. But most importantly, you're still seeing inventories get to America. This year so far, shipping from China to America is up 6% relative to last year. Now, there's lots of volatility month to month, but we don't have this embargo risk, really. The second is that spending is slowing in Chase, where we get the best data on the planet. Spending is slowing, but more natural when you have high interest rates. And third is corporate margins, which you guys hit on, are still extremely healthy. So the risks of layoff are relatively low if we can work through this tariff risk. So to me, a lot of this volatility is related to the Trump administration, but things are still working, things are still progressing, and the hard data is turning really nicely, or at least not coming down towards the soft data.
Tom, I want you to put your real estate hat on for me. Operating expenses in real estate, through the roof. Do you think tariffs are going to be inflationary for the U.S. economy?
If they are, they support real estate in a really interesting way. The way that real estate works and you move through a higher interest rate environment is the first phase is we have to reprice those assets. And we really have done that. You saw commercial real estate prices move down about 25% as the Fed hiked rates. Very aggressive. But to your point, now costs rise, higher inflation, higher interest rates make it really hard to build. And now we're walking into a supply problem for real estate.
There we go.
So as we move out over the next 2 to 3 years, you're looking at really no supply coming across office all the way to residential. And across all of those, new starts are down almost 75% from the peak. So this problem of repricing now moves into a phase where supply becomes your bigger problem. And most real estate investors would sit here and say, if you look back through history, too much supply is always the problem for commercial real estate and real estate in general, but we're walking into a phase where there's not a lot of supply.
This actually goes perfectly to this question of inflation and what the real risk for bonds actually is. It's really good that you're bringing up real estate because that's the argument people bring for disinflation. Look at what you see with the glut of homes for sale. Wouldn't that lead to lower pricing? You're making the argument, not really. On the flip side, you're saying that this is people pricing out recession. So is the move that we're seeing in bonds a positive story about growth or a negative story about stagflation with higher inflationary risks on the horizon?
Yeah, I think you're running the risk that stagflation is the scenario we walk through. Now, that's a big word we all use, and it never gets defined. What I'm describing as stagflation is a world where growth can remain consistent with what we've experienced for maybe the last 18 months, but inflation is not below 2%. It stays a little bit above 2%. And the question becomes what the central banks do in this environment. My time at the Fed inflation was below 2% the entire time. Growth was the thing that decided if they hiked rates or cut rates. And now if inflation stays above 2%, it's not that simple. And we need to price more interest rate volatility, which means it's hard to price new financing. And you also have an environment now where rates are just higher for a period of time. It comes back to this portfolio construction piece. It's where you started. portfolio construction has to be different than what we had in the regime before COVID, where inflation was persistently below 2%. If we're going to see inflationary pressures move through this economy, interest rates will be higher, and maybe they won't be the same diversifier that they were.
So when you say portfolio construction, a lot of people would simply say, okay, you don't like the 60-40. And this is another way of saying it, right? Is there a more sophisticated way to put it in terms of how you have to think about what risk is, what you're trying to mitigate, what your new ballasts are at a time when there is this sort of uncomfortable inflation with slowing growth?
Harry Markowitz created the 60-40 portfolio in the 1950s. It didn't get broad-based adoption until the late 1990s. Why? Well, something critically changed in the late 1990s and in the early 2000s. The era of globalization hit its golden era, where any input I can get throughout the world, I'll take it, send it to me. I don't care what the consequence is. But now you fast forward, COVID hits. Oh wait, we need to keep supply chains a little more resilient. Now we have rising geopolitical risk. And then we can add on the deficit woes, which a lot of people want to jump to, but we're not seeing meaningful differentiation in how the dollar is being used globally. But in that world, if peak globalization is behind us, inflationary pressures are higher, and the same diversifiers won't work. And really what I'm, rubber hitting the road, the Fed doesn't have as much control of the long end as they've had for most of our careers sitting at this table. So something is a little bit different. As we sit and breathe here, this is something to talk about the rest of this hour. The 30-year real rate is at the highest level it's been since we've had a 30-year tip. Why? Why are people not jumping into it? Well, it's because there's lots more uncertainty. Things are changing.
Tom, and it's no man's land up above 270 on the 30-year real yield. I was looking at that yesterday, but you're talking Markowitz mean variance optimization. That's squarely in my wheelhouse. So let me ask you this. Alternatives, and the role alternatives play.
Yeah.
But the thing that I have a problem with is the illiquidity of alternatives. Are investors that you're speaking to, that JP Morgan Asset Management is taking care of, do they understand that when things get tough and the gates go up, they may not have access to those funds?
JP Morgan did this amazing family office survey last year. So the wealthiest families, how much of their portfolio is in alternatives? When I asked this question at like a cocktail party, people have no clue. 45%. So the wealthiest families, endowments, are able and already willing to give up the liquidity. When you look at the average person in, say, a wealth management office, 5% of their assets are in alternatives. So there's room to grow. The second point, though, is the asset management community is finding ways to add you more liquidity.
Oh, yeah.
Think about non-traded REITs as an example, where you can provide monthly liquidity to an investor, and now it's our job to find the assets that can optimize that liquidity. And in real estate, as an example, for a non-traded REIT, residential and industrial properties have multiples more liquidity. They turn over a lot more in the market than, say, office or data centers. So this is the optimization and evolution that's happening.
Okay, and we need to move on, but just quickly, this is something that starts to worry me after having lived through 2008 and 2009. When you start giving something the appearance of liquidity that is not inherently liquid, alarm bells start going off. At what point are we going to just slow walk back into that kind of paradigm of liquidity mismatch?
Yeah, and this is an important thing. It's not completely give up on liquid bonds. It's not completely all in on quote unquote less liquid ideas. But this is the balancing act that has to happen. And when I look at that paradigm between family offices and average investors, that's just a chasm that's too big. There's room for all of these products to coexist, but I think the shift that's most likely to happen with higher inflation, higher interest rates, is this move towards alternatives and balancing that liquidity, Damien, to your point.
Tom Kennedy, we could talk about this for an hour, and luckily we have an hour. We'll be talking about a lot of things going forward. Tom Kennedy of JP Morgan Asset Management will be sticking with us. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Dollar General shares are rising more than 10% in the pre-market. The discount retailer reported first quarter profit and sales that topped analyst expectations, and it boosted its comparable sales forecast for the full year. Dollar General also said it expects to mitigate a significant amount of the tariffs currently in place. Meanwhile, Africa is set to be the largest beneficiary of the $200 billion the Gates Foundation plans to give away over the next 2 decades. Co-founder Bill Gates made the announcement at an African Union gathering in Ethiopia on Monday. The organization said last month that it plans to give away the money over 20 years before shutting down in 2045. And President Trump has changed his official portrait less than a year into his second term. The new image carried on the White House's social media channel swaps the turquoise tie for his favored red power one and switches the background from the U.S. flag in what appears to be a stateroom to black. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. News you need on a Tuesday. Up next, the Morning Calls plus Congressman Andy Barr and why he says the Senate must pass President Trump's big, beautiful bill. That's coming up next. This is Bloomberg Surveillance.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Are you ready? It's full! It's burnt! Why should you stay in Hell's Kitchen?
I'm a better chef.
The champion, ladies and gentlemen, this is Hell's Kitchen.
Calling all Tyler Perry fans.
Make sure everybody's on high alert.
Your favorite hit BET shows in one place, 24/7.
Wait, what?
You ain't seen nothing yet.
All the heart-pounding drama. All the time.
It's a wild ride. Buckle up.
On BET, Tyler Perry Drama.
We just had the best month for a May going back to 1990. And meanwhile, people are saying, should we sell? And the answer, at least on the outright, seems to be no when it comes to stocks, given the fact that we've seen that rally. When it comes to bonds, there is another story. And the 30-year is the question, who wants to buy a 30-year bond with a yield near 5%? Getting a little traction today, but still clawing really awfully close to that 5% level, which has been the pain point. We'll get to that in 1 second. Time now for the morning calls. First up, Piper Sandler raising his price target on Lululemon to $315, looking for the company to report better than expected earnings on Tuesday. Next up, Morgan Stanley lowering its price target on Campbell's to $35, expecting a challenging year ahead if tariffs stay in place. And finally, JP Morgan upgrading Pinterest to overweight, pointing to solid user growth and better ad capabilities with the ability to click on links and shop directly from Pinterest, so I hear. Turning to policy, President Donald Trump trying to sway Republican holdouts on his one big, beautiful bill. Trump posting on Truth Social, I call on all of my Republican friends in the Senate and House to work as fast as they can to get this bill to my desk before the 4th of July. Republican Congressman Andy Barr of Kentucky voted in favor of the president's bill last month, and he joins us now. Congressman, thank you so much for being with us today.
Good morning, Lisa.
Good morning. So I want to start with asking about the deficit, and I'm watching that 30-year bond yield, as everyone in Washington, D.C. is. Do you believe what President Trump said on his Truth Social post last night, that this doesn't add to the deficit, even though you have a whole host of different estimates saying that it will add $3 trillion to the deficit over the next 10 years?
Well, Republicans are also watching the 30-year. We're watching the 10-year. We're watching instability in the bond market. We're looking at weakness in demand for treasuries. But blaming the big, beautiful bill for weakness in the Treasury market or instability in the Treasury market is like blaming the firefighter, the arsonist blaming the firefighter for the inferno. We just went through 4 years of a drunken sailor spending spree by the Democrats that put us, way behind the 8 ball. Also COVID, and there was some bipartisan spending associated with COVID. But it's very rich for Democrats to accuse Republicans of fiscal irresponsibility when we just went through this spending binge that produced 40-year high inflation, 20% increase in prices. Look, the bottom line is we know we have to achieve greater fiscal discipline. And frankly, we need some bipartisan work on mandatory spending reform. But what we also need is economic growth. We will never balance the budget. We will never get our fiscal house in order without robust economic growth. I believe, as Kevin Hassett has argued, that this legislation, this one big beautiful bill, could produce, along with the deregulatory project, along with more energy production in the United States, that we could achieve that 3 to 4% GDP growth. That's the kind of dynamism that is not accounted for by the Congressional Budget Office and some of these static scores.
So let's talk about that, why it's not being accounted for that in places like the Committee for a Responsible Federal Budget that expects this to increase the deficit and says that it only cuts spending by 0.8% of GDP. Where are people not including growth that you see as being part of this bill?
Well, the CBO just doesn't. They were off $1 trillion, underestimating revenue reflow that came as a result of growth from the Tax Cuts and Jobs Act in 2017. The CBO has a terrible track record of not including the dynamic impacts of these tax cuts. And in this providing that certainty and stability for private sector investors, fuel that are included in the bill for 5 years, pulling forward all that CapEx. There's a reason why the Atlanta Fed is projecting 4% GDP in the second quarter, because business anticipation of R&D, interest deductibility, increasing the small business pass-through deduction from 20 to 23%, making that permanent.
Listen carefully. 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 Listen carefully.
Capitalists.
There is a question, though, in your quest to be free market capitalists of both getting revenue from tariffs that have to do with continued trade, albeit with something of a tax, versus decoupling in its entirety. And what you see from a lot of the data right now is that trade is going down quite considerably, and exports from the U.S. are going down quite considerably. So how do you account for some of the revenue and the growth from some of these tariffs if you're also talking about potentially decoupling in certain key industries between some of the biggest economies out there?
Well, I liked what Jamie Dimon said at the Reagan Economic Forum in California when he said, I'm being associated with that. When he talked about, strategic de-risking from China on those national security sensitive industries, not complete decoupling on things like tennis shoes or basketball shoes or apparel or things that do not implicate national security. What I would say about in general, as a free trader, why I support President Trump's agenda is because of the enormous potential that this has to actually open up markets for American exporters. If we can open up India, for example, and reduce their protectionism protectionism and their trade barriers against our exporters, that is massive. And if you think about it, from where we were on Liberation Day to now, we're back in basically a bull market with a correction embedded. Every trade deal that is inked from here on out is, again, jet fuel for the economy. We get the certainty of trade deals in place with more market access for American exporters, plus deregulation, plus the tax cuts. I do see 4% GDP.
What do you think the Senate is going to do to change the bill that you would be okay with in terms of cutting salt tax deductions, potentially adding back and potentially even increasing some of the CBO score for the deficits with respect to Medicaid? What are you going to be okay with?
Well, look, we've got to get this done. I think we have to have an ability to compromise on some of these details, whether it's SALT, whether it's Medicaid. I welcome fiscal hawks in the Senate saying, hey, we need to do more on the spending restraint side. So Ron Johnson, my colleague, Rand Paul from Kentucky, good for them for asking for a reduced size and scope of the federal bureaucracy. I like that. Let's codify some of the DOGE savings. But at the end of the day, we have to get this done and deliver this. 77 million Americans voted for this pro-growth agenda. I think at the end of the day, we'll come together, we'll get it done.
Congressman, thank you so much for being here.
Great to be with you.
Congressman Andy Barr here in New York. And this really is the key question, Tom. Ultimately, what gets done, in what form, and whether it's going to generate more growth than people are expecting, because that really is one of the key questions at a time where everyone seems to be focused on the deficit.
Yeah, Congressman Barr, you're really separating out the issues for investors here, too, which is, can we balance that growth with reduction in expenses so that the Treasury market will function? And you did it very quickly, but you highlighted some of these critical connectivities between the U.S. and China, which may have some national defense issues. So much on your plate to deal with. Well done.
This is the reason why. I mean, this is the reason why, honestly. I think a lot of people are having a hard time understanding the bill and understanding exactly what to pay attention to, Damian, given all the potential competing headlines.
Yeah, no, I mean, look, the deteriorating relationship between Xi and Trump, is it really deteriorating? You know, we don't know what's really going on inside the White House, inside the Oval Office, inside the West Wing. So, you know, I mean, it's anyone's guess at this point.
And it's anyone's guess what some of the data is going to point to as well. Coming up, we're going to be speaking about that ahead of Payrolls Friday with Bluina Urici of T. Rowe Price. We've got eco data that includes the JOLTS data that we get later today. Fed speak, of course, non-farm payrolls. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
People couldn't see my potential, so I had to show them.
I've run this place for 20 years, but I still need to prove that I'm more than what you see on paper.
Today, I'm the CEO of my own company.
That's the way my mind works. I have a very mechanical brain.
Why are we not rethinking this?
I am more.
I'm more
than who I am on paper.
You and I are in this together.
These are the good days that we dreamt about. Take it in.
See that moment when it comes.
Truth or dare?
Truth.
Truth.
You attack me every time I pass you in the hall.
I think you're cute.
Dream on.
We had a drop go bad.
Every episode.
We're in.
On demand.
Without a Trace. Watch it anytime on demand on Pluto TV. Stream now. Pay never.
Okay, you big hunk of a man, come and get me.
I feel like I'm living my best life, and yeah, I'm the best of the best type. They come and see me Friday night lights, and I hit like the beam of your headlight. I break through the walls when I run it. I break through the walls when I run it. I break through the walls when I run it. I break through the walls when I run it.
Friday the 13th. Films 1 through 8. Now on demand on Pluto TV.
There goes the neighborhood.
Wow. This is incredible. It's gorgeously gorgeous.
Oh my word. Look at that.
FBI!
There's a storm coming. You're about to be swept away.
That's enough!
Context changes everything.
The closer we get to the start of the opening day, what you can see is any losses getting clawed back. Right now, you can see futures pretty much unchanged, actually in the green for the NASDAQ and the Russell 2000 up now 0.4%. S&P futures basically flat. If you take a look at the bond market, a rally there after a successful Japanese 10-year auction. What you can see is that rally even in the 30-year Treasury that nobody seems to want to buy. Yields lower by 3 basis points, 4.93%. The 10-year 440 still solidly sub 4% on that 2-year. 1 hour away from the cash open. Here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. We start with Constellation Energy. Those shares are soaring nearly 10% after it signed a giant energy deal with Meta Platforms, the Facebook parent company, agreeing to buy nuclear power from Constellation's Clinton plant in Illinois for the next 20 years. All of this meant to fuel Meta's AI operations with clean, around-the-clock energy. The deal could even lead to them building a brand new reactor at the site. So the AI spending showing no signs of slowing down. Next up, we have the latest retailer to report, and that is Signet Jewelers. Those shares are soaring now, up 17%. This is the parent company of Kay and Zales Jeweler, and it just reported better than expected earnings in Q1, and it also raised its profit outlook for the full year. They have been making changes to their strategy, leaning more into offering lab-grown diamonds and gold, and it looks like that strategy shift is working out for them. And last up, we have Dollar General. This was an interesting one. Shares are soaring nearly 10%. They also reported better than expected results in Q1 and boosted their full year comparable sales forecast. That is because they're gaining ground not just with their core customers, but also with new shoppers that are trading down from more expensive stores. And when it comes to tariffs, that was the big worry for Dollar General since it imports heavily from China. But they said that they're going to be able to mitigate a significant amount of the tariffs that are currently in place. Lisa?
Yeah, thank you so much, Yahaira. I was just reading more about Dollar General saying that they did caution that consumer spending could be pressured by tariff-related price increases, but managing to move forward with this. But really interesting, Tom, the fact that you get some sort of better than expected results because of trade downs at a time when people are cost conscious.
Well, we're actually seeing that in our real estate portfolio too. Retail platforms are actually holding in okay, but what you're seeing the customer do at our properties is trade down to more away from discretionary ideas to non-discretionary ideas. So, and this was actually happening before the tariff news. So there is a slowdown in the consumer that's happening. We would characterize it more as normalization rather than a meaningful slowdown, though, in the grand scheme of things.
Which is the reason why people are parsing through the economic data to understand whether it's going to be north of 1% or sub 1% when it comes to growth. With that economic data, as well as Fed speak on deck, Michael McKee of Bloomberg Economics, what are you looking for in a really packed week for economic data?
Well, everybody's going to be focused on jobs, Lisa, and then in the coming weeks, we're going to be looking at inflation, the two pillars of the Fed's dual mandate. We had some Fed speak earlier this week, yesterday, from Chris Waller, the Fed governor, and Austin Goolsbee from the Chicago Fed, and both of them basically suggesting something called good news rate cuts were possible by the end of the year. And here's what they're talking about. Waller is looking at the inflation numbers and looking at the idea that it is important that inflation expectations stay anchored. And if they do, a one-time move in inflation because of the tariffs would not affect things. And here's the problem. The University of Michigan numbers, as you can see, show big increases in what people think is going to happen over the next year and the next 5 years in inflation. But market-based measures show much, much less, that inflation is contained. And Waller is saying basically he believes the market-based numbers. So if we get a one-time move up in inflation, it'll be okay. Goolsbee and Waller both watching the other side of the mandate, which is unemployment, which the Fed is going to look at as a signal for whether the economy is significantly slowing. And right now, we don't know because it's way up in the air, although there are some questions about whether this is going to be the kind of last hurrah for the labor market. JOLTS out in just about an hour and 20 minutes. Their job openings expected to fall. ADP is expected a very slight increase in jobs, but they were way off last month. Payrolls supposed to come down a lot. It's unemployment that's holding in steady, and that's what everybody's going to be looking at to see if there is any kind of movement there that would disturb the Fed. So watch for the jobs report on Friday. Watch for the inflation numbers coming up ahead. And if you want to bet on a Fed rate cut at the end of the year, good luck to you.
Michael McKee, thank you so much. I think a lot of people have thrown their hat in that ring and then taken it out and then thrown it back and then, basically sat on it. Right now, Blarina Larici of T. Rowe Price joins us to talk about that economic data ahead. Blarina, what does a good jobs report look like? What does a bad jobs report look like, given the fact that a lot of people are saying the headline number is going to come down quite significantly?
We also expect a deceleration in the pace of employment growth this year. I think that's been quite well telegraphed because we have this uneasy equilibrium in the labor market where firms are not hiring. Demand for labor has actually slowed quite significantly, but they're not firing either because we did have those post-pandemic shortages of workers. And I think companies are very cautious about talent. So I think the labor market equilibrium is quite uneasy. A good news report for me is one where the unemployment rate does not tick higher. I think this is what would really concern the Fed, broad-based layoffs. And also we need to see in this uneasy equilibrium, is the wage growth and wage inflation rate going to slow or stay sticky where it is? I think we need wage inflation not to accelerate from here. We'll be watching those inflation expectations very closely. Indeed, I think it was a very interesting choice of words by Governor Waller to say that this hit to inflation is going to be a one-off shock to the price level and not persist, because the last time the Fed went on that assumption, we all know what happened. So I think we got to watch very closely those inflation expectations and what happens to wage demands once the effect of higher tariffs hits consumer prices.
Blarina, the Fed has made no secret about its asymmetric view on policy rates and inflation, opting to ease first and ask questions later. Yet despite that dovish bias, I think the market's only pricing in, 2 cuts before the end of this year and a terminal rate of 3.25 by the end of next. Is the market right?
The market has been oscillating a lot in terms of price cuts for this year, and I think it's been responding to whatever has become the dominant narrative. At one point, it's the growth scare, then it is the inflation shock from tariffs. Now it's the fiscal package. I think for the Fed, it's going to be very tough to cut interest rates this year. I still have 2 cuts in my forecast towards the end of the year, but I think that window might be closing quite quickly for the Fed. If we don't get a meaningful deterioration in activity and in the unemployment rate, and the inflation shock from tariffs hits starting from Q3, which is my baseline scenario, I think it's going to be pretty tough for the Fed to justify easing policy with accelerating inflation and a labor market that is holding up.
Yeah, Blarina, really nice. What's the differentiation from you for a demand side driven report on Friday versus a supply side driven report on Friday. And what I'm getting at is the immigration numbers into this country are abysmal. The border is effectively closed, and a big piece of what you suggested is during COVID, immigration filled in that supply gap. Are we on the other side of that, or is this really a supply issue or a demand issue in your mind?
So I think it's both, but let's unpack this because I think it's going to be very, very important in terms of what happens with the path of the unemployment rate for this year. So we have a slowing in demand for jobs, and we see that because the vacancy rate in the JOLTS has been declining. What we don't have is mass layoffs so far. So all this uncertainty about the business climate has not led to firms laying off workers. We also have an administration with a policy to restrict labor supply, foreign labor supply. That we know because those border crossing statistics that you mentioned, they've come down a lot. We also see the labor force participation of foreign-born workers declining significantly since the end of last year. So we know that, and I think this declining labor supply is coming at the same time as the demographic forces in the US with the baby boomers retiring. So the supply of workers in the economy is going to slow down a lot this year. What we saw post-pandemic with increase in net foreign-born workers in the economy was that we entered some kind of virtuous circle where we had vacancies, we filled those, extra workers created more aggregate demand and so on, and the economy was able to sustain above-trend growth for quite some time. I think we'll be seeing the opposite of that this year. But now, if we don't have broadly based layoff and we have a declining labor supply, the unemployment rate in the economy is probably going to stay sticky or trend lower. And that's going to be a supply effect. And I think if you're the Fed and you don't see that increase in the unemployment rate or the SAM rule being breached, you're going to be pretty cautious about cutting interest rates in this environment with heightened inflationary risks.
Yeah, how much of this supply issue, Lorena, is impacting the expectations for growth in this country?
I would say a fair bit. I think it's that and uncertainty about the climate of doing business, uncertainty about what's going to be in this fiscal bill. Again, this is an interesting one because there are lots of components of the bill that came out of the House that support spending and investment with 100% capital depreciation and expensing for investment and so on. But you also have Section 899, which you all have discussed in depth today. I think that makes it harder for FDI coming to the country because they will not know which countries will be in the list and what different types of capital, how they will be treated.
Yeah, Lorena Murici of T. Rowe Price, thank you so much for being with us. It really has been this confusion. We keep talking about the negative sentiment. The data comes out. It's sort of a tale of a lot of different aspects, and it doesn't actually speak to a materially weakening labor market aside from just low hiring, low firing.
Well, Lisa, we've had a lot of people come on today railing all over the 30-year. And, you know, I've just done a little back of the napkin calculation here. I'm using cross-currency basis swap spreads. You know, you can get a 30-year JGB hedged into dollars, 6.85%. So why would you buy a 5% 30-year in the U.S. when you can get 250 basis points more by buying JGBs and hedging out the dollar exposure?
I love how you're mapping that out as we talk. He's sitting there calculating this. But Tom, I mean, to that point, I think the idea of feelings versus reality, there have been some really fundamental changes that have been going on under the hood. And I wonder how much some of the sentiment has to do with entry-level people not being able to be hired or not getting jobs right out of college. Whether there's been a weakening that hasn't been as pronounced in the numbers as it has in how it feels for certain people when they go out there.
Yeah, this polarization concept you can now see in the way you survey Republicans versus Democrats, for an example. During the Biden administration, Democrats felt their consumer sentiment was better than Republicans. We're all living in the same United States, but sentiment is a completely different narrative. I think it helps explain why soft and hard data can diverge and why most economists are now pulling back some of their confidence in what the soft data today tells you about the future. Those surveys are just not as meaningful. But Lorena really hit at a really critical development that's going on in this country that really hits at Congressman Barr. Like, we need growth, but the simple ways you get growth are productivity and people. And at the moment, Lorena didn't give the number, but you're seeing border encounters at the Southwest land border at like 10,000 per month. Last year, in the month of May, you were at 200,000. The year before that, something similar. So these are challenges for the administration.
Well, Lisa, I mean, the remittance data out of Mexico just printed, right? I mean, it's falling at about $1 billion a month. That's $1 billion a month, and Mexico relies heavily on remittances from the U.S.
I'm glad that you said that. Actually, I was just looking at that yesterday. The remittances to Mexico from the U.S. fell 12%. Which is the biggest drop in more than a decade. And that really goes to this question of, are there the people here to even be sending back, let alone, just what that means for the respective economies. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. A vote count is underway to determine South Korea's next president. According to an exit poll released soon after the voting ended earlier this morning, Democratic Party nominee Lee Jae-myung is on track to win. The final voter turnout for the election reached its highest since 1997, according to Yonhap News. Meanwhile, Microsoft has cut an additional 300 jobs just weeks after its largest layoff in years, where the tech giant slashed 6,000 roles. The cuts underscore the industry's efforts to trim costs even as it plows billions of dollars into artificial intelligence. Microsoft's previous layoffs fell hardest on software engineers, but it couldn't be determined what kind of jobs were affected this time around. And Coco Gauff beat Ekaterina Alexandrova in straight sets to book her place in the French Open quarterfinals. The number 2 seed will face fellow American Madison Keys, who defeated Haley Baptiste. Meanwhile, Novak Djokovic earned his 100th career win on Paris's red clay by overwhelming Cam Norrie. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Wonderful work this morning. See you tomorrow. Right now, up next, setting you up for the day ahead. Plus, Vishy Tirupattur of Morgan Stanley on his preference for U.S. assets at a time when so many people are saying sell America. This is Bloomberg Surveillance.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
That earring is ridiculous. At your age. And it's too small.
Celebrate National Game Show Day all month long with our favorite wins on Buzzer.
Cement. Concrete.
I was so busy thinking of a clue.
Oh!
I've got one. Have you?
Section. Slab.
Yeah! Oh, that's great, Laura. That's just great.
Celebrate all month long. Watch now on Pluto TV.
Join Light the Fuse on Instagram Live for a stream-along of Mission Impossible Rogue Nation, Thursday, June 5th at 8 p.m. Eastern on Pluto TV's Action Channel.
Speed Sport 1 is your home for live racing on Pluto TV.
Oh, look out, one upside down into turn number 1.
From grassroots to the international stage.
It's going to happen over the line. Unbelievable finish.
If you're looking for racing, it's waiting for you on Speed Sport 1.
They touched down the back straightaway.
Check out Speed Sport 1 now on Pluto TV.
This could get crazy.
All reality WeTV.
My family has drama too.
It's real voices.
Never know what's going to happen once you get us all together.
There is a skinnier person inside of me.
It's real emotions.
I do.
Robbing the bank is kind of a turn on.
Unbelievable.
And it's all in one place.
I had 72 hours before the marshals come after me.
What?
I'm here for it, honey. All of it.
All reality WeTV.
Hello? Is there anybody still in here?
What's that? There's movement over there.
We're not here to scare you.
What is that?
I think something's investigating us.
The more everything changes, the more everything stays the same. Still budget negotiations down in Washington, D.C. Still a question around what kind of trade deals are going to get done. And still a question around the economic data. What does it mean? What we can see is what it means in markets is a pretty sanguine backdrop, pretty somnolent this morning, flat pretty much on equities. And what you're seeing is a little bit of a rally in bonds, but that too is fading as the day goes on. You're seeing something counterintuitive in the currency space also. A little bit of dollar strength, although that comes after a massive dollar weakening throughout the year, down more than 8% for the DXY, the dollar index, as people look to the questions of what U.S. policies mean for both growth and the fiscal overhang. Counting down to the opening bell, this is what we are watching. 10 a.m. we get durable goods and JOLTS, plus Fed speak from Goolsbee, Cook, and Logan Wednesday, ADP employment data and ISM services on Thursday, the trade balance, and another round of jobless claims. Watch the continuing claims in particular, plus German Chancellor Merz meeting Trump at the White House. And on Friday, the big one, or it should be the big one, which is May payrolls. And I say that because so often it seems to not actually matter in these kinds of what does the data mean moment. Turning back to markets, Vishy Tirupattur of Morgan Stanley writing this. Despite unprecedented policy uncertainty, the global economy is still in expansion mode. We believe that U.S. assets will remain compelling versus the rest of the world. Vishy joins us now for more and to tell us why cricket is the best sport out there, which we can get to in just a minute. But Vishy, I want to start with this idea that Morgan Stanley's put out there. Thought it was a fascinating argument over the weekend. Essentially, buy everything about the United States. Buy bonds, buy stocks, just don't buy the dollar. How do you do that?
So what we are saying is that the investing is really about relative value and what's in the price and what's expectations going forward. I think we can make a pretty good case for each of these markets, the bond market, for the equities market, and for the credit markets, that the better opportunity is in the US versus the rest of the world. At the same time, the strength of the dollar, that has been a big thing for many years now, for well over a decade. We've had yield differential and growth differential and policy certainty, at least less uncertainty about policy. All of those things are no longer that compelling. So we expect the dollar weakness to persist for some time. So if you're a US investor, US dollar investor, great. If you are a non-US investor, the US opportunity is still the better opportunity, but hedge your currency. For years, putting money in dollars, putting money in US assets, and not hedging actually was pretty good, worked out pretty well. Yep. If you put money in during good times in US equities, if markets start to deteriorate, allocate to treasuries, but don't hedge currency, was a pretty good strategy by and large in the aggregate. So that not hedging for non-US dollar investors, we think will be a problem. So what we are recommending is people hedge the currency exposure, but still we have the largest market. We have if you take the US Treasury market, US Treasury market is 10 times the size of the European government bond markets, say all AA plus European government bond market, you add them together, US Treasury market is 10 times the size. Yep. US stock market is 5 times the size of the European stock market. US credit markets, investment grade markets, 4.5 times.
I'm laughing because everyone around the table is like, well, so go ahead, Damien.
Vishy, you're the chief fixed income strategist for Morgan Stanley, and I love it when rate strategists start talking about currency risk premia, and that's exactly what we're doing right here. And look, I know I'm sitting in the chair right now, but my day job is I run emerging market fixed income research for Bloomberg Intelligence. EM local government debt up 9% year to date. Best performing asset class in global fixed income. What are your thoughts on it?
We are pretty constructive on EM, actually. Actually, EM local currency as opposed to EM hard currency. We like your EM local currency. EM is, as you know, EM is not one blob. There are very idiosyncratic stories across the board, but across I think broadly speaking, we are pretty constructive on EM fixed income in general.
Hold on here, though. So we're liking EM now. Bring it back to the US, though, because I want to talk to you a little bit and hear your thoughts about where there is value on the Treasury curve. We've been talking all morning about the 30-year. I'm looking at the chart here. You got 30-year real rates, 2.65%, near the highs we've seen in the history of the TIPS market. Are people buying it? Why aren't they buying it?
So I think the best opportunity in the treasury market is in the steepener trade.
Okay.
So what we'll consider 330s, 230s. We expect that we'll find, I think where there's a significant mispricing is in the number of rate cuts that are priced into the treasury market today. So roughly about 2 cuts are priced this year, about 2 cuts, a shade around that, priced for next year. We think that, well, our economists expect no cuts this year and substantial number of cuts, 7 cuts next year.
Wow.
So if the world pans out according to how we are imagining it, which means the economy slows but doesn't tip over into recession. So economy slows to 1% in 2025, 1% in 26, and unemployment rate doesn't really spike because unemployment rate is a function of both the labor force supply. So migration has a big impact on it. We expect an unemployment rate to tick up but not spike. So we put all those things together. We think there's a good case for Fed not to cut this year, but having to cut a lot more next year.
So I understand the steepener trade in that, but historically, if someone sat here and said we're going to cut 7 times in the next 18 months, long duration is the play here. How come not just buy the outright 10-year?
No, I mean, we're not absolutely. We would be recommending that as well. Our expectation is 12 months from now, 10-year Treasury will be in around 345. So it's a pretty substantial rally. Yep. In fact, our big case for fixed income in general is really the duration rally. So it's a 100 basis point rally in 10-year Treasury, roughly. And that's a pretty significant update.
Just to put some underscore on this, are you saying that all the people saying, sell 30-year Treasuries, short 30-year Treasuries, guess what? This is going to be absolutely the risk asset. You're taking the other side of that?
So what we are saying is that what will eventually matter is how the growth expectations and the policy response, the Fed's response to those growth expectations. We think currently they are off, and if the policy turns out to be the way we are anticipating it to be, we think duration is a good bet.
So buying 30-year yields.
The 30-year yield is a 2026.
We think it's
No, I do want to do it. I mean, it's a 2026 trade as opposed to 2025 trade. So best opportunity for buying the long bond would be later in the year, early next year, as opposed to now, when some of the uncertainties that surround that, we would have seen hopefully some of those things would be clear.
Vishy, we're going to have a special hour devoted to not just this, but also your argument on cricket, which I know you've devoted a lot of time to come in here and defend it from the ruthless attacks from baseball lovers last time you were on. Vishy Tirupattur of Morgan Stanley, thank you so much for being with us. Honestly, I just have to say thank you, Tom Kennedy. Thanks you so much. And thank you so much, Damien.
Thank you.
You want to come back tomorrow and do it again?
I think I am.
Oh, that's fantastic. I'm very much excited. So Damien's going to be with us coming up tomorrow. Also, Savita Subramanian of Bank of America, Kate Moore of Citi, Jim Caron of Morgan Stanley, and EU Commissioner Valdis Dombrovskis. Don't miss that, as a real question emerges about how close the U.S. and Europe are to a trade deal. This was Bloomberg Surveillance.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
You and I are in this together.
These are the good days that we dreamt about. Take it in.
Seize that moment when it comes.
Let me introduce myself.
I am Keegan.
I am Jordan. And I'm ready to get loose.
All right. I got my eye on you, Jay Quellen.
And boom goes the dynamite. Hingle me Kringleberry. Donkey teeth.
I said, big.
Hook me up with a treat.
I love it. I'm for real. I'm for real.
Who's our suspect now? Who did this?
We're gonna put birds on things.
Put a bird on it.
What happened? I fell through the floor again.
Everyone's been so nice to me.
Everyone?
Well, not you.
The ocean has many moods. Fierce. Relaxed. In your ocean. Mysterious. Adventurous.
Such an incredible sight.
And quiet. See all sides of the ocean on Love Nature.
Fun place, isn't it, Mama?
It's a dump. I'm doing your washing and your laundry and your cooking for you. What on earth is that wife of yours doing for you? Well, good Lord, there goes my appetite.
When's the last time you saw a family smarter than this one?
Last time I watched the Flintstones.
Markets in a risk-off mood again this morning after a turnaround yesterday. 30 minutes until the start of cash trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, Trump's team pushes for trade talks with China as the president presses reluctant Republicans on his multi-trillion-dollar tax bill. And Wall Street titans are gaming out how to profit from this policy uncertainty. We'll hear from AQR's Cliff Asness as well as Marathon's Bruce Richards in this program. Plus, the Texas Stock Exchange challenges the NYSE and the NASDAQ. We'll hear from the man helping lead the charge, former Congressman Jeb Hensarling. Katie, what are you watching?
Well, it's still earnings season, so I have my eyes on Dollar General, out with a beat and a raise. The retailer
easing tariff concerns, with the CEO saying that they're uniquely positioned to serve customers in a variety of economic environments. Obviously, traders seem to like that. The stock is up about 10% pre-market, Matt.
Wow, big boost there. We're also watching Meta, the owner of Facebook, buying nuclear power from Constellation Energy as AI sends power demand soaring. You can see Facebook shares right now, little change in the pre-market, but Constellation up more than 11%, Katie.
And on the policy front, President Donald Trump still pushing for Senate support of his big, beautiful tax bill. The president wrote on Truth Social yesterday that, quote, what nobody understands is that it's the single biggest spending cut in history by far. There will be no cuts to Social Security, Medicare, or Medicaid, a key flashpoint in the debate. Former acting chief of staff Mick Mulvaney had this to say about the process.
The Senate is under no way, no circumstances, ever going to accept what the House sent without any changes. So this is just round 2 of at least 3. I think, as Linda, that this July 4th date is completely artificial. The important date is this. Buried in this bill is the increase in the debt ceiling. Scott Bessent has said that the Treasury runs out of money, I think, effectively sometimes in mid-August. That's the real date here. That's the hard deadline. Let's get the latest from Bloomberg's Washington correspondent, Tyler Kendall. She is at the White House. So, Tyler, what do we know about how powerful the president will be in convincing these senators to vote for his one big, beautiful bill?
Yeah, hey, Matt. Well, he's definitely starting to ramp up the pressure on these senators, hosting a sweep of calls last night to some of those key holdouts that say they are threatening not to vote for the bill unless they see their demands met. And there really are conflicting demands here. On one hand, you have this group of Republicans pitching themselves as fiscal hawks, perhaps led by Senator Ron Johnson of Wisconsin. He's one of those senators that did get a call last night. He wants deeper spending cuts and has taken issue with claims that new tax priorities, like no taxes on tips or overtime pay, they really incentivize growth. On the other hand of this, though, are those Republicans that are raising concerns about changes to benefit programs, such as Senator Josh Hawley, another senator who got a call last night. Of course, this is a politically fraught issue for the White House when it comes to changes to Medicaid. And as you read at the top of the segment, President Trump is pledging that ultimately there will be no cuts to Medicaid. But there's a few different analysis out there, including one cited by Bloomberg News, that shows that 7.7 million people by 2034 could see their coverage lost due to shifting eligibility requirements. Now, I could keep going. This is, of course, one big, beautiful bill, so there's a lot of disagreements in here. But I would also pay close attention to what happens on the tax cut front. There's some senators that want to make some of the temporary provisions permanent. And then lastly, Matt, since I know you watch this closely, there's some disagreement about the SALT cap. We had Senator Kevin Cramer on Balance of Power last night. He suggested that a sweet spot for that cap could be between $20,000 and $30,000. Of course, that is lower than the House plan of lifting it to $40,000.
And that is certainly not good enough for Matt Miller. And July 4th is quickly approaching, so...
Or any of those who are in favor of states' rights. This is a states' rights issue, and I think a lot of people forget that, right? The idea is if you cap the state and local tax deduction, you're centralizing power, pushing it towards the federal government in Washington.
Well, we only have like 2 minutes left with Tyler, so I have to ask you about China because we played a little bit of Mick Mulvaney at the top here. Something else he said was about the concept of a President Trump, President Xi phone call, which we talked about yesterday, Tyler. He said that there's a fundamental disconnect here. Trump wants to talk at the very highest levels. That's not always how the Chinese want to do business. So, Tyler, it seems like we're in a little bit of a standoff here when it comes to actually getting these two on the phone.
Right, it really does feel like a holding pattern, and key to Mick Mulvaney's comments was that line that you highlighted, a fundamental disconnect, since we know that China really would like to see key advisors iron out the details before they put Xi Jinping on the phone, and it does seem like some of those key details continue to mount here. The other part of this is that there's just so much uncertainty, and we know that's something that China doesn't really want to put their leader in a position of getting on the phone with President Trump when there still isn't really exact clarity on what this White House needs to see in order for a deal to get done. Now, I mentioned this yesterday on this program, but I did have the chance to catch up with the Deputy Treasury Secretary, Michael Falkender, who told me on one of those issues, eventually, it really is going to come down to a phone call between the two leaders, and that's when it comes to the U.S.'s accusations that China is slow-walking those export licenses when it comes to critical and rare earth minerals, saying that that's going to be one of those top priorities that these two leaders do need to discuss. The White House, it's clear, thinks that that's one of those issues that could be resolved in that way.
All right, Tyler Kendall, great reporting as always. We'll be checking in with you again very soon. But let's turn to the corporate front here because Constellation Energy has reached a deal to sell nuclear power to Meta. Meta plans on using the energy to run its data centers. You can see the news powering nuclear stocks higher pre-market, including Constellation up about 12% at the moment, and the whole sector as well. Let's break it down now with Bloomberg Power and Renewable Energy editor Will Wade. So let's start with the logic of this deal here. This is a 20-year contract. It starts in mid-2027. So clearly, Meta plans to use this power for quite a long time.
Oh, yes. We're seeing so much demand for energy from all the big technology companies. They've got data centers that need more power than ever before, and they're building so many. The demand for electricity in the U.S. has pretty much been flat for decades. And then all of a sudden, about a year ago, it really started to jump. So this has caught the energy industry kind of flat-footed because it takes a long time to build power plants. They're big facilities. So for Meta, this is like a facility that exists now.
So we didn't get the financial details. We don't know how much they're paying, right?
No, and don't think I didn't ask Joe Dominguez, the CEO of Constellation.
I mean, I'm guessing you can kind of ballpark it from the Microsoft deal, but
yeah.
My other question, aside from how much, is does this push Constellation to open up another reactor there?
They're talking about it, and that's really significant because we haven't had a new nuclear power plant in the U.S. in a long time. We had the Vogtle plant that was finished last year, and it was like 7 years late. It was billions of dollars over budget. And I went down there for the grand opening, and there were all these people saying, let's do another one. You know who wasn't saying that? Southern, the company that lost a ton of money trying to build it, because nobody wants to be on the hook for the costs. So what I've been hearing ever since then is we'd love to build a nuclear power plant if someone else will make sure that they'll pay for it. Tech companies have big money.
All right, Will, thanks very much. Bloomberg's Will Wade covers this stuff, and as he said, he goes to these plants. He braves the radiation to bring you the news that you need. Staying, though, in the land of big tech, Microsoft eliminating 300 more jobs just weeks after cutting thousands last month. Disney also announcing job cuts. Here with more is Bloomberg technology co-host Caroline Hyde. And Caroline, 300 is not a huge amount, relative to the rest of Microsoft's workforce, but what's going on here?
Well, you need a lot of power for AI. You don't need so many software developers and engineers, it seems. And so actually, when we saw 6,000 people cut from Microsoft, that was announced back in May, a large proportion of those people who were said farewell to are indeed development engineers here. And that's because we're seeing Satya Nadella, the CEO of Microsoft, say, we are doing about 30% of our coding now via artificial intelligence. So everyone's trying to rework their workforce, whether that means you need fewer software engineering talent, or that means you actually just need to go out, goodbye to the old, in with the new, reorientate yourself. Look, we heard similar things coming out of Salesforce. So as they gave us their numbers last week, we heard that they too are perhaps not having to hire at the same pace as usual. They're able to slow hiring, and instead they're beefing up the sales department because they've actually got all the product, and now that they're able to start selling a little bit more rapidly. But this is really being echoed across the technology front. You're seeing people get leaner and leaner and focusing more on putting money on the energy side, the infrastructure side, and just developing the AI product. But for that, perhaps you need fewer people.
And it's interesting to note that we're having this conversation ahead of 10 a.m. JOLTS data when it comes to job openings. And of course, the payrolls print on Friday. You mentioned that you're seeing this across the tech industry, but it's not just tech. We got some interesting news from Disney yesterday, also planning to lay off several hundred workers. And they've laid off really thousands of positions in recent years.
I think it's about 8,000 have gone in recent years from Disney. Now, this is, again, not large when you think about 250,000 people that Disney currently has under employee base. But they are shedding a couple of hundred, it seems, once again in the content side. So we're thinking marketing. You're thinking just the way in which you're going to go out and promote movies and content. They're slimming down there once again because times are tough. They want to make fewer movies, get more bang for their buck, and we know what's happening to content, the amount of shakeups that are happening at Comcast, the way they're selling off MSNBC and CNBC. You've seen, of course, Paramount thinking about its own costs and being leaner. Warner Brothers has done a big overhaul as well. So this is, again, a restructuring vibe. And when you just think across the whole plethora here of technology and content, people are just trying to reorientate their workforce
for a future. I go back to Microsoft saying, look, the spokesman saying we continue to implement organizational changes necessary to best position the company for success. It's a dynamic marketplace. Well, it'll be important to see when all of these stories that we're talking about individually start to show up in the overall economic data. Great roundup, Caroline. That is Bloomberg Technologies' Caroline Hyde. And be sure to tune in tomorrow as the Bloomberg Tech Summit gets underway in San Francisco. We'll hear from industry leaders, including the CEOs of Uber, Rivian, and Peloton. Caroline and Ed Ludlow will have a special edition of Bloomberg Technology live from the event on Thursday at 11 a.m. New York time. Certainly don't want to miss that one. But let's take a quick check on these futures right now because those pre-market losses lessening right now. The S&P 500 down just 0.1% about 20 minutes ago until the bell rings. We saw something similar yesterday, really pre-market losses, and then American investors woke up and started bidding up stocks. So we'll see if the same pattern holds true today, Matt Miller.
Yeah, I mean, yesterday we had NVIDIA, attempting to lift the market. At one point, you were checking stocks and 400 were down, but NVIDIA was up, and that was enough to bring us back. And by the end of the day, of course, that breath turned around as well. Coming up, Dollar General is raising its outlook on hopes that shoppers will look for more deals, specifically there at Dollar General. Those details next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
It's everyone's favorite, Mr. Rogers' Neighborhood on Pluto TV.
Hi, it's a beautiful day in this neighborhood. A beautiful day for a neighbor. Would you be mine?
So make your day extra special with Mr. Rogers' Neighborhood on Pluto TV.
Your father saved 800 lives, including yours. I dare you to do better.
You will experience fear in the face of certain death.
I hope you know what you're doing.
So do I.
Look at that. The best part of summer is getting to fire up the grill and cook outside. Oh yeah, beautiful.
This season, we've tracked down folks who are growing, harvesting, and making the best the South has to offer, and turning their goods into delicious summertime feasts.
Oh yeah, babe. Welcome back to Emerald Cooks Summer Grilling. Oh yeah, look at that, folks. Cheers.
Let the good times roll on the Emerald Lagasse channel on Pluto TV.
Stream now, pay never.
Are you ready?
It's full! It's burnt! Why should you stay in Hell's Kitchen?
I'm a better chef.
Champion, ladies and gentlemen, this is Hell's Kitchen.
Let's get now to higher interest. Look what's making headlines around the world. NATO is asking European member states to expand ground-based air defense capabilities fivefold as the alliance races to fill a key gap in response to the threat of Russian aggression. The ramp-up will be discussed at a NATO defense minister gathering on Thursday. The alliance is already planning on boosting its weaponry and air defense systems as it scales back reliance on these United States of America. Elon Musk is selling $5 billion in debt for his artificial intelligence startup xAI. It's the latest in a series of fundraising efforts across his business empire as Musk pivots away from politics and returns to running his various companies. Morgan Stanley is shopping the debt for xAI with a double-digit interest rate. The financing could help Musk spend aggressively on AI infrastructure as he builds out a massive data center in Memphis. And JP Morgan is putting Marianne Lake, one of the leading contenders to one day take over for Chief Executive Officer Jamie Dimon, in charge of strategic growth in the firm's fastest growing overseas consumer bank. The appointment follows the departure of Sanoke Viswanathan, who's leaving to become the CEO of data company FactSet. Lake has been serving as the CFO at JP Morgan. And let's get some breaking headlines right now from Ford. Electric vehicle sales in the month of May have fallen 25% from the same month a year earlier. Meanwhile, all U.S. auto sales rose 16.3% in May, and that's due to strong truck sales, which is pretty much the main thing Ford sells, Katie, aside from the Mustang platform.
There you go. Really interesting news about the EV sales, though. We'll continue to follow that story. But let's switch gears here and talk about Dollar General. An interesting earnings report out this morning with the dollar store showing that it can manage the Trump administration's trade war. The firm also raised its annual guidance despite heavy exposure to China and a slowdown in shopping trends. The CEO just saying now that they are seeing more high-income customers. Bloomberg retail editor Emily Cohn joins us now to discuss. And I want to focus on that last part, the CEO saying that they're actually seeing more high-income consumers coming in and shopping at their stores. What does that say about the economic environment that we're in?
Well, these types of stores, dollar stores in general, tend to do well in these types of environments. We see low-income shoppers coming, but also higher-income shoppers trading down and coming to Dollar General. So it says that shoppers are feeling squeezed and coming to Dollar General because they know they can get a bargain.
It's interesting. I can imagine high-income shoppers trading down to Walmart.
Yeah.
But I feel like trading down to Dollar General is maybe like a consumer cry for help. Is that
That's true. Dollar General also has this, their footprint advantage. So we're talking about rural shoppers here when we're talking about Dollar General. That's their real advantage. In lots of areas of this country, the closest store where you'd go out to get a gallon of milk is going to be a Dollar General, and that's their real advantage here. Looking forward, this battle for the rural shopper is a big area that we're looking at. They're getting more competition from Walmart and Amazon. And these rural shoppers are really where the battle is heating up.
It's a great point on the geography that we're talking about here. We're getting some other comments from the company saying that it expects some price increases from tariffs. They've managed to navigate pretty well thus far, it looks like, looking at their results, but talk to us about their exposure to China.
So they're in a good spot relative to their competitors because a bulk of their sales come from consumables, groceries. Those things tend to be less exposed to tariffs than the other aisles of the store. So they, in this report, they said that they took into account current tariffs rates, and they actually raised their guidance a little bit. So they have an exposure to China, but I think it's something that they can mitigate, and that's why the stock is up this morning.
Right, mitigating that in part by raising prices.
Yeah.
All right, really interesting stuff. Thanks so much for joining us. Emily Cohen covers retail on the BN side of the building. Coming up, BlackRock's Gargi Chaudhuri says the banner month for markets in May was masking dispersion under the hood. We'll ask her what that means next on Open Interest.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Most hiring algorithms would scream me out.
Some bosses couldn't see me as a leader.
I've run this place for 20 years, but I still need to prove that I'm more than what you see on paper. I've been running code as long as I've been able to reach a keyboard.
This is what I do. It's second nature for me, coordinating 100 details at once.
The way my mind works, I have a very mechanical brain.
I sold them on my skills.
You gotta be so good they can't ignore you.
My magic is
analytics and empathy. That's how I get clients.
You have to have the confidence in yourself to show up and defy the odds.
I'm more than who I am on paper.
I never got a college degree. And today, I'm the CEO of my own company. People want to tell me I'm one in a million, when actually I'm one of millions. The stars are all around us. It's time for them to shine.
Pluto TV's got nostalgia on demand with Gunsmoke. From the beginning in black and white to sunsets in full color.
We're in a nice quiet town here.
Fire up Gunsmoke anytime on demand on Pluto TV. Stream now, pay never.
We've all seen what's happened with the VIX and volatility in the equity markets this year. This will not be a calm market. The market is expecting some sort of resolution or some sort of progress. If they don't get that progress and we go the opposite way and we start putting in more and more tariffs and not making progress, we're going to have a problem.
And that was Wells Fargo strategist Chris Harvey, who holds the title of the biggest bull on Wall Street. Meanwhile, you have Deutsche Bank lifting its S&P 500 target as markets recover from trade shocks. Specifically, the firm lifted its year-end forecast to 65.50 from 61.50. That implies a 10% gain from Monday's close. Joining us now at the desk to discuss it all is BlackRock Chief Investment and Portfolio Strategist of the Americas, Gargi Chowdhury. Gargi, great to see you in person. It's good to be here. So I know that you don't have an S&P 500 target, but I'll ask you the same thing that I asked Stuart Kaiser 24 hours ago, which is, if you did, would you be lifting it right now?
So it depends on when I set those targets.
Right.
If we did that, if we had set it on April 3rd, then perhaps, yes, we would be lifting it. Because obviously, over the course of the month of May, we've received a lot of positive data, not only on the tariff negotiation front, but on the earnings front. And that means something. We're also seeing that the soft data perhaps is lifting from the terrible levels that it had gotten to in April and May, and the hard data so far remains okay. So depending on when people set their targets, I think there are some reasons to be a little bit more optimistic, and I think it's all related to earnings. Having said that, we haven't gone back to the Feb 19th levels because there are some reasons for that too. Growth is slowing down. We have to be cognizant of that, and we're questioning whether we can get those Fed cuts that are priced into the market.
That's right. Earnings estimates are lower than they were in February, lower than they were on April 2nd. And we had the OECD, for example, come out this morning and say, we don't expect 2+% growth anymore for the U.S. Now it's 1.6%. How much does the Fed need to cut? And are they going to be able to do that if we don't get some clarity on the tariff policy of the United States?
Yeah, that's exactly the right question, Matt. I think when you look at what's priced into the market, give or take 2 cuts, I think it's a probability-weighted outcome. So if things get really bad, and by the way, the chances of a recession coming through by the end of this year, those chances are dropping from where they had gotten to, right? Many people are pulling back their expectations of a severe slowdown. But for example, if one were to happen, you could see 3-4 rate cuts. At the same time, if we're fine, if the labor market, as we might find out later today and through the course of this week, if the labor market remains resilient with no massive job destruction, I think the Fed doesn't need to go at all, or maybe just once towards the end of the year. So the probability-adjusted outcome of those two look like about 2 rate cuts. Do they need to go if inflation is sticky and growth still lower, but still about a 1% level? I would say maybe just once.
All right, Gargi, you're sticking with us through the opening bell. We'll see you on the other side of this commercial break. Let's take a look at the setup as we count down to the ringing here. You can see the S&P 500. It feels like it wants to go green. We were looking at much steeper pre-market losses just a few hours ago, but right now down about 0.1%. The NASDAQ 100 is already there, pretty much flat, but the color is green. But it's the small caps out in charge, Matt Miller. The Russell 2000 up about 0.4% with about 4 minutes ago until the open.
Wow, we still look at the Russell 2000.
And we should.
We're going to continue, right? You're going to keep that on the board?
Until they drag me off the set. A price-weighted index? Can you imagine?
You know what? We'll change it on the World Equity Index screen as well. We'll replace the Dow.
Thank you. I appreciate that.
The Russell 2000. Coming up in just over 30 minutes' time, we're going to sit down with Cliff Asness. He is, of course, the billionaire co-founder of AQR. He's going to tell us how his firm has gotten double-digit returns even amidst volatility. This is Open Interest.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
25 words or less.
Join Meredith Vieira and play along to 25 words or less on Pluto TV.
14 words, 45 seconds on the clock. Good luck.
Hey, sports change.
Hi, I'm Meredith Vieira. Watch 25 words or less on demand right here on Pluto TV. Stream now, pay never.
Rail, name something that's hard to do with your eyes open. Read. This boy in college. He leaned into the mic and said, read, Steve.
Watch the Family Feud channel on Pluto TV.
The cinema of the season is upon us. Oh my goodness, what a grab! Are you kidding me?
High drive! God! Away! Out of here! You are unbelievable!
This guy is next level.
Oh, this place is going nuts! What the grand slam!
This guy is the most dominant in the game.
I don't know if it gets any more exciting.
This is the show that never ends!
Fun place, isn't it, Mama?
So dumb. There goes my appetite.
Classic TV comes home on Pluto TV.
Anybody home?
Catch Gunsmoke and The Andy Griffith Show. Relive the earliest moments in black and white and ride off into a sunset full of color. Timeless TV anytime. Catch Gunsmoke and The Andy Griffith Show anytime on demand on Pluto TV. Stream now, pay never.
We are moments away from the start of trading on this Tuesday after a turnaround. Yesterday, it looks like markets are struggling to push higher. Again, you can see S&P futures right now down, but only 0.06 of 1%. And we were off much more at 3 o'clock this morning when I came in. NASDAQ futures are also very little change right now, but the Russell futures looking good, Katie. In terms of the opening bells, you've got Olo right now ringing the opening bell on the New York Stock Exchange. They're down 60% over the past 5 years, so I feel like they can do better for their shareholders. On the other hand, SS Innovations, surgical supply company, they have more than doubled in the past 5 years. In fact, they're up 114% with all dividends reinvested. So
there you go.
They've done pretty well. Dollar General's doing well today. What are you watching?
Doing pretty well. This is the last gasp of the current earnings season, and it's Dollar General out with a beat and a raise. The retailer really easing those tariff concerns. You have the CEO saying that they're uniquely positioned to serve customers in a variety of economic environments. We also heard from the CEO saying that they're seeing higher income consumers come into their stores, so really benefiting from that trade down that we're seeing. Matt Miller currently up about 11% just minutes after the bell.
And Meta, obviously, is one we've been talking about this morning. Buying nuclear power from Constellation Energy as AI sends power demand soaring. But the 20-year contract doesn't start until the middle of 2027, which seems like
a lifetime away.
Right? That's a long way from now.
We'll see.
We'll be past the midterms. Like, it could be a whole new world.
Life could look totally different.
All right, we're back with Gargi Chowdhury, BlackRock's Chief Investment and Portfolio Strategist for the Americas. And Gargi, obviously AI and power was everything last year. Is it everything again this year?
I think it is. I think it can be. When we look at what drove much of the market performance from the April 2nd lows, a lot of that is coming from the earnings power and the earnings growth we've seen in the large cap quality companies, many of those that have a software or AI theme associated with them. Every time, we're all as market participants wait for NVIDIA earnings, we continue to be amazed by the revenue growth. We continue to be amazed by how much all of these larger companies are investing in CapEx. And that is a big driver of growth for the United States going forward. So I do think this will be a mega trend, a mega theme that will be with us for 2027 and beyond. And now I think it's broadening to areas such as power, such as one of the things that we talk about in our outlook around software. And I think that's with us to stay for some time.
This is a question that I've been asking, it feels like, for the past year, and I've probably asked you this question before, but